It's hot. Now you got a cold in your throat. Oh no, just call your boss. Take the crust from out your eyes. So tasty, not a coffee.
Good morning, you knuckleheads. Happy Wednesday to you both. Fidetti, you're having a great day already, aren't you?
Emotional damage.
You're having a great day.
No, thank you. No, I already want to go home.
Come on. How are you over there, Sazi?
Home, it's Hubs.
It is a good lunch. It's Greek food, but they also weirdly serve ribs, which the traders love. I don't eat ribs personally, but
They haven't left. That's
eating a slab of ribs at 10:45 in the morning, honey, that is a choice.
I can't look at ribs for a while.
You're building yourself up. You're getting the stamina.
I can't look at ribs for a while after the Rib Fest last weekend.
Oh yeah, what happened with that? We didn't get.
There was no judging of
We
the
didn't
ribs,
get into
right?
it.
I made 6 slabs.
You made 6 slabs of ribs.
Yeah.
How did you prepare them? What
slow-cooked
style of sauce did you use?
I slow cooked them
Okay.
for about 3 hours at
In a crock pot?
on the grill.
Okay.
I slow cooked them for 3 hours at like 250, 275.
Okay.
And they
Do you put sauce on your ribs?
no, I just dry rub at that point.
Okay.
And I dry rub both sides, the whole deal. And then after about just under 3 hours, and they were pretty soft. I coated them with barbecue sauce. I used a mixture of like 3 different sauces.
Oh, so you don't make your own sauce?
I didn't make my own. and
Surprised at you.
and then I grill them, grill up the tops.
Yeah.
And they came out great, nice and soft,
And what was this for?
it was for One Heart Uganda.
Okay, it's Donnie Roberts is involved in a charity.
Yeah,
So
Donnie.
yeah, I'm just trying to explain to the people that you are not involved in charity. You just like ribs. But Donnie, who is a wonderful person,
Yes.
he does a lot of charitable work and charitable giving.
And obviously has the gift to gab because he got size enough to do something. It's unusual there, too.
So I made there was about 5 or 6 of us that made 6 or 8 slabs of ribs.
Was there a contest? Was there any judging?
No.
Okay, so it's just you saying that they were the best.
Yes.
I didn't say they were the best.
Oh, okay.
No, I said my ribs were good. There was one guy that made St. Louis style. They were great.
Okay.
There was
And what is
He
St.
doesn't use
Louis?
a pork rib then.
That's beef
he's
rib.
using,
or-
No,
No,
they
he's
were
no.
pork.
He's using a pork rib, but he's using a like a Chinese style rib. He's not using a baby back rib.
Exactly.
Right.
Yeah, they're much bigger, and they were all baby backs, some version or St. Louis. This one guy did St. Louis, and there was some chef at some restaurant that did like super spicy like Korean ribs.
Ooh, was that your favorite?
No, I liked the St. Louis ribs. I thought the guy did great.
Oh, okay.
Nailed it. And then I also did a bunch of chicken, some spicy. I did.
At a rib fest, you did chicken.
Well, I figured
You are an outlier.
I appreciate that as an option,
there's some
though.
people there that aren't going to eat meat.
Sure, yeah.
So I made.
Wait a minute, chicken's not meat now?
Well, no, pork is controversial.
Okay, but he said they're not going to eat meat, so I made chicken.
He don't eat no meat. He don't eat no meat. It's okay. I make lamb.
I mean, chicken's chicken, whatever.
Okay.
Can't help beyond chicken. So I made a bunch of chicken.
Mm-hmm.
And then
But like a whole chicken, or you
No.
shred it, or
If you think
like.
pork is controversial, then you're not going to a rib fest.
No, that's right. But sometimes, as a child, I would get dragged to a rib fest. Have you met my father? So like,
Okay.
I was a minor child. Like, nah, it's not my choice.
latest thing
Give you
has
props.
been boneless thighs,
Yeah,
and I made them
Boneless thighs?
yeah,
boneless thighs.
yeah.
And so I made them. I marinated them overnight in this like spicy Korean sauce,
Okay, like a gochujang.
something like that.
Okay.
I don't forgot who makes it.
Okay.
And then I
Well, it's just a type of Korean
and then
sauce.
I grilled them
Okay.
and then coated them with a spicy Szechuan sauce. So they were
It's Szechuan.
kind of fiery. They were hot,
Okay.
tasty, and they came out beautiful. They came out like a Oh, they're perfect.
And then you shred it?
No, I didn't shred it. No, just take a piece. Yeah.
Oh, okay.
And then I
thought it was boneless. I'm so confused.
I also
Right back. You understand? So like
try not to.
So wait, but if it's boneless, but then like why wouldn't you just like
try
shred
not to
like?
peel back the
But then
onion.
how is it? How is it whole? What?
Why would I shred it?
Because the meat would be so tender that it would fall like it would be easily shred. Okay.
No. And then I also made
Wrong. Wrong.
I also made beef.
I just know that when I cook meat and then it's real tender like that, then I just shred it.
I also made tons of beans.
I'm waiting for my invite to come over to either one of your houses. I haven't gotten one.
You're not coming to the South Side. You talk so
we
much
are.
smack about this city.
We're going to that rib joint.
We're going to Sanders.
Yeah, I knew you thinking.
What?
Yeah, we're going to Sanders someday.
When?
I don't know. It's on 99th Street. I'm not sure how to get there.
Yeah.
Okay.
We're gonna take my Tundra.
Why don't you go to Limbs? You should go to Limbs first.
I want to go to Sanders.
Yeah, go to the best.
You should go to Limbs on 75th Street first.
I'm going to 99th.
We can do a taste test.
Okay, so fine. Don't take the advice of a person who actually lives on the South Side. That's fine.
So we're going to 99th Street, Sanders Barbecue.
So, can I tell you, I was on 99th Street yesterday.
Were you really?
Yeah.
You know where Sanders Barbecue is?
I don't know exactly, but I was at 99th and King Drive, so I was down there.
That doesn't sound safe.
No, it's fine. So, but can I tell you, it was actually very delightful, and I was like, this is better than I thought. So, my tag on my car, my plate tag, expires at the end of this month, right? No, September 30th, right? So, but I get a thing in the mail that's like, you need an emissions test before you can get your plate sticker. And they're also like, don't go at the end of the month and don't go on a Saturday. So this week, like, I'm screwed. Right, yeah. So listen. So then I go online and I was like, okay, well, where can I go? Because I had time yesterday, and they're like, there's a self-serve kiosk at the DMV. So I was like, okay. So I had to go to 99th and King Drive. It was maybe 4:30 because I had to work here kind of late. So, but there was no line. You pull up, it looks like an ATM. You scan the VIN on your door panel, or you scan the card that they gave you, and it's like, okay. And then it's like you take a plug it into your car's data port.
Oh, you already lost out. Enough.
I know, but I could do it. But I'm smart. So you plug the plug into the car's data port. It does everything. Prints out an immediate pass.
That's too much work.
I park. I went into the DMV. There was no line. I was like, here, I just passed my emissions. Need a plate sticker. She's like, okay, baby. She's like, you go on through. You go to the cashier. And I'm like, that's it? I paid. It took me 15 minutes. And I told the guy in the little window, I was like, look, I don't ever do this, but I just want to offer you a compliment because this was an optimally efficient process, and I appreciate how nice this was. And he was like, thank you.
They did it at all the muffler shops. They just paid these guys, which was really smart. So rather than run all that crazy emission places, they just paid these muffler shops to do it.
Do what? To do the emission test?
Yeah, to do the emission test. So now there's lines at every muffler shop on the north side.
Sure, probably at the end of the month.
Yeah, but that's all it is. They do it. Everybody does it, so you don't have to drive.
But they do it right at the DMV too. Like,
no,
I mean, like
not in the city.
Because they close the places in this. It's hard in the city because they close some sites down. Yeah.
Yeah, you'd have to try to.
Yeah. Yes.
It's pretty efficient. You
but
drive,
nice.
You drive right in. They
but
stick it in your tailpipe 3 minutes to 2 minutes. 1
Right.
minute later.
But I'd never seen a self-service one. Like, for me, that's how I don't want to talk to anybody. I just want to do it myself. And of course, because I was doing this, and I wasn't struggling at all, but magically out of the ether, some random old black man just popped out. He's like, you need any help? And I'm like, no, I got it. and I was like, he's like, it's pretty handy, pretty neat. And I was like, yeah, it is actually. It's actually very neat. But I was like, where did you come from?
Can you do Tom's? Is there any way you can do Tom's? Because I'm sure his.
The beautiful thing about electric.
But my car's a hybrid.
Your one's only.
But my car's a hybrid, and I had to get. I only have one car, so it's not a motorcycle.
Yeah, but it's not a plug-in hybrid.
Okay, but I was surprised that I needed an emissions test for a 2021 hybrid. I was like, why do I need an emissions test? But it was fine. I got it done.
Yeah, you have a combustion engine. That's what they want.
Yeah, I guess.
Anyway.
Yeah. That's fine. So shout out to the DMV.
Nice.
That doesn't change the Sanders barbecue story.
Okay.
We're making a road trip to Sanders Barbecue.
I will look it up for you. I will see where.
It's on 99th and I think Ashland.
So then that's further west then. 1742 West 99th, so that's beyond Ashland, because Ashland's 1600.
Okay, so 1742.
Okay.
That's a safe neighborhood, right?
Sure. I think that's more towards like Beverly, so I think so, yeah.
Okay, got it.
Okay.
Anyway, we're making the road trip. The New York Times called it one of the 50 best restaurants in America.
It looks good. I've never heard of it.
Me neither.
Ever.
Me neither.
My entire life.
No, I've heard it because they have the aquarium
Two restaurants
style
in
smoker.
Chicago. I never heard of the other one.
Right. 45 years here.
What was the
Never
other
heard.
one?
I can't remember the name, but I think it is Latin.
I like how you will only go to neighborhoods in Chicago if the New York Times tells you so. If that is not liberal elitism.
I never even heard of Sanders Barbecue before.
I know, me either.
Why don't you just come to the South Side?
I mean, all I know on the South Side was Lem's. And
Yes.
I don't know if Leon's is still around, and Honky Tonk.
Maybe. Honky Tonk is
Tom, my
still there.
peeps want you to sit up straight and engage your core.
Who's your peeps?
My email. Peeps.
Tell him he has tummy time.
Sources.
He has tummy time later to to strengthen. Well, Bat, how was your evenings? You get in the sauna?
No.
Just like this? Sitting like this in the sauna?
I'm a little hurt. Got bad flipper. Still hurting me. I'm not gonna lie.
Are you on drugs? I'd be on drugs right now if I were you.
No. I didn't know painkillers right now. Last time I took painkillers, I threw up from them. Like not
Yeah.
this time, like the last time I had
Sure, yeah.
an injury.
What about like an edible?
Nah, I don't do that. This is all natural, believe it or not. I'm just high on life. I really am. Not even no alcohol.
I'm surprised your wife isn't secretly drugging you.
She might be.
She might be microdosing you.
No. I'm just naturally like this.
All right. You didn't have to go to hockey last night?
No hockey last night. Vinny had practice, but I didn't have to go. And he drives. He drives himself there, drives himself back. So it makes.
How is that league? He doesn't have a license though.
No. I go with him, but it's, it's an event kind of thing.
Oh, okay. I was confused. I was like.
Yeah, high school hockey now, not like before. They don't let you. I mean, they let you watch if you want to watch, but nobody watches. The kids.
Why would you want to watch?
I enjoy watching the progress. I don't know.
Yeah.
What else do I got to live for crying out loud? Look at me across the pond over here. I got nothing to stare at.
Also, can I just say? Can I just say? You guys are men. And
thank you.
That's
thank
fine.
You, thank
Whatever.
You. I mean, the jury was out for a while.
So yesterday we had a conversation about how our old office is turned into a temple, right?
Yes.
And so Nikki was going there, but so my issue with men, you guys don't ask a follow-up question because you were just like, I don't know, maybe Nikki knows the rabbi. I don't know why he was there. He was just there.
I agree with you. My wife says the same thing.
You guys don't. So I got the scoop. I got the 411. He was there because of his girlfriend.
Yeah.
That's a huge scoop.
Yeah.
You guys just missed it.
Yeah, no, I heard.
We didn't miss it. We already know how guys think.
Right.
We just don't care. Like you for some
You're
reason.
Exactly right. We don't care.
That's a big detail.
I mean, you guys, for some reason, you care.
I care very deeply.
My wife would say the same thing to me. Like, Tom went to India. Yeah, he liked the hotel. I go, yeah, I think so. He liked it. Where'd he go? I go, I don't know. Taj Mahal.
Don't you guys talk?
Yeah, like, you're in the room with him all day long. I'm like, yeah, but I don't care. Like,
Yeah, right. I don't care either.
I don't care.
I don't care why Nikki was there.
Yeah.
I mean, I figure.
I can figure if you give me three guesses.
The
I
only
can get
reason
it
he
right
gets
on
out
the
of
first
bed in the
one.
morning is
Right.
because there's some girl somewhere.
Right.
I mean, come
That
on.
stuff making
I
me
hate
go crazy.
everything about this.
Yeah. It's not like rocket science.
Right.
Why?
If you had one guess, only one
Right,
guess, and your
you
whole
would
life
get it right.
depended on
Yeah,
it.
but you guys didn't know. That
I wasn't
your one
gonna
guess.
guess. Oh, he's there because he's really into the religion.
Your guess was, he maybe went to camp with the rabbi. That was your guess yesterday.
That was what Tony said. I did not think he went there because he was finding his religion.
Yeah, no.
I think
That's me
We
in
found
the
his religion.
corner.
Why is where he found
That's
it.
me
Sure.
in the spot. Light. Find in
very feasible
Judaism.
first choice answer was, a girl wanted him to go there.
Yeah, of course.
Okay.
But that's a big deal.
No, it's not.
Nah,
What?
it was actually.
I could get a man to convert to something for
Not
me.
converting.
Converting.
He was killing an hour.
Whatever.
There was no football on, probably. There was nothing to watch. The ends
I mean,
justified
it's our
the
old
means.
office. They didn't know how to turn off the alarm.
Ah! Why are you
You got to see the old
broken?
building again. I mean, there was a lot of perks.
Why are you broken? Anyway, I'm going to ask some questions today, and I'm going to get to the bottom of things. We got a great show for you today. It is a wonderful Wednesday here on Tasty Live. I'm done. On today's show, at the top of the 8 o'clock hour, we have a little options jive headed your way. Trading the Magnificent Seven. Real fast, what's your favorite stock in the Mag 7 right now?
What's my favorite stock in the mix? I don't have a favorite stock.
Come on.
like any of them. No,
Well, was it Apple? Is it Microsoft?
I
Is it one
don't
of the-
like any of them.
Okay, well then this is going to be just a baller segment then at 8
The
o'clock.
best one to trade is Tesla.
Tesla, that's the best
Best
one.
one to
Okay,
trade.
okay. So we're going to
I'll
get
play
into trading the Magnificent Seven, and Tom's going to be petulant.
Yeah.
Then at 8:40, we got what's your assumption? This when viewers write in with an underline, but they have a directional bias. That's at 8:40. And at 9 o'clock, we got the Skinny on Options math. Jacob in the house unpacking Black-Scholes formula. If it's one thing Jacob loves, it's Black-Scholes. Hasn't he unpacked the Black-Scholes enough? Is there anything left in the luggage? He keeps trying to explain it to you, but maybe you were just not, like, it's not clocking to you.
He's unpacked it a few times.
Yeah, he has unpacked it a few times. And Nikki Batista, who you ask no questions of, he will be in at 9:30. If you got questions for
Night
Nikki,
trades.
drop them in the chat. No, if you got a smaller account, Nikki's going to be in with bite-sized trades for smaller accounts. And then Liz and Jenny live from the SIBO. Day 2, the ladies live from the floor. I believe the only financial show streaming live from trading floor. It's always electric when the ladies are live. Tune in at 10 a.m. for that. Hey, in the meantime, in between time, can I do my daily dose so I can get out of here? Thank you very much. Hit me with my theme music. Let's go.
Our leading story,
today's
breaking
headlines.
news,
Breaking
across the wire. Our leading story, top story, just in.
In today's headlines,
Breaking news.
All right, everybody. Today is a wonderful Wednesday. It is September the 24th. This is the part of the show we like to call the Daily Dose, where we talk about today's financial news and headlines. My name is Vanetta. Are you ready for the news?
Ready for the news.
I said, are you ready for the news?
I said I'm ready for the news.
Earnings, Mr. Bat.
CarMax, where I'll be going with Vinny in January.
Oh, boy. Oh, boy.
It's one thing I can say I'm proud of. I never bought my kids a car.
They always bought their own car with their own trust fund?
No, they just didn't learn how to drive right away because they were city kids.
Oh, so they were 21 by the time they really needed a car?
No,
You had
they
cut them
learned
loose?
how to drive when they were 16, but we didn't have anywhere to park a car, extra car.
Oh.
Oh, that was your excuse and you stuck to it? I mean, I could find you a garage within 50 feet of your house right now. You give me enough cash.
Hey, this is the part of the show I like to call the Daily Dose. Hey, let's get to the first headline.
Be careful because I've got some videos for you, just so you know. I
Just
worked
so you
really
know.
hard to find some videos. We called the cemetery. Okay.
My daughter will pay you big money for that video.
I wonder if the cabbie just pulled his phone out
No,
and
he
was
was
like
down the
filming.
street.
Oh,
He was
okay.
down the street. He
That's what
definitely
you
doesn't have
say.
it. For those who don't know, a fence hopped out and I had to
Don't
hop
even
over.
say anything. We called the cemetery, and we got some videos. We're going to play them a little bit. Okay, just wait a second.
My daughter would pay big money for those.
Hey, U.S. Fed Reserve Chair Jerome Powell said yesterday the central bank needed to continue balancing the competing risks of high inflation and a weakening job market in coming interest rate decisions, even as his colleagues staked out arguments on both sides of the policy divide. When I say both sides, there's one guy on the other side, but I have to say both sides. What did you take away, if anything, from Fed Chair Powell's speech, or what did the bonds do?
I didn't even know he gave a speech.
Okay, well then there you go. Well, but so about what those
I
bonds
just bought
did.
some 116.14. They're
Bonds
sitting right there.
Rallied pretty good yesterday and left.
Because he was speaking.
Well, they just sold off now. So I just
Well, because he's sleeping.
I sold them yesterday afternoon, got flat them. Now I just started to buy them back. I just paid 14. They're 13, 14 right now.
Okay.
Just bought some at 14. And if they go lower, I'll buy some more.
Hey, here's something, and maybe we can look at this in depth from a research perspective, but is the diversified portfolio dead? The AI boom has turned an age-old investing rule on its head. Investors are taking another look at the potential risks and benefits of running a more concentrated portfolio. Should you just YOLO it and lever everything into NVIDIA?
It's really funny, at record highs, how they write, is the diversified portfolio dead? Yeah, because bonds haven't paid anything for years, and every other
Top 7 stocks have been leading.
Yeah, of course. So why would you?
Sure.
I mean, you should be fully 100%.
Just pick these 7 in the beginning of the year.
7 stocks and just stay with those. Put it all in.
No, but what would you say to combat this or to counteract this?
Stupid advice.
Okay, well,
They're just taking a little section of history out right now, and they're just drawing some conclusion, which is not going to last forever.
do you think that we're even on even shakier ground now that everything is so concentrated in one area, and now that we can open up portfolios to Bitcoin and to non-traditional assets?
I don't think we're on any shakier area than.
All you gotta do is look at volatility. You're not shaky.
I don't think it's any different than 1999, 2000, 2007, 2008. Anytime we've had crazy upside moves at the end of a multi-decade rally, I think they're all were the same. Every single time I can remember, I can go back to the 1984 when the Japanese market.
So 40 years ago?
The Japanese market, I can't remember.
How old
the year.
are you?
I want to say it was 1984 or 1985. I don't remember.
Okay.
The Japanese market was the Nikkei was in I don't remember if it was 25 or 30,000. Okay. And people were countries were selling real estate to pay off their debt.
Yeah.
I think Australia or New Zealand sold their embassy so they could pay down their national debt. There was such insane prices in Japan. And after that, they've never gotten back. It's been 40 freaking years.
Okay.
And they still haven't got anywhere close to where they were. And the market's dropped by 80 or 90%. So I would be careful. But back then they were saying, hey, if you're not invested in Japan, you're going to miss.
Yeah, you need the exposure.
Sure.
You need the Japanese. It doesn't matter where the market's trading. It's trading 25,000 today. It'll be 50,000 next time.
Sure.
Right.
People just talk smack.
All right.
It doesn't matter.
Hey, in other news, getting to commodities just real fast. Oil rose yesterday as U.S. crude stockpile drop adds a sense of a tighter supply. Brent futures rose 27 cents to $67.90 a barrel. Let's talk oil.
Up another 88 cents. It's a little over 1%, 1.33% to 64.29. That's the high end of its range for this month of September.
There wasn't much. We didn't trade it. So.
Okay.
Ivy rank at 19. It's starting to catch a little bit of volatility now.
I was just trying to throw you guys a bone. I could just talk about gold every day, but.
Today you should be mentioning gold because gold down $16.
Okay, then.
Yes.
Let's go. Hey, I don't know if you heard about this, Tom, but Britain's Revolut said they were exploring buying a U.S. bank to accelerate their global expansion plans, and they're eyeing launching credit cards in their home market. Revolut's been valued at, $75 billion, the latest estimate, but maybe.
Yeah, it's an amazing story.
What do you think about them trying to buy a U.S. bank?
Not.
Okay. Do you have any candidates?
That's how you get a foot in.
I volunteer Wells Fargo as tribute. No, I'm just kidding.
I don't have any idea. I'm sure they'll buy a small.
Right? Yeah, I know.
Is for sale.
I know it's just for a banking license,
Yeah, right.
so they just need a small bank. But I just thought it was interesting. Obviously, we don't use any of their products or features or anything. So. Hey, in other news, I thought you would like this headline. I was like, we just need to calm down sometimes in the headline writing department. But this headline says, young adults embrace financial nihilism with risky crypto/stock bets as the American dream feels unattainable. Kids are so despondent that they're YOLOing meme stocks.
Look at poor Vinny. He can't even afford a BMW.
He can't find the Audi of his dreams. dreams. So he's got to YOLO some fart coin.
He can't even get a plug-in hybrid.
Oh my God. His dad
You might
wants
have to
him.
go to a Chevy for crying out
His
loud.
dad wants him to get a Honda CRV. It's over.
Or a Rogue.
His life is over.
Just to get a regular hybrid. Oh my God. Yeah, I mean, those poor kids. I mean, every one of those kids is trading right now. Look at that.
So young people are pushing typical investing strategies to the side, instead favoring high-risk alternatives like crypto and meme stocks.
How is a meme stock or crypto high risk when you're 20 years old?
Yeah, but if you have like $2,500 and
Being
it's
high
all
risk,
and it's
okay.
all in
Well,
one
that's the thing
thing,
to worry
no
about.
matter what that
Going to
underlying
a
is.
nightclub and spending $2,500 on a bottle of champagne is not any better for them?
Who is doing that?
The same kids.
Who are the kids that you?
I mean, they're going to Vegas for the weekend and blowing the $2,500.
Again, who are these children?
I mean, with all due respect,
Yes.
we didn't have meme stocks and we didn't have crypto.
Sure.
We were 25 years old.
Yeah.
General Motors.
But we would take the same amount of money, or if not more, and go to Vegas and blow it all.
Sure. So we had hookers and blow too. I mean,
Wow! Oh, hey! Oh, hey! Oh.
All I'm saying is, it's not like, yeah, they're not doing hookers and quaaludes. They're doing, they're blowing it on crypto. So
better. They're better than
way
us.
better.
I don't even know.
Where to start?
I don't even know.
They have only.
So, but
we didn't have.
but what about
It
though?
seemed like these are the first group of kids that ever lost their last $1,000.
No.
Okay, we started.
You learn.
We started losing money by going to Atlantic City when we were like 18.
Or betting right on the street corner with little sheet papers for football. I
hated-
mean,
I
taking
hated
you
those.
$20 that you had.
I'm gonna just pivot out of this. Hey, crypto startup Zero Hash announced they raised $104 million
go.
from Morgan Stanley, SoFi, Apollo, and others.
And us.
And us, yes, and us. Yeah, but we were not mentioned in this CNBC
You
headline.
never get me.
We did join this round,
Okay.
but let's just throw a little shout out there. We were the original investor in Zero Hash
Yes.
when it was a $10 million company.
Yes.
job,
Edward Woodford is the CEO
job,
and
Edward.
founder.
I love Edward.
Yes.
Been friends with him since he got out of college at MIT.
Wow.
Went to Oxford and then MIT. But
So a couple of party schools.
I'll tell you a brief story on Zero Hash because I'm on the board.
Yeah. You're on the board of Zero Hash? Wow.
Been on the board. So I have Edward called me one day and he said he had started another business and Zero Hash at the time was dealing with like the institutional side of the business.
Yes.
And it didn't work out. They raised some money, but it didn't work out. And he calls me, he goes, "You got some time? It's a Saturday." I go, "Sure." And he goes, "Can we meet?" I go, "Well, I got some stuff to do, so come on over to my house."
I got some ribs to smoke, but come on over.
I was substitute. People were in town. Whatever. I go, "Come on over to my house." So he came over to my house and we sat down. And I've always been a huge fan. I put money. He cold called me when he was 22 years old.
Wow.
Put money into his first cannabis exchange, whatever it was. And so I stayed in touch, but I didn't invest in a second business. And then Zero Hash, he came over and he said, "It's not working." He goes, "You got some ideas?" And so I go, "We'll invest if you change your model. And we'll back you guys, Tasty. But you got to do retail business so we can use you."
Right. Okay.
We needed a crypto firm. And he's like, "Done." Shook hands, done. I go back to work. I tell Christy, I go, "We're going to invest in Zero Hash." She goes, "What are you, out of your mind?"
She's the numbers.
She yelled at me for about 15, 20 minutes nonstop. And said, basically, "Listen, you do it yourself. And this doesn't. And I'm like, "We got to bet on this kid. He's going to be good." At the time, the valuation we decided on was a $10 million valuation.
Uh-huh.
$10 million.
Yeah.
They just raised money at $1 billion.
That's amazing.
That was probably 4 or 5 years ago. And
Probably more before that. It was before the pandemic.
I'll tell you some really interesting stories about this company because at first, they tried to raise more money. And,
Yeah.
And it was really hard. Nobody wanted to put money in. So I called one of my buddies at one firm. He goes, "All right." Another buddy, another firm. He goes, "All right." So they started to raise a little money. Then I called.
Look at you working the phones like Tammy Faye Baker.
Calling people. Like Jordan Belfort. Can I sell you this pen?
This is my favorite part. Then I called another firm that I'm not going to mention who, but we compete with them. But that's
Sure, yeah.
But I called their CEO and said, listen, I think you guys should put some money in this firm. It's going to be, they got something really special.
Right.
And he goes, it looks interesting, but I'm not interested right now.
Okay.
It was too cheap.
Sure.
That was at 25 million. That was the valuation then.
Yeah.
At 300 million, they put in 100 million.
What?
So
you're like, I told you, girl.
Oh no, believe me, they know. So we've invested a couple times. We actually took some money out once because somebody needed some stock, but then
Sure.
we put more money in on this round.
Yeah.
And we've been using Zero Hash from day one.
Yeah.
As our crypto firm, but we use them now. SoFi will use them. Morgan Stanley, which is E-Trade, will use
Sure. Yep.
them. Interactive Brokers uses them.
Yep.
TradeStation uses them. I can't even think. There's a gazillion firms.
Right. We don't stand alone. So that's great. Hey, I got to keep it moving here. Tether reportedly seeks a $500 billion valuation in their capital raise. What are these numbers? The issuer of the largest stablecoin is planning to raise as much as $20 billion, which again puts their valuation at $500 billion.
Where's Tether's home base? Does it say?
I don't know. I think it's
They're not. Are they U.S. based?
I think they have to be.
I just don't know where they're based.
I don't know where they're based. He can look it up.
Is it Miami?
Whatever.
Please.
If it's U.S., I'm guessing it's Miami, but I don't know. Well, I just wasn't sure if there's. That's a monster valuation.
It's crazy to me that Tether is worth $500 billion, but Uber that I use.
Company. It's not a U.S. company. Okay, that makes sense.
Based in El Salvador.
Okay.
In El Salvador?
It's owned by a Hong Kong-based company, iFinex.
Okay, that makes sense because what Tether has been doing, basically since they started, you couldn't do in the U.S.
Right. Oh, I see. Okay.
So that's like, they have such
3 degrees of separation here.
That's why they have so many. That's why they have such a lead on everybody else.
Yeah, but those numbers are crazy. What I was trying to say is Tether has a $500 billion valuation. I don't know anyone that has used it, but like a company like Uber, which we all have used and I use weekly, is only worth $200 billion.
That's right.
Tether's a great name.
Okay. Hey, the US CFTC is starting an initiative to allow stablecoins as tokenized collateral to satisfy margin needs in the derivatives market. That seems like a dicey sentence. 100%. What are your thoughts?
100% behind it.
You are?
100% behind it.
Why?
Because stablecoins in the US are all backed by treasuries anyway.
Okay.
So, yeah.
But everything has to be backed by the physical anyway, doesn't it?
Yeah.
But the dollar's not backed by anything.
Stablecoin.
The dollar's not backed by anything.
To me,
good faith of the U.S. government.
To me,
E pluribus unum.
To me, there's no. We just haven't commercialized stablecoins yet. But of course, they should be. Should be able to collateralize.
Okay.
Stablecoins, of course.
Chef recommends.
Yeah.
Hey, keeping it. What's Bitcoin doing? We'll just check in on digital assets.
A little bit of a bid today, back up to about 114,000, just a skosh under. Where remember it was under 112 yesterday.
Oh, okay. Doing any?
Back into a big.
You doing anything in Bitcoin or ETH?
No.
No. Okay. Hey, Micron beats on earnings as company sales rose 46% on an AI boom. Micron shares have nearly doubled so far in 2025. Micron's revenue came in at $11.32 billion versus $11.22 expected. Pretty good.
You know what? The stock was unchanged. Where is it? I think it was unchanged.
It was up like right after the announcement. It's unchanged right now, maybe down 50 cents. It was up about $4 or $5.
It was up $7 at one point, but then.
Oh my goodness.
The expected move was 15.
Yeah.
17.
Oh, okay.
And then it was.
So it should have just sold a straddle, huh?
Yes.
In hindsight.
Yeah. Yes.
I would like to sell a lot of straddles.
Subject
Darn it. I could have been somebody. OpenAI, Oracle, and SoftBank are planning 5 new AI data centers for $500 billion Stargate project based in Starbase, Texas. ChatGPT maker OpenAI says they will open 3 new sites with Oracle in Shackelford County, Texas. So cool.
Take that.
Those poor guys having to sit on that stage in those chairs. That is repressive.
With Ted Cruz. That's Ted Cruz, the second from the left.
Smashed in there.
Second, you can't. Yeah, that's Ted Cruz. So.
Did you see?
Nope. Gonna leave it alone. What's Oracle doing this morning?
I could do that.
Just want to talk about data centers.
ORCL 307 and change, down $7. Not near its lows of under 300, but getting closer. And I mean recent lows after it made that jump on September 9th or so to 3.
Yeah. Okay.
Have you ranked 73 and growing? It seems like.
Microsoft is looking to build an AI marketplace for publishers. Microsoft is in talks with select U.S. publishers about a pilot program that would launch a 2-sided marketplace that would actually compensate publishers for their content that was being used for AI products.
Yeah, agreed.
I just don't think there's any way. I mean, I like the idea of this in theory. I just don't think that any two parties could come to terms about what is a fair and equitable amount to be compensated.
I don't know how they do it, but I don't know how they're going to do it, but they sure owe us some money.
Well, but that's what I'm saying. Like, what's an equitable amount of compensation? Like, what does that look like to you?
I don't know, but one thing for sure is they should give us free AI forever.
Well, they should allow us to not have to use Microsoft for our email.
They should change Microsoft News and no search on Bing anymore.
Girl.
I got to have a conversation with Vinny because I saw a ding on my credit card for ChatGPT. So I want to see what he's doing with that.
Uh-oh.
He can use the Chinese version for free.
Hey, Google.
He doesn't need. He can use DeepSeek.
Google says that 90% of tech workers are now using AI at work.
Did you ask if is he doing his homework using AI?
I don't know. I'm going to ask him. I just noticed it on the credit card, so I got to see what's going on.
90% of tech workers are now using AI at work. Well, I think Google. I would say everybody uses Google AI for search now.
Not Google. No, just AI in general. So Google.
I know, but does that mean if you search something? Like, I would say that I use Google AI for search every single day.
Okay.
But I don't use AI.
But okay, so I think you're conflating.
I'm not conflating anything.
A lot of.
If I'm using Google AI, I'm using Google AI, but I don't use.
When you say you're using Google AI, what does that mean?
I'm just searching. I'm using it.
What does that mean to you?
So, but you're just opening the Google search bar and you're saying that that's AI.
No, I'm selecting they have an AI click.
Okay, that's what I was trying to ask you.
Yeah.
I don't know. I don't understand.
I'm searching using Google AI as opposed to searching using Google.
Okay.
Because I find it to be a better search.
Okay. Gotcha.
But I wouldn't say that I'm using AI. Like, I don't consider that using AI at work.
I use AI for some of my work processes.
Oh, you're in trouble now.
Oh. And the writing reflects that.
No, I don't use it for writing. I do use it for content content ideation.
Yeah, like what you did yesterday with me and Tony, that was not good.
No, I did get that idea. You're right. I did get that idea from AI.
Yeah.
But I finished editing the video and it's chef's kiss. It's really funny.
You do a very good job editing the videos, Vanessa.
So yeah, it's fun. So
It's just because we're so talented.
We give you a lot of material, is what it is, really.
Okay.
We're not that SMRT.
Are you doing anything in Google?
Yeah, you doing anything in Google is really what she wants to ask.
Yeah, I just want to get out of
That's
here.
what she wants to do. Ivy rank at 27, trading 251 unchanged.
Oh yeah, Google, I'm short stock.
Oh, okay.
Oof.
All right.
I'm naked short stock. I have nothing else in there.
Meta's
Or no bueno, but
Meta's Llama AI model will now be available to U.S. allies in Europe and Asia.
Can I say something about this?
Oh, yeah.
We just mentioned before that Tether is a great name.
Yeah.
So
Llama
horrible. Is the worst name.
No, but it stands for like large language
care.
model. No,
I don't
it's
give a crap
clever
what it
though.
stands
It's
for.
a
It's not
clever.
clever.
It's a
I hate
clever
things that are
mnemonic
supposed to-
device. Llamas are cute.
Llama,
No.
Meta's
They spit
Llama.
at people.
Llama is the worst name I've ever heard. Dude, and it doesn't.
I love the
doesn't
name.
have to have a large language model built. You don't need that crap. Llama is the absolute
Big
worst
black
thing.
large llama.
You've never seen the Llama Kids book? The Llama Mama? And the Llama?
BBLL.
What is wrong with you? What?
I'm like a shining star burning out. Sorry.
What is Meta doing?
Meta?
Yeah.
Coming up with some more acronyms.
Oh, no.
757 and change, up $2 on the.
But you know what's funny too? I forgot to say this. So you were talking about zero hash before. So Edward, who's the CEO, wrote a children's book, joking around. It's called Stablecoin for Babies.
I used AI to write a.
Edward.
Oh, that's.
I used
Great.
AI to write a children's book. It's called Benny the Bear and the Great Banking Crisis. It's available on Amazon.
Yeah, I remember.
Hey, Boeing has signed a contract. They're partnering with Palantir for AI adoption. Boeing's partnered with Palantir to use the software firm's AI solutions platform across the plane makers' defense unit. Boeing, Palantir. What you got?
PLTR has been on a little bit of a tear, sodding off.
When is it not on a tear?
383 and change. It's up $1 today. And Boeing
Boeing has been on its butt, but it rallied $4
up
yesterday.
$1 too.
Probably on this news. Are you doing anything in Palantir?
I'm not.
What's the IV rank in there?
I'm looking to get shorted.
PLTR has an IV rank of 19.
Oh.
Earnings of November 3rd.
Oh, ugh. Hey,
We are looking to get short Palantir.
Uber is launching prepaid passes
Yes, I do not like those.
Here's the thing. So, in societal discourse, normally it's customary to let the person finish speaking before then you add on what you need to say. If I could just
Don't
get the
try to teach
headline
them
out.
all.
I didn't go to finishing.
Uber launches prepaid passes for frequent routes. Customers can pay a discounted price when buying frequently made trips in advance, so you could maybe get a discount for all your trips to O'Hare.
What do you think of that?
I think it's amazing.
Okay. What is Uber doing?
I mean, Tom hates it. I have to look at the stock. All right, Uber, $98 and change, up about 30 cents. Earnings October 30th.
Oh, okay. Eli Lilly announced they are building a $6.5 billion manufacturing facility in Texas that would be the hub for their obesity pill as well as other drugs. What are you doing in LLY?
Yeah, what do you think about that?
Do not have a position in L currently.
Okay.
Oof.
Good. Lilly, always one of the leaders, top to bottom, as a big mover. Right now, basically unchanged, maybe down 50 cents.
In what is possibly the worst timing for a company that has been under fire recently, Disney announced yesterday they're raising prices for streaming packages. Do you not have a PR team or division? Girl, read the room. What are you doing, Disney? You were fighting for your life last week, and now you're like, you know what? We can charge everybody more.
That's when you already have a PR plan already laid out and you don't want to change it.
Yeah, but like, woof.
Woof.
Disney announced they will be hiking the price of many of its subscriptions, if you still hold one, to $2 to $3. The prices will take effect October 21st. So I did see something interesting, though. Some analysts from some bank or company floated an idea, and I was like, oh, you know what? That's really interesting. And they said what Disney should do is they should pull their ABC channel like off the air, so then they couldn't be influenced by like regional like network like a Sinclair or like a Nexstar, and they should make ABC purely for streaming. So then no one could you know make a snap federal decision because it's just a streaming like a Netflix. So you would pay.
I understood the first.
Okay. Well, all right. But you weren't interrupting me with your opinions.
Right.
I thought I was.
You really didn't understand.
Right. Yeah.
Listen.
Right.
All right.
If you understood, he would have.
What do you think about that?
I don't hate it, but
Can they charge us more? They can charge us more.
They're already charging you more.
Right?
because I don't have Disney streaming, I
Oh, so you can't even talk about it. I have Disney streaming. I don't like the idea.
I just thought it was interesting. What's Disney's stock doing? Can you
Up
talk
a
about this stock? Okay, there you
Or
go.
112 and change. On the end of its.
Starbucks has dropped a new line of spooky cups and tumblers. Halloween. I love Halloween.
Are you doing anything with bad coffee?
Available in the U.S. for a limited time while supplies last. The collection features drinkware that was designed to stand out. There's a glow-in-the-dark finish, 3D textures, and bold seasonal hues.
What are you going to do, like orange foam?
This is disgusting.
The one on the left, I would buy this and I would give it to Julia. Because I was like, that is a very Julia cup. I was like, I think she would like that. Not with the butterfly on the top. She would be like, I don't know what that is. But just the, but just the all black, matte black,
Julia's
3D,
a bad coffee girl.
3D printed cup. Well, she could take her Starbucks cup to bad coffee.
Oh, we don't.
But me, I want like
Will
the
you fill up the
sparkly.
Starbucks cup? I mean, is that something you'll do?
We'll do anything if you pay us.
What's that?
We'll do anything if you pay us.
I'm your private
Wash your
dancer. Hey, what's Starbucks doing?
I can't report on it until next week. Anyway, it's 85 and change, unchanged.
Okay. Hey, finally today for my viral video of the day, everyone knows, what do I love more than anything?
Robots!
Robots, that's right, robots. And this video, because remember I told you I get anxiety for the robot, the little Coco because with the Coco robots here in Chicago, and I just worry that someone's gonna like be mean to the robots.
You're gonna be mean to the robots.
So, but then I saw this video, robots get anxiety too. Watch this.
Please.
Watch this. No, this could be really bad. He's like, oh, no, me, you.
Well, I mean, the robot thinks it had the right of way.
Oh, so one of the funniest comments is, well, 3 dead in house fire, but Steve's KFC was still warm. Oh, no.
That's pretty good.
And then someone else just wrote, oh, it's doing its best.
That's pretty good.
Those are good.
Be nice to robots, everybody. But yeah, that's a dicey situation. Like, what do you have an emergency vehicle?
They got a program for that.
Yeah.
Yes, yeah.
Hey, look at me finishing right on time there. Bat, what's coming up next?
Great job out of you, as usual, Vanetta. We're going to take a quick 90-second break, and then we're going to come back. We got confirm and send next. Viewer emails. We're back in 90 seconds.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Decision to build Thinkorswim was a byproduct or derivative of 20 years. In our minds, the future of finance meant that we were going to move away from something that was very manual and move to something that was tech-driven.
What we did with Thinkorswim truly changed the industry. To do it a second time was a challenge that I just had to take. The platform is just leaner, cleaner, a little meaner, legitimately built from scratch.
Traders, start your platform. Tom Sosnoff and Tony Batista are hitting the road for their first ever live trading event, At Work by 11. It's unprecedented, unpredictable, and unlike any other financial event. Watch these masters make real trades in real time. Doors open at 8, the action starts at 9, and we'll have you back at work by 11. Sign up today at tastylive.com/events.
The amount of time I spend interacting with our customers via email or anything else is pretty much my entire life.
To be so powerful and so valuable, and then to be that approachable, just amazing.
Where else are you going to be able to email a CEO, get response back?
But you know what? Before he even knew who I was just some idiot trying to learn how to trade. And he still would email and help me learn and everything like that.
Some people say it's nuts, some people say it's insane. That's what I do.
Steve in Atlanta, thank you so much for holding.
My pleasure, guys. And let me go on record as saying I think you've got Tasty Trade is the best brokerage, and you guys have the best content, and I'm not here just schmoozing. Y'all are the best on the planet, period, for what you do. go on record as saying that. Tom,
Thanks.
you were the great disruptor when it came to forming Thinkorswim and then Tasty Trade. You're an innovator.
I appreciate you calling in. Good stuff as always. Thanks, man.
Wolf! The first half of this year's market has been giving the good guys the business.
It's certainly been back and forth for sure, Pete, and I'm getting whiplash over here.
With good mechanics, we can see Team Tasty stay strong in the second half.
Absolutely. Let's check out our starting lineup.
Tony Bat Batista, the John Jay College of Criminal Justice. Number 69, because it's one standard deviation plus one. And you know, I'm the Bat.
John McLaurin, Wisconsin, number 2, because I'm Beth's right-hand man.
Vanetta Logan, the Indiana University, number 3, because that's how many shots of bourbon it takes to make it through the first hour.
I like the looks of that lineup.
Well, be mechanical is always better than just trying to run plays to see what sticks, Pete.
When you got skin in the game, you stay in the game.
That's right. Now get off the couch and get into the game.
Watch Tasty Trade.
Beat the opening bell. Get trade ideas and market insights before the open. From the creator, Tom Sosnoff, and our chief market strategist, Tom Preston. Every weekday. Sign up at tastylive.com/newsletters.
Tomas, we are back, my friend. You know what that means. Time for a little more Tasty Live. With viewer emails, confirm and send. But I think one of your peeps has found footage from the Evergreen Cemetery.
Don't ruin my little bit, okay? What we have here is something very special. We called, put your hand up in the air, broken Tony's hand, and
Evergreen Cemetery.
Called the
Get to his presentation. Sorry.
We called the cemetery to get footage. All right, John, let's see what we got. Got video footage of Tony.
This is similar to the fence that I was going over.
Il n'a pas eu ce niqué, mais je crois qu'il va se niquer parce qu'il...
I didn't. This is not bad. I didn't get caught. I didn't get hung up.
No, that's what you say. This is.
And if he falls and gets hurt here, then it's pretty accurate. See, I used the sign to get up on.
This poor bastard.
Oh, man. Yeah, you get tired up there.
Oh, yeah.
Yeah.
All right, thanks, John. We got enough of Tony up there.
Getting back over was the even harder part with the busted flipper. Anyway, my daughter would pay big money if you have the video someday. If everybody knows Evergreen Cemetery in Brooklyn.
Not as good as the turtle video from yesterday, but obviously
we tried. Confirm and send Wednesday, September 24th. Sosnoff.
I can read Wednesday, September 24th. That's what I get to say. You get to say things like "Welcome back," blah blah blah. I get to say Wednesday.
I'm happy to be here. I get to say stuff like that in the presence of greatness.
Emails that came into us overnight from viewers all over. Our email traffic was very busy yesterday. Confirm and send Wednesday, September 24th. We're officially in fall, just so you know.
Yeah. Although it's been beautiful weather, though today's going to be a little bit.
I know. Let's go to the next slide. First slide. In the past, you've talked about calculating the one-day expected move in the market by taking the square root of 360, total number of days in a year, which is about 19, and then dividing the VIX by 19. Sure, that's kind of the way we do it. I read that you could use the closing price of the VIX one day and divide it by the square root of 252, the number of actual trading days. Is that true? And is one more accurate than the other?
You can do whatever you want. A lot of people in the first example use 252. We use 360 because every day has risk, and it's not just the trading days. But whichever one you use, be consistent. Use the same one all the time.
Yeah, that's the answer. So first of all, we use 360 days instead of 252 is the number of trading days. But we use 360 because that is standard industry practice. Because
it's like 6 of one, half dozen of another.
Positions go around the clock, blah, blah, blah. So we use, basically if we use the first formula. But could you use the VIX 1 day and divide it by the square root of 252, which I believe is around 15 something? And the answer is yes, you could.
Sure.
It's exactly this. It's not exactly the same. It's a slightly different, but it is a formula that's completely acceptable in this industry. So it is true. And is one more accurate than the other? That would be a good question for our research team, because I don't think that we've ever compared those two formulas. They're going to be very similar.
Yep.
But I don't think we've ever compared them to see if one's more accurate than the other. We could challenge the research team to do that. But both of those formulas are correct. Let's go to the next slide. I'm brand new to trading and trying to wrap my head around the lingo and how to set up trades. You guys have a ton of great research, but for someone like me, where do I begin to start learning that lingo and how to set up a trade?
Lingo and how to set up a trade. Well, I think you learn the lingo by just kind of watching and listening to us talk. And we try to explain the lingo as best as we can. I mean, it comes pretty quick. I mean, I went to John Jay College of Criminal Justice, so maybe I have a leg up on some of the lingo that we use here, being so studious as I am. But you can go to our Learn Center, which I think is phenomenal. It's free. You can try that. We also have a little glossary at the bottom of tastylive that you can go to. Hasn't been updated in a little while. Maybe we can get to that someday too and set up a little bit more. But it's pretty easy after that. So I would do those things.
This particular show, I shouldn't say this particular show, but tastylive, more than any other financial network anywhere, uses a lot of trading lingo because for the first 4 hours of the show with Tony and myself and Liz and Jenny, we talk, the four of us talk a weird language that we grew up on the trading floor with. And so the first 4 hours of the show has a little bit different lingo. When we do other shows, like a CNBC or Fox or some other stuff, people also don't know what we're talking about. Like, they don't use the same lingo. In Chicago, very, very common, but other places, maybe not so much. So yeah, you're right. The first 4 hours of this show, we got weird lingo. But it's kind of what we grew up with, on the trading floor. So we pass it on. Like Tony said, watch the show. Everybody figures it out. It's not hard stuff.
Not hard at all.
Everybody figures
it out. You got this.
Yeah, Nikki Batista did a fun, series on some of the lingo. Remember we did that lingo series kind of thing? Yep. We'll try to dig it up or something. We'll see. Let's go next slide. I've been buying these covered call ETFs for the dividend, but the value of the ETF seems to drag. I want to keep the positions because of the dividend, but I also want to protect the underlying from falling too far. What strategy would you use to protect the downside? Can you sell a covered call against a covered call ETF, or should I just buy a put?
Or you can stop trading them and do it yourself. I mean, there are a lot of things that you can do. You can't have your cake and eat it too. I mean, this is a bullish position that does have some fees associated with it. And unfortunately, that's
heavy
just
fees.
What's that? Heavy fees. Yes, that's just the nature of this piece, and that's why you're seeing that drag. I mean, you can simply buy, SPY and sell a call against it yourself and save yourself some of those fees. I don't know any other way to do this.
So I have a couple things to say about this. What strategy would you use to protect the downside? Well, because it's an ETF, sure, you could sell a covered call against a covered call ETF. Absolutely, 100%. I mean, there's no reason you can't. We would never buy the put. We would sell
a call against a covered call ETF. So they're long the stock, sell a call somewhere else.
They're just an ETF. Just think of it as an ETF.
Yeah, they bought the ETF, which is synthetically
against it.
Okay, but that would make them on the upside. That might get them short, right?
No, that's still a bullish trade. It's the same thing.
Oh, in the ETF itself. You're not saying an SPY. I'm so sorry. I'm so sorry. Right. Yes.
Yeah, just sell a covered call in that underlying ETF if they have liquid options.
Yes.
We wouldn't buy the put. But I got in a little trouble the other day because I was doing a podcast and in New York, a popular podcast with Josh Brown, The Compound. Anyway, it was a fun podcast. It was a fun little thing. And I enjoyed talking to those guys. But they asked me this question about these ETFs because they said the net return on some of these covered call ETFs is so bad because of the fees and because of the way they adjust, all this stuff. I don't trade these, but they asked me.
And some tax liabilities.
Yeah, they asked me, what's the deal with these things? Why are the returns so bad? Why does anybody use them? And I explained to them that sometimes, if you go back to 2007, there was a lot of closed-end mutual funds that did covered call. It's the flavor of the month. Then I forgot we have a really close friend that manages probably the biggest fund in the world that does this. And he texted me on my way home and said, "What the hell? What are you talking about?" I'm like, "Oh, shoot." I knew immediately that I messed up. And I'm like, oops, I didn't mean to. I wasn't talking about you, because he's a great trader and one of the best in the world. And and he knows what he's doing. So there are some people in this space that are very clear of the concept. My argument at the time was that a lot of these funds, because you can't go into the listed marketplace because it's too small, you have to go into the OTC marketplace, and the counterparty will be Goldman Sachs, Morgan Stanley. So it's very inefficient. That's my only answer, really. But
Boy, did
I get in trouble.
Boy, did you come down from your perch.
Well, he's a buddy. Let's go next slide.
I know who he is.
When putting on a trade with 35 days to expiration, as an example, and I want to place it, and I want to place the strikes at the expected move, would you use the expected move at 35 DTE? Or since I plan to manage at 21 days, should I use the expected move at 21 days, 14 days, whatever it is?
Sure. I go, whatever. The monthly options are the ones we use. That's the expected move I use.
You're going to use the expected move to the expiration that you're doing. I don't care if you manage it 21 days, because you might get out after 2 days.
Right.
You're going to use the expected move at whatever the expiration is. You're not going to do the 14-day or 21-day. If you're doing the trade with 35 days to go, you're going to use probably the 35-day or the 40-day, the 45-day, whatever that expiration is. Okay, that's what you're going to use. All right, you don't use when you think you're going to manage it.
Mm-hmm.
You use where it is when you put it on. Let's go next slide. I've been fortunate to be long some of these stocks like RGTI. I do not know what that is.
I don't know what it is either. I'll look it up right
RGTI. We're going to look it up.
Rigetti Computing.
Oh, it's a quantum computing company.
That is correct. It's gone from $15 to $31 this month.
So it's doubled this month. So I've been fortunate.
The month of September. It's had a very good September.
Good for him. I've been fortunate to be long some of these stocks like RGTI that have had crazy runs higher. But I think they're a bit over their skis, and I want to protect my gains. Since my gains are significant, would you simply use some of that to buy a put? While I think a pullback is likely, I also think another surge higher is too. And I'm worried a covered call will come back to bite me.
There is a lot of call skew here, and by you think the covered call is going to bite you, you assume that the stock is going to go down too much to cover the credit of the covered call you're getting.
No. That's not what he thinks another surge higher is coming. So he's worried the covered call is going to come back to bite him by limiting his profits.
Again,
I'm just saying.
I know. If you're looking at it the other way, I was going to say you get $6 for selling the call. It's a $31.
He doesn't care about that. He cares about capping his profits too early.
Well, we have a conundrum, don't we now? I guess you could. There's definitely call skews, so the calls are really expensive, which means naked calls are going to be expensive. Call spreads are going to be cheap, so you can't sell a call spread to maximize your upside from there. So it either is a covered call or nothing with the calls. If you want to look at the put side, your gains are significant. You want to buy a put. It does look like the markets are fairly tight and liquid here, maybe 10 cents wide, maybe a wide put spread. I wouldn't mind it.
Okay, so if this is me, you have two choices in mind. Of course, you could buy a put. I have no issue with that. You had huge gains, Stock's doubled in a month. You want to buy some, 25 puts or some 30 puts, whatever, 27.5 puts if they have them, whatever it is. Sure, go ahead. Buy the 30 puts. Buy a big wide put spread. Who cares? Either one of those is fine. The smarter move to me is just take a little bit off the table.
I know, but people don't want to pay taxes, all this other crap, capital gains, blah, blah, blah. They don't ever want to reduce this.
Then buy the put. Who cares? Just buy the put or a wide put spread. We would sell the call, but if you're worried about capping your upside, which I think is ridiculous, but whatever. Let's go next slide. Buy the put.
Yep.
And the last slide. When a covered call goes in the money, what do you do if there's still a lot of extrinsic premium remaining? Do you hold it and hope to squeeze out a little bit more juice?
You said a lot extrinsic, so it happened pretty soon. There was a lot of time till expiration, so that must have a very big expected move in the stock. Otherwise, the extrinsic value wouldn't be there. So it's all really priced in and just. I'd pat myself on the back because you have a nice trade on, and then I would probably sit. I mean, still bullish on the stock. Sit. I mean,
when a covered call goes in the money, that's usually a sign for us to take profits regardless of the amount of extrinsic premium remaining. But if you really still like the stock and you want to squeeze some more money out of it, of course, hold. Do you hold? You certainly could. You could hold and hope to squeeze a bit more juice out of it. We have no issue with that at all. It's not the way we trade.
No.
So when we have a covered call on and the call goes in the money, we pretty much will take our profits. It's just, that's kind of the mechanical thing to do. But if you want to hold on to it and squeeze some more out of the juice, you got a couple bucks of premium in there, sure, hold on to it.
Go for it.
Go for it.
Why not? Hey, you know what we got to do now, Saz? We got to take a quick 90-second break and come back. We got more Tasty Live with an option jive next. And the opening bell's coming, too. Back in 90 seconds.
Global markets never sleep. Explore them with Forex, now available on Tasty Trade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on Tasty Trade.
When the market moves, traders need to move faster. Tasty Trade Active Trader Tool offers full depth of market visibility, one-click order entry, and instant position management so traders can react in real time. While others charge for professional tools, Tasty Trade provides them for free. Opportunity can move fast. Seize it with Active Trader. Try it now on Tasty Trade.
If you've ever been curious about where to start with crypto, join me, Ryan Grace, for the Tasty Crypto Show. Alongside co-hosts and industry guests, we'll break down what's going on in the market and show you how to take advantage of crypto. No hype, no shills, just crypto know-how. Watch us live, join the chat, and fill your bag each week on the Tasty Crypto Show.
The future of trading is here. Join Mike and his whiteboard, plus the Tasty 2 live crew for 90 minutes of probabilities, punchy portfolio mechanics, and trade tactics. It's totally free and unreasonably fun. Come early to enjoy a drink with the crew and stay for a Q&A after the show. Space is limited, so register today at tastylive.com/events.
People are always asking, where can they find my podcast? There it is, son. Look at that. Option Trades Today. You can listen here.
And everybody's waiting for my podcast tomorrow. Option Trades Today, every Tuesday and Thursday around noon. If you want to learn, sir, every Tuesdays and Thursday, Option Trades Today. You can find me on YouTube or wherever you find your podcast.
Option Trades Today. You listening to me? Option Trades Today comes out every day around noon. Every Tuesday and Thursday. You too can stick with the bat.
Got trader's block? We've got the cure. Get data-driven trade ideas with Cherry Picks, our weekly newsletter that gives you insights into the market. Sign up at tastylive.com/newsletters.
Look who's back testing.
Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
There's a beast in the financial world, and it's not the bull. If that's you, join us on Tasty Trade. Genius loves company.
It's options. Jive. It is time for an option jive, Sosnoff. So let's get to it. Even the S&Ps, before we do, really haven't looked at the market yet today. So let's do that real quick.
They really haven't done anything.
Well, it's up $10, been up $10 pretty much for most of the night. We had a very tight $17 range, which is really about the range for the day. You got an $18 expected move for today, a little bit higher than the expected move from yesterday. NASDAQ where it had a larger move than expected or implied. Netflix. I'll do it again. This is the NASDAQ, Sosno. /NQ is the NASDAQ. It's up $50. Russell's up $2, and the Dow's up 48. Volatility in by 7 cents, 18.18. Volatility's been up the last 2 or 3 days, taking a very small breather right now, up 7 cents. Bonds are down 7 ticks. I know you nibbled on them a little bit. They're trading 116.11 is the low, 116.12.
I'm a buyer down around 116.07, 08. I'll buy some.
Additional buyer.
A
Bitcoin up 1,400 to just under 114,000. Oil up 96. All right, you're clapping. We had enough. Options.
I had enough, but I just have one question.
Sure.
It really bothers me.
Sure. Do you have to buy every dip that's 1 day in duration? Yes.
That wasn't my question, but that's true.
Okay, cool.
How come when I do an earnings trade like an MU and I stay really small, the stock's unchanged, the $15 move? Yet when I do a big trade,
like an Oracle,
the stock goes up 4 standard deviations.
You did get a little rambunctious in Oracle. I didn't really.
I know, but it goes up 4 standard deviations.
Yeah.
And like just stupid stuff. And then when you decide, hey, you know what, I don't want to do anything because I don't like this stock, it doesn't. You have a little tiny position on. It goes unchanged.
I don't.
That is
one of life's mysteries, Sosnoff.
Yeah, those when the option gods just kind of mess with your head.
Yep.
Not like that.
They're not happy with you.
It's 8:12 in the morning. I'm Tom Sosnoff. He's Tony Batista. We are in Chicago, West Loop of Chicago.
Mm-hmm.
That's downtown Chicago. Tasty has always been a Chicago company. We've been here. We're 15 years old now.
Are we officially 15 now?
We went live on the show in May of 2011, which would make us a little over 14 and a half years. But we started the show about
6 months.
6 or 9 months before.
Yeah.
We did 3 or 4 months of live shows before we ever put one on air. They were not pretty.
You looked beautiful with those headphones on.
No, this is before us.
Oh, before. You're talking about with
we had a bunch
comedians.
of comedians and all this other stuff. And it was
that was a tough one.
It was tough.
Mm-hmm.
A little brutal. Anyway, the Bat and I will be on the road we leave a week from tomorrow. And we'll be at the Fonda, the famous Fonda Theater in LA. It truly is a very famous theater. It's in Hollywood. We will be at the Fonda Theater in LA Friday, October 3rd. Doors open at 8 a.m. Show starts at 9 a.m. You want to be there.
Yes, you do.
It's an important show for us, and we can't wait to see everybody out there. It's called At Work by 11. Doors open.
You could be back at work at 11. That's why it's called.
The only problem is in LA, nobody works anyway. So nobody has to go to work. Nobody has to go to work by 11 because they don't work in LA.
I apologize for him in advance. And if you come out, I'll apologize right in front of you, too.
What?
Nothing.
My son lives in LA. I always say to him, what the hell does anybody do in this city? Like, I don't know. Why is everybody here? Like, does anybody in the city work? LA, I love LA, but LA also drives me crazy.
I've only been to LA a handful of times. I haven't found a love for it yet.
My son,
he loves it.
Loves LA. All his friends that came.
But I'm not cut from the same cloth as your son. Like I don't have a silver spoon and all that other stuff.
A lot of my son's friends ended up in LA too. I don't know why. For film,
that's the private schools and stuff like that.
And
you worry about Vinny going to CarMax for crying out loud.
They all love it. Every one of his friends that lives out there loves it. And they all live in downtown LA.
Yeah, it's great weather. Trust fund comes every, 2 weeks. I mean, it's a beautiful thing. You don't have to work, have babies, pop them out, bada bing, bada bop, bada boom. It's all good. I mean,
short flight to Vegas.
Palm Springs. Stop for a couple of days. You know what I mean? Go on a pool, dip.
Juice up the private jet, go right to Aspen.
Yeah, private jet, whatever you want to do. Yeah, get the PJ. Yeah, it's nice. What a life.
Anyway, I do love LA. Some of the best. I would say LA could be one of the best food scenes in America.
Oh, I thought you were going to make for talent. I mean, it's one of the best for talent. I mean, food. I don't know.
For talent, it's an absolute no-brainer.
We're talking about talent like our own Tim Knight, who comes on at 2:15. That is correct.
Anyway, we'll be at the Fonda Theater. We do love LA.
Yes.
And like I said, my son lives there. Can't wait to go out and see everybody. And sign up at tastylive.com/events. And when you're there, you can tell me what anybody does for a living there. But we're still going to have some fun with all the traders out there. tastylive.com/events. We've done probably 20 shows in LA over the last 20 some odd years. And every one of them has been great. It's one of our favorite cities. All right, let's do it.
I'm ready.
Trading the Magnificent Seven. Let's see where the boys on our research.
We're not talking about the movie that we were talking about with Charles Bronson yesterday.
Trading the Magnificent Seven.
Just a coincidence.
Winky dink.
Great movie, by the way.
The Magnificent Seven are large cap tech giants, mega monopolies, mega tech monopolies. Alphabet, Amazon, Apple, Meta, Microsoft, Nvidia, and Tesla. By the end of 2024, they made up 1/3 of the S&P 500's market cap and drove much of the year's returns. The Magnificent Seven are named after the 1960 Western movie of the same name. What? Who's the Magnificent Seven?
You remember the Magnificent Seven?
I do remember it, but it's like, I don't remember it.
It was with Charles Bronson. I'm going to look
it was? Okay.
Yeah.
It's a Western. It's a Western.
Yeah, obviously. It says Western, John.
Was Charles Bronson in there? Am I thinking about...
Yes, he was. So was James Colburn, Steve McQueen, Yul Brynner.
Yeah.
I think I've seen it. I was thinking The Good, the Bad, and the Ugly, actually, but it's different.
I'm talking about the Magnificent Seven from 1960, not the other one that you guys watched.
The Good, the Bad, and the Ugly? I think it's like...
No, Good, the Bad, and the Ugly was good too, but they made another Magnificent Seven like 2016.
Okay.
I'm talking about the original one from the 60s. Beautiful.
Many traders ask how to trade the Mag 7. How do they differ from the SPY in implied volatility, historical volatility, and price IV relationships? Let's go next slide, John. The Mag 7 tend to have larger implied volatility swings than other underlyings, which is surprising. Stocks with high implied volatility can be tough to trade because of their extreme price moves, and their implied volatilities tend to linger at high levels for extended periods. I mean, there's no question. We've seen, probably the one that's had the only one that's been pinned over 100, I'd say probably Tesla. This year we've had a couple of times, but there's been some other ones, specifically NVIDIA. You can see it on here. Tesla and NVIDIA have had kind of the biggest spikes. I would say Tesla's, Tesla and NVIDIA are the two most liquid, and Tesla and NVIDIA have had the biggest IV spikes this year. Let's go next slide. Good slide. Strong cash flow, steady revenue, real companies. That's what these are. Market leaders, global reach, huge volume, tons of liquidity. The whole world's invested in these.
Sure.
You could go to anywhere in China, anywhere in India. People are invested in these same stocks. These are, if they're 30% of the S&Ps, you're talking about many tens of trillions. Let's go next slide. But they do have things like growth limits. Maybe you would think they'd have growth limits. I thought when they got to $1 trillion, but $4 trillion seemed to be easily within reach. So maybe they can go to 5 or 6 trillion. Who knows? Premium prices, no question about it. Portfolio concentration, we've been talking about that red flag forever, and obviously market sensitivity. But to date, there hasn't been much of a problem. They have survived all of these red flags. Let's go to the next slide. So the Magnificent Seven stocks are not as similar as initially expected. And when you look at the correlations on here, it is quite surprising. Tesla, you would think that these things would all be highly correlated.
Yeah, I would think they would be highly
You
correlated.
would think they'd all move together. Apple, Amazon, Microsoft, Google, Tesla, and Meta barely have a 0.5 average correlation. They don't even meet the minimum for us to say that they're highly correlated. It's crazy.
And it might be the reason why I prefer Tesla. Just taking a look at this, it looks like it's one of the lowest ones to the overall market, which has been going in one direction.
Yeah, Tesla to the S&Ps are completely, there's no correlation.
Yep.
I mean, 0.4 is not a 0.36 is not a correlation. But even these stocks to one another, it doesn't even reach the 0.6 or 0.7 that we would consider to be a tight correlation. So these are relatively not correlated. We wouldn't say these are uncorrelated, but they're not that tightly correlated, not nearly what you would think. Nothing like S&Ps, NASDAQ, Russell, that kind of thing. That's like 0.8 to 0.9. These are 0.35 to 0.55. Let's go to the next slide. So the implied volatility, historical volatility spread shows us how much a stock's implied volatility over or understated relative to the price volatility observed. We saw that implied volatility overstated between 61 and 81% of the time, depending on the underlying. So when you start to look here, the funniest thing is that the SPY had the greatest overstatement. Never would have guessed that.
Me either.
Never would have guessed that. The one that had the worst was NVIDIA. That I can easily guess because I can tell you from my P&L. NVIDIA was the worst. SPY was the best. I would have never guessed SPY was the best. I would have guessed NVIDIA was the worst. Tesla, Meta, Amazon, Microsoft, Google, and Apple are all kind of in the same boat. So I don't think there's a lot to take away from that slide because the difference between 73 and 74, 75, it's pretty small. Well, let's go to the next slide. The trade-off of the higher implied volatility is that you get a lower percent of the time that IV is overstated. That means choppier P&L and larger losses. Despite SPY being the lowest IV underlying, its overstatement rate was the highest, and the average premium over of IV, which is implied, expected future premium over historical volatility, which is what actually happened, was the highest. And so you can see there, average IV premium over historical premium. SPYs were one of the best bets. Apple wasn't bad. Tesla wasn't bad. NVIDIA was tough. Meta was tough. Those two, I hated those two stocks. Google was tough. It's a good slide. I mean, there's a lot of
good
cool numbers on
there.
here.
Yep.
Yeah. Next slide, please. And here we have the high flyers that had the highest implied volatility in green and also had the weakest price IV correlation. Additionally, the highest IV stocks occasionally saw periods of positive price IV correlation where the lower stocks almost never did. So the percent of the time of the positive correlation here, I mean, this is kind of interesting. But again, not making
So what do they mean by the weakest price IV correlation?
Price to implied volatility. So in other words, when the price moves, what happens with implied volatility?
Got it.
Okay.
So when the price move, volatility really didn't expand.
So the percent of time that like the SPY, when the price went up, volatility goes up was 0. That's what they're saying. But
I mean, you can tell that now by why SPY is so cheap.
Right. And if you look at NVIDIA, 13% time. But if you look at Tesla, when Tesla went higher, volatility went higher.
Again, this is another reason why I think Tesla, for me, has been, who knows in the future, one of the better trading because it didn't have a high correlation to the market, which is at all-time highs, and volatility expands nicely and contracts nicely. So I think that's, if you're playing expansion of volatility or selling premium the way I do, Tesla would be the best one on the board here if you were going back in time.
Let's take a look at the next slide. And
Love this study by the team because it validated me.
The Mag 7 are powerful market leaders offering unique trading opportunities with strong growth potential. But they come with unique risks that require careful, informed trading. You say it about anything. When trading stocks with high IVs, we notice the following differences when compared to trading a low IV underlying, like the SPY. IV will tend to understate actual price volatility more frequently. The amount of IV overstatement could be razor thin. IV will have a weaker average correlation to price, and IV sees seasons of positive and negative correlation with price. These characteristics of high IV stocks imply that it may take a long time to realize consistent P&Ls and pops. I wish we knew that in advance because you really don't, so it's not that easy. But
that's true.
I think it showed that it's not that bad an idea to trade SPY sometimes.
Awesome. Let's take a quick 90-second break and come back. We got the opening bell next. Let's Tasty Live.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that one-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
Tasty Trade has crypto, and you can trade with zero commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
Dear Kaylee, hats off to you for being such a culinary genius. I don't think it has ever dawned on our kitchen staff to serve gazpacho hot. Sincerely, Bob.
Sometimes it feels good to get smart. Get even smarter with live trading insights and some live taunting.
I don't want to fact check you with my vagina, but I will.
From the smart mouths at Tasty Live.
If you missed the live show, here's our cherry on top weekly recap.
Do you remember Gilligan's Island? It's near and dear to my heart. Every day I come home from school, what do you want to know? Let's sit right down and hear a tale of a fateful trip that started from a tropic port aboard this tiny ship. 5-6 passengers set sail that day for a 3-hour tour. See, you didn't think you were going to Gilligan's Island.
3-hour tour. Which one was Bob Denver? Was it this here? Which one was Bob Denver?
It was a great show. It was very inspirational and motivating.
I feel like you got to know each of the traders a lot better on a personal level. It was awesome.
This is my 10th or 11th live event. I thought the math was really complicated and it wasn't, and then it just made sense.
They've opened my eyes to many different strategies.
And I realized there's a reasoning and strategic planning that you could do to be successful. I love all you guys.
Class is in session. Dr. Jim Schultz is bringing the heat to Options Crash Course Live. This 90-minute show features Dr. Jim in his professional prime. All of the gimmies, none of the gotchas. Come early and grab a drink with Dr. Jim before class and stay for Q&A. The event is free, but space is limited. Register today at tastylive.com/events. It's not a lecture, it's a lifestyle.
What's up, everybody? Check out my new series, Life Cycle of a Trade, where I show you my real-time trades with insights into strategy selection, adjustment mechanics, all the way to the closing order for all of the Tasty Live core strategies.
Tomas, we are back, my friend, with just about a minute to go before the opening bell. E-mini S&Ps are actually, right there at the highest they've been all night. 67.28, 67.2875 is the high. NASDAQ up 56. Russell only up $1 and change, weakest of the group. But really, we have an unchanged-ish market all to the green side with the Dow up.
Yeah.
Yeah, I mean, it's between friends. I mean, 12, 13 handle move. I guess when the expected move is only 17, 18 handles, 12 or 13 handle move is a big move. But not after you saw yesterday, you know, we had a 40 handle move or more.
I want to get short a lot more gold here. I sold some on the close yesterday.
Gold down 14, but it was about $20 lower, $17 lower. So it's trading right at 3,800, sitting right at there at the 3,800 level.
I know. I want to get short more here.
I said yesterday I thought gold was a better short than the overall market. So
you said GDX was a better short.
GDX, yes.
Gold and GDX a little bit different, but I think gold.
Yeah, well, GDX up like we just said, like 100%.
GDX is just a pain to trade.
It is a pain to trade. I have it. That's your opening bell sign. If you have a low ding there, GDX is down 28 cents as foretold.
Oh my God, it's over. It's all over with the crowd.
No, it is up $20 without a downtick, but today it's down 28 cents.
Gee, where are we here? So I got to take a look at MU because I did a couple of trades.
Yeah, MU for earnings should work out. I mean, stock's down $2.70.
Yeah,
15-ish dollar expected move. I mean, what do you want? I mean, that's a home run for a guy like you.
What do you want?
What do you expect? What do you hear? What do you say? MU. Let's see what other movers early on to the down. What's BE? Bloom Energy. Never heard. Down $9. Big 12% move.
Bloom Energy.
Bloom. United Therapeutics. Never heard of that either. Down $8. Let's see something I have heard of. FCX. Freeport McMoran. Hopefully that's in the GDX ETF. It's down $3.50. AMAT down $3.40. Oracle down $2.70. AVGO and Netflix down $1.50 and change. Okay. Oh, I just missed it. OKLO down $1.60. Let's see what's moving us to the upside here. BABA up $12. Did you mention BABA yesterday? BABA up $12. That's a big 8% move, Southnoff. What's going on with China? Baidu up $5. Tesla up $4.
Baidu was down big yesterday.
Honestly, it's up $5 today.
I know, it was down like $11 yesterday or something.
That's up big today.
MU. Oh my God, they murdered these strangles.
Volatility. What you mean to say they murdered volatility?
They murdered the strangles. Stock's down $2. They crushed it. So we made money. Take it.
I mean, you did a nice ratio spread. I mean,
ratio spread worked. I took it off.
You're welcome.
We bought it back for 4 cents.
Beautiful.
Sold it for 54.
Beautiful.
Let's see. Ooh, missed gold.
That's what happens when you have a $15 expected move and nothing happens to a stock.
I know. All right, let's take a look here and see where the problem children are.
Where are the problem children, Sadnov?
Where are the problem
children gone?
It's a good question. Where are the problem children this morning? Spies?
Well, you have short delta in there. That's your
RBLX. Ugh.
RBLX up $2. Yeah.
Nike, which is a PIG pig.
Yeah.
Baidu, not really.
Baidu up 4 and change, like I said. Even the S&P's up 8.
Baidu was so weak yesterday. I just didn't want to. I didn't want to be aggressive.
I know you didn't.
I'm gonna roll ups. I'm gonna regret this.
You're gonna regret this.
I'm
rolling up putties.
Markets in there suck. And Baidu.
Yeah. Markets are.
I'm gonna regret rolling up puts in there.
Regret you may. Tight range of volatility so far.
Yeah.
Bitcoin still hanging out at just under 114. Oil up $1. Gold down 17.
I need a crash, pretty much.
You mean a crash of like what, 3% would do it for you? Something like that?
Oh, I don't even need 3%. I mean, you can give me. Can I get 1%?
You're begging now.
Can I get 1%? I don't like this market here. I just want to go on record. I don't like it. And I think we're getting to the point where it's going to get very interesting. Because I don't think these rallies if you're going lower, these rallies can't hold. Like Reddit tried to rally this morning. Apple tried to rally this morning.
Stop yourself.
I'm pissed I didn't sell either.
Let's get a little bit more of a move to the downside before we say this, right? I mean, but I hear you. It's encouraging for two-sided action. I do hear you.
Gold's crashing.
Yeah, off of all-time highs. It's taking a one little breather here. Yes.
I need a little help, please.
A little help from my friends.
Let's take a look and see what kind of commodities are moving here too, just to get a little point. Euro. Ooh, Euro's down big today.
Euro is down big. /6E. I should have mentioned that. Down
800.
Yes, it is.
First big down move. We've been short euro, so I'm happy about it.
Right, that would make the dollar stronger. I think the yen was
Yen's down too. We're long yen. So
down
a yen-euro position's offset.
You got like the cross on. Isn't that the cross or something like that? I always get them.
I don't know what they call it.
Yeah.
Let's take a look at something else. Bonds, nothing. Notes are down. That's ugly. Dude, I'm ready for a little. I'm ready to put some trades on.
Beautiful. Let's do that because we got What's Your Assumption next. We'll be back in 90 seconds. It's Tasty Live.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
When you define risk, you set a limit on how much you could lose if the trade goes bad. If you have a small account, you might not be so interested in selling naked options. You'd use up much more buying power, and the risk is undefined. Defining risk, though, controls how much you can lose if the trade goes sour, and it gives you back some of that sweet, sweet buying power. We can define risk by combining options into certain strategies. The short put vertical spread is the simplest one. Selling this put sets your max profit with the credit, and the long put at the lower strike blocks off the risk where you want it. And if you're more neutral than this, you can throw on a vertical call spread to make it an iron condor. The only downside to defining a risk is that it lowers both your max profit and your probability of profit. That little compromise might mean you rest easier, though, and a good night's sleep is priceless. So see, we can define risk when we use more than one option at a time. Pretty simple.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
I literally spent like $2,000 to paint my car from red to black, and then like a year later, it didn't have the car anymore.
What's the most financially irresponsible thing you've ever done in your life?
Oh, yes. Okay. So when I was like 16 or 17, I was working at Jewel Osco. I was pushing carts. I was making like $7 an hour, $8 an hour. But for whatever reason, I decided my car had to be painted from red to black. So I worked for like 6 months. I literally spent like $2,000 to paint my car from red to black, and then like a year later, I didn't have the car anymore. So I worked for 6 months at Jewel pushing carts to paint my car for literally no reason. And that was the most irresponsible thing I've done. So don't let your kids do stupid shit like that.
What kind of car was it?
It was an Acura Integra.
Just buy a lot of near-term weekly options. If I had a $100,000 account, I was long like 20 grand's worth in the front month for sure. Don't do it, kids. Don't do that.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to Tasty Trade. So spread the word and earn rewards. Terms and conditions apply.
We are back, my friend. The Nasdaq just turned red for a second. It's now back up 13. Even the S&Ps are up 3. Russell up 2. Dow up 106. But all that means nothing, South. Everyone know we got. What's your assumption? That's right.
Down.
What's your assumption?
I'm ready.
I am ready too.
I need some trades.
You come to the right place.
But I've come to the right place. Okay, good. What do we got here, John?
Bring it to us.
Oops, I just canceled an order by accident.
Well, the good thing about that, you just right-click, cancel replace, or similar order. Boom, you're right in.
Remember, I'm the one who built this.
One-click functionality.
It's 8:40 in the morning. Let's see what we got. What's your assumption?
You know, if you're ever, not able to do the show, you are no longer the creator of that stuff. I am. You know that, right? Like, if it happens where
can't get filled in this.
You know that, right? The truth comes out and I say on everybody.
Our boy from Menlo Park.
Who?
Cena from Menlo Park. He's always right. He's the most bullish customer we've ever had.
Really?
Sell Rosh Hashanah.
He's bearish here.
Sell Rosh Hashanah.
He's the most bullish. He's getting bearish.
Tom rubbing his eyes, see me bearish short term. That is.
You're 100% correct, and this would be another sell day if you're on Rush.
Making sure his vision is working. I know. This guy is so bullish. He writes me all the time.
Now he wants to sell.
Show me SPY will finally stall out 666 top maybe. But now I'm finally bearish short term to 6,600 in the SPX. Where's the SPX right now?
He is wildly bearish here, Sadnov, because it's 66.57. So it's down 57 handle, Sadnov, which is about a 5-ish day move.
1%, which is fine. I'm super bearish too. What would you like to do? I got a bunch of different things going on here. You know what I'm going to do? I'm going to add to my. The other day, I sold some ES call spreads. I sold the 7 in November. I sold the 700, 725 for a little over $5.
Okie dokie.
Let me get to this. November. And the reason I did that is because the expected move in November was about 300 points. We're trading at, let's say, 6,700. So 7,000 was good. So I kind of like this trade. And 700, 725. Mid price is a little bit. We're gonna see where the mid price is right now. 515-ish.
Okie dokie. So far, we have a non-event in the market.
What?
So far, we have a non-event in the market.
Let's see. I'm selling. Yeah. Not letting me. What did I do?
What did you do wrong? What did I program wrong that you're not able to do something?
I don't know. I must have done something wrong. I can't route this order for some reason. I must be setting it up wrong. Wrong price. I'm not sure. Or am I doing it the wrong way?
That's probably doing it the wrong way. I can't see from this far, but I would think that was the answer. I would take that for 100.
Could be. But I'm not going to waste time because I don't want to miss them while they're up.
But don't worry, they just sold back off. They were up 5, then they're up 2.
So I'm going to go out to November, and I'm going to do the same.
Is your day trade today, Saz? Maybe
I'm going to do the same exact thing in the SPX. Let's see.
So far, you've done nothing. You say the same
dude.
exact thing. You've done nothing.
Let's see. 700.
Absolutely nothing.
725. SPX a little bit smaller.
SPX is smaller than what?
SPX is price a little less than.
Oh, okay.
Spreads a little less. Instead of 5 something, it's 460. Hold on, Sina. We're trying to get filled here. Need a little uptick.
There you go.
455, but I want to get filled higher. So I'd
like to receive more credit.
I'd like to receive more credit. So
don't you always want to receive more credit when you're selling something?
You do. So I'm putting it in again above, a little higher above, and see if we get filled. Let's go to the next slide. Oltar from Cyprus. Baba, bearish. Well, if you were bearish in Baba, dude, you got your dream opening. Stock's up $13.
Yep.
Not sure if the options are the best way to get bearish here. Well, I would say they are. IV ranks popped up. We have a tiny little Baba position on, which is some out of the money puts, which I'm not going to do anything on right now. Actually, that was a gold bid I had in at 93. And yeah, nice. Okay. Taking a little profits in there from yesterday. Let's do this, Mr. Batista. Babo, what would you do in Baba if you want to get a little bearish after a $13 up move today?
Yeah, let's take a look at this. I mean, there's definitely going to be some call skew here.
Oh, yeah. Expected move in there is $25. Stock's trading at 1 second.
I would go to November. That's what you're quoting.
November, yep.
Yeah. Plenty of volume in here. Plenty of volume. You want to get bearish, right?
Yeah. You got to do 200, 210.
Yeah, I was going to say, 95, 210, 200, 210 only gets you 190.
200, 210, but you got to put it at 195.
If you do the 195, 210, you get over $3.
No, I like this. I'm going to put it in 195, hope for an uptick. I need the stock to be back up about 13 and we'll get filled. Okay, Altar, I like to sell into $13 rallies, but it's only up $12.50 now, so we'll see if we get filled. Let's go to the next slide. GDX. Tony from America. I'm the world's worst commodity trader. I think he's imitating you. But maybe it's time to get short GDX these levels. I did get short GDX yesterday. Stock's down 22 cents today. We sold the 76 calls naked yesterday. I'm kind of comfortable with that position.
GDX down 22 cents, crashing.
What does he want to sell here? Looking to sell the November 75. I just sold the November 76 calls yesterday. I'm sorry, October 76 calls. I'm just going to leave that position on. I kind of got my whole limit in there. Let's go to the next slide.
Next slide we go.
XOM.
What did you do in MGC? What is that?
Which one?
MGC?
I was covering a trade from yesterday.
Oh, very nice.
Because gold was... We're up
21 now.
Yeah, it's a good one. ExxonMobil, bullish for 2 months. I assume Exxon will break out. We haven't traded Exxon in a while. Stock's up 124 today. Evan from Amsterdam. So go from Cyprus to Amsterdam. That's cool. What does he want to do here? I'm long as of Monday. By the time you're reading this, Exxon is breaking out further. Oh, he's right. Nice call, dude. Last 2 days, the stock has gone from ExxonMobil. Stock is 115 right now. It was down basically around 112 and a half. It's already gone up 2.5 points.
So what do you think?
Wouldn't touch it with your money.
We put this on yesterday, right?
Yeah, this was a trade that needed to be done yesterday.
Yep.
Nice call, though.
Yes, great call.
Very nice call. Let's go next.
NASDAQ down 3, even the S&P's up $1.
I know. Not really ready to pound him into the hole here. Justin from Woodstock, Georgia.
Wait till Foley's weekend.
AMD, what does he want to do here? He's bearish. AMD was strong on the sell-off. There's going to be a continuation. Put diagonal while implied volatility is low. Okay. What do you want to do here, dude? You want to buy a November put? Let's buy November, I don't know, let's say 150. The stock's 160. This stock moves around all over. We'll buy the November 150 put, and we'll sell the October. What put should we sell here, Mr. Batista? 152.5.
Mm-hmm.
I'm gonna do that spread for $4. I'm gonna try to do that spread for $4.
$4 it is. Easy breezy.
$4 it is. S&P's down 2.5.
Yes.
Pretty much crash mode.
Crashing on top of yesterday's move. Oh, forget about it.
Pretty much in crash mode. Let's go next slide. Thanks, Justin. Me like. Warren from Candor, New York. I'm not sure where that is, but RGTI.
Probably closer to your neck of the woods than my neck of the woods.
He's bullish, and this quantum stock has been on the rise, but so is vol. Put spreads are cheap. Yeah, you're going to find put spreads are super cheap in these stocks. IB rank is 40. Expected move by November.
There are 851 Candelorians as of the 2010 census.
Candelorians.
Candelorians, that's right. 810.
Candelorians, yes. Interesting.
In Pennsylvania.
In Pennsylvania.
Near Pennsylvania, like the.
Okay, so you want to sell a little premium in here, I think, because like you said, the vol's high. And I don't think I've ever traded this stock in the market.
The S&P's down 6, Nasdaq down 31, as foretold by the Mr. Sosnoff.
Markets are fair. Let's go up,
and away.
Up $13. Ooh, there's call skew in here. We'll go
where?
You know what? These markets aren't good. They're $2-3 wide.
I think you're gonna like it. I got some more emails about this stock.
These markets are super wide. By the way, really good bear market action today. Open higher, couldn't hold it.
Mm-hmm.
Yeah, a little bit of bearish action today. Apple giving it up. Couple stocks that opened higher. Tesla's up $10. That's the only one. Costco's up.
Bob is still up $12. Baidu in China, FSLR up $4. MSTR up $3. I mean, Marvell's still up. But you are correct. The downside looks a little bit stronger. So better representation. Oracle.
Hey Warren, I don't know what to do in this stock. RGTI. It's a. I mean, you kind of only can trade the put side. You know what I'm saying?
Yes. I know exactly.
But even like the 22.5 puts, I mean, you can do the 25-23 1x2. Like you want to do a put ratio spread because he's bullish for a 56-cent credit. I'd do that.
You'd be all right with that? Is what he's trying to say?
Yeah, I just don't know how stuff trades in there. Markets are kind of wide, a little nasty. Don't love this stock from a distance. Looking at it, trading wise, I'm not sure. Other than buying stock, what's good here? We're gonna work the order.
Okay, we're working it, boss.
So far, nothing done.
There you go.
54-cent credit.
Mm-hmm. 1x2.
In the 1x2 on the put side. 25-23. A little bit of a bullish trade. Let's go to the next slide. Ivan from the EU Empire. ISRG. We haven't traded this in 10 years.
No, at least, if not more.
Where's the stock trade now?
ISRG is trading at $448, Southnoff up a Q. Earnings are October 16th. November markets are quite wide at over $2 wide. I would abstain.
Again,
as your consigliere, I say you don't make this trade.
This is a tough one. I agree with you. The stock's on its butt, but you're talking about, I mean, in here, you'd have to do a spread. Expected move is $50. Stock's trading at 450, so you could go down to the 400s. Let's just see. Man,
oh man.
I mean, you'd have to do some price discovery in here. ISRG. Ivan, you're killing me, dude. We're working a put spread. We're working the...
I'm working it, boss.
400, 390 for $2. Looks like it's 180-ish bid, but I'm not 100% sure. We're going to see what happens. Let's go next slide. You guys are killing me today. There's an effort to find stocks that don't trade.
APP, Sadnov, wants to get shorted.
I'm all for getting short APP.
Up $3.57. Earnings on November 5th. APP has not had a downtick since around 400, where it was in the middle of August. It's been quite a month.
I'm trying to figure out what spread's interesting here. I think you buy the at the money spread.
Okie
dokie. These markets, by the way, in here, these markets are like $6 wide. So where do you think the at the money 650, 660 put spread should trade? With the stock 655.
Again, I think you should abstain.
I understand, but where do you think it would trade? 590, $6.
What's 660 what?
Oh shoot.
What are you doing here? You're buying this.
I'm buying the put spread.
You bought the 60 puts and sold the 50 puts, correct?
That's called a put spread.
That is called a put spread. I was just looking at the price you went in at.
I paid it
533 is what you paid.
I was testing the waters. I didn't think I would be filled.
Well, you're in between the strikes. It probably should trade at $5 or less with the implied.
No, because I think there's. No, I thought it would trade higher than that. Anyway, it doesn't matter. We're filled.
The stock's 655.
Staying small, we're filled. Don't argue with me.
Don't put a bid in over $5 first. You could try like 480, and then you'll probably work it up to about $5 and then get filled.
Let's go next slide.
Johnny over here.
Not happy with my fill. Dave from Chicago. All right, Dave. BE. These are all stocks I have no. BE down $9, $10.
He's neutral.
Holy skew, Batman. Stock has been parabolic, due for a pause. He's Dave, you're freaking spot on. Sell the 38. Oh, Ivy rank is 117. Yeah, now you're talking, Dave. Now we're talking. Good markets, 117 Ivy rank. Go to November and 115 calls and the. Well, you got to move down. The stock's down $10 today. 48 puts. 350. Nope, you're going to go 47 puts. Let's see. 40. Yeah. You can do 46 or 47 puts. We'll do.
I mean, 6 of one, half dozen.
It doesn't. You're right.
I mean, BE here has such a 100% monthly volatility or more. It's not going to matter if you're right.
625. This is my favorite trade so far.
Wow. BE. Bloom Energy down $9. Sosnoff likes the good strangle
here. Yeah, I think.
Now, Bloom Energy was a $22 stock. That was in July. It was a $85 stock.
Who knows what this company is?
Bloom Energy.
I got it. I understood that the first time. I'm going to try to do more. Let me see if I'm trying to do a little price discovery here and see where this thing fills. Well, no better than I did it before. That's for sure. Oh, one penny better. Oh, no.
That's Baba.
Oh, that's Baba.
Oh, my God. Honestly, seriously, do you, what am I don't know. Where can I put you? Like, there's some place I could put you in this organization where we can hide you, isn't there? I mean, this is not your forte.
Bloom Energy. I tried to do more at 625. Could not. All right, let's go next slide.
What you doing, Baba? Is that a roll?
No, that was the trade for the.
Oh, the other trade. Sorry.
That's a little bit of a bearish trade. Juan, what's he doing here? Is that Rocket Lab? RKLB?
I don't think so.
RKL.
Rocket Lab, as I said.
Oh my God. Rocket Lab.
Rocket Lab.
Delta neutral strangle, short vol. 20 deltas on each side. Ivy ranks high.
Ivy rank is high at 34. Earnings November 11th.
Okay, let's do this. So Rocket Lab, 20 delta on each side. You don't have a lot of choices here, but it looks like 75 calls. And you're going to go down to the 75 calls and the 39 puts. There's no other choice here. You trade Rocket Labs at all?
No, obviously, if I don't know the symbol to it, I don't trade it. It does have 30, 47 markets. I would be some sort of spread in here. You went with the strangle.
I went with the strangle, sold it for $439. I may have given it away.
Reckless abandon here.
I'm a little reckless today. I don't understand what it is.
I can tell you what it is. It's old age, and you don't have any trickery.
I don't understand this BE trade. Huh. All right. Can't get filled. What do we got here? Spies. We sold a call spread.
These are not all Tom and Tony approved. These are Tom approved. Okay. Tony's still on the fence.
Hold on. We didn't do SPY. We did SPX. John. We did SPX. Sold a call spread in SPX. Right.
Yes. The 707.
BABA, we sold a call spread. That's correct. GDX, we did nothing because we sold a spread yesterday. XOM, we did nothing because the stock's up big today. AMD, we did a diagonal put spread. RGTI, we did a put ratio spread. ISRG, we never got filled. I'm not upset with that. The markets are like $5 wide. No, I take that back.
ISRG? You didn't get filled.
No, we didn't get filled in ISRG. App loving. Stock I don't really love at all. We bought a put spread at the money.
You got filled, yeah. That was the one we did at 533, guys.
BE, we sold a strangle. And Rocket Labs, we sold a strangle. Rocket Labs had high implied volatility. BE had implied volatility rank over 100. 117 is the highest one I've seen. And App loving, like Tony said, had a huge rally, so we got a little shorted. All right, that's fun.
Russell and the Dow. Oh, no, the Russell just turned red by 40 cents. But the Dow up 15, even the S&P's down 5, NASDAQ down 18. We're going to take a quick 90-second break and come back. Ooh, the skinny on options math with Jacob next. He's going to teach me about something that I'm not going to understand. We'll be back in 90 seconds. Let's take the live.
Global markets never sleep. Explore them with Forex, now available on tastytrade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on tastytrade.
The future of trading is here. Join Mike and his whiteboard, plus the Tasty 2 live crew for 90 minutes of probabilities, punchy portfolio mechanics, and trade tactics. It's totally free and unreasonably fun. Come early to enjoy a drink with the crew and stay for a Q&A after the show. Space is limited, so register today at tastylive.com/events.
I distinctly remember getting an email from Tasty that Lookback had just been released, and I was doing the most laborious back test on the face of the earth before that, And I did 2 or 3, and I saw how quick it was, and I saw how quick the data was, and basically instantaneously, like, I was hooked. I'd always seen all the stuff on Tasty Live with all the data and all the value I thought that bring, and then it was all of a sudden I could control that and basically make my own segment for myself of what fit. And that democratization technology, I think, drastically changed not only the landscape of what's out there, but drastically changed my ability to learn at such an insane rate. And that's kind of when I developed a little bit more of my own path. I was like, this is the type of trade I exactly want to see, or I'd get some type of inspiration from Tasty Live to look at that. And that's when my consistency went from like 1 to 30, and I haven't had an unprofitable quarter since.
Calling all traders. Are you using Tasty Live mechanics and enjoying awesome results? Are you an up-and-coming options savant? We're looking for you. For over a decade, Tasty Live has shared the most inspiring stories of traders teaching themselves a new skill, using probabilities, and experiencing new levels of success. If you think your trading journey should be shared with Tasty Nation, we'd love to hear from you. We are always on the lookout for the next class of rising stars. Email us at risingstars@tastylive.com if you would like the chance to share your trading journey and inspire others.
Tasty Trade is now on TradingView. Trade stocks and futures directly on TradingView charts with Tasty Trade's low commissions. Try it out and leave us a review.
Class is in session. Dr. Jim Schultz is bringing the heat to Options Crash Course Live. This 90-minute show features Dr. Jim in his professional prime. All of the gimmies, none of the gotchas. Come early and grab a drink with Dr. Jim before class and stay for Q&A. The event is free, but space is limited. Register today at tastylive.com/events. It's not a lecture, it's a lifestyle.
If you missed the live show, here's our cherry on top.
Did I see a birthing room?
Birthing room?
Oh, yeah, stop. Please behind stop. JJ, is there a birthing room?
That's not a birthing room, you genius. Okay. Oh my God. Yeah, we have a whole birthing room. It's called, oh my God, I think it's called a lactation room. Okay.
No, we have a birthing room. At Tasty, we're delivering babies.
People are always asking, where can they find my podcast? There it is, son. Look at that. Option Trades Today. You can listen here. And everybody's waiting for my podcast tomorrow. Option Trades Today, every Tuesday and Thursday around noon. If you want to learn, sir, every Tuesdays and Thursday, Option Trades Today. You can find me on YouTube or wherever you find your podcast. Option Trades Today. You listening to me? Option Trades Today comes out every day around noon, every Tuesday and Thursday. You too can stick with the bat.
It's the day that when you write dates in the American system of month, day, year, which is a little bit funny, looks like 3.14, which is one of our better approximations. And actually this year is even better because it's 3.1415. I've never before, but this year there's a couple other math people who just got a pizza oven, and so they're bringing everyone over. We're gonna make a bunch of pizzas. It's one of the few very important transcendental numbers, right? I mean, 0, 1. There's a lot of good contenders for most important number. Anytime you have anything that's circular, you're going to wind up with pies. Anytime you have a pie, you should sort of expect there to be something circular. I can do one more than the date on Saturday. I can do 3.14159. Rational numbers are fractions, and pi just is not a fraction. 22/7 is pretty close, but that's not what it is. It's the ratio of a circle to its area, right? And so that's not an integer ratio. It just isn't. Oh. Pumpkin. Oh, just circles are great.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
There's a beast in the financial world, and it's not the bull. If that's you, join us on Tasty Trade. Genius loves company.
If you missed the live show, here's our cherry on top weekly recap.
First of all, I'm sitting in the captain's seat. I've never been invited to come sit in the new captain's seat. But what I'm concerned with is the size of these screens. And then he's still doing this.
Snow, let's take a look.
They did not hold that rally at all.
Phil, you got a partial.
973.75.
I'm looking at this like I have to move my head to get through the top, the top symbols. I thought he had like a little computer and he was getting down.
He hasn't learned that he could like swivel his head. He has to see the screen. He has to go like this.
To me. And then, you know what? Money goes to money. You did it. Good job out of you.
Yeah.
I just drove with him twice. Now I'm really concerned that I was just in the car with him for 2.5 hours.
I'm running Snow Leopard with this. I'm a Mac. I'm a Mac. I'm a Mac. G. Multitask MacBook handler, brother. iPhone in one hand, iPad in the other. Pop open top, Apple logo shining on the back. That's why all these player haters know that I'm the Mac. Easier to see a nun with VD than to see me ever typing on a PC. So if you got one, you can play a sad tune and play it back later in your room on your Zune. Windows made to break, and I'm here to crack it. And if I'm a Mac, that means that I'm immaculate. Style so clean, like it's disinfected. Clean surfaces where white light is reflected. Plastic case, Apple Store, keep my phone protected. Check my toolbar to see if networks are detected. Use my side swipe, applications hidden in it. This is Mac world, bitch, you're just living in it. I'm a Mac. 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 Roll into the coffee shop, know I'm on a power trip. Strapped with my laptop and my own power strip. Eye outlet, about to make your cable drop. Apple logo shining off the marble on the tabletop. So if you seen me, then you seen a star. Any place I sit down, call that the Genius Bar. Looks like I'm working hard, but to really know the truth, just taking pictures of my fine self in photo booth. Interface simple, why I need a Kindle. Working on that pad keeps my fingers mad nimble. So if you think I come up short, you must be wrong. More than one reason that these ladies call me Justin Long. I'm a Mac. I'm a Mac. I'm a Mac. Yeah, Justin Long, son. You catch that?
Tomas, we are back, my friend. You know what that means? Time for a little more Tasty Live with, oh joy, this man, Jacob in the house. The Skinny on Options Math. How are you, Jacob?
Hello. Good morning.
Yeah, even got a little applause since you made it in the room. Look at that. Look at that.
Yeah. Sorry for the delay. The website that I usually use to convert LaTeX to slide ready.
Tell it to the judge. Tell it to the judge.
Crashed, and so I had to make do with something else. It just isn't as good.
That's okay. That's okay. What's going on?
So what's going on is I wanted to talk about the Black-Scholes model. Specifically, I want to talk about Black-Scholes formula. Specifically, I wanted to it's a big, intimidating pile of symbols, and I wanted to try to break it apart and into its various pieces and terms and see if we can sort of make sense of it in a piece by piece kind of way, rather than like looking at the whole thing and being intimidated and shutting down, to like, all right, what is this part of it saying? And what is this part of it saying? And then in total, it should make sense, is the real dream.
Okay, let's do it.
Yeah, let's do it. Let's get in. We're a little late to start, so yeah. So here we go. We're just going to consider.
Oh, I hate when you start off easy and make it hard later.
Yeah. No, we're going to start off easy and we're going to keep it easy the whole time. So, right, we're going to start off easy by Black-Scholes model specifically applies to European options. Of course, nobody actually trades European options, but there's like a liquidity efficient market argument you can make that it's not that different. It's fine. You don't need to worry about American versus, the ability to exercise your American options early means that they should be worth a little bit more, but it's not that much more in a liquid efficient market.
Okay.
So we'll do European options because that way we can just look at the expiration, and we'll just do a call first. There's, the puts are going to be the exact same arguments, but everything run backwards. Or you can price them off of put call parity and off of knowing what a call should be worth. But so we've got this formula, and it looks kind of convoluted. It's got this cumulative distribution function for a standard normal, right? This capital phi, but evaluate out to these weird points, this D plus and D minus. So there's like a question of how do those crop in? Where do those come from? And then those are times the stock price now and minus the strike and the -1 strike price with a risk-free rate adjustment. And so what we're going to do is we're going to look into these. We're going to break it into these two terms, and we're going to look at sort of how they each have some inherent meaning. That the left one here is sort of the expected value of the underlying at expiration if you exercise the option, and the right one is the expected value of the cash at expiration if you exercise the option. And let's look through how that works out. So yeah, what is an option? Right. So the key thing about a call option is that it's worth, if the price at expiration is greater than the strike, it's worth the difference, and on a per share basis, and otherwise it's worthless. So right here I've got a normal distribution, and we've got the shaded area, right? If the underlying ends up in there, where the call is worth something, and anything to the left of there, it's worthless. And so what we see is that at expiration, its value should just be the expected value of the difference between the stock price and the strike, conditioned on the stock price actually being above the strike, right? Because otherwise it's worthless. And then because expectation is linear, this is what gets split into our two terms. And so these are going to be our two terms. We've got the expected value of the stock, given that the stock is above the strike, minus the strike itself, right? What you actually pay in a call when you exercise a call option, times the probability that you actually do that, right? That's the expected, because K is just a number. So that's the conditional difference between the value of the underlying and K in cash, but only in the probability that you actually do exercise it. So this gives us two expectations, or an expectation and a probability that we want to compute. And the only thing we can do for that is to propose a model and make some assumptions. So let's go forward one, and we'll see the Black-Scholes assumption at work. In order to compute these expectations and probabilities, it is necessary to know the distribution of the stock price at expiration, right, ST. In the Black-Scholes model, you make this one presumption, which is that the underlyings evolve as geometric rounding motions, so that any future slice price should be distributed as a log normal distribution. So rather than looking at expiration to figure out the parameters going on, I'm going to look just at time one, right, 1 year out. Time is probably measured in years. That's not strict to the derivation, but we might as well say. So the log 1 year out is some normal distribution, right? We've said that they're all normally distributed. Any log they're all log normally distributed, so it should be some normal distribution. Just rearranging that a little bit, pushing the S0 and the log to the other side, we see that the distribution of S1 is this log normal distribution with these two unknown parameters, mu and sigma squared. But we can calculate the sigma squared, not the sigma squared, the mu in terms of the sigma squared, because the efficient market hypothesis lets us know that the expected value for the future price of the underlying should be its current value, risk-free rate adjusted. So this tells us exactly what mu has to be, which is this minus sigma squared over 2. And so just plugging that in to the above things, we get that the distribution of S of t is S0 times the exponential, or is a log normal with the parameters log S0 minus sigma squared over 2 times the time of expiration and sigma squared times the time of expiration. And this should look kind of correct or somewhat familiar. Those terms look a lot like that D plus and D minus from our opening slide, like the points to which the evaluation was done. And that means that we can that should look good, like we're getting somewhere, right? We had this sigma squared over 2, this minus sigma squared over 2s times t's running around, and we didn't know where those were coming from, but now we do. We see that where those are coming from is those are all coming out of the distribution of the future stock price, right? Which should fit well, but we know that the phi from our initial formula is the standard normal distribution. And that's what the D1, the D plus and D minus are doing, is they're finding the point on the normal distribution that's equivalent to the correct point on the log normal distribution that we're working with, right? What we actually have is a log normal distribution with these parameters down here, this log S0 minus sigma squared over 2 times t, comma, sigma squared times t. That's the actual distribution of ST. But because computationally we're much more comfortable taking probabilities around normal distributions, we find the normal distribution equivalent place to do that, right? Because it's a log normal distribution, all of its probabilities can be expressed in terms of normal distribution probabilities, and we just do that, right? It's all a translation and a scaling of our distribution to make the two things match. All right, so that's where our probabilities are coming from. Let's look at the two terms separately. We'll start with the cash term because it's a little bit more straightforward. Yes. So, right, we have this cash term, right? We have the strike price times the probability of actually being above there. Well, that's easy enough. That's the strike price.
That's easy enough, right? That one's easy enough.
You're trying to kill us today, right?
Yeah. Well, if I divide by a positive number like the initial stock price, that doesn't change inequalities. And if I take log as a strictly increasing function, so that doesn't change inequalities. So that first equality here I've done is obvious. If ST is greater than K is exactly the same times as when log ST over S0 is greater than log K over S0. But this now put it into that log normal form, right? That's why I stuck those logs and those S0s in so that I could do. Now, here's the one bit of kerfuffling. That's a technical term, which is that this is all based on call options. So it's based on whether or not the underlying is above a given point. But the standard definitions for cumulative distribution functions is the probability that that a random variable is below the given value. So instead of using it directly, I use 1 minus. The probability of it being above a certain value is the same as 1 minus the probability of it being below that value. And this gets us to exactly this term. The thing that you'll notice here is that this has S0 over K, whereas in the usual and minus sigma squared over 2, whereas the usual way we look at D plus is S0 over K and plus sigma squared over 2. And the reason for that is that the minus on the cumulative distribution function, because the normal distribution itself is symmetric, it can get flipped around, and then logs of negative log is the inverse of the log of the inverse. So that's where that flip comes from. And so this gets us our second term in the Black-Scholes formula, that cash term, exactly, or up to a risk-free rate adjustment, which is the last step we'll do. But so now let's look at the first one, the stock term. It's a little bit more convoluted, but not in the sense of convolutions, unless you want to use that to compute this PDF, which you could do, or you can just say that you happen to have already computed the distribution of ST as this log normal, so we can find its PDF.
If you already computed it, Tom, you following him so far?
Mm-hmm.
I'm having a few issues with this.
Yeah. So now we're looking at the expected value of the stock price at expiration, and this is the one of the real kickers that gets a lot of people is why who are getting into it pretty far, right? Why are D plus and D minus different, right? If the probability of you exchanging the stock and the probability of exchanging the cash are both the probability of the option being exercised, shouldn't those be the same probabilities?
You would think.
And the issue here is that the cash is worth whatever it's worth, regardless of what the underlying has done. So that term is easy. That term was the probabilities term from beforehand. The underlying, though, the stock, isn't in the future worth what it's worth now. If it's above if you're assuming that it's above the strike, then its value is going to be higher than its expected value, because you're only looking at those cases, right? If we go back to the graph from the second slide, right, we're only looking at that part of the tail, and we're looking at the expected value over there. And so it's going to be higher. And the way that comes out being higher is via this PDF swap. this change from D- to D+. And what that does is it's essentially just the adjustment for ignoring all the times, right? You're looking at the expected value of the stock in the future, but you're ignoring all the cases where it was below the strike. So it winds up being higher than that. And that's it. Those are your two terms, right? We've got the stock term, which has this confusing bit about needing to be adjusted for the proper expectation, and then the cash term, which is very straightforward once you have a log normal distribution at hand. And then the Black-Scholes formula just says that the current price of the call should be the risk-free rate adjusted future price of the call, and the future price of the call is just the expected value of the stock minus the expected value of cash conditioned on the stock actually being beyond the strike. And that'll take us to our takeaway slide, I think.
So I didn't know I was doing all this in my head, by the way.
You were every time. Every time you consider an underlying and an option price. I'm going to ask my wife to watch
this tonight and explain to me.
So we computed the value of the call at expiration. The efficient market hypothesis says that all we need to do is throw on that e to the minus r tau or t minus t to adjust it back down into normal. And so the Black-Scholes formula can be this very intimidating thing. It's got all these symbols and these complicated pieces, but we break it down into two parts. There's the value of the cash expiration, which is the minus, right? If the call gets exercised, then it's worth negative the cash because the call holder pays the cash, but it's worth positive the stock, right? That S of t. But the amount that stock is positive, it has to be weighted by the fact that it's going to come up, which is where this D plus D minus comes apart. But I think that this is a big help for people who want to understand why these formulas are what they are without just like glazing over when you see them being intimidating. I know that you two aren't my audience for that, but I've got people at home I know who are into understanding where each of the terms comes from in these formulas that we use. Of course, you don't have to use them, right? You can just rely on the platform to do all the math for you. But the point of this show is to promise that it's math. If you want to do it with your brain, you could do it with your brain.
You could do it with your brain. The one good thing is that not everybody who wants to trade options feels that they have to understand this. Otherwise,
they don't have to.
Otherwise, Jacob, we'd have 6 customers.
Yeah. 6 customers who don't trade very much. I'm a very cautious trader, you know.
All right, that's heavy. I don't know where you
I thought it was a good.
I don't know who you thought we were or where you thought we were going.
Yeah, that's heavy. That's heavy today. But I understand what you were trying to do, but it's too hard for me.
Yeah, I know. But I look forward to Frank telling me who in the chat was like, yeah, I got it. That's great. I never saw it.
I mean, if somebody gets it, awesome.
Yeah. This is my flaw as a teacher is that I always teach the top of the room and not the middle of the room like you're supposed to.
That's not a flaw. Because we're at the bottom of this room.
That's for sure.
Yeah. And we've got a whole network. We want to appeal to everybody out there, and I'm here to give the people in the back who get bored during your other segments something to noodle over while you talk to Scott in a minute.
See that?
All right, Jacob. Thanks so much.
Thank you, Jacob. But if you're wondering where the cool kids are, so I don't know if we weren't watching that because we were the intellectual children. They're in Open, OPEN, up 86 cents, a 12% move. 500,000 options have traded in under an hour.
What is that talking about? $8?
$8, $7.95. We'll be back in 90 seconds. We got more Tasty Live after this. But oh joy, that's right. Jacob told you. Mr. Scott Sheridan next. Back in 90 seconds. Tasty Live.
Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're #1 for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
I'm running Snow Leopard with this. I'm a Mac. I'm a Mac. I'm a Mac.
Multitask, MacBook handler, brother. iPhone in one hand, iPad in the other. Pop open top, Apple logo shining on the back. That's why all these player haters know that I'm the Mac. Easier to see a nun with VD than to see me ever typing on a PC. So if you got one, you can play a sad tune and play it back later in your room on your Zune. Windows made to break, and I'm here to crack it. And if I'm a Mac, that means that I'm immaculate. Style so clean, like it's disinfected. Clean surfaces where white light is reflected. Plastic case, Apple Store, keep my phone protected. Check my toolbar to see if networks are detected. Use my side swipe, applications hidden in it. This is Mac world, bitch, you're just living in it. I'm a Mac. 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 Roll into the coffee shop, know I'm on a power trip. Strapped with my laptop and my own power strip. Your outlet, about to make your cable drop. Apple logo shining off the marble on the tabletop. So if you see me, then you see a star. Any place I sit down, call that the Genius Bar. Looks like I'm working hard, but to really know the truth, just taking pictures of my fine self in photo booth. Interface simple, why I need a Kindle. Working on that pad keeps my fingers mad nimble. So if you think I come up short, you must be wrong. More than one reason that these ladies call me Justin Long. I'm a Mac. I'm a Mac. I'm a Mac. Yeah, Justin Long, son. You catch that? Known by the ladies as the toolbar. 10-hour battery life. Force. Quiz.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to Tasty Trade. So spread the word and earn rewards. Terms and conditions apply.
Coming up on Bad Money with Jim Blamer. Blamer's hot stock tip of the day.
Trade ideas? Trade ideas? You're coming to me for trade ideas? I'll give you a trade idea. Trade me for tastytrade.com. Those guys are great. I love those guys.
Got the need for speed? No problem. At Tasty Trade, you can turn smart ideas into real trades with just a few clicks. Wow, that's fast. Tasty Trade, make your move.
My friend, you know what that means. Time for a little more Tasty Live. That's right, with Johnny Trades. Play some music.
We did already.
All right, we'll take the applause. There you go.
There we go.
Thank you.
Did it really play? It's like a tree falling in the forest, and we don't hear it.
Yeah, hearing it again. Now we're on repeat here. What is this?
Enough already.
We got it.
Enough already. Good grief.
Good morning, gentlemen.
Good morning.
Good morning.
Today is a very special day, Tom. Do you know why?
You got good trades for a change?
I got good trades, but today is the official drop, limited edition drop. Okay, this is the one-time drop.
Sought after, by the way.
Sought after, highly reviewed. Batista Gardens Jardiniera. We're gonna give you this.
Oh, did you get a personal presentation? I got mine already.
Oh, you got yours. Oh.
I got mine delivered.
Personal presentation. Here you go, sir. Yep. I also brought you a fork if you would like to do a Will Tom Eat It live on air today.
Taste test.
It's a big...
This is pretty fancy, by the way.
Well, you know, I got labels made. I packaged it. This is all homemade.
He's my son. I'm going to say here now, it's a little bit downhill after the logo. The logo's beautiful.
What do you mean 98% homegrown?
Because, you know, I didn't grow the celery and the carrots and the
oil.
Garlic and the oil, you
You're
know.
gonna like
So
you're going to like it spicier. I loved it just the way it is.
It's not as spicy as I wanted it to be. I mean...
It's very tasty.
It's got
the oil is good.
It's got a nice taste to it.
Great taste to it.
It's good looking.
Okay.
Oh, it's nice.
Oh, I got it. It's nice.
I thought you'd want it like burn in the back of your throat kind of thing. Like
No, I don't
got
mean
chlamydia or something.
First of all, the spice level's not bad.
Yeah.
Oh, good.
I don't think it's hot. It's like it's between mild and hot.
Yeah, it's like a medium. It's a nice little medium.
I thought it was perfect. I thought you were going to poo-poo it.
No, but the
oh my
texture.
God, this is a kinder, gentler sauce.
The texture's nice.
How's the chop? You like the kind of rough chop?
I like a rough chop.
Yeah.
I do not.
Can you do just one more forkful, because that'll be the third one I'll get on your shirt. So can you please? You didn't do it yet. I said.
Oh wow, that's good. Yeah, there's a lot there. It's.
Oh, see, you won't do it. Won't do it.
I think you should consider quitting this business and getting into this business.
This could be my calling.
Yeah, this could be your calling.
Now next year I heard there might be a collab.
Yes. So Westwater Farms,
which is significantly bigger, more established than you 1 year old.
Yes.
This is the garden.
This
farm.
Yes. This is a farm.
I am very surprised. I didn't know. I didn't know you had this in you.
I know. I come with surprises. I got some.
Peel back the onion.
Something's going on. Okay.
He's very domesticated. Are you pregnant? Are you nesting?
Temple one night. Now he's making Jardiniera and putting it in little wrapped up nicely. I mean, what?
Put the bow on there for you.
Is your house clean? Your bed made and stuff like that?
Yeah.
Are you transitioning? What?
Are you for sale? I mean, like, are you up?
You know, I'm just.
What is
going on?
I'm just letting my passions come out. You know. And just trying to,
I like it.
to show you a different side of me.
It's impressive. I really needed this on 2 days ago when we had bar. When we had bar.
Oh yeah.
This beautiful
Monday, yeah.
Party because.
So I've had it on 2 sandwiches.
What?
Yeah.
2 sandwiches?
He brought it to me over the weekend.
Oh.
Yeah.
I had it on 2 sandwiches.
It's
very,
good.
Very nice.
Yes.
Very, very good.
It's this.
I even put it on my hot dog.
It's
a hot dog and a sandwich. I should.
It's in anything condiment.
Sausage.
That's for the hot dog, but
yeah,
very good.
Hot dogs, I'm not a fan of Jardiniera, but sausage and brats, yeah.
Yeah, it's a versatile condiment. You can put that on anything.
Very nice.
Yeah, this is good.
Now it's a limited supply. You only had what, like 30 jars, and they're small jars.
I got like 30 out of it.
Yeah.
So I've had to. It was a little bit of a. I think everybody thought this was like some sort of like new small business idea. This was really just like.
No.
A labor of love.
A labor of love. I'm very limited.
I was not looking at this as if it was a small business idea.
Not you, but I think some people.
Do you like the signage? Do you like the
logo? You like it with the Italian horn on there? Can you show the camera? Can you put it? Can you smile with it? I'm going to use this
as the Italian horn. Yes.
You like the Italian horn on there?
You don't like the tuna? You gotta like the tuna.
Is that what it is?
It's a tuna. Fish. A big tuna with a mustache and a cigar.
Yeah.
You can't see it. You
got the
can't see
Italian
it.
horn, but I'm missing the Jewish star.
So it's a funny story. So my girlfriend helped make the logo for me, and she wanted to incorporate a Jewish star, and she put it on the cigar, and I was like, it's a little. Burning cigar is not exactly the way we can go there. So, and I was like,
good thinking,
and she's
son.
a Jewish one.
Good thinking.
Look at how domesticated he's become.
And the voice of reason. Who knew the Batistas were going to be the voice of reason here? I mean, you got to give us some credit.
Yeah. Next year, we'll incorporate the Jewish star.
Okay.
We will.
All right.
Yes.
Oh, I love it.
All right, what do you got here for us?
All right, I got a couple trade ideas. Hey, couple trade ideas, then we could look at SPX Guess the Market, if you'd like.
Let's do it.
Because that is coming up. The end of September is the third quarter. Who do you think is the closest?
Of between everybody in this room?
Yeah.
Not me.
What?
You're not that far off. Only like
1,500 points off.
No, like 1,300.
Something like that.
You're close though. It's like within striking distance.
I gotta be close.
We got a lot of people close.
First of all,
our very own Katie McGarrigle
yeah.
is right on the dot. She's like 50, 100 points off.
Well,
right
I trained
there.
her.
Right there.
Well, yeah. I mean, I brought her along.
I know. She learned everything, from you.
All right, what do we got here?
All right, I got a couple trade ideas. You ready?
Yeah.
Oil. You got a position?
Smoil. No.
A little bit of a pop in vol. So if you are looking for the vol symbol, you could do OVX
not.
CGI. That's how
I
you
do
pull up.
not have a position on here.
There you go.
Heavy rank's still 19.
Yeah, not super high, but it's there. It's trying to get something new on. I just did a neutral iron condor, 59.58 on the put side, 71.72 on the call side.
November?
I did, November. Yep. 50 some odd days to go. Covers most of the range that we've had pretty much all year. Oh.
That's not it.
Oh, damn.
70. I was selling some bonds. 71, 72.
Oh, take a look.
Yes, on the upside.
Good job out of you.
And I hope you took off the euro position from last week's Johnny Trades.
What was it?
I think we did the 120, 121.
Call spread?
Yeah.
I didn't take it off.
Well, you could today if you'd like. For a 50% profit.
Oh, I actually have even better than that.
Oh, of course you do.
Because I rolled down the calls.
Oh. Well, the little Johnnies can't do that, okay? We got to keep our size in
I
check.
have the 119
Rule number
and a
one.
half. I have the 119 and a half, 122.
Ooh, so you've got even more profits. Money goes to money.
What?
Money goes to money.
Money does go to money.
It really does.
Yeah.
It really
Down
does.
700 ticks today.
Yeah.
Got to be a good one.
Yeah. And if you're trading those tasty FX products.
All right, I took off that call spread because I forgot I had it on.
Okay.
But now I got to also roll down some calls because I'm very bearish in there.
In the euro?
Yeah.
So you're long the dollar. I agree with that.
I'm long the yen, short the euro.
Have you been using the FX products?
You should start.
You should start.
I don't because I use options. I prefer options.
Yeah.
I mean, I've used the FX product. I don't buy currencies outright.
Yeah.
So most of the time I trade the options. I do better in the options. That was actually a good trade. I've done good in the euro this year, just being short premium.
Okay.
And now I'm short strangles.
All right. What do you think of the oil position? You gonna put it on?
I don't really like $1 wide iron condors.
I know, but I'm a Johnny. This is Johnny.
I understand that.
You gotta stick with the program, Tom.
Except for me, the Ivy rank's only 19. We have kind of a rule.
Well, you could do the strangle.
I know it's still we have a strangle rule too. 19's too low. So I'm going to pass on that
So
one.
if it was 20, you'd say yes.
No, really over 30. 20 would be marginal. Don't break the rules, man. This is mechanics. That's all I do.
Next trade.
Next trade. What do you got?
Pepsi.
Hate that stock.
That's the highest IVR on the board or something.
Hard to make a dime in there.
I know. Well, I'm doing a call crab trade.
I have on. I sold the 125, 160
strangle
for 190.
Okay.
And I still have it on. It is trading for 173 right now.
Okay. This is a little bit of an upside play. Maybe you do like a 1x3, and you could do this for basically nothing. So I'm long the 145 call in November. I sold 2 of the 150s in October against it. And then I buy the wing to cap the risk, so I bought the 160. But if you do this 1x3, you can probably do this at like a 20 or 30 cent debit, something like that.
You bought the 145s.
In November.
Okay.
Stock's kind of on its butt.
In October?
And then in October, I sold the 150s. So you could do this probably 1x3, and it'll be basically a little scratch trade. Play into some of that volatility.
Actually, what you want to do in here, yeah, you could do
not
that.
what you said.
You could do that, or
Yeah, good. That's not bad.
or you could.
It's okay. I got the Jardiniera. That was enough. I passed today.
And he liked it. Like I thought.
Yeah.
He likes everything hot. Like you know.
But it's got the flavor. It's the pickling. The pickling is the secret.
What I could do here, is
pickled them.
Last longer too.
Sell the 147s.
I need help with that.
Foliage weekend.
He needs that this weekend, no
Do it
doubt.
one-
Yeah.
All right. I did the trade a little different. I bought the no 45 calls one time and sold two. My ratio is 1/2, and sold 2 of the OC 47 calls for a 27-cent credit.
Okay.
I'm sorry, debit.
Debit.
Okay.
I don't mind paying a debit for that because I have a lot of short premium there.
It's a
Sure.
small debit.
Yeah. Yeah. Nothing.
27 cents.
Very nice. Very nice.
Okay.
All right.
Beautiful.
End phase.
I'm all over end phase. What do you want to do?
I got the 35 puts.
Oh, I'm sure a million puts in there.
Yeah. All right.
I don't need any more. End phase has been a death trade.
I know.
The stock is.
It doesn't go anywhere.
It never goes anywhere. It was 120 down to. I'm short the 40 puts and the 35 calls, but I'm short 2 puts to every 1 call.
Good
And-
Ivy rank, 56 in here. Earnings coming October 28th.
I'm going to take a quick look because I think Enphase has been one of my worst stocks this year. Let's take a quick look. ENPH. I take it back. I'm up money in there. Last year it was.
Yeah, because they had a big move last year. This year it hasn't gone any.
Yeah,
Been
no,
at
this year-
35 all year, basically.
Yeah, this year up money. It's last year I'm thinking of. So I am short 2 40 puts right now and 1 35 call.
Yep.
That's kind of the same position.
Okay. It's not too bad. How do you like my performance today? What do you give
On a
it?
day that you're giving out Jardiniera, I got to give you. I got to be nice to you.
So what is that out of 10?
Yeah, what does that exactly
Yeah, I
mean?
would like to know what a nice review is.
Well, if you didn't have the Jardiniera, you'd be like a strong 4. With
Okay.
Jardiniera, you'd probably get like 6.5.
Okay, all right, I'll take that. That's a 50% plus increase.
Oh, that bumps you.
That's pretty good.
50%.
I'd take that.
Yeah, unfortunately.
It's start.
Yeah, it's a start. It's
Definitely
good.
a start.
It's good.
Start.
It's good.
Can we look at? We got a minute here. Can we look at the quarter reviews? I know you work on this diligently.
Yes. I haven't updated the slides yet for everything else, so to see everybody on there, because we still got some time. We got another, week.
Yeah, SPX is
What is it?
66.58.
Is it next Friday?
No. The end of the quarter, Tuesday.
September 30th.
Tuesday.
It's Tuesday? What's the date today?
I think it's Tuesday.
It's 24th.
I think it's Tuesday.
Wednesday next
No, but I got to give the win to the Sosnoff. The 30th is
Tuesday, right?
Tuesday.
Yeah.
Okay.
Because we're heading to LA on the 2nd, which is Thursday. That's why I know.
Well, here's our distribution. I haven't updated it for the current spot, but you can see we've got a lot of people in play here for Q3. To see how the distribution moves, kind of upside middle section of our distribution is right here at 67, 6,600-ish. So we got some people in play.
Oh,
which is nice.
Yeah.
Got a lot of people in play.
Yeah.
All right.
So we got to go to the next slide. We'll see where Tom and Tony are.
Okay. What is this quarter?
The Q3.
Q3.
Did you seriously ask that question?
We're almost there. But look at that.
I'm 225 handles away, and I would consider myself far away
there.
with a $70 or $75.
I like my chances.
I think you got a chance.
I think you got a chance for not only this quarter, for the rest of the year too, Sosnoff.
Yeah.
I think you got a good chance.
I liked how you did a little game theory, though. You put the extra tick on there. You didn't go round number. So I respect that.
Oh, yeah.
I respect that.
Yeah, no, mine was a professional call.
Yes.
Yeah.
I almost got Q1.
Very professional.
And the
You
rest.
did. You were there.
No bueno.
Yes.
Very professional.
All right.
Very
Next slide, please. Give us the rest of the team. Look at this. We got Miss Katie McGarrigle, 65-65.
Hold on. Where are we
Look
right
at
now?
that.
We're 66-60.
66-60.
McGurgle's there.
She's there.
Just
It's
about
100 points.
An expected move.
I wanted to give her a big shout out.
Yep. Yeah, you have to. Nick, you're right where I am. I mean, you're a little
Yeah, we're there.
You're not quite as good as me, but you're right there.
That's all right.
Which is
That's
good.
all right.
Which is good. Often imitated, never duplicated. Like a pizza.
Mikey's the highest.
Yeah, Mikey's in La La Land. But it's coming into play now.
Yeah. Mikey's He's the children of the future. He went with the 666. He just got in the wrong quarter.
Yeah.
Well, he did go with the 666.
Went with the 6666.
Yeah.
All right.
Almost
All right.
had that.
That's kind of a little bit impressive.
So we got that coming up. That'll be middle of next week. Giving out some cash, some Tom bucks.
Yeah, how much we giving out?
$1,000.
$10,000? I thought of
1,000.
Oh, I'm
Unless
sorry.
you want to.
But it's your money. It's your
unless
money.
you want to kick it in. Unless you want to kick it up. Be it.
Sure, let's kick it up. I don't know about kick it in, but I'll kick it up. Sure. I mean, it's Tom's
Well, if you're
money.
kicking it up, you got to kick it in.
I mean,
you got to kick it in to kick it up.
That makes sense. Hey, before we go to a quick break, since Open is the most widely traded product, let me
It's
ask.
hard to believe.
Let me ask you, Nick. What would you do in Open? I could put on the screen if you could see your.
Nothing.
Open's up 88 cents. It's up to.
Why are you so obsessed with Open? You don't even trade it.
I said it's the most traded product today. Maybe there's something that we can.
It's all. I mean,
What are the
this
9
is-
calls? Like 20 cents?
Don't
October?
sell those calls.
Yeah.
No, they're probably $3
or a dollar.
$1 in October. In November,
$3.
they're $1.70-ish.
Oh.
No play? I'm just asking.
No.
No.
You can't.
Yes.
Those are. It's tough. It's silly season. I heard you got into a BE position, Bloom Energy.
Yeah.
That thing. Somebody put me in that, and it ripped my face off. Now I'm making my money back, but that's a scary one.
Well, I just sold premium.
Yeah.
And
we're in silly season. There's a lot of
and also the markets in there are not great.
Quantum stocks, Open Door.
Yeah. Open Door's not a quantum stock. It's a stupid real estate company.
No, I know. I was saying we're in silly season. We got stuff like the quantum stocks quadrupling.
Yeah, we did.
Bloom Energy. You got Open Door.
We did our GTI today.
Yeah, that's another one. It's like, it's silly.
I got you. I hear you.
What are E-minis doing right now?
Even the S&Ps are completely unchanged.
So it's another buy the dip. Damn.
So far.
You think one day you'll buy the dip?
Doesn't seem like it. Doesn't seem like it.
5501 he will.
Maybe. It's still
That's the
Rosh
target.
Hashanah, so we're going to have a little bit of weakness.
Oh, yeah.
Volatility's unchanged, down 4. This is the weakest they can get, then we got a real problem going on.
Apple's down 2.
Tesla's up 12.
I don't have a Tesla.
We're going to take a quick 90-second break and come back. We got more Tasty Live after this. What comes up next?
Liz and Jenny live from the SIBO.
Oh, we'll be back in 90 seconds. Tasty Live.
Class is in session. Dr. Jim Schultz is bringing the heat to Options Crash Course Live. This 90-minute show features Dr. Jim in his professional prime. All of the gimmies, none of the gotchas. Come early and grab a drink with Dr. Jim before class and stay for Q&A. The event is free, but space is limited. Register today at tastylive.com/events. It's not a lecture, it's a lifestyle. Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new Tasty Trade and Tasty Live web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
Whew, let's make this quick. I gotta get going. I make $4.97 every second that I work, and if I don't clear $145,000 by the end of the day, I'm gonna go crazy.
Okay.
It's a cute dress. Where'd you get it?
Oh, thank you. H&M.
$23, 10% off sale.
That's pretty good.
Probably not worth more than $4 now. That's too bad. You gotta be aware of these things. Everything has value.
Well, not everything is value.
Everything has value.
I am pretty sure I can name a couple of things that don't have value.
Go ahead, go for it.
Okay, caution.
5 cents.
Feebleness.
That's a sad one. $1.12.
I have a toughie for you.
All right.
What about us?
Me and you?
Yeah, did we have a price?
Yeah. 2 cents. We should have sold that one a long time ago.
2 cents?
Yeah, we could have made a lot of money on that one. Oops.
2 cents?
Yeah,
I wouldn't even pick that up off the street.
Exactly. I think that's more on you than it is on me. Lord knows I'm trying. Hey, You know what, though? There's money to be made everywhere. Take you, for instance. Look at you. You're a young buck. What are you, like 37? I'm joking. How old are you?
I'm 26.
With your genetic makeup, you know, you're not putting on too much weight. I think you could sell those little lady eggs of yours and make quite a profit online. But I wouldn't wait too long. Next month, those would go down big time, especially if you keep eating the way you're eating. I gotta take off. Time is money.
Are you serious?
Yeah. Hey, look, can you get the check on this? I left my wallet in the car. I don't like to carry around bulky things. It slows me down.
People are always asking, where can they find my podcast? There it is, son. Look at that. Option Trades Today. You can listen here.
And everybody's waiting for my podcast tomorrow. Option Trades Today every Tuesday and Thursday around noon. If you want to learn, sir, every Tuesdays and Thursday, Option Trades Today. You can find me on YouTube or wherever you find your podcast.
Option Trades Today. You listening to me? Option Trades Today comes out every day around noon, every Tuesday and Thursday. You too can stick with the bat.
Tom versus Tony. Round one. Trade. Massive volume. Killer trade. Surplus. Shoot. The fall. Volatility boost. Killer trade. Resistance. Straddle support. Order sold. You win.
Global markets never sleep. Explore them with Forex. Now available on tastytrade. Get in on over 80 Forex pairs. 24 hours a day, 5 days a week. With the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on tastytrade.
We are ready to build. This is make or break for this team. It's down to the last 2 minutes, and it's time to rock and roll, baby. That's all I got is 2 minutes, and that's on a good night. I don't know if they're going to be able to make it, but I think they can just slip right on by and maybe take it through to overtime. I think we're going to overtime. Here it comes. Shalaka. Man, he hit the boards hard on that. Wait, this is football, right? Woof. Woof. Take one. Hey, baby. I like the looks.
On the subject of bonds, let me now expound. Swoons, they will, nay, must someday turn around. Oh, cursed bonds, will you not soon fall like rain? Quit this parched desert of misery, I can take no more pain. With thy nimble run, I admit I am impressed. But climb no higher, or I shall be depressed. Ye tasty traders, all now hear my plea. This position chafes worse than the bat to me. Markets, this is no time for foolish frivolity. Will ye not cease this fatuous flight to quality? Oh, if I could, I'd wave all my magic wands to sweep away regret from shorting bonds.
Got trader's block? We've got the cure.
Get data-driven trade ideas with Cherry Picks, our weekly newsletter that gives you insights into the market. Sign up at tastylive.com/newsletters.
When you define risk, you set a limit on how much you could lose if the trade goes bad. If you have a small account, you might not be so interested in selling naked options. You'd use up much more buying power, and the risk is undefined. Defining risk, though, controls how much you can lose if the trade goes sour, and it gives you back some of that sweet, sweet buying power. We can define risk by combining options into certain strategies. The short put vertical spread is the simplest one. Selling this put sets your max profit with the credit, and the long put at the lower strike blocks off the risk where you want it. And if you're more neutral than this, you can throw on a vertical call spread to make it an iron condor. The only downside to defining a risk is that it lowers both your max profit and your probability of profit. That little compromise might mean you rest easier, though, and a good night's sleep is priceless. So see, we can define risk when we use more than one option at a time. Pretty simple.
In the world of investing, a beast lurks between the numbers, ready to pounce. Some traders hide from it, some ride it. If that's you, join us on Tasty Trade. Genius loves company.
To the Wednesday edition of the Liz and Jenny Show. My name is Liz Deerking. That beautiful brunette to the left of me is Jenny Andrews. There's a rumble. There's a low rumble going on today.
Oh my gosh, it's busy. I don't know what is going on, but it's pretty busy down here today. We've got SPOOs down $1.50 and the market is going, the guys are going nuts.
I mean, we've had some angry people walk by. Frank, I'm talking about your nephew.
Oh, man, Frank, you might need to give your nephew a text or a phone call, a little
like a virtual. He needs like a virtual hug today. He needs a virtual hug.
Yeah, he's not in a good mood. Not in a good mood. So you might want to text him or call him.
Yeah, call him. Yeah, Frank, call your nephew. Send some care packages to him. Hopefully we can get him to walk by later today. But yeah, SPOOs are only down they're down 2.5. We've seen them go in the green. We know this because our SPX trade's closed.
Yes, we were sitting on the train. Both sold put spreads in SPX at 9-8. It was 5 to 9. Right around 5 to 9.
Yeah, wrapped around. Remember, he says give or take 5 minutes, which means up 5 minutes or down 5 minutes. We went with just before 9. We both sold put spreads.
We sold put spreads, put in a GTC. I looked for 30%, and it hit 50 minutes later. So 9:50, the GTC hit. We got a little bump in SPOOs. SPOOs were up 2. I think when we put on, SPOOs were down 5.
I'd like to say for the record, I did the Jaju and I repped around the at the monies. I did the put spread though, sold it, and I wanted $50. So I didn't take a percentage. I took $50.
All right, let's go to the wide chat. We were practicing this. When our put spreads hit and our GTC hit and we both got out, we said,
Liz and Jenny, we get the job done. Notice? We didn't look.
I know. We're getting pretty good at that, Liz.
Do you know where that's from, ladies and gentlemen?
I was just going to say, I need to rewatch Hamilton. I haven't seen it in a while.
Yes. It's actually immigrants. We get the job done is the thing. But I figured Liz and Jenny.
She changed it to Liz and Jenny. Liz and Jenny, we get the job done.
We've been working on that for 13 years.
Hey, we're going to take that on the road.
It's pretty funny.
We're going to stand on stage and do that over and over and over.
All right. Practice.
We have a busy schedule today. We have another study from Jacob. It's
correct.
Amazing.
We have What's Your Assumption, which I actually think we're going to jump into What's Your Assumption first because we've been kind of not getting to them, so we're going to do What's Your Assumption first.
And we are taking live tweets. Send us a tweet. Include the hashtag LIZJNY. That's what we're looking at.
I have the cutest little puppy ever on there. That is not mine. It happens to be Jenny's brother's dog, so hold on for that. Yeah, he's the cutest.
Yeah, we'll get into Twitter a little later, but we are going to, let's take a quick look at the markets, and then we'll jump into What's Your Assumption. What do you think?
I'm in. Let's take a look. Let's jump in the platform.
Okay, so here we are in the platform. SPOO's down 4. And as far as what's going on, big mover to the upside today, Intel. I don't know if there's new news. What did I just watch where they kept saying like new news?
Okay,
Is
Intel.
there new news in Intel?
No.
I don't know. Intel up $1.50. It's on a little run. It's making a little run for the
So
roses.
is today the 24th?
Today is the 24th.
So all I've got is Lithium Americas in talk with U.S. GM for Nevada mine. Shares soar. Okay, but this is Intel.
I don't know, but I'll take it. I will take it. And I'm glad we added. Yesterday we sold a put in Intel. We made 26% on that put. I don't know if we want to take it off or just leave it.
And we put a zebra on too.
And we put on, after the fact, we thought, oh, we want more than just that short put. So we added on the zebra, which we're getting, $68 from that short put and the rest, 120 something from that zero extrinsic back ratio or the zebra for short. That is what's acting like stock.
And that was from Listen Jenny Forever on Twitter. So thank you very much for bringing that to our attention. You were talking about deltas and shifting Intel, so I'm glad we added that and we appreciate it.
Yeah,
Thank you.
we do. So I think we're going to just let Intel run.
Yes. Yes.
I don't think we're going to close.
Take a look at our natural gas, Jenny Andrews.
Natural gas.
We need it to hold. That's what we're looking for right here.
Okay, not that we need, but best case scenario is natural gas.
There's wants and needs. This is a want.
Best case scenario is natural gas at $2.85 tomorrow afternoon. We never found out what time natural gas actually closes. 12:01.
That's right. Right now we're at $2.89, which is great.
To walk by. Here he is. Wide chat, Steve. Wide chat. Oh, you got.
Oh, he's gone. Get back.
You gotta wait for the wide chat.
You gotta pretend like you're walking.
Wave to the crowd.
Hi, guys. You gotta pretend like you're walking down the stairs the next time you come by.
I'm too old to play the old going down the escalator.
Yeah, going down the escalator. It's funny. Okay. But yes, so what we needed at is 285. It is trading 290.
We're close.
Now we are up 277 on this position. Let's talk about the gimmies and the gotchas, because if we sit on this and it doesn't go according to plan, and if it gaps up above 295, we make $30.
Are we gonna roll the dice and take our chances?
Yes.
Yeah, let's just leave. We waited this long. Heck, we've been waiting for 36 days. That's when this trade started. So we're going to keep, we've held on. We're going to keep
Well, no, this one's only been on for 14.
No, but I mean, it started with the 36-day, or then we added to it. I consider this all one big position. This dream started 36 days ago.
All right, fine, I'll give it to you. 36 days ago. 36 days ago, we came up with a dream.
All I know is that let's take a look at this. You go from one natural gas position to the other. Now this second natural gas position is up $35.
You still can't put a flight off yet.
You're ruining it.
Because you're only up $35. Natural gas is bigger than that. Take a look at it. Open it up.
I just want to see.
We've been in for 2 days.
We took in 33 cents or $330. If we. Then what we'd have to do would be sell one.
Buy one.
Buy one.
Mm-hmm. Buy it. Oh!
It's not that far off. 2 cents away. Look, you were such a hater.
I was a hater.
You're such a hater.
But you're not going to collapse. So I usually do it with the naked position, which is easier to butterfly off.
I know, but we have to realize.
No, but here, you could put it on, but it would be for free, which is fine. You got a shot.
We'll wait.
I don't think you need to. If you got it on for free, I would butterfly it off.
So, I don't remember, and I'll go back let me go back in history. Let's go back in history and see. I think we did lock in. If I go to,
we locked in $30 on the other one.
We were NGV5. I think we initially locked in 50,
and then we paid 30 to put on the second one.
So if I go to activity of NGV5. Over the last, and I said we've been in it for 36 days. So we started with 33-cent credit, almost exactly the same.
Yes.
And then we bought the next spread for 28 cents.
Correct.
So we got to wait a little longer. You were right.
I don't mind if you want to do it for even.
No, but that's fine. That gave us 50 cents to work with when we added on the next part of the trade.
Yeah. I mean, it didn't move that. It didn't move that fast in natural gas, but this is perfect. It's good. We got a line on natural gas now.
28 cents. I'm going to put what if I put in NGX?
Put an order in to buy it. Put a GTC in for 28 cents.
So I'm going to try to, what I would do would be, if we have this short put spread, the 2.9, 2.8, if I buy, what I want to do is sell another 2.9.
Correct.
And buy a 3, and I want to pay 28 cents for this. So, or $280.
Yeah.
Every week you want to.
And it'll say you can't cancel and then hit GTC.
Net debit, GTC, And I'm
it'll
going to
say
work this.
It'll say you can't cancel GTC's orders in between, but that's okay. Ship it, because I've done this before.
And we know
Yeah,
if we get filled on this.
GTC orders cannot be canceled when the market is there, but it's in. And then if we got it, we got it $50. Woo!
We've locked in $50, and we have stage one, first butterfly of more to come.
Ladies and gentlemen, I think I've hooked her. It only took 2.5 years of me trading natural
now
gas
I see
for
why
me
you
to hook
get so
her.
excited. Now I see why all the excitement comes on expiration day of natural gas.
Ladies and gentlemen, she's a natural gas addict. It's fun though. It's defined risk. That's a defined risk position. Okay.
Okay. So we don't need to talk about that anymore. We talked about Intel, which
I think we should jump into what's your assumption.
We should jump into what's your assumption. Thanks for keeping us on track, Liz.
I'm trying to, Jenny. I got to reel you in somehow. Yes.
Who's ready? It's 10:09. Who's ready for what's your assumption?
I'm sure John's playing the music right now.
He might not have been ready because we're really jumping in early.
I know we are. Sorry about that, John. We're Wile E. Coyotes. You never know when we're going to jump in to do whatever.
All right. What's your assumption? This is what we're doing. We know there are lots of your assumptions, and Tom and Tony go through 10 of them. We picked our top 3.
We picked our top 3 because we're going to give a little bit more detailed analysis into it. We didn't, and in full disclosure, these are viewers' assumptions that are written in, right? And so I don't think anything is a one-size-fits-all. We also have a smaller account than Tom, so he's, zinging strangles left and right, where we're going to take a look at it methodically and say, okay, what do we think about these?
And when I say we picked our top 3, it wasn't like, these are the 3 best assumptions.
These aren't the winningest winning ones either. We don't know that.
We don't know, but these were the 3 that we thought, whoa, these are like Liz and Jenny trades we could come up with. We eliminated products that were $600. We eliminated some higher priced products. We eliminated some.
And we also picked because of their assumption, because sometimes the assumptions are like not as detailed. These were pretty detailed, so I liked it.
Yeah. Oh yeah. Or if we didn't like it, we wouldn't have picked it.
Correct. All right, hit it.
First one. Drum roll.
Am I doing the drum roll, or is it happening there?
Here we go.
Wait,
here we go.
What's going on? Why can't I read that? Okay, there we go.
There we go. No. Here. Exxon.
XOM, bullish. I assume Exxon will break out to 125, 130 before November expiration.
Okay.
I am long as of Monday. By the time you are reading this, XOM will break out further. So now is the time to buy.
And this is from Evan from Amsterdam.
Yep.
So, when we were traveling, a lot of people assume most of our viewers and customers were just here in the U.S., but they're everywhere, folks. They're everywhere.
We're international. All right.
Exxon bullish. They think it's going to break out to 125, 130. Let's take a look at Exxon and what we might want to do.
That sounds great.
Here we go. XOM.
Exxon.
It is up. They are right. They said they were getting long on Monday. Today's Wednesday. It's up again. Has it been up? Look at this. They got long Monday. It was up Tuesday. Now it's up Wednesday.
Yeah, so they say you can get long. But keep in mind, they said between 125 and 130. 125 and 130. So let's take a look at this. Let's open up the trade page.
Okay.
It's got an 11 rank. Let's just talk the facts. Just the facts. ExxonMobil, 11 rank.
Who's down 7? They're getting heated back there.
They're getting heated back there.
Lots of
I'm glad we're out of our SPX.
Oh, I know.
Yeah.
I know. Good thing. All right, so 11 rank, not the best for premium selling. Like when I think of like just selling a put or just selling a premium with 11 rank, there might be something better.
But also, we're keeping in mind their assumption. So they were saying it's going to be between 125 and 130. So let's take a look at, and we can see there's earnings coming up on November. Does that say 7th or 2nd?
November 7th.
Oh, shoot. I thought it was my birthday.
Oh. I already started getting your birthday presents.
You did?
I did.
Can't wait.
Okay. So earnings coming up, their assumption was 125 to 130. So if you're thinking like it's going to skyrocket from 115 to 130, selling a put might not be your top choice because you want more profit potential.
Absolutely. So, I mean, your choices are you're going to look at a zebra, which could be kind of expensive. Okay. You could look at some other type of bullish, selling puts,
we can compare. We can compare.
That nature. Let's just go to what trade we came up with.
Right. And I think when let's look. So we talked about a diagonal. We have earnings in November. So a diagonal consists of buying, at the money, slightly in the money option in the further out cycle. So here, with it trading 115, one thing I would look at with it trading 115 is there's a decent amount of extrinsic value in that option. There's $4 extrinsic value in that option. I honestly, if I'm doing a diagonal here, would move this down to 110.
We were looking at the 110
earlier.
110. It's up a bit. So yeah.
I would rather pay $2 in extrinsic value. I'd rather have $2 and give up than $4 and give up.
That's correct. Okay, so in this example, you are giving up some extrinsic value. Pop the whole trade in because I do think this is worth
in any
discussion.
diagonal, you're buying a further out in time, so you're paying some extrinsic value, but you're going to offset that with extrinsic value from an out-of-the-money option you're selling. Now, if he thought it was going up to 125, 130 by November.
By November, this is still October.
It's still October, so I think if we sell that 120 in October. This gives us, $5 in room for the next 23 days, and then we could roll it and sell another call in November.
Or this rolls off, and you are long the call in November, like whatever your assumption works out. This is using $685, very defined risk. Now, Jenny, I did actually pull up, and I did not mean to throw us in a loop, I did pull up an October zebra.
I would like to compare the two.
Yes.
I would like to compare,
So
because
here
if it's close to the $600, I might rather put on that zebra.
October or November is my question.
Well, okay,
because October is cheaper.
Before November.
So look at the October.
Break out 125 to 130 before November.
Look at the October zebra.
Okay, so I'm just, while I have this pulled up, option A, 110, 120 diagonal, it's $685. It's a $10 wide diagonal, so if Exxon blows beyond
goes to 125.
Well, this is only going to make $315. It's the inverse. $10 minus $685, $315.
Right. Correct. Now let's take a look at an October zebra. You're in the 23-day. That's fine. It says before November expiration. It's already up. But if you think it's going to 125, a zebra is a smart stock replacement strategy. You're selling 150 delta, buying 270s, and there are ways to make it cheaper. We talked about it yesterday on Intel.
Yeah. So sell a 50 delta. I could go either 150 or 116. Buy 270 deltas, and it's $674, almost the same price.
Shimmy it so you can see the green bar in the right
spot. Almost the same price as that diagonal, but now I have 1-for-1 profit potential to the upside and no cap.
So meaning if it goes to 120, like they said 125 to 130. If it goes to 120 here, you're making $500. If it goes to 130, if it goes to 125, you're making $1,000.
Right.
Correct.
So with their assumption of Exxon going to 125, 130 by end of October, before November, I think I'd rather do the zebra.
So do you know what's interesting, Jenny? This is a live show, and we looked at this before. We looked at it on the train. Both of us agreed on the zebra, or not on the diagonal. And then in the light of day, when you were going a little bit in the money, I actually like the zebra better.
Well, I do. I know it's only 23 days instead of that November is a longer term, but their assumption was a shorter term.
You're not paying any extrinsic value. It's got an 11 rank, so
here, this is what this trade looks like. We're paying $683. That's our risk.
Yes.
We have $683 in risk. If Exxon goes down, we can lose that $680-something. But if Exxon goes up, we make money 1-for-1. $100 for every 1 point it goes up. So if we had this on yesterday, with it up $1.47 today, we'd be up $147.
Correct. Okay, press that button because that makes sense. If your assumption is it's going to 125, I like this. If it continues to go up, we're going to ratchet it up. And that you can find in the on the Tasty site too, how to do the ratchet. It's basically closing one, moving it up, and taking a credit in.
And so here it is, very easy. Sell a 50 delta, buy 270 deltas. That's all. We were long one extra call that gives us that unlimited upside profit potential.
This is a smart stock replacement strategy called the zero extrinsic back ratio. I like it. Ship it. All right. Perfect.
Shipped. And I was hoping to get an immediate
fill.
Come on.
Just penny
money,
it up
no
to get filled.
whammies. All right, let's see. Exxon, here we go. I'm going to go up to 690 just to get the fill.
Yeah, you will.
Quick fill. And
done.
Filled. Here we go. Now that's in, and we'll keep an eye on it.
Perfect. Exxon done. Let's go to the next assumption.
Okay, next assumption. Rigetti. RGTI. This quantum stock has been on the rise, but so has vol. So puts price.
I just like that you named it Rigetti. I don't know what the stock price is. The stock name is.
I think it's Rigetti.
I have no idea, but it's RGTI.
Well, look, it'll tell us in a minute. This is from Warren, from New York. So they're bullish, but they say vol is high. So if you're bullish and you say put spreads are cheap, you don't want to sell a put spread because they're too cheap. So you need a different idea.
Yes. Okay. And this is true. When put spreads trade cheap, vol is high and put spreads do trade cheap, meaning that selling a put spread, you'd be buying. Let's just go through this. Go to Rigetti.
Okay. Here. Let's see. Here it is. Rigetti.
Oh, you must have seen it before.
R-I-G-E-T-T-I. Rigetti.
So here's what. Can you change it to implied volatility in the trade page, so we can talk about how put spreads trade cheap?
A question for you: do we want to go to October or November?
I say we stay in Oc.
Yeah, let's stay in Oc. We're getting crazy. Staying in October. 23 days to go. Instead of open interest here, I'm going to put implied volatility.
Just to go off their assumption, if they think so, if you look at this, if you look at the implied volatility of the puts, as the strike goes down, the implied volatility goes up. Meaning that if you are selling a put spread, you'd be buying a put to define your risk that has a higher implied volatility.
Right. So let's say I want a $10 right put spread. I'm selling that 25.15. Well, you could see I'm selling a 145 implied volatility, and I'm buying a 174 implied volatility. That's why when vol is high and there's a big skew, put spreads trade cheap. It's why on the other flip side, when the stock's going wild and there's a really big call spread, the call spreads are difficult too.
It's very hard. It's very hard to get bullish when there's a huge car skew.
Yeah. So, 140 on a $10 wide, maybe it does seem too cheap. What's an alternative?
So if the put spreads, if you look at this and the put spreads are trading cheap, why don't you sell to? So let's do a downside ratio spread where we're actually taking advantage of the vol skew.
So, okay, then that makes perfect sense, because instead of buying that further out option with a downside ratio spread, you're selling more. You're selling that further out option. You're selling
Twice.
a higher vol. You're selling it twice.
Yeah. So let's pop this in.
Okay.
I mean, we did our one, which is good. So
would you like?
We were the 24, 26. Buy the 26.
Buy the 26.
Sell 2 24s. I want to make sure we're taking in enough credit.
Not really.
It was $1 on the train. It was $1.10 on the train.
Okay.
Take it to the 27, 25.
28,
28, 26.
Oh, yeah. Okay,
There you
this
go.
is okay. I think $1's good. $1's good. We're taking $103, buying 1, selling 2.
So this is bullish. Let's talk about how this is bullish, but you're taking advantage of a little bit of things. We're taking in $1. We're using $317 to do it. That's our collection. We're actually taking that in with a high rank. If Rigetti, and I'm going to keep calling it that because Jenny just named it that, goes down to 26, you could have the possibility of making more money at expiration.
At expiration, you have the possibility of making more. Otherwise, if it goes up, you keep this $100.
It's a good return on capital. You're using 330.
I know we were focusing on this implied volatility because this spread is so close. They're actually the same. This is like 146, 146.9. If you really wanted that more oomph and vol, a higher vol strike,
you're just not buying. I'm saying you're just not buying it.
Right, you're not buying it. But an alternative would be. And I've seen plenty of people do this. Like, let's go a little bit further where you're getting a higher vol, and then instead of selling 1 by 2, you could do like a 1 by 3 or a 1 by. You could increase your size, but then you've got to make it tight enough where you're collecting something.
Yeah,
where you're collecting enough.
You don't have to get fancy dancy. Let's just do 1 downside ratio put spread.
How about the 1 by 10?
The old 1 by 10.
1 by 10. All right, so 1 by 2 ratio spread.
Show it on the curve page if you don't mind, and then we'll move forward.
Our break even on this is 22. Rigetti's had a wild run. I mean, if you take a look at this stock, it's had a wild run. Let's look at where our break even lies. Curve view analysis. Okay, this is where the stock is. So anywhere to the upside, we keep that $110.
And I mean, look at the return on capital. 300 and change. I can't see the second numbers, but 300 and change to make 100. Great return on capital.
Now, to the downside, our break-even's around 22.5.
Yeah, which you showed on the chart.
And
That's
at
not
22.5, we'd get long 100 shares of Rigetti. That's the risk in this trade. So 22.5 takes us,
right about there.
Back to this level.
This is their assumption. They're bullish.
Yeah, and I don't mind this.
All right, chip
and
it.
If I like sticking with a little shorter term with that downside ratio spread. Okay. Here I'm going to ship this.
Press that button, Jenny. It looks pretty wide. I would take it down to like 110. Jinx, you owe me a Coke.
I know where I can get one.
Steve.
All right. We're just laughing because one of our favorite people down here is drinking a Coke right now. And I was telling him, Coke cures all.
Yeah, Coke does cure all.
Cure all.
I agree.
It's a cure all. Cure all.
All right, did you press the button? Are we filled?
No, I shipped it. We're not filled yet.
Okay, let's go to number 3 because we do have Jacob's study to go to.
Hey, guess what? It's only 10:20.
I want to get to Twitter.
We have 40 minutes. We'll get to everything. Don't
All right.
worry, Liz. Don't worry.
Go to number 3. Press that button. There we go.
She's rushing me and rushing me. We're going to finish everything, and then you're going to be like, geez, we still have 15 minutes left in the show. What are we going to talk about now?
I'm just going to leave. I'm just going to unmic and leave you here by yourself.
I'm going to monologue for 15 minutes. Rocket Lab, neutral October. What does this have to, what did they say? This is Juan V.
He doesn't even say where he's from.
No idea.
But Rocket Lab neutral. Okay, so here, when you're looking at this, they're looking at a strangle. Rocket Lab, I believe, is...
So they're looking at 20 delta strangle on each side in October, time frame October.
Rocket Lab's a $50 stock.
So
it's got a 31 rank, so I see why the strangle makes sense. It's a $50 stock with a 41 rank, or 31 rank.
Okay, let's see what we can collect. 20 delta, 20 delta. So 20 delta put, 42.5. 20 delta call, $1. You're in 255. Honestly, that's pretty darn good.
It's not bad.
It's not bad. Not bad.
So we were originally looking at something different because I don't know why, but we were. But this isn't not a bad return on capital. It's got a decent rank. An IVR of 31 is a decent rank. This is a good premium selling strategy. Can we look at it? Number 1, break-evens on the chart. Number 2, on the curve.
You're pretty far. 40 and
65.
67.5. So 40 is your put break-even.
That's fine.
67.5, not even on the chart.
This is in October or November?
This is October. The vol is high. What that tells me is vol's high in Rocket Lab. 95 vol. That's pricing. That means this is kind of priced to move. It means there's a higher vol here. It's expected to move.
It is priced to move. And the 31 rank means that it's high for itself, right? So higher for itself.
Higher.
Yeah.
An alternative, less risk. This is only using $500. Not bad at all.
Is Rocket Lab Rocket Mortgage?
Maybe. RKT? No, isn't it RKT? RKT is Rocket Mortgage.
Okay, so Rocket Lab has nothing to do with interest rates? That's the only reason I'm asking.
I don't know. I don't know what it is. I don't. So an alternative to this strangle, which we thought would have less risk, would be an earnings setup calendar because they have earnings in November. If I bought the 50... Oh! What's happening back there? Let's see if they can tell us.
I don't know, but there's a turkey gobbling, and I love it. Nothing makes me happier.
All right.
So Rocket Lab Corporation subsidiary delivers 2 Mars-bound spacecraft for NASA. It is not, and I repeat, not has anything to do with interest rates.
Nothing to do with interest rates. A lower risk trade, if you wanted, that's also a neutral trade, is an earnings setup calendar.
Yeah.
So that was another option. Option 2.
So, and those are neutral. Well, just a calendar is neutral, and we always say strangles and encounters. Yeah. Calendars have a neutral bias as well. So let's take a look at that.
So that, just at the money, buying Nove with 58 days, selling OC with 23 days, it's $277. But doesn't matter what Rocket Lab does, you're never going to lose more than $277. And if time passes and we get that theta decay of the October, this trade, the October. Here's the way you can determine future value of a calendar.
Are there wide markets? Because why is October implied volatility higher than November? Unless my eyes are deceiving me.
95, 91.
That's what I find odd. Because
there must be something going on. Maybe there's a launch or some kind of news or some kind
There's
of deal.
There's got to be something in there because you can see that. This almost seems a little bit counterintuitive. When we're putting on an earnings setup calendar, typically I think we're buying a higher vol. Not what we want, but an earnings setup calendar you do because you think that's going to continue to inflate. This is kind of telling me something about that implied volatility.
So we're going to have to do a little bit of math. What's 58 minus 23? 35. Okay, so 35. So in 23 days, when the short expires, our long will have 35 days.
Yes.
So what we could look at is
the 37
day. How much is that 50 put? That 50 put's 530, 540. So if Rocket Lab stays around here, we can expect our long November to be worth about 530, 540, maybe even more because it has earnings in it.
And that was a good example of that. But when I'm looking at this implied volatility, I don't want to do a calendar in this because something is awry because you're
you think it's going to move?
So it's priced to move in the nearer term.
It's priced to move.
In the nearer term. And we're trying to do it through earnings. So it's priced to move in the nearer term when I'm looking at that implied volatility of 95. And if you look, it's almost as if it's like earnings. Maybe there is a launch because look at theirs,
No, I
114,
don't know what
104, 97, 95.
Like, I don't know that they've
No, but you look at the volatility. It's telling you something. 114, 104, 97, 95. It's going down.
There's something in the news.
Correct.
The reason why you can get so far in that strangle and collect so much, there's something going on, possibly something in the news, something that people think this could move. That's why I hesitated on the strangle. I was a little nervous to have that naked strangle on here.
Yeah, do you want to iron condor it?
Sure, we can. So, okay, his strikes were the 20 delta. So 20 delta put and 20 delta call. If I just keep those same strikes and make it $5 wide, I'm going to keep the same strikes, $5 wide. You're getting $1.36.
That's not bad.
No, so
then you're defined risk.
You know what? Then we're keeping an eye on Rocket Lab. We've got the same strikes as his strangle, but
Correct.
we don't have the undefined risk. We've got the defined risk, 132. Using 368.
You know what though, Jenny? This just shows me too that the market's kind of like the ocean, or even like, so you have a house on Lake Michigan, and you can't go out on that lake unless the weather conditions are fine. And even when you get out there, it can change on a dime. That kind of just shows me this. Like, what you thought you were going to start with, once you open it up, I don't know that I was looking at those implied volatilities when we were thinking calendar.
Well, we've said this before. We used to have this producer who was like, I want your trades before, the day before. And
I love when you do the voices. I want your trades
the day before. Like, no, because you don't know what the market's going to do. Like, I'm not going to give you our trades the day before because they're going to be different the next day.
Even if you look an hour before, when you're doing it live, it's a completely different scenario.
So as we're riding the train in and the market was open, it was 3:30.
We were all in favor on 3 separate trades than these.
Yeah, right. We had different trades picked out for these underlyings. And then you come in here an hour and a half later and things don't look the same that they looked an hour and a half ago. So you can't say, we've always said that with a live show. The cool thing about Tasty Trade is we're live and we're all traders and we're coming up with these live on air.
And somebody might look at this 3 hours from now and be like, that was a dumb trade. But it wasn't at the time. So your risk is defined at order entry.
Yeah, and so people that are like, oh, tomorrow I'm going to do a show and I'm going to talk about this
broken wing butterfly.
This trade in XYZ. Well, guess what? You might not want that trade the next day.
I'm so mad that XYZ is now a stock.
I still use it as an example. So,
and I think we're filled on all 3. Can you do me a favor, live push those through, and I'll do it on the other side so people can see them go to the follow page.
I'll push this up. Yes.
Oh, I thought we had.
No,
I thought there were 4.
Today. So today we did a zebra and Exxon, and our plan was a diagonal.
Yep.
Rocket Lab.
We did an iron condor.
And our plan was
an earnings setup calendar. Yep.
And Rigetti, we did a ratio spread.
That was our plan.
That's all going out to the follow feed.
Yes, it's going out right now.
Okay. So that's what's your assumption. Are we keeping to your schedule?
No, because we haven't been to Twitter yet.
She runs a tight ship.
Well, I need to get your brother's dog. I need to get your brother's dog.
You can go to full screen if you want to hear this story, Steve.
So yesterday...
I'm just going to get my drink and sit back and listen.
Yesterday, Jenny had some laundry that she needed delivered. So I got a delivery.
Wait, can I interject and tell me if this is normal? So my brother, who is 50...
Keep in mind, okay, I went to college with her brother, and I know him very well, and I love him. And he lives right by me, so this is not that weird.
Okay, my brother, who's like 53 years old, 52 years old, 52, 53, I don't know, something like that, had some sheets from the lake house, right?
Yeah.
And he's like, hey, we took these sheets home, we washed them, but I don't know how to fold sheets, so do you mind if I just like crumple them in ball and put them in a laundry basket and drive them over to Liz's house? Because he lives right by Liz.
Yeah.
And I said, well, no, don't crumple them in a ball because then I'm just going to have to wash them again.
Yeah, well,
so then he says, well, now I have to wait for my wife to get home.
Okay, I'm not going to lie to you. I hope she's watching this segment because I've never seen better folded sheets in my life. So I don't know how to fold a fitted sheet. I think to me it is just, I would have rolled it up. Like if you would have given them to me and I had to do it, I would have done well, but it would have been in a roll, okay? But these things have like crisp military lines. She's the best sheet folder this side of the Mississippi.
I'm sure there was a lot of pressure because you probably got home from work and my brother said, my sister said we can't turn the sheets in unless they're folded. And she was probably like, I better fold these perfectly.
I mean, there are military lines on these sheets. They were the best folded sheets I've ever seen. And there's even like fabric softener in between each one. And I only saw that because it was sticking out on each side.
Oh my gosh. Well, thank you, Julie. Thank you. I truly appreciate it. Yes.
So her brother came over yesterday. The reason that I want to get to Twitter so bad is because he sent me a picture. Then we were texting back and forth. He brought this adorable dog with him to drop off the sheets. His name's Mando. He's the cutest thing ever, and his dog is so sweet. And I'm only saying this because he's like, oh, Will Ferrell. Like I don't know. Like my dog's
he has
a
no
jerk.
idea. Will Ferrell could have killed Mando in one swipe.
So that's why I was like, we were texting back and forth, and he's like, I'm sure your dog's nice. Maybe we can take our dogs to like Digsign Canal. I was like, no. Like, Will Ferrell's not made for public consumption.
Oh my gosh, so funny.
So I was sending him pictures of Will, but Will looks sweet. But look at this. Like, this dog's at a kissing booth.
This is Mando. He is the sweetest dog. He's very nice. He really gives my dogs a bad name in the family. Because
my dog looked like the devil when I went home. He's like, would you like to give him a treat? I was like, I would.
He's very sweet, and here he is. We all love Mando. And I appreciate my sister-in-law folding those sheets so nicely so I can... otherwise, I told him, if the cleaning ladies come to put clean sheets on the bed and they take a look at those, they're going to think they're dirty.
I'm not going to lie to you. I need Julie to come over and give me a lesson. Do you know how to fold fitted sheets?
Yeah. I mean, okay, if...
Like a fitted sheet, not a sheet. I can fold a sheet.
Here's the thing. Having a place with that 1, 2, 3, pull out, 4, 5, like so many beds in it where you've got a bunch of people sleeping in there, and then I've got to run through and do all the sheets real fast. I've gotten very good at it.
Folding fitted sheets.
Yes.
Ladies and gentlemen, we're going to bring one down here. I want to do it live on camera.
No, I need a big flitz.
Great.
I use the bed.
Wonderful. I will get you as much space as you need because I think it's a physical impossibility.
And then, like, not on the bed, but I'd lay them in the flat space and then fold them.
And then what about the corners?
I can do this.
Oh. This is going to be a tasty to go, and I'm going to time you.
All right, fine. We can film it at your house.
Yes, we could.
Yeah, sure.
I'll give you as much room as you need.
I'll show you how to fill.
I'm telling you, I think Julie's the best. Maybe I'll have you and Julie go toe to toe.
Toe to toe. She could probably beat me.
That's pretty good. Okay, but nonetheless, the dog was adorable. Big shout out to Mando and Jeff, and it was great to see him.
I will. Oh, look, and now we've got more dogs coming in. Look, there's Sadie. Oh.
And that's what I said to Jenny. I was like, I believe that Mando is the same dog as Sadie.
Yeah, she is. Yeah, he is.
He is.
Mando is the same as Sadie.
Yeah.
Because Sadie's a she.
It's so funny because Sadie's darker.
Yeah, they have different coloring.
They're cute. So cute.
King Charles. Alan, here he is, our pilot, our favorite United pilot. You ladies never age. Huh.
Whoa, Alan.
What did you say? Fighting a little. Well, I thought so. Fighting a little cancer, stomach cancer on my lip. Now you've beat cancer before, Alan. So I mean, remember Alan had cancer. He beat it.
Yeah.
He's all that high altitude flying and golf got me. You think it's the flying?
I love that she asks like Alan can answer.
I mean, I always thought being in the pit for so many years, having that computer hang on us would do it to us.
Could be anything.
We're still here.
Could be McDonald's Cokes. Could be anything that takes us out.
And now I have 400 shares of AI. Liz,
okay.
What kind of strangle would you do? I'm like Jenny, though, scared to sell a put. Listen to you every day. Oh, Alan, thanks for listening to us.
So what about this? Let's jump into AI, Jenny.
Okay.
So we're going to jump in the platform. And he's saying strangle around it. So I do sell strangles around my AI, right?
Okay.
So if you let's open up November or October, it doesn't matter.
Okay.
What about a put spread? So what if you sold a call and sold a put spread?
So let's see. Alan, here's my questions.
I'm selling strangles around mine, so I can show you. I can actually look at mine to see what I'm doing.
So one of my questions would be like, what is your cost basis in AI? Which maybe that, or what price did you get into AI? I don't know if that should matter or not.
So it's almost like the buffer. Here, take a look. Just open up the November with 58 days. I'm just going to give an example. So you're in November, buy the 17.5 put, and sell the 15. You're buying a put spread, and then you have the stock, keep in mind. So go up and sell the 22.5.
So he was saying he's afraid to sell a put, but you're looking at buying a put spread.
Yeah, so I'm just saying you're just doing a buffer around it. So if you're afraid to sell a put, I'm selling strangles around mine. There's nothing wrong with that. For every gimme, there's a gotcha, and everybody's
What call do you want me to sell?
22.5.
22 and a half.
So you have from 1840 to 22 and a half in the November cycle to make some money. And if it goes through it or hits that 22 and a half, Ellen knows roll it out in time.
Okay.
Roll it out and up.
Okay, and I agree with this strategy. But I'm just gonna play devil's advocate.
I have the 22-15 strangle.
You have the 22-15 strangle, and me playing devil's advocate here is if his cost basis is like 35 or 40, and it blows one day, AI blows through the 22, because I watched it happen. I've seen it happen in many products, and then you're like, geez, why did I sell that call for 68 cents? I have come to the point in my life where if I want a little extra premium, maybe I'm selling a call spread.
Now keep in mind, this is Alan. He was afraid to sell a put. He's strangling it, but is afraid to sell the put. That's what he said.
I know.
So that's why I came up with doing the buffer around it. But let's keep in mind, the other thing, Alan, Alan's very smart and he knows all this. The other thing too, you told me you have 400 shares. Do a 2-lot.
Oh, right. Do
a 2-lot. You don't have to do all of it.
So here, and again, when she says, Alan, do a 2-lot, that's not a recommendation.
No.
I'm just clearing.
Nothing is a recommendation, but just don't do all of it. So I know your Oklo that you sold the calls against. I didn't sell calls against all my Oklo.
Yeah. And then I'm battling it, and I paid money to roll my call up.
Yeah.
Battling it.
So I only did 50% of my shares, and that's another thing you can do if the price point is there. But I'm just going back to his assumption. He said he's afraid to sell the strangle.
Afraid to sell the strangle.
Afraid to sell the put.
Afraid to sell the put. So I'm going to go, let's just go through, if you're long stock, what can you do against long stock? So Liz, what she has against her AI is
the 22 and a half.
Strangle against long stock. She's collecting 89 cents.
22 and a half. You got to take it down a little bit because I'm collecting a little bit more.
Okay.
I'm the 22 and a half, 15. So I'm collecting 115.
115 she's collecting against her stock. It's giving her an extra $1.15 cost basis reduction. Every,
One might call this,
days.
these guys might call this the stupid because I'm long stock and selling a put. So that's why it's called the stupid. There's no capital efficiency here because it's going to hold up that put as well.
Now, I have plenty of stock where I will bounce around. When the stock's down, I'll sell puts. And then if the stock pops up, then I'll sell calls or call spreads, and I will bounce. It depends on where the stock is. It kind of depends on where the stock is, where the rank is, what's going on, and it moves around. Now, we talked to somebody on the road who said they'll do a call ratio spread. They will, let's see.
It's hard here. You're not collecting anything for a call ratio spread.
Oh, if you bought one, sold two?
Yeah, you're not. This is a tough one because it's not.
Yeah, you're collecting a very small credit.
And you're still capped out at 25.
Yeah.
This is, I know what they're saying. In a high price stock, you have a little bit more leverage.
Maybe you can get a little more.
In the high price stocks, it makes sense because you have the stock to sell a call ratio spread.
Alan, if you're afraid to sell a put,
then
don't sell the put.
Don't
sell the put.
I think Alan just wants to get on air because Alan knows what he's doing.
And sometimes we'll do almost like a lizard type trade around our stock.
Yeah.
Where you've got a call spread, you've got a put. It's a lot of premium if we stay right here.
And Alan, I was thinking about you the other day. My husband is reactivating his pilot's license. So yeah, Alan's flying all over playing golf. One day I'm going to be playing golf with you in Orlando, and I'll be flown there by my husband.
and Alan, sometimes if I'm like, oh, I'm nervous about this stock, nervous about it going down even further, I'll get rid of all of my stock because at this point the stock's like a losing stock. This isn't like, oh, I need to hold the stock. I don't want to pay taxes against all my gains.
Yeah.
I'll get rid of all my stock and just put on an in-the-money call and just leave it. Go further out in time, throw an in-the-money call, close my eyes, and leave it.
Yeah. AI
never look
has
back
come
at it.
down a little bit, but it's not. Like, if you take a walk through history, AI has always been not really that high. I mean, it was 18 in 2024, and it was 18 in where? So Alan has probably been trading in and out of this, just like I have. I think I've been in it for a while.
Right.
But yes, thank you very much, Alan. It's great to hear from you.
Good luck. I know Alan's been in AI for a while. It's not our first tweet on AI.
Okay, he also said he's scared to sell a call.
Yeah, so...
He meant scared to sell a call.
Oh, scared to sell a call. I agree with you.
Yes. So, and if you need to, like I said, I do 50% of them, but I do have calls around it.
Now,
I do, because I don't, the multiples are the gift that I have given myself if I have multiples of stock positions, because then I don't mind under-hedging instead of over-hedging.
Sometimes here's something I will do. I've mentioned go out further in time and buy some buy some calls further out in time as your stock replacement. So here I might have 400 of these calls, but there's 90 cents in extrinsic value, but these don't expire for 3 months or so. So then I'll go short term, because these are defined risk. It's not the stock, it's defined risk. Then I'll go short term, and then short term sell, try to get maybe half of what I outlaid in extrinsic value. So maybe I'll sell 2 of these 17s, 2 of the 17, I gotta fix this. Sell a couple puts against my long calls, and then that will chip away at the extrinsic value I'm paying on these long calls. But it's a much more defined risk position. And look at how much buying power. Well, no, that's because I've got those calls.
And you don't have the stock.
Just the puts.
Yes. And think about this. This is a menu. Trading options is the greatest game in the planet. This is a menu. You can fit your risk parameters to do anything you want.
Right.
All right, let's pop in. We've got Mikey coming in. We go top down.
Okay. We're going to go top down. What about Florida 7?
Yeah, go top down, because we've got a lot coming in. We got to get to a lot of them.
Okay.
And then we got to Ellen there. There's Mikey.
Feeling pretty special today. Can't lie. What is this? Mikey.
Tom Preston followed him.
Oh, look at that. And is this Vinny Batista?
No.
He kind of looks like him, doesn't he?
I don't know. All right, go down underneath this one, though.
A happy hump day, ladies. Why can't Jenny... What can't Jenny do? Oh, I guess she folded the fitted sheets. That's basically witchcraft.
It is basically witchcraft. It's impossible. I'm not a homemaker, though, so...
I think... I wish I wasn't that good at folding fitted sheets. That means I do it too often.
I roll them. That's what I'm saying. I'm glad. That's why you were like, do not give those to Liz. They'll come back worse than that.
I just said there's no reason you need to fold the sheets for my brother.
This makes perfect sense, Jeff. Why she's like, no. You wait till Julie comes home. Do not put those in Liz's hands. Okay, now we'll get to everybody.
Oh, okay.
Then scramble everything is right underneath Alan Miller.
All right, Florida 7. Look at the open interest and volume on the 40 calls in January on your beloved JD.
And we have that one too.
Oh, yeah. Okay. Big money thinking it's going higher. So we'll take a look at JD. Also, scramble
Florida 7,
everything.
big money, no whammies. I'm just naked long.
If you're on YouTube and you post something on YouTube, the great Frank Walsh shares it with us here. So here, this is from Scramble Everything on YouTube. SLV November put ratio, 238 puts, 137. Let's look. SLV, 3837.
Put ratio. So they're bullish to neutral. Let's see. It depends on what you're collecting. I'll keep the strikes up.
I don't
November.
know. 3837. Collecting $1.
That's not $1.
Yeah. 3837. Sell 238 by 137. So it's different. It's
flipped.
It's
You're flipping it.
So hold on.
By 137 put, sell 238.
So it's
you got to sell 238s, yeah.
Hang on. Sell 238. So they're selling 2, buying 1, protecting 1 of these puts. It's like they're selling 1 naked put and 1 put spread.
Yeah.
1 naked put and 1 put spread.
What do you want to happen here?
You just want it to go up. You're selling a put spread and you're selling a naked put. You're doing the two of the same things. Like you're putting on a bullish trade and a bullish trade. It's not. I mean, it's called ratio because it's 2 by 1, but it's really a short put spread and a short put. And if you look
so you could just sell the 38.5 for $1. Do you see what I'm saying?
Yeah. So this gets your break even.
It moves your break even.
37.5.
Just like that 38 for $1 would.
Or
38.5 for $1.
Yeah, and then you still have 37.5, 38.5 for $1, 37.5. Right. You could instead of 3 sell 1.
But I like it. I like the creativity. I like the creativity. Scramble everything.
Yeah, you've got 1 naked short put and 1 extra put spread. Yeah. I like it.
I do.
Like you said, everyone could come up with their own strategy.
That's what I'm saying. I like it. You get an A. You get an A for effort there.
Okay, and Bob on fire.
Wait, can we look at JD, the open interest?
Yeah. Look at the open interest and volume. 40 calls in January in JD. Big money thinking it's going higher.
I'm giving you the genie blink for that one because I hope it goes higher too.
JD, January.
So JD rose this morning on the Baba news because all the rising tide rises all boats.
Open interest on the 40 calls. 408.
Ooh, yeah.
Yeah.
Yeah. Can you go to volume and see what was traded today?
That would just be today's.
Oh, come on, Florida 7, big money, no whammies.
All right, so if we think JD's going to have a big pop, it's up 250 today. Let's throw in a Nova Zebra. It's going to be cheap. JD Zebras are pretty cheap.
They're pretty cheap. They're not that cheap though. It's going to be like $500.
Let's go back to Delta.
You can just use the extrinsic value.
330, 150. 525.
Yeah, $500.
That's not bad.
It's not bad.
Let's get in with the big move in JD. If it happens, $525.
No, I'm just long JD, literally just long stock. Because I mean, I took all my. This is dumb. Nothing is a trade recommendation. I took all my Chinese positions, all of them, took them off, and put everything into
Everything
JD.
in JD.
For no real reason. I don't have any faith in that product, but it is my son's name. That's it.
Well, so here's a way to get long 100 shares of stock synthetically for $530 instead of, $1,700.
And how much was that one strike, the one that had all the open interest? What was it? How much was it?
I mean, that's the 40 call, so it's $5 out of the money. It was $250. So it's like, I'd rather have the Zebra.
I'd rather have the Zebra too.
I'd rather have the Zebra. I don't know.
Who's down 17?
Whoa. Close all watertight doors. All right.
Now, Bob.
Got to that. Bob on fire, that handsome guy. Today's earnings, KVH, ACN, and CarMax. Before we take a look at those, should we do Jacob's study?
If you want to. It's up to you. Let's go for it.
All right.
Because you got Blue Wackadoo, you have some other things, but I think we're good.
All right. I think market maker.
These guys are market makers. We're doing market measures.
Market measures sponsored by the SIBO. The speed of 0 DTE theta.
Yes, this is great. And this is the SPX study that Jacob does every week. This is not building off something else. This is kind of a newer concept. Not a newer concept, but just showing us durational versus the 0 DTEs.
I think it just compares the 0 DT, different strategies, and the rate of their theta decay. So here we go. 0 DT markets are characterized by their exceptional liquidity and the rapid pace at which trades occur, attracting traders who thrive in fast-moving environments.
I mean, which is
look at these guys.
Which is mostly young people. Don't you? I do believe
fast-moving environments.
The 0 DTEs are the biggest draw to younger traders.
I mean, just like Jack Tucker and Blue Wackadoo.
They're young guys.
They're young whippersnappers.
Young whippersnappers. And so then, according to the Black-Scholes model, the sensitivity of an option's price to time decay, or theta, intensifies as expiration nears, making the final trading day particularly critical. So what happens when it's just one day?
Right, you see, and then what happens within the day? Like, are we, as we get closer and closer and closer to the very end of the day, are we seeing an exponential increase in theta? Because it has to go from like whatever price it is to 0 by the end of the day.
So if you look at a durational theta decay, it runs into a wall. It's all got to be 0. So if you're looking at it from 45 days, from 50 days, from 100 days, whatever the extrinsic value is, once it hits expiration, it's got to be 0.
And our research shows with regular trades, put them on around 45 days, take them off around 21 days. So let's see if that looks the same with the 0-day curve. This heightened theta and the associated volatility present both significant opportunities and risks, necessitating a deep understanding of intraday price movements. All right, good thing we're doing this because it sounds like everyone needs to understand intraday price movements.
They do. How quickly do 0 DTE premiums really come out as expiration approaches? Okay.
Using 2.5 years of data in 0 DTE SPX options collected every 10 minutes.
2.5.
25?
2.5.
2.5.
2.5.
Well,
this is 7.
This is 75. We were today working on.
So this is 2.5.
Oh, what's 2.5?
2.5. I said 2.5.
Oh, I thought you heard their trade.
No, 2.5.
That's why I'm super confused. I'm like, what has a half strike in SPX?
2.5. Okay, 2.5 years of data using 0 DTE SPX options collected every 10 minutes. At every data snapshot, observe the price of a straddle. Okay, just a straddle.
All right, where are we?
Number 3.
Amalgamated results to find the mean behavior over the course of a day, as well as the 1 standard deviation dispersion. This activity, is it
down 23?
Is it like a tell of maybe there's more downside to come. There's a lot of activity going on back here.
And what is the VIX? What is happening in the VIX? I'm going to look real quick.
So note that this is tracking at the money premium, not any particular trade. As the spot price changes, so will the strikes of the options considered.
Okay, so they started with the straddle, and then they repeated the analysis using 40 deltas or 25 delta strangles instead of straddles.
All right, so we're going to look at these
VIX
results.
is in the 17 handle.
What?
17 handle, yeah.
Speed of 0 DTE theta, we're looking at, start 8:30 in the morning. This is a straddle, selling a straddle, and we're looking at the decay of this. And,
it never hit 0.
And it has this tiny pop at the very end of the day. You got at 258. Sometimes I will. At like 257, 258, buy some options because it could be really cheap, and then you might get like a move at the very end.
Yeah, but
that might be that pop up at the end.
Aren't you surprised that it didn't go to 0?
What do you mean? Oh, it goes to 0? Well, they hit a wall and then they have to go to 0.
Yeah, I guess they have to have something at the very last second.
In the last second.
Yeah.
And then it's like kind of watching these at the end of the day, you're kind of like, oh my gosh, where did SPX really close? Because spoofs keep trading, things keep moving, but then SPX has a cutoff.
SPX is done.
Done. Now, 40 delta strangle looks similar.
Except you don't get that. What was the first one?
The straddle. The straddle has that pop at the end of the day because it's at the money. And
what are they trying to say here at noon?
I don't know. It looks like a shark. You don't get that here.
Yeah, that's what I'm saying.
What is this? What is this red?
And they might tell us in the...
one standard deviation.
Okay.
Plus or minus 1 standard deviation.
Okay, so there's something happens at noon, and if you noon balloon, and if you are selling the strangle, you can see the little pop at the end. Now go 40 delta again. Here's the 40 delta. That goes straight down. That's your straight down. No pop at noon.
And the 25 delta strangle.
That's even farther at.
And then the strangle. This is where everything's coming out at the end of the day. Everything's coming. It's worth nothing. It's going to be worth almost nothing.
Yes.
Yeah, the 25 delta strangle is we get close.
And that makes sense because you've got the straddle. It's closer to the at the money, so it's got to hold something because there has to be some value at the end.
So what I will say about these, and I remember studies. And let's just look at the straddle because my put spread was close. Yesterday, between noon and 1, I took my put spread off for a loss. Took it off for a loss, wasn't a full loss, saved myself about $250. I told myself...
And it never popped up at the end like this
I told myself, 12 to 1 is similar to 21 DTE. If we're selling at 45 DTE and we close at 21 DTE, if I'm selling at 9 in the morning, I should close around like 12:31 in the afternoon. So I closed it, took a loss, not expecting SPX to pop back up.
No, and I think that's fine. I think if you're taking less of a loss, these are pretty interesting because when you think about them as a whole, we close things for less of a loss sometimes. We'll take things like that off if we don't like it or if we don't like the price action that's happening during the day.
That SPY Delta Buster has 2 days left. We have 2 days, or that SPY Delta Buster's coming off.
Yeah, but it's not. There's nothing in it.
Oh yeah, there is.
Is there?
So yes, there is. It's in the middle of our call spread, but that's just one of those things.
Oh, but that's okay. It's not like I thought it was worthless.
No, but that. I think I like the lesson of closing at 21 DTE, and this isn't a lesson on close at noon or 1, but I want to bring that study back.
Our SPY Delta Buster has 23 days left.
No, I said in 2 days. In 2 days.
Oh, I thought you said it had 2 days left.
No, in 2 days. In 2 days, it's kind of 21 days.
That makes sense.
I think we have to treat those that same way, so we don't take a full loss on it.
Agreed.
Okay, so let's see what the takeaways are of these.
I think my takeaways are they look the same.
They all decay similarly.
I mean, there's little nuances, but similarly.
Yeah. Okay, while 0DT trades with undefined risk are often untradeable due to buying power reduction constraints, they offer valuable insights into the short premium opportunities available in more practical tradable strategies.
Regardless of how far out of the money we looked, which that's what we did, so it was on average, the premium came out of the option sheet almost linearly as the day went on. So yeah, you saw that, the line that went like this.
Yeah. The only noticeable difference was in the last few minutes of each day, where at that straddle, you saw that bounce up in premium at the end of the day.
Yeah.
Out of the money premium disappear, but options that were at the money as market closed
could go anywhere. That's what we talk about at the last couple minutes. Sometimes we'll buy something just because.
I will, and then you could sell it real quick.
By the way, end of month, end of quarter is in 6 days.
Let me put that on my calendar. That we've tried. One time end of month, end of quarter. At the end of the day, we saw it skyrocket, and it's not. Maybe it happened once again. I think it did happen.
It did happen.
Yeah.
It did happen. And then, so zero DTE options provide some of the fastest theta decay available, and they do so all trading day long.
Provide some fastest theta decay available and do so all trading day long. So it doesn't say it stops decay. And there's no, I was hoping for a clear like decay, and then slow down. You don't get that. It decays all day long. So me making up like close at 12 to 1, that's just what I'm doing. If
you know what's crazy
feel like,
is I do think though, because there's a study that said that it might not come back.
Might not come back. Like,
I think that's where you're getting
if it goes against you, the market might not come back. These options are still decaying, but the market might not come back.
They're still decaying, but if it's moved so far against you and there's still some premium in it, I get why you're saying I don't want to.
I wanted to make sure we got to everyone on Twitter.
I think so.
And we did not. So as far as earnings go, KBH, ACN, CarMax, we're out of time. We're actually done.
Oh, okay, yeah. There's not much in earnings. And then Blue Wackadoo, we see you. We'll retweet everything that you do. Like Blue Wackadoo put
down
in
30. Spooks are down 30. Intel still holding strong.
Intel is holding strong.
And anything else?
I mean, this is what I would like to thank Jacob for is get out fast. Like, take your profits quick, because if I would have stayed in, would have been a full loss.
Right, yeah. We learn lessons every day.
Who was on the road who's like, I've been trading those zero DTEs. He's like, I've got millions of positions on, but I'm watching that zero DTE like I need the $50.
That's funny.
I was like, me too.
I know, that's so funny.
Because you're like, are you out yet? But we have more positions on than we know what to do, but we want to get the instant gratification of zero DTEs.
All right, that's it for the day. That's it for the week here at the SIBO in the SPX pit. Tomorrow we will be live from our Tasty Chicago studios.
Yes, we will. Everybody in Red Shirt Thursday, everybody remember to trade small, trade often.
Laugh with us, learn with us, and watch the Liz and Jenny show.
See you tomorrow, everybody.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that one-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
I want to play a game. It's a relationship game. So I'm going to ask you each a question to your partner.
Who loves the hardest?
Yes. So are you ready?
Exactly.
Who's more stubborn? Who's more public? And who do you think takes longer to get ready in the morning?
Oh. He's got to do his hair.
Who's a better driver?
I mean, for sure.
Yeah.
Like, I live in Italy. Yeah. Like we drive like.
I drove a truck in New York City.
I drove a tractor on a farm. I can fly an airplane.
Who loves the Fed most? Who is more spoiled?
Oh, it's not even close. Like, you got buildings full of people. What do you want, Mr. Zosnoff? I have nothing.
Beat the opening bell. Get trade ideas and market insights before the open. From the creator, Tom Sosnoff, and our chief market strategist, Tom Preston. Every weekday. Sign up at tastylive.com/newsletters.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
Traders, start your platform. Tom Sosnoff and Tony Batista are hitting the road for their first ever live trading event, At Work by 11. It's unprecedented, unpredictable, and unlike any other financial event. Watch these masters make real trades in real time. Doors open at 8, the action starts at 9, and we'll have you back at work by 11. Sign up today at tastylive.com/events.
Tasty Trade has crypto, and you can trade with 0 commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
When the market moves, traders need to move faster. Tasty Trade Active Trader Tool offers full depth of market visibility, one-click order entry, and instant position management so traders can react in real time. While others charge for professional tools, Tasty Trade provides them for free. Opportunity can move fast. Seize it with Active Trader. Try it now on Tasty Trade.
Good morning, everyone, and welcome back to the show. This is Option Trading Concepts Live. My name is Nick Batista. I've got my man, Mikey Butler, and of course, Mr. Glenn Freiberger, G-Money in the house with us today from the Tasty FX team. And if you want to come join us, hop over to YouTube, type in Tasty Live, come to our channel, give us a like, and subscribe to our videos because it helps us immensely. But more importantly, just come chat with us live because we'll be taking questions throughout the show. Whatever you got questions on, from strategies, concepts, trade ideas, trade management, whatever. Just come hang with us for the next hour of the day. My favorite hour of the day gets spent with my buddies, Mike and Glenn. Glenn, good morning, sir. How are you?
Pretty good.
Yeah.
Not too bad. I beat our good friend Mike Butler in fantasy football this week without a quarterback. Do you need a quarterback?
Why didn't you have a quarterback? What do you mean?
That's not important.
You just forgot to set the lineup?
So Jaden Daniels was actually hurt, it turns
Yes.
out.
He's been out pretty much all week.
Yeah, so I got the notification, and then I forgot. So
No.
But it didn't matter.
Didn't matter.
Against
Actually,
me with 2 tight ends?
But, dude, it does matter.
Yeah. See, in my home league, it's a $25 penalty if that happens to you.
Really?
You
What?
start somebody that is declared out before game day.
That's pretty funny. And, like, pretty harsh. That's like,
Well,
how much is your buy-in?
Keeps people in track.
Like $50?
$250.
Have you ever won?
I win pretty much every other year.
Damn.
That's
I'm a multi-year winner.
Damn.
I think I've won. I think I've won
well, then
3.
comparatively, $25 is fine.
That's why he left the Tasty League, because he felt bad.
Yeah.
He felt bad.
And it was-
he knew he was going to win.
And like pot odds,
Yeah.
not worth your time.
We go up 50 a year. Now we do.
That's pretty funny.
$50 a year. So
Well, luckily there was no monetary penalty for
Yeah.
our league, but you do
because it
the
takes 5 seconds. It takes 5 seconds to settle.
Especially now, you just click start.
Yeah,
players.
yeah. It's
Okay, but I got multiple apps now. I was traveling.
Yeah.
Tasty Live
that's
New York. Great
that-
time if you were there.
Oh yeah.
Fantastic.
New York, they bring you around. Very
New York,
nice.
New York, New York.
You get
Yeah,
up to
it was
anything
last week.
rowdy there? You a little naughty boy?
No, all above board.
Of course.
Time in
You probably got some friends there.
Saturday night in Brooklyn.
Yeah.
Yeah.
All your Northwestern.
I did run
Pinky
into
ups.
some Northwestern people.
Yeah.
Saw a good friend from North Carolina as well.
Very, very nice.
So we were bouncing around some rooftop parties.
Ooh.
Rooftop action.
That's what the young kids are doing these days, huh?
It was beautiful there. So yeah, great time.
Very nice.
What have you
That's
guys
good.
been up to? You guys, do you have a show?
Yeah, we're out October 12th.
What?
Yes, Dallas.
Basically 2 weeks
2
out.
weeks out.
Yeehaw.
Yeehaw, indeed.
baby.
We've learned that, well, we're going to the rodeo, first of all.
Yes.
Duh.
And then we're also probably going to go to the Texas State Fair in Dallas.
Yes.
Wow. Talk
Last
about
week was
timing.
there, yeah.
Did you guys plan that?
Paul Wall did, because he's playing there.
Okay.
Yeah.
That could be fun.
It's going to be great. We're definitely going. But yeah, October 12th, Kessler Theater. Sign up for free, tastylive.com/events.
There you go.
Come
Oh
join
yeah,
us.
Nick's in there too.
Come holler at us.
Yes. Yes, I am there. I'm like a Easter egg, you know? And you got to find me.
Man, what an Easter egg.
All right.
In for a treat.
This is the gang. We miss Ryan, who's
Yes,
out.
true.
Lots of tasty babies.
Papa.
I've had some people asking about Vecchio. Vecchio also welcomed a beautiful baby boy, tasty baby, into the Tastyverse.
Watch out.
Two new
Yeah.
future show hosts.
Yes.
And Ryan.
You'll be teaching them the ropes.
Yeah.
All right. Get them clicking that button ASAP.
Yeah. That's why I keep telling Ian and Gus, I'm like, those old guys taught me. I'm going to teach you, and you're going to teach the next ones.
You're very
Goes on forever.
Very kind in that way, Sensei.
Yeah. Thank you. I'm Ankh now. I'm embracing the Ankh.
Yeah, those children are going to be literally classically conditioned to the ding noise.
Yes.
Yes.
So if anything, it'll be an interesting psychology experiment.
Mm-hmm.
What's this noise I keep hearing?
Ding, and they're like, we got to start conditioning them with food. Like, you hear the ding, and then you like give them a cookie or something, like a dog.
It's like, oh, is the FDA aware of this?
Yeah.
Nope. I don't know what the governing body is.
Yeah.
Should.
It's currently shifting. It's in flux.
Okay.
Yeah.
Nice. What are we looking at today?
Oh, well, a little dippy-do. E-minis down 66.83. It's a crash. You gonna buy this dip? You like that?
I did. A little dippy-do.
A little dippy-do. Just
crash.
A little, yeah. I mean, nowadays it's a
guy.
crash. You get, Jim Cramer will start tweeting about, how this is like,
The end, isn't it?
Yeah.
The final count.
Yeah, you get that sort of thing. E-minis down 31. Low of the session. Wider range than we've seen in a couple days here. About a 40, 50 handle range at the lows of the session. NASDAQ down 170. You got the Dow down 167 and the Russell down 19. Everything moving lower here, a little over 0.5% or so. Oil catching a little bit of a bid, /CL up $1.24, 64.65. You have volatility futures 18.55, up 30 ticks. It's the high of the session as well. The VIX itself at 17.14. We've seen a consistent bid in volatility over the last couple sessions. Let's call it a week or so, even though we've rallied higher pretty much since Jay Powell, his eminence, or what do you say, like the His Grace took the stage.
His Holiness.
His Holiness took the stage. Yes, we've seen a little bit of a bid in volatility. We've also seen bonds off the highs, weak in the bond market, down 7 ticks. Gold down $39, silver down 41 cents. Those two have had quite a rally to the upside, so this is just a paper cut. Bitcoin has been weak, bouncing a little bit today. $1,700 on the futures spot, up 1,000. You have ETH up 34. So mixed bag. It's been a mixed bag for about a week now. A lot of chop, a lot of rotation or dispersion, as the people would say. A little bit.
Dispersion trade.
Dispersion. It's a nice vocab word for
Is there
you.
a difference between dispersion and rotation?
No.
Oh, synonymous.
Synonymous. But dispersion sounds, like more like, you don't think so?
It's less.
Rotation is too like.
It's less intuitive though. Dispersion. It's like, where's it going? Rotation sounds like
It's dispersing.
This bucket.
Disperse.
This bucket.
Yeah.
With
everybody,
the dance?
everybody.
The rotation dance?
The rotation dance.
Yeah.
But sure, dispersion. So where are you guys dispersing to?
I'm trying to disperse some capital into TastyFX.
Yeah, we've had a nice little run there. I got a couple that I can actually peel off here. I was looking at this Aussie US dollar, about $20 on that one.
All right.
That was a little, not NFA, not financial advice, but this was a good one.
Yeah, we're getting a pretty strong bid here in dollar, even just overnight.
Yep.
We had Powell talk yesterday. Said
I saw that. That was a surprise one. Did you know that was happening?
Knew it was slated, but you really never know if it's interesting or not.
Yeah.
But he was going for it. Said equities are
fairly
highly
valued. It's almost like a double negative.
Yeah. It's like what? Say it with your chest.
It's like sorta.
Say you're out. Say you're out.
Yeah. Just like fairly
Say you're
highly.
not long.
Fairly highly.
Yeah.
And so we didn't get a ton of reaction there. Your U.S. dollar drifted lower on that meeting, but as soon as Asia came in and throughout the European session, really saw a strong move in U.S. dollar. We've got euro dollar back below 117.5 in the spot market. We've got dollar yen above 148.5. Australian dollar peeling off back under 66 cents. Canadian dollar, giddy up, really getting there. Just now hit $1.39, $1.39. Canadian dollar, that is. Swiss franc lagging a little bit, which tells me we're getting a little bit of that global risk sentiment turning a little sour, favoring the U.S. dollar in a couple places.
Yeah.
Still holding on to those Swiss francs as well, keeping that pair muted.
Yes.
But yeah, we're definitely seeing some movement this week with PCE, the headline data to come. That's on Friday. Even though the Fed says we have two children, we have to cater towards our employment child right now. Inflation, make your own dinner.
Yes.
But interesting nevertheless. So nice to see some back and forth and some sustained bid into this U.S. dollar. If you're looking for a funky pair to watch, non-U.S. dollar, as you all like to diversify your portfolio even further.
Yes.
I'm looking at British pound, Swiss franc. We've seen a little bit of a divergence between euro and the pound. So, of course, you can trade euro-pound directly. But this pound-franc pair is now touching, you've got the daily chart up. It's definitely a lower volatility pair, as you can see from that average true range there, dwindling to naught. But we are down.
That was good.
Thank you.
That was good.
I was on a roll, and then you stopped me.
Yeah, I'm sorry.
I got distracted.
That was good.
We're approaching year-to-date lows and seemingly, dating even farther back there.
Okay.
We've hit this a couple times in 2025.
Got our little Bollinger Bands there.
Yeah. And nearing the edge there.
Yeah.
Perhaps time to do something, but
it's time to buy.
Yeah, if you're a contrarian here, this setup, we're chugging lower. So some of the fundamental behind this British fiscal policy in a little bit of trouble, confidence there wavering a little bit. So you're seeing a little disconnect there where you wouldn't normally see it when we're comparing these European currencies.
That adds to
some of that risk sentiment as well. Has bolstered the Swiss franc. Does that continue? Maybe if we get through that, it's a goodbye pound, or we bounce back. So that's an interesting.
Adds to my franc short because I am long the U.S. dollar against the franc.
Nice, holding on to that one.
Yes,
that one hasn't popped in your favor as much as some
we're back to flat. We're back right in the middle, so we're right there. So I've been looking at that one. And then I also have a short euro position that I've been scalping in and out of. If you look at my positions, I have multiple lots in here. I have two of the half micro, half mini, micro, half micro, 10 is micro.
You have 5 micro.
5 micro.
Or half a mini lot.
A half a mini. When you have equal lots, you have to close them together.
When you have equal size lots, you have to close the first one first. First in, first out.
FIFO.
Oh, okay.
Whereas if you have unique position sizes,
then you can do them,
manage your positions in whatever order you so desire.
Yes, so I've been taking advantage of that and changing ever so slightly my lot sizes.
Mowing the grass. Getting the green off.
Sprinkle.
Is that what they call it?
Sprinkle. A little bit here, a little bit there. Just sprinkling. Yes. Very good. Dollars had a nice bounce. I mean, we're still low, though.
Still very low.
Still very low.
Some of that uncertainty around policy.
Yeah.
And, just global confidence in whether, Trump has said outwardly, I want to devalue the dollar, essentially.
Yes.
That's happened. Will
Yes.
that continue to happen? He has how many more years?
3.
3.
Right. Yeah, he just started this year.
Gets a cheeky third term or something.
Yeah.
He's changing a lot of rules.
Yes.
I'm not ruling that out.
Cheeky third term.
But yeah, so a lot of questions in the air, but absolutely dollar still has room to run if some of those uncertainties clear out.
PC, if it comes in hot, what do you think that changes anything?
It could.
Rate situation. I mean, there can't be much worse than crappy employment and high inflation. That's got to be like the everybody get your guns and ammo type thing.
Yeah, that's
you know, and get the bag of rice.
That's when Powell says, you know, this actually is a difficult job.
Yeah,
a complicated path forward. There is no risk-free path.
Yeah, I mean the market is so it's Wednesday.
Yes.
Newsflash, and the market
today is Wednesday.
Still correct. The market's still projecting 50 points up or down through Friday, which is PCE. So the market is telling us we should not ignore the possibility of a big move on this news. Yesterday, the J-Pow thing, I just looked at SPX, so the expected move was like 12 points. So the market was like, nothing's
you won't say anything.
nothing to see here. But yeah, 50 points holding strong for Friday. So we'll see. Maybe we get a little firework action.
Mm-hmm.
It's weird to see it red, though. The market.
I've had multiple of the, albeit older generation of the trade desk come over and make sure I'm okay. Make sure us young guys are okay because it's not normal.
Yeah.
Tom does that too, and I say, yes, I'm totally fine. The last 1,000 points, I got every piece of that. So I can take 50 points to the downside, no problem. No problem, Tom. You missed a lot of those.
But congrats on the 50.
Yeah, that's what I say. I say, congrats. You got one day. You got one day. It's okay.
Now be gone. We're buying.
Yes. Be gone.
This will not last.
Yes.
This too shall pass.
Yes.
It's 30-point sell-off.
It's okay. I mean, try to explain that to my sister as well, who's on a high horse now, you know.
Is feeling like...
She's like, I can't believe how much I've made. And I was like, you didn't make anything. I put you in all those things.
Remember?
And remember when you would text me every day about losing $100 and...
I don't know what to do for dinner, by the way.
Yeah.
No idea.
Yeah. So, but I keep telling her, I'm like, just don't worry about it. You put it in, you let it go. 5 years from now, 10 years from now, I'm pretty sure it's going to be higher.
And this is in Dogecoin.
Yeah.
This is in, Open Door. I put 90% Open Door, 10% Doge to diversify a little bit. Yeah. She doesn't know yet.
Little
She
blue
just
energy
sees
in there.
She just sees the P.
Yes.
E, not the L.
Yes, exactly. Doge. Yes. Very nice.
This is the world we live in, people.
Yes.
Nice to see Bitcoin bouncing a little bit here.
Mm-hmm.
Works well for our little IBIT trade, but I got into in the currency world, I got into the British pound franc.
Yep.
Long 5 micro lots. I was already short the dollar CAD, and then I was long the Aussie dollar.
You were trying to short the dollar?
Yeah, I know.
Well,
I was long forever.
That was you. You put that on the radar.
What?
Yeah.
You might have amnesia'd yourself.
We were fading the consensus trade of short the dollar into J-Pow and have made lunch money.
There you go. Nice.
Yeah, if you do need dinner, if you don't know where dinner's coming from, just log into my TastyFX account.
Yeah, you take a couple bucks.
Okay, thank you. Very kind of you guys.
Yeah.
But I hear you have some slides for us.
I have a couple slides.
Oh, very nice.
Wow.
Good. Overachiever. Very nice.
Just to get through these quickly.
Cool.
Kind of more of an FAQ. I came on, pre-TastyFX launch integration into TastyTrade to talk about, what is SpotFX.
Mm-hmm.
But I thought I'd narrow it a little bit and bring up some comparisons, some generic kind of asset class product offering comparisons that I've gotten a few questions about at the Tasty Live events.
Cool.
So I wanted to just plow through what are the differences between currency futures and SpotFX. Let's get into it. What we're actually trading here is the same market, right? In the case of SpotFX, you have access through, pretty much every RFED regulated Forex dealer here in the U.S. You have access to more currency pairs and iterations, crosses, non-dollar. But currency futures will give you a lot of the majors, U.S. dollar pairs. But they're just different vehicles, different kind of packaging. Whereas the CME standardizes these contracts. And like other futures have expiration dates. You can trade the curve.
Yes, there's a carry cost to futures that is both leverage and the cost of borrowing, and so there is a slight difference in the price. Like if you look at the euro right now, it's at 1174, and the futures are at 1179, and that's a cost to carry that's baked into the futures because Did I steal your slides?
That's okay.
I'm really sorry.
Go to the next slide.
I'm really sorry.
That's
I didn't
all
get a
right.
chance to read the slides.
Why are the prices different, Nick? There you go.
I don't know. Can you explain?
No, you nailed it with just the different time horizons.
Yeah.
So you're baking into those futures, you're baking in forward points. It all rests on the different interest rate differential, but those are treated differently to the retail customer. So for futures, that's baked into the price. If you have, right now you have euro dollar, for example, you have U.S. rates higher than European rates, and so the forward points there will actually bolster the price because making it more expensive to get into the futures because you have that those forward points favoring the U.S. dollar. Yep. Whereas in spot markets, that is daily if you hold positions overnight. So if you're scalping these intraday, there's no real adjustment there, but you're seeing this 2-year FX account, you're seeing an adjustment every day, a daily FX financing adjustment that accounts for those interest rate differentials, which gives you the opportunity to take that as a credit or be debited to hold that position overnight because these are just rolling contracts, whereas the futures are settled monthly, and so you could be at different places in that month. If you're just buying and selling, going directional, it's not something you have to worry about or be cognizant of. But when you're talking about your trading account management in the spot market, you'll have that affect your available balance directly.
And I think it's a good thing to understand the curve and just the values, the things that are baked into the prices. I had an email this morning from somebody looking at natty gas futures, and the same sort of thing applies there too, is that there are carry costs. I mean, there's also, seasonality and production that's baked into those commodities. And so there's an even different aspect there, but it's important to understand that, futures, unlike stocks are very easy to understand. The price is the price right now. And there is no, the speculation is your opinion on where the stock goes. With futures, there are, you trade on a curve, and so it's just important to understand that what goes into it.
And the price movement is absolutely a function of those expectations.
Sure.
But the price itself here is either directly affects your account or directly affects the price of the asset. Moving on to trading costs here. This is an important point, I think, and can speak to tastyfx in particular, where tastyfx can offer commission-free trading here. So you're just paying the bid-ask spread. And so if you look at currency futures markets, you'll typically see a 1 pip spread or 1 tick, whereas at tastyfx, will offer a lot of the majors for as low as 0.8 pips. And so your cost to get into that trade is really just that spread only. There are no exchange fees or commissions that you get on the futures side. And then trading hours, slight difference here. Again, these are very similar product offerings, but the trading hours you see in futures, you have that daily gap, whereas in SpotFX, there is no gap. That is a roll period. So you'll see with those financing adjustments coming at the same time, you'll see wider spreads there. But if you absolutely had to get in and out of a position, you're able to do so during those hours. and open 1 hour earlier on Sunday nights. And so, with there's also an aspect of global participants here, but you can see that through the institutional players involved. That'll be pretty similar. I don't know if there's a way to get those numbers to say like, TastyFX is able to have tighter spreads on Sunday night because of whatever hedging arrangements they have versus the futures products. So that might be marginal. But then moving on to the main thing that helps you guys trade small and trade often.
Yes.
The position sizing and capital efficiency here, as you guys have poked around a ton with these products, starting with those micro lots or just 1,000 units of the base currency, which is very different from the futures offering, which are pretty, they're making new products. They could make a micro product, but
they have some micro futures. Like you can trade like micro euro, micro Aussie CAD, a lot of them. And they're a couple $100 margin requirement, but the size is significantly smaller.
Exactly, and to be able to layer into that incrementally, I think is a huge win here, especially when you factor in that no commission cost. When you're paying a commission and a spread, layering into a position, that starts to add up to your total P&L with fees. Whereas you're only paying the spread to get into these positions in the spot market. And then kind of a last bullet point of kind of ease of efficiency. There's a give and take here between the products because there are no expirations or making sure you're trading the right contract. There are no options on it, which is a complete value add for futures, having options on those products. And the futures for U.S. retail traders, they convert everything to where the U.S. dollar is the quote currency for all of them. So your fluctuating P&L is a little bit clearer to see, whereas here if you're trading dollar yen, you might see some yen values and not really have to do one step of conversion there, but everything is settled into US dollars, so no real difference there. And that's all I got for you with the key takeaways. Just comparing here why you'd want to trade currency futures perhaps or spot FX. Similar products. You see different pricing, which is the main thing. That's just a function of interest rate differentials. There's no real arbitrage here. It's going somewhere. And then some of those commission aspects and expiration entanglement. That's all I got for you today, guys.
Do you find that, just anecdotally, that customers trade these side by side? Because one of the benefits of both futures and FX products is the leverage that you can get. And you're trading relatively, from a volatility perspective, low volatility products. So, they can certainly have big moves, and they have over the last, year or so. But do you find that some customers will, like buy spot and sell vol, like sell calls, like almost like a covered call type arrangement, because you can get so much more leverage with the long spot position, along with the span margin of like a call or a call spread, which can be very significant. Do you find that is a piece of the puzzle?
Yeah, I'd say absolutely that people that are trading both of these products are most likely looking into the options and futures space as well, because they are so comparable from just taking directional sides of things. And then even the other way of someone that's mainly a futures trader would perhaps go into spot for if they're trading options and can't really get at those throughout all hours of the night. So a possible hedge in the spot market where you have the liquidity and access to manage those positions overnight, because you have, if you're trading dollar yen, I mean, their markets are almost, there's no overlap with our markets, so here in the U.S.
Yeah, I think for me, I like to use both products. I like to use the future side of things if I'm doing options trades, specifically diagonal spreads, calendar spreads, things like that, where you can get that implied volatility component, especially if there's a binary event priced into some expiration, where you can utilize that higher extrinsic value premium to reduce cost basis against a long option, like in the case of a diagonal spread in 6J or calendar spread, that type of thing. But I really do love the TastyFX products, especially in an environment like this where we like come onto the air and we're just like, well, the market's up again. Like, where do we find opportunity? There's so many opportunities day to day in the TastyFX products because you have complete removal of the equity market ultimately, and you have all these different pairs that I would have never traded before without you being on the show and telling us what they are. So I think from a finding opportunities, finding price extremes standpoint, it's way easier to find day-to-day price extremes in the TastyFX world versus the more limited currency pairs that we have in the futures world. So different reasons to use both, but that's my take on it.
Eloquently put, sir.
Hey, we try.
Very good, very good. Before we let you go, any other pair that is interesting to you? That I'm looking at something like maybe the New Zealand dollar, very, very weak.
Yeah, New Zealand dollar and historically, a bit more volatile than Australian dollar with some of the same exposure or underlying factors. So I think you could think about it two ways here of, that's coming off of a high, a relative high, off of that U.S. dollar weakness we had before the FOMC event. But, there it is, right at the bottom of this range. So if you're looking at a daily chart, now you're really looking at that 58-cent level because we've been lower before, certainly, in the early part of this year, as low as 55 cents. But we tested it in early August, mid-August, and had a rip all the way up to 60 cents. So if you're a range trader, this definitely is interesting, more so than the Australian dollar, which is kind of getting back to the middle of its range.
Yeah, I just took that one off.
Yeah.
All right, so we're gonna buy a little. We're gonna buy it, even though it's short dollar. But I have a lot of long dollar positions. So
maybe a different time horizon.
Yes.
Going for a little.
Yeah. All right.
Scalp.
Yes. Very nice, Glenn. Thank you so much for joining us. As always, it's always fun to have you on.
Pleasure to be here.
You are a gentleman and a scholar. We give you our greatest applause. Thank you, sir.
I'm going to go check my fantasy lineups today.
For sure. And enjoy the ribs.
Thank you.
The hubs today. Very nice.
I hope there's still some in 25 minutes. I really.
Probably not, but we appreciate it. Thank you.
There will not be. But what there will be are the potato wedges.
Yep.
Which are just
solid.
I really like the hummus. I like the chunkiness.
Oh, yeah. There's something about it. You
It's
taste
really
it and you're
nice.
like, it's so plain. I don't really like it. And then you're like, I can't stop eating.
Yeah, I like the graininess.
Yeah,
and chunkiness.
it's like the peanut butter, like a creamy peanut butter versus the chunky peanut butter.
Yeah, you gotta go chunky.
Just something about it.
Yeah, it's very good.
Texture.
Special.
Yeah.
Really
It's
delightful.
like his Jardiniera. It's nice and crunchy, The beautiful olive oil.
The it factor.
Yeah.
All right. See you guys in the lunch line.
We bid you farewell. Thank you, sir.
Ta-ta for now.
Ta-ta for now. E-mini S&P 500 futures down 24. They've rallied about 10 handles from the open of our session here. A little bit of a bid there. Bitcoin up 2,000.
Love to see
on the
it.
futures. So a little bit of a bid there as well.
Yeah. And by the way, shout out Mr. Westwater. Smash.
The Hogs.
Everything we put on yesterday was a smash.
Yes.
The micro natty gas position, I still have.
I still have that as well.
But the HE, the lean hog short, that came in after one day, $150 winner overnight. That was perfect. And then I also closed my micro crude long for $211. That was another nice winner into this rip today.
I'm going to see if I can close out of that one for... Oh, I have this in. See if I take $100 out of that.
Yeah.
We'll see. We'll just let that sit. But yes, Natty Gas having a little bit of a bid. Been a nice little session here.
Indeed.
Yes. Got questions? Throw them in the YouTube chat.
Please.
Do it.
Please do it.
Yes.
I've got the Cherry Picks newsletter pinned to the top of the YouTube chat.
A good one. On gold, silver. Very
Love
nice. Well done by The good doctor himself.
The good doc. The good doc. Yes, gold seeing a nice little sell-off today. Finally, too late for my butterfly position, but I do have that GLD put diagonal, the long-term one. So hopefully the sell-off continues here. We can erase some of those losses with this new position. But yeah, insane move regardless.
Yeah, crazy.
If you want to join us on the YouTube channel, like Nick said, Tasty Live, we're streaming live there. Pop in your trade ideas questions along the right-hand side chat. I see lots of regulars chatting away. But yeah, let's scan for some trade ideas here. This is now the lowest amount of positions I've had in quite some time. So let's get some new stuff.
Yeah, let's do it.
UNH on the move. Yeah. Yeah, market down, UNH up. Second day in a row. Love to see it. We just need to pierce through this this little upper bound here. But yeah, I have the 400 strike calendar spread. That's working out nicely. It's up $120 today. Long the 400 call in November, short the 400 in October. Lost a lot of value in the October call, which is great. And I can roll into the earnings cycle when the time comes, which is very nice. So I'm going to leave that on, see if we get a move to 400. I'll close it if we get to 400. If not, I'll roll the short into the earnings cycle and probably create a diagonal spread. But we'll see what the premiums are like at that point if we don't get there before then. Let's see.
Yes.
What was the thing Nick was saying on repeat? People were taking a drink every time?
A nothing burger. Drink.
The nothing burger drink special.
Yes.
UAL strangle, 91.15 from Shooter McGavin.
91.15. November or OC? Do we have an
October.
I kind of like going to OC. 91.15. $1,000. Kind of like this. 90 down near the 200-day moving average. Shout out to Ryan for putting that on for us. What do we got delta-wise? Let's see what we're sitting at. About a 1 standard deviation. Slightly short delta skewed. Don't mind this. Markets are not as good as I am used to here. We got volume on there.
Yeah, 15, 20 cents wide. Interesting.
Yeah.
Looks like the earnings are being priced into this cycle. Not confirmed yet, but implied volatility spikes at the 23-day. Yeah, I'm gonna wait on this until earnings since it's less than a month away. But I will definitely trade United for earnings. That is for sure.
Yeah, these markets not great. Giving up 10 cents already. All right.
You're in.
317. Give it a little shot. Why not?
Costco crab for earnings with the 1,000 strike call in November.
November. So you would go like 1,000 strike call in November, and then you want to do it in the weekly, right? What do we got? Is it today? Tomorrow. So this one's going to be a tough one. This is going to be a tough one with the 1,000 strike. You really kind of got to go 975 and then sell the thousands. But that's a little bit more expensive. Like November and the 975, you pay up another $1,000. It's a little too big for my liking.
Yeah. I think they were looking at November.
Oh, so November or October? I mean, you gotta.
It looks like long the 1,000 in November and then short premium in a near-term cycle.
Yeah, you could do like in October. So the 52-week high is 1078. So if you wanted to go to like, 1025 or 1050, you could do this a little bit further out. 1050, 1100. You're selling like $4.50, $5 of extrinsic value here.
Yeah.
This one's a little bit more digestible in terms of like the capital that you're outlaying for this sort of trade.
Yeah. And if you go to the October monthly for the shorts, if you do a similar exercise, you can bring it under $1,000 for sure.
Yeah.
But you don't get the instant decay in the 2-day cycle. So I think I'm probably going to lean towards a calendar spread in Costco. Similar idea.
Okay.
Very similar idea. Long November, short October, but I'm going to wait until tomorrow.
Been quite the chop fest.
Yeah.
Here. It's kind of been the lower end of where it's traded, so might be an interesting time to get long.
Mm-hmm.
I like it.
Have you guys ever sold put butterflies? What do you think about them?
Sold?
Sold. We don't usually sell butterflies.
Yeah.
But I mean, it's just the inverse of what you want to happen.
Yeah.
Like
So
you want big in the money or big out of the money.
Yes.
Or small credit.
Yes. So it's a tail type trade.
Yeah.
I mean, selling them, it looks, you're selling this for credit. So, if the stock or I just pulled this up in IWM, you're playing for the outside move in either direction. So it's still a very, it's a high probability trade, but a low upside trade.
Yeah. Yeah. What we usually do to kind of mimic this is we would do a broken wing butterfly where we have risk on one side.
Yeah.
And that gives us a similar profile in the out of the money side, where if it expires out of the money, everything's fine. But instead of your tent between your strikes being a big loss, this is a big potential gain.
Yeah.
And if you if you throw this on and then you see an IWM rally and you can remove the risk on the downside by turning this into a symmetrical butterfly for, let's say, like 10, 20 cents, now all of a sudden you have a butterfly on with no buying power requirement, no monetary risk if you've routed it for a net credit, or minimal risk, and you're legging into these shots. Sometimes they work, sometimes they don't, but I think we would prefer this just because there's more upside with this one.
Yeah.
How about a little short delta in Tesla? Tesla.
You've been saying that because of the Detroit guy.
Yeah. Detroit.
So I do have a butterfly here on the upside, up to 500-ish.
Mm-hmm.
Let's see, where are we at in November?
A little short delta.
I mean, how high could this get?
That's the age-old question. Stock went from cratering due to declining sales to $20 spread with a 520 short strike. Yeah. I mean, the stock is insane. 520 short strike.
In November?
Doesn't say. Let's see.
Yeah.
It's have a $20 spread with 520. Okay, so a 520, 540 call spread, I assume. Yeah, I think it's November. It's got to be.
It's a little bit.
It's cheap. It's really cheap.
I know it's far out of the money. It's a 25% rally.
Yeah, but the call skew here really hurts you.
Yeah.
With this type of spread.
Yeah.
Because you're buying the option that's worth $1,400, 100 points out of the money. Where if you look at the other side, it's trading for $7. So you have a huge call skew here, which is why you're not collecting a lot for this credit spread. So I think if you're doing a bearish type trade, I think you got to find a different strategy that aligns more with the premium.
You could do a downside
structure.
Stupid trade.
You could do a downside stupid.
Or you sell this to buy at the money or slightly out of the money long put spread.
Yeah. Yeah, because you don't, with this type of setup, the 520, 540, for you to only collect $3 over 60 days, it's just not going to move that much. Whereas if you give up that credit and you shift your profit potential to a 10-point wide debit spread or a 5-point wide.
I put one for 5-point wide. You do it for $1.
Yeah. This is if you get a sell-off, this will fill up quickly. Because now your put spread will appreciate in value while your short call spread loses a little bit of value. That's what I did in Intel. I had the stupid on an Intel, and I closed it for $100 net profit. But if you isolated the short put value, it was only like 40 cents. So that just it shows how you can shift where your profit potential happens. But yeah, I like this a lot better if you're going to do it. Struggling to get out of a butterfly, is it better to just close the spread separately or just walk down the price for the whole butterfly? Yeah, I mean, you could walk it down to try and get out, but yeah, if you isolate the spreads, it's the same idea.
Yeah. It depends on where, like, if you're fully in the money or if it's an out of the money spread and how much time you have left. Like, the two things I would look for is, firstly, if it's at the money or a portion of it is out of the money, the long option that is far out of the money, make sure it's got a bid on it. So, when you don't have a bid on these options, like I just pulled up IWM a couple days out, 255, if you have a long option here, you're not going to be able to sell out of this option. There's no bid. There's no price to sell at. So just remove that option from the order. If you're still having issues there, like assuming it's an at the money or in the money spread, you could leg out of the spreads themselves. I would do the long spread first and then buy back the short spread.
Yep.
But if you give us the position, we can pull it up and give you a little bit better clarification.
How's about a trade idea in Applied Digital, APLD? I am super bullish. Well, hopefully you were bullish 2 weeks ago as well. I mean, the smaller the price stock, the less crazy we're going to get with strategy. Because there's not much difference between selling a put or buying a call. It's just like it's a cheap way to get involved in this thing. However, there is plenty of premium here, like a lot. If you were trying to sell premium, this could be a stupid candidate for sure. Like selling a 20 strike put in November and buying a 25-30 call spread in October, something like that. Still picking up $1.30. You have 5 points of profit potential to the upside with the vertical spread that you're buying. It's possible.
I will entertain this with a sort of broken wing butterfly. I'm going to pay a small debit for it on the upside, but it's wide. So I'm going to do 25, 30, and then I'm going to buy the 37. And the only reason I'm going to the 37 is because the markets are so much better than this 38. Like, I think these are going to basically trade at the same price or similar. And so I'm going to use $200 in buying power plus the 40 some odd cents. I'm going to be bullish, but defined risk and cheap.
Love it.
So we'll see if I can get filled. We've done these sort of, there you go, auto. We've done these sort of trades in a lot of these like super high flying stocks. We did the CoreWeave one. You had a good one in Circle.
Yeah.
Like this is because I can't look at this chart and sell puts.
No,
I just can't do it. Like it's just not. I'm with you, and I want you to make money. So I'm bullish for you, with you. But I can't sell the puts.
I think it's fair.
I mean,
when you have a stock that has over 100% IV, butterflies make a lot of sense because you can make them super wide relative to the stock price.
Yes.
And you can only do that because the IV is 150%.
Yes.
And you define your risk at the same time, blah, 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 blah.
Yes.
So, yeah, these can work out well, and it's a low cost to to play.
Mm-hmm.
What's the stupid trade? So I'll stop calling it the stupid.
Yeah.
It's literally a short, it's just financing a debit trade with a short option.
Yes.
So in this case, selling a put to finance the cost of a long call debit spread.
Oh, okay.
Yeah, but in any situation, like I had, if you look at the follow page on tastytrade, you can see my Intel trade that I closed this morning. That was selling a 30 put in November and buying a 30-35 call spread in October, and I did that for a credit. So just shifting where you get your profit potential.
Yeah.
Another environment I like to do that in is previously before rates were, maybe rates are coming down, so you'll see less call skew in SPY. But you could sell a put in SPY way further out of the money and then buy a closer at the money call and route that for a net credit. It's a similar idea where you're financing the cost of your gamma in a long call, but having a high probability trade still because you have a net credit on.
Yes.
So any trade where you're financing the cost entirely of a debit long option or long spread with the sale of a short option instantly turns it from a low probability trade or a 50-50 shot into a much higher probability trade, but you're adding more risk. So that's the trade-off there.
Yep.
In what case would you take a diagonal instead of a butterfly? And at what point do you take your profits? Diagonal is really directional. We like diagonals in earnings environments, high IV environments, low IV environments.
Cost. A lot more expensive. First butterfly.
Totally. Yeah, a lot more costs, but usually a higher profit potential, and you can get it more quickly because it's truly directional. Where a butterfly is more conditional, where you need a lot of time to pass, you need IV to get out of the premium, or you need extrinsic value to come out of the premium, which comes with an IV crush or time decay, and you need the stock to be in a specific range. So depends on the stock. Like if it's a super high flyer like APLD with 150% IV, maybe we go the butterfly route. If it's something like Starbucks and it's at the low of its 3-year range, that's a diagonal spread for me.
Because you want the delta. You want
delta.
that. You want to get the move. You want to play for the move. This is, this sort of trade is also a long vol trade because you have this. You're playing for a big move up.
Yep.
That's where the meat is of this trade.
Mm-hmm. And when we take profits, diagonal spreads, we usually just close them when they move in the money.
Yeah.
And then for butterflies, we usually try and take 20-25% of the max profit of it. Because you're not going to get more than that unless you're at expiration and you got the stock price pinned. I have an MU strangle that went inverted. October, 140, 167.5.
140 call. This was, you were right at the money into earnings, and we opened right a perfect spot for you. This is a perfect spot for you too. This is, I know that you're in the money now on the call or on both options, but this is this is where you want the stock to be. You got a lot of time left until expiration. You got $6 of extrinsic value here, $6.50. If you're neutral, I might just hold the stock or hold the position.
Yeah. This is basically a strangle. It's the same thing as having a strangle if you just flip the strikes.
Yeah.
You still have a lot of extrinsic value to decay, so I agree.
This is what you'll get.
Yeah.
Over in value back.
Yeah. But yeah, if you are trying to massage this position through time, I would still probably wait and see if you can get some of that value out of the short premium near term. And then if you do, you could roll it out from October to November. You can minimize the inversion a little bit. I'm looking at just moving that current one into November. You can move it into a 150, 165, which removes 10 points, 12.5 points of inversion.
Yeah.
For a small debit. That's what we're trying to do here if we're trying to stay in this trade.
Or you go out of the money. You sell, you buy back your inverted position and sell out a new strangle. Doing this for a $23 debit seems like a lot. It is, but there's $27.50 of intrinsic value on this position because it's inverted by 27.5 points. So you're really, when you're looking at this position in terms of value that you are adding to your potential, in terms of value you can capture, you're actually adding, $4. Yeah. $4.50 in the roll, and you could see that in the extrinsic value. So when we looked at the inverted position, and this is just the math on it, the extrinsic value here is $5 on the put, $1.50 on the call. So you got $6.50 in extrinsic value that you're buying. Here you are selling $4 and $7, so you're selling $11 in extrinsic value. So you're really netting $5 of potential value out of this position, even though it's a debit. The debit is the inversion, which does not go away. That's intrinsic value. It's not going away.
Yeah.
So you are adding potential value to your position.
Yeah. And you can see that in the extrinsic.
Yep.
If you just ignore the debit costs or whatever, look at the extrinsic shift from the move, and you can see what you're doing. Yep. Rapid fire here. What do you feel about MU 145, 190? I like it. I think it's fine.
Wish I held my earnings trade.
Yeah.
See what it was. Yeah,
when we
missed
called
out
it
on
to a
$200.
Inside down. That's what you said.
I know. It was slightly down. It's always like this.
Yeah.
I feel like every time I've
Every
traded,
single time.
always-
68% of the time, every time.
That's true.
How about a short put spread in Amazon?
Yeah, Amazon getting killed today, or has been killed over the last couple sessions. What do we think? Yeah.
Short put spread? I like the defined risk nature of it. You kind of have to go like within the expected move though to get any kind of value. But if that's what you want to do,
I think
it's fine.
We're gonna get some long delta here. 230. Do a little crab trade here. $7. Yeah, that's what we're gonna do.
Last one here. Couple more actually. Would you sell a straddle in Applied Materials or Applied Digital? No. I mean,
I don't know anything about this company either.
Yeah.
This could be,
It looks nice because you're collecting $7 on a $23 stock, but there is a reason why you are collecting $7 on a $23 stock.
Yeah.
It's telling you that this stock is projected to go double or triple or zero.
Yeah.
So, and that's what over 100% IV tells you.
Yeah.
Oclo Strangle 165 100. If it's a true strangle, it does suck, but you're still out of the money. So
what is it? 100?
100 165. If this is a regular strangle, 100 165.
Yeah.
So yeah, you were leaning. You had the range basically. It's just implied volatility is exploded in here. If it's a regular strangle though, 100 165. You just need this thing to decay. I wouldn't do much with it. You're already in November.
Yep.
That's it.
Cool.
Thanks for tuning in. If you got any further questions, you can find us on Twitter. I'm at Trader Mikey B. Nick is at Trader Nicky Bat. If you want to reach Glenn, go bother him on Twitter. Glenn Freibarger with an A. Love to have him on. Love getting some new tasty FX positions on. And yeah, it's just another way that we can utilize the markets, find new opportunities, et cetera, et cetera. But yeah, stay tuned. We got plenty more content coming your way on the YouTube channel as well as tastylive.com. So stay tuned, and we will see you same time, same place, 11 a.m. Central tomorrow. Peace.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
What's the most financially irresponsible thing you've ever done in your life?
Where do I start? I've made probably an incredible number of, unvetted investments that, angel-like investments that haven't worked out. Well, everything from building restaurants to backing crazy businesses. I've done it all.
Oh boy. Try to become a larger fish in the futures pond than I had thought. I'm just a guppy, as I'm constantly reminded. A guppy in a large pond. And you can't try and short the gold market all by yourself. No one will listen.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
The future of trading is here. Join Mike and his whiteboard, plus the Tasty 2 live crew for 90 minutes of probabilities, punchy portfolio mechanics, and trade tactics. It's totally free and unreasonably fun. Come early to enjoy a drink with the crew and stay for a Q&A after the show. Space is limited, so register today at tastylive.com/events.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
When the market moves, traders need to move faster. Tasty Trade Active Trader Tool offers full depth of market visibility, one-click order entry, and instant position management so traders can react in real time. While others charge for professional tools, Tasty Trade provides them for free. Opportunity can move fast. Seize it with Active Trader. Try it now on Tasty Trade.
Woof! The first half of this year's market has been giving the good guys the business. It's certainly been back and forth for sure, Pete, and I'm getting whiplash over here. With good mechanics, we can see Team Tasty stay strong in the second half. Absolutely. Let's check out our starting lineup.
Dr. Jim Schultz, Central Michigan University. Number 51, because trading the Tasty Trade way, that is our minimum probability profit.
Kai Zan, University of North Carolina, Chapel Hill. Number 16, because 16 is one standard deviation on one side.
Brittany Sherrick, Bradley University. Number 15, because I like to carry a positive theta of 15 to make $15 a day. Whoop, whoop.
I like the looks of that lineup. Well, be mechanical is always better than just trying to run plays and see what sticks, Pete. When you got skin in the game, you stay in the game. That's right. Now get off the couch and get into the game. Watch Tasty Trade.
Everybody, and welcome back to Risk and Reward. We got an exciting show planned for you guys today. We're going to talk Alibaba for maybe 20 minutes and then dive into some tour to market, live trading after that. Here today with my wonderful co-host, Errol. Errol, how are we feeling?
Pretty great. We got another sell-off day, so you already know whenever we're putting in those down days, it's a nice relief pop to the downside. But other than that, we got a lot of Chinese names popping off. I know we're going to touch on that today, but I put on I got on some short delta in Baidu.
Okay.
So we got a lot of positive news. But other than that, over the last 24 hours, I mean, we're getting a tick in volatility. That's nice. But maybe this pullback feels a little bit different this time, but we'll get into all of that. But last 24 hours has been pretty good. What about yourself?
Yeah, doing good in the market. Got this is one of my favorite shirts. Always nice to have a favorite shirt clean, get to break it out. You got a cool shirt on too. I'm actually just noticing there's a Tasty Live logo on there.
It's nice.
Right? I've been thinking. I've been sitting next to this guy for like 3 hours today, and I'm just noticing there's a logo on his shirt. I thought it was just a black shirt.
You know what's funny? It's just a black shirt, but it has a Tasty Live logo on, and it looks good because it looks like I'm repping right now. But I actually really like this T-shirt. Like, you know how some T-shirts shirts are made really well on the collar.
Yeah.
The length of the sleeve. It's one of those that fit really well.
It's collar, and then like the drop shoulder is nice.
Exactly.
Like this is kind of a drop shoulder, and then the sleeve length. Yeah, it all works together to paint a nice little picture.
I was telling Paris the other day about the collars, right? We were putting hangers on the shirts, and we stretched out the collar, and one of my boys, Seabass from college, I remember I was helping him with his stuff, and he's like very particular about hanging clothes up. And I remember I put a hanger through the collar, and like he's like, no wrinkles on it, whatever. He's like, bro, don't stretch out the neck. And then since then, every time I see it, I preserve the collars on the neck so I can appreciate a good collar before we...
I am careful with putting the stuff on, and it's the worst feeling when you're like, you get going a little too fast, and then it hooks on one of the hooks on the hanger, and then you stretch it.
You're talking about the little divot?
Yeah, the hangers have the little divots in them, and it'll catch on that thing.
Exactly.
Yeah, not a fan. You really should do different hangers for different types of clothes, but I'm not that sophisticated.
I started doing that over the last 6 months.
I have pants hangers and shirts hangers, but that's as far as I diversify.
I was doing both of them with just the OG hangers, and then I started using those pants hangers. It's actually pretty convenient whenever you get into the flow.
Oh yeah.
It's pretty convenient.
I can imagine. Everybody drop your favorite kind of hanger in the chat. Oh yeah, we had a would you rather question we were supposed to present to the chat off open today.
What was that again?
It was like have to pee really bad was one of them. It was have to be pee too bad. Okay guys, here I got it.
Yeah.
You're on a long road trip. Would you rather have to pee a little too bad or be a little too thirsty? Assuming that you don't have access to a bathroom or water at that time for like a sustained period, would you rather have to pee a little too bad or rather be a little too thirsty? Let us know in chat. We had a spirited debate. Oh yeah, never parched. I'm team P in this.
I can't lock in. I can't focus.
Yeah, no, I don't. I hate being thirsty. It's the exact same feeling for me. I can't focus at all. It's just if I'm thirsty, I can't focus at all. I'd rather have to pee a little too bad. Why does Chris Vecchio look more like a surfer today?
I know. Chris trying to take his
fatherhood changes people. You know, it's crazy stuff. Anyway, all right, let's dive into these slides, talk a little Alibaba, and then we can zoom out and look at the market in a broader context. Baba Boomin'. I was very proud of this title. I must say it out loud. Baba Booey. Anybody? You remember when that was a?
What is that from?
I don't know.
I think we all know it. Baba
It was
Booey.
just like a phenomenon. Like it just popped up on social media, and
I think it was,
people started saying Baba Booey.
It's from. It'll come back to me, but I'll bring it up whenever.
All right, yeah. If you got it, shout it out. It goes for chat as well. But anyway, Alibaba up 10% today, opened up 9% this morning. It might be right around 10% or 9% right now, and 50% this month. We're going to talk about why that is and if it's still worth a buy. Let's dive right in. First of all, reasons for the run-up. As I said, 10% today, 50% in the month of September. And the move today is because Alibaba announced plans to invest $53 billion into AI over the next 3 years. Say AI, stock price go up. They also launched their newest large language model, which is called Qwen 3 Max. I think this is probably supposed to be pronounced Chen 3 Max or something like that. I don't speak Chinese, if you could believe it. But they've announced this release, and Cathie Wood's ARK Funds disclosed a $16.3 million into investment into Alibaba shares. So yeah, lots of bullish variables working in favor of Alibaba right now. Obviously, yeah, say AI, stock go up. I think this is an interesting company. It's interesting to me that Alibaba is releasing their own proprietary large language model.
That's what I was gonna say. That's some pretty heavy lifting. When I saw the LLM, I'm like, oh, they're trying to own the floor.
Yeah.
You know,
Yeah. I mean, you have. I could name numerous entire companies right now that are just dedicated to getting out their one LLM. Right. And you're telling me that the second largest e-commerce giant in the entire world is going to all of a sudden throw that on as well.
That's a big deal.
I mean, if Amazon announced that they had an LLM coming out, you'd be like, whoa. And this is essentially
especially if it was NVIDIA or something along those lines.
Yeah.
Yeah. I mean, again, I'm in Baidu right now, so with this news coming out, I'm like, yo, what was the news? Like, what is gonna make these Chinese stock rally and rip even more than they already did over the last month or two? Come to find out, it was Baba. So.
Yeah, and Baba very much is like the NVIDIA of China. Like Baba go up, China go up, and it really doesn't matter what's going on in the rest of the country. So that's where we're at right now. Let's take a look ahead. Some bullish factors for Alibaba moving forward is the investments into AI and cloud services. That's obviously the broader thesis here. Their existing massive scale across commerce, logistics, and cloud, and in particular, the fact that their new AI platforms could potentially synergize the revenue across those segments or unveil new connections, more efficient ways to do things, whatever it may be. And also, they are headquartered in China, so they can avoid dependence on foreign tech. China has very strict import regulations, but Alibaba seems to have their entire supply chain set up all within China. So that's a bullish factor for them as well. What do you think? What's jumping out at you?
I mean, with the AI news and then seeing it being headquartered in China, avoid dependence on foreign tech. I mean, it sounded like the game plan was just them to own everything once again. And I mean, with such a big player like Alibaba having their own large language model, I think they're making all the right moves. But I do think it's at the wrong time. I think it's a little bit ahead of. I think they're a little bit. I think they're biting off a little bit more than they can chew right now, especially with how competitive that AI space is. So I think the headline is great, but I think they're biting off more than they can chew, and maybe they're going to finish chewing it, and they might do that, but I think it's too soon.
Yeah, competition is definitely fierce in the AI space. This does seem like an interesting angle to attack. Even internally, like, you know, it's an advantage to have your own proprietary AI that you can deploy across your own systems and try to find connections or, you know, better efficiency or whatever it may be. But even in that case, there is, 101 companies with a large language model, an AI platform, whatever, that you could easily just integrate. You don't necessarily need to make your own.
Exactly.
So yeah, I just think that it's interesting.
It's a lot of risk.
And yeah, I mean, it's like I said, I think that if Amazon released a large language model right now, we'd be like, okay, like what the heck are they doing? That's cool, sure. I don't know that anybody would use it.
Yeah.
But yeah, so it's an interesting situation. Let's talk bearish factors. Competition is one, as we alluded to. AI infrastructure is extremely expensive. This is this large language model is the word is escaping me now. It's 1 trillion. Whatever you quantify large language models with. It's like 1 trillion threads. I can't think of the word. But anyway, it's incredibly expensive to set up and operate and sustain. So questions arise as to where that capital will come from. If it's, more shares and they dilute shares, obviously that would do bad things. If they happen to have the cash laying around, then obviously that would do good things. Chinese regulatory scrutiny is another one, and that's an ever-changing landscape. Right now, they're in a pretty good situation as far as regulations are concerned, but if China decides to pivot and make it harder to import the goods that they need, whatever they are importing, or just cracks down on AI a little further or whatever, that could hurt this whole project. Also, overinvestment into AI could hurt core revenues. Obviously, Alibaba's bread and butter is e-commerce, and if they pivot too hard into AI, perhaps their e-commerce revenues start to slip a little bit. Also, but I will say to that end, though, a bullish factor is that e-commerce was inherently hurt by the tariff situation. It looks like that we're going to wind up with some sizable tariffs on China, or already have them, or I can't keep up, man. I don't know. I'll check in a year. But there are some tariffs going into play on China that has already hurt their e-commerce, so perhaps pivoting to a different revenue stream could be smart.
Yeah.
And then heavy competition, as we alluded to, you got Huawei, you got Tencent, you got DeepSeek, you got Baidu, all of these other companies that are competing with your AI model. And also overvaluation risk, which overvaluation risk is something that I allude to with a lot of companies a whole lot because we're in incredibly enthusiastic times right now.
Yep.
But
we've seen the IPOs.
Yeah, exactly. But analyst consensus estimates for full year 2026 indicate a 10% decline in EPS year over year. And that's because of the heavy investments that they're going to be making into these AI things. So, there's give and take there. But I know that if 3 earnings calls from now they come out and donk and they say they're down 10% year over year in EPS, that's going to hurt them.
Yeah.
Whether it's actually going to come to fruition or not.
I know we don't talk about stock price too much, but I do think that stock price matters when a lot of these headlines are dropped. Like, that's why I'm a little skeptical about the timing with this news, but maybe it was strategic on their end. But when your stock goes on, I mean, Alibaba, just at the end of August, beginning of September, was trading at around $120 a share. We now hit a high of a little bit over, we almost hit $180 today. So them releasing something like that is just interesting in terms of the timing. And I'm very bullish, but I think the valuations are a little ahead of itself.
Acknowledging some chat here. What is going on? Why is everybody saying Howard Stern? I don't know where the Howard Stern started to come from. I don't know how this has happened. Anyway, I see I guess we leaned thirst on the would you rather question at the beginning. The mustache isn't going anywhere, Michael. Nice try. The kids are growing on Gatorade these days. This is the anti-Gatorade show.
Are we anti-Gatorade? We solidified that?
I thought I'm anti-Gatorade.
Are you anti-Gatorade?
Well, yeah.
Because of all the sodium in it?
It's not all the sodium. It's just it doesn't have hardly any electrolytes. It's a sugar drink. I think Gatorade tastes fine. I got no problems with it. I'll have one now and then. But just know what you're getting into.
Body armor. Right.
Yeah,
I stand on that hill as well.
Away from the numbers, we'll pull up that Oracle trade for you in just a moment. Thank you for the kind words, Rhett. And Grumpy, Chase is in the works, actually. I have begun to get the ball rolling on bringing Chase in here as a guest one of these days. Oh, Howard Stern is where Baba Booey is from. There we go. Thank you.
I still don't recall.
That makes sense. Is it Beetlejuice? The guy, like Beetlejuice, the guest that Howard Stern would have all the time?
I'm double checking Howard.
That sounds like something he would say. Anyway, somebody
can. Booey. Yeah, we'll return on that. I remember Howard. Right when you see him, you're like, oh yeah, Howard Stern. That's him, of course.
Yeah, we'll circle back. Yeah. Anyway, last slide here. What to watch for Alibaba moving forward? Adoption and monetization of this new large language model is going to be critical, and that's the timeline on how quickly they can pivot from just cash dumping into research and development into actual revenue-driving features is going to be the most important factor involved there. Margins in AI and cloud segments, if operating leverage kicks in, higher highs. If incremental spending dilutes margins, lower lows. China's regulatory landscape, as I alluded to earlier, and funding sources, as I alluded to earlier. If they dilute shares, obviously that's going to be bad. And if they do it with cash on hand, it's obviously going to be good.
I mean, they dilute the shares. Maybe the shareholders are in there for the long run. They believe in what the moves that they're making right now. Also was a producer of Howard Stern, which makes
producer Gary. Sense. That's why you guys were saying Gary.
That makes complete sense now.
It all connects. It all connects. I can't say that I've ever gone out of my way to listen to Howard Stern live.
I've only seen the
clips. I've seen lots and lots of clips.
Right.
Yes.
Yeah.
Okay. Damn, these guys are young. That's absolutely right. This is hilarious. This will make you guys sad. When I think Howard Stern, the first thing that comes to mind is actually America's Got Talent judge. That's like
really
that's where my mind goes, because that's how I knew Howard Stern as I was a kid. I obviously understand that he's a gigantic radio mogul and has a show on Sirius XM for however long.
Yeah.
There was a trade thesis in here the other day that if they cancel Howard Stern, Sirius XM might move up.
Speaking of American Idol, I seen the video about with Simon Cowell going around again, and it's kind of funny you just brought that up too. That's like core childhood, from 1 to 10 years old. That American Idol kind of.
Simon Cowell, man, pulled One Direction out of the void. Shout out to Simon Cowell.
Simon Cowell?
Yeah.
Say that again.
Simon Cowell. He invented One Direction. He discovered Harry Styles, then he put them all together.
I didn't know that.
Yeah. They're like his.
I didn't know that.
His band.
I just know Justin Bieber, Usher, or no, it was. Oh, never mind. I'm not talking.
I don't know, man. Man's gifted. He can spot.
I didn't know he was. I didn't know he was doing all that. That's fire though. Fire.
Greatest first punch thrower in history. I assume that's about Howard Stern. These two are making me feel like a boomer. Sorry, guys. Sorry. Well, let's pivot to some more topical stuff where our age does not come into play. You want to go platform?
Yeah. Let's go jump over here to the platform. I have Baba pulled up right now. As you can see, Baba was trading sideways for about the last week, and then we had the gap up, and then we ran to the highs, sold off a little bit, but it's holding its gains pretty well here. The thing that really stood out this morning with that news coming out was this Baidu position, right? We had put this on yesterday. I'm like, okay, that's fine. The position's down 30%, but why is it down 30%? That's fine, but I put this on less than 12 hours ago. What was released for this position to move that much with 60 days left to expiration? So that was the news that we just covered with Baidu. And this morning, after we were ripping to the upside, I was even talking to myself, and I was like, should I just manage this right now? We got some new factors that just came in after I put in this trade. We're ripping towards the highs, and I was like, you know what? I'm going to be patient. I even sold this one at the money just because of how much we ripped, and then also it gave me a little bit more credit there. I think it was like a 64% pop at the time of putting this on. But anyways, just waking up and seeing that, it kind of ironically made me laugh and smile a little bit. Like, of course.
Yeah, of course.
And then we got QQQ out of the money call spread. The sell-off today is helping. We'll see if that'll hold. SPY out of the money call spread. We're almost back. We need it down to 660, barely hitting that in the money strike. And then UNH. How's UNH playing out right now, Gus?
Oh, it's going great.
It's going well.
It's going great.
It's popping off right now.
I'll take $2 a day.
It's been resilient.
If we go $2 a day until my expiration, I would be well in the money.
The market pulls back. Crypto's pulling back a little bit. Not UNH.
Not UNH.
All the money's funneling to UNH, I guess.
Yeah, UNH, it's interesting. It's like we had, obviously all that turbulence in April, and UNH has been this whole thing. And, you always talk about how after times of turbulence, people rotate into small caps slower.
Right.
The mega caps recover first, and then it gradually gets smaller and smaller as they recover. And I feel like UNH, despite its float and cap, is just being treated like one of those small caps. It was like we ran and ran and ran. People rotate into the small caps. We run and run and run. And then finally people are confident enough and have enough capital to start jumping in on, making this deal with the devil and jumping in on UNH. It's going great. I got no complaints.
Yeah.
We can just keep on chugging.
Hey, hats off to Warren Buffett. Bro was the signal. No. With that being said,
I was the signal for Warren Buffett, so.
You most definitely. Warren Buffett's second cousin, might as well be.
Yeah, he calls me like 3 times a day. I don't really have the time anymore, but.
Speaking of that, you don't have any Chinese names, any exposure to the Chinese companies. Does anybody else in chat right now, are you guys trading any of the Chinese names? You got any exposure over there?
I wish that I would have gotten long BYD literally yesterday when I said that I wanted to.
Okay, and what held you back there?
I just didn't. It was just I don't know. I was saying yesterday that I feel like I've missed the boat. Actually, this is coming down today. I fully expected this to move up today on the Alibaba news to the extent that I hadn't even checked it yet. So yeah, maybe this is representing this buy spot to me a little bit. I really like this like 81 to 82.50 level. I'm not like a technical analysis professional, or I don't swear by it by any means. But there does seem to be good resistance forming at this 81, 82 level. And BYD, they just keep making strides. They managed to pivot around the NVIDIA chip thing. And yeah, I think this company could really just become, like, I think it already is, but could even further become just the electric vehicle company in China, where there is 3 times as many people as there are in the United States.
Yeah.
So yeah, I'm high on BYD moving forward. I would like to get some kind of leap on, but yeah, I'm not gonna buy it when we're $2 from all-time highs. So need something slightly lower to present.
Whenever you're playing that tug of war with yourself, sometimes it's like, I'll sit on the sidelines until something really calling my name.
Yeah, absolutely.
Yeah. JD, I see we got some. We got Dan trading JD right now, 33 IV ranked. It's up on the day. We got earnings November 13th, something to look out for. You were looking at JD recently?
No, I wasn't looking at JD.
Gotcha.
I was just agreeing that I had seen it in chat.
I gotcha.
Trade idea: sell call vertical on NLR.
56 IV rank. Let's go to the daily.
That looks attractive, actually.
We're pulling back. We're pulling back. This looks like the April dip on NASDAQ right now. Is that the pullback that we're getting right now in NLR? 56 IV rank. Let's see what the option chain's looking like. We're running out of call strikes. That's how much we're ripping on NLR.
Yeah, I mean this is way overextended. This is just a really good idea. I like this. I'm gonna do it. Yeah, tons of premium on these calls.
Where are we at right now? We're at $138 stock.
These are some spreads, though. I will say these are some spreads.
Let's see. Call size going 180, barely collecting a fifth of the width on that.
I mean, yeah. Am I going to trade $160 wide right now? Like, do I need to go closer? I guess I kind of want to be closer anyway.
We could always talk about a zebra.
What can we get on the November 21st?
See,
always
zebra
talk about a zebra.
Zebra.
These are even wider.
That could
we got $210 wide spreads at the money on this thing. I really want to get involved, but could I get a fill?
I mean, $1,500 worth of buying power to get 92 negative delta if you wanted to get short. If you want to get long, the zebra is going to be another $1,700 worth of buying power, 100 positive delta right on the dot.
Long calls. Saj, are you saying you've been long those things for the last 20 days? If so, congratulations, brother. That
was a ride.
Yeah.
Congrats.
you got the setup. If
He's
you've
like,
been
I need
long
some exit
those things
liquidity
for 3
now.
weeks.
You guys should look at NLR. I need some exit liquidity.
No kidding. Anyway, yeah, it's just, man, I don't know if I can stomach these spreads. I mean, I'm tempted to just buy a freaking put. I'm tempted to just go mega super duper normie and just take like a 145 put and let theta be out of the equation and let this thing come down a little bit. I mean, what's that look like?
We're looking at Marvel too, MRVO.
Expensive is what it looks like.
It's looking expensive. What's it going for right there?
I mean, like 1,200 notional.
Sheesh.
Lots.
Sheesh.
I don't got that kind of capital.
Sheesh.
I do. I'm just being timid.
Spreads aren't looking too attractive on Marvel. Then again, why do I have two? Okay, that was low.
We need to look at the Oracle trade. I want to circle back on that one.
Oracle.
Oracle, November 21st, 240, 400 strangle. Is there a better way? Is there a more efficient way to trade this? Is the question.
I mean, what are you leaning right now on Oracle? You bullish, you bearish?
I mean, I feel compelled to be bearish, which is funny. That does not reflect my sentiment for the broader market. I don't know. Oracle's an interesting one. I like the angle of the strangle bars because I think that Oracle is going to move. I think that we have a very binary event coming up with this TikTok sale. In terms of Oracle, I think if that gets finalized, that it has more juice in the tank, gas in the tank. And I think that if that gets shut down or Oracle crumbles and falls through on that deal for some reason, that we could easily see it pull lower. So yeah, I mean, I'm almost tempted to do an Iron Condor or something like that.
It's better than NLR. NLR is trading 371,000 shares today, which is nothing.
I don't know. What is this company?
Which is nothing.
Oh,
right now.
uranium and nuclear ETF. I gotcha.
Yeah. Not the craziest amount of volume being traded.
Oh, you're trying to get me to short nuclear? I don't know if I'm doing that.
Some uranium.
I didn't even check. I didn't even look. I was just like, ooh, these calls are going to be juiced.
No wonder this has been ripping over the last 3 weeks.
Yeah.
You know, the uranium ETF.
Yeah, I thought this was some one-off company. Gotta do my due diligence.
Right.
What else we got?
We got Netflix doesn't look terrible right now. Netflix is down on the day. We got a 37 IV rank, but we got earnings October 1st after the bell.
I'm RGTI. It keeps going up. Frustrated with it. RGTI. Rigetti Computing. Holy cow. That is a chart.
Okay. 99 million shares traded today. $33 stock.
99 million shares on Rigetti Computing?
IV rank.
What? Why? Who has a hold of this? Is this a Wall Street Bets thing? If this is a Wall Street Bets chart pattern, I'll
We
tell
got a
you
market cap of 9 billion. It's not tiny. We've seen smaller, but it's not large or a medium cap by any means. It's still pretty small. I don't know what the float is on this.
I'm shorting this thing expeditiously. How can I do this? I think I'm going to do I want to be disproportionately short, but also to find risk. Like I'm thinking like maybe a 2x1 short call vertical, something like that.
It's an option.
How quickly did this? It did this once. Big fan of like trying to see if a stock has done this before and what kind of price action we got when it finally stopped.
Looking at the zebra on RGTI right now.
Yeah, so this
$3,000 worth of buying power.
This hit a wall and went down $5 last time, and that's 18 to 13. So I think this thing could, yeah. All right. And how long is that? This is like okay, yeah. I think 45 days should be safe. Nothing really good at 45 days. Let's go with 30. Let's go October 24th.
I think I'd rather buy puts than. The zebra doesn't look too attractive just because it's taking a little bit more buying power than would want that one to.
Yeah, this is tradable. What if we do something a little aggressive? Like, what if I sell the 32, but what if I sell the 30, buy the 32?
I love Kimberly's vibe. Literally. Wait for the rejection of the bottom of the candlestick and RGTI on the 1 hour chart and buy. Who cares? Scalp the hell out of it. Like, I love that.
It's true. That's just a good point.
I'm going to be on the sidelines on this one, but RGTI is an attractive one.
Getting involved. Okay, yeah. So I'm gonna play a 2x1 short call vertical to the downside. I am selling 2 of the 31s and buying 1 of the 33s in the October 24th cycle.
Got a decent amount of time on that too.
Is this 782?
This is probably
I'm debating between the 32 34 right now. I haven't sent this through yet. Yeah, let's do that if it's gonna be the same. Okay. Everybody say a prayer that I get to fill. This is quite a spread here. I'll fire this off a few times. It might go 100 before then.
Sava, Wolf. We got PBR up on the day. Too cheap. NLY, too cheap. Sava, too cheap. Wolf, Plug. What's Plug up to, actually?
Plug. Yeah,
Getting hammered.
I sold out just before close yesterday, which it'd be easy to get FOMO in that situation, but 50% in a day on some naked puts. I'm content with taking that. Okay, let's get a little grosser with RGTI.
Looking at Bull, $14
wow,
stock.
I'm shocked. Okay, I got filled at 720 on that 2x1. But yeah, this is shorting in against this is like one of my favorite things to do. So, Drin, I'm here with you now. Solidarity, although I haven't had the pain and will hopefully only have the success.
Big Bear AI. Big Bear AI made the top 10 list almost. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13th. 13th largest mover on the day is Big Bear AI, brother. After we spoke about it the other day, right?
Yeah, it's starting to topple here a little bit. I mean,
it's up though. 10%, 11% on the day.
Yeah. It opened way higher. It's just, this is. This one's interesting. Big Bear. I mean, I said this when we covered it on Monday as well, but it's just like, I believe I can, more than usual, I can really see both the bull case and the bear case for this stock. Like usually if I'm trying to get directional, one of those things will come to outweigh the other. But with Big Bear, I hear what both sides are saying, and I can't really decide. I mean, I love to be a hater when things are running like this. Like I would love to be able to get short Big Bear, but I don't think I'm going to do it.
Nobody's been talking about NVIDIA lately.
Yes, NVIDIA has been a little bit quiet. I mean, for NVIDIA, that is.
6 IV rank, I see. It's been a little bit dead.
Yeah, a little bit of consolidation, really since the beginning of August. Yeah, this is interesting. I mean, I would think that it's time for it to make higher highs soon, but I'm also not surprised that it breathes after what we had from the bottom of April out into what we saw here. But really surprised to not see NVIDIA climbing to higher highs with the rest of the market for this last month.
Yeah.
That's shocking to me.
Yeah, no, me too.
This is like the market maker. When NVIDIA has earnings, everybody stops and watches.
See what SMCI's been up to. SMCI, kind of same story, same boat, looks the same too. Low IV rank, decent amount of volume being traded, but no decisions really being made here. It's just stalling out. As equities at all-time highs. Tesla out here saving the market. Let's see. Tesla is ripping on the day. It's been resilient. I'm curious about Bitcoin, then we'll go back to Tesla.
Market cares nothing for our opinion. Just trade it today. Amen, Donna and Kimberly. I understand you're agreeing with her. Thoughts on QS? QS, I saw this one on the high options volume, or on just big movers yesterday, rather. QuantumScape. Yeah, I mean,
That's cute.
I don't have any strong convictions. I mean, if you put a gun to my head and said trade this, I'd get short. But also, I don't know. This one's real sketchy with this double top, and I don't even mean like in a chart pattern context. I just mean the fact that we ran up and tested this level, and then we're doing it again. But it's not higher highs though. But it's the exact same sort of run up. Like all strange to me. QuantumScape, are they AI something? I'm like familiar with this company name, but I can't say that.
I forget. I've traded this quite a few times though. We spoke about it a few.
Yeah, it's got good vol on it, especially recently.
Yeah, no, it's moving. It is moving. It has earnings. We do have earnings October 22nd. We're hitting that next earnings season where we're getting in that weird, awkward spot where we got earnings 3 to 4 weeks away. So you're like thinking about that vol rising.
Yeah, that's what's been happening as I try to enter positions. Right. I'm constantly trying to do the dance around the earnings date and theorize about whether I would rather hold through earnings or just right up to earnings or whatever I want to do. Done a long BBAI. Happy with the upswing. Sold part of my position today. Beautiful. Love it. I mean, yeah, great time to be long in Big Bear. Yeah, you're a part of the efficient market that's driving this thing, stopping this thing out a little bit today, I guess. BBAI, another stock I could rag on all day. I know that is a divisive one. Build-A-Bear Workshop thrown out, one of my favorite tickers, BBW. We're going higher. I've been seeing Build-A-Bear Workshop occasionally pop up on the movers list, but yeah, this thing has been moving.
It's been trading sideways.
When are they going to announce Build-A-Bear Workshop AI?
They haven't already.
They have it already?
I said, no, they haven't already.
Yeah. We need to, let's see. Can I put an AI chatbot in my kid's Build-A-Bear?
Let's go. Celsius 22.5 IV rank. Barely trading any volume right now. Earnings a couple months away. CLSK, cheaper stock.
Calls on Quadruple U paid the bills today. I must admit, I have never heard of this ticker. Energy Fuels Incorporated, Canada. Holy cow. Congratulations on your calls. That's another mover there. This is another chart pattern that makes me want to get short.
Oh my word. Oh my word.
I mean, I feel like I'm out of my mind not to short this right now, but also like, I mean, it's a company. This isn't some industry ETF or anything. Huh? This is interesting. What do we got here? Again, we're on this thing where it's like, okay, earnings are 30 days away. How do I want to choose to attack this? What if I just like, oh yeah, these are good tight spreads. Any meat left on the bone here? 18.20, something like that. 135 for 65. I ain't doing all that. 17.19. 17 would kind of be a move, I guess. Interesting. I want to get short. I'm going to do it. After further evaluation.
Every time I want to look, get very directional, I look to see what the zebras are going for every time. Let's see.
Mr. Zebra over there.
20. All right, guys. If we'll risk 100. We'll risk $100 on this trade. If we're making new highs, I'm out of here. I'm out. Just because this is very directional.
Yeah, I'm gonna take a small short on this quadruple U, October 17th. Just doing another short call vertical. I am buying the 18, selling the 1750. That's 26 of buying power for 22 credit. It is sent.
I'm gonna end up doing this one before the close.
You're gonna wait?
I'm gonna wait just a little bit, but I'm gonna get the short delta on. I'm gonna get it on. I want to get it on.
Boo this man.
Like this is a type of trade where I'd be like, I will happily lose money in. Like there's certain trades where like I'm just glad to have the opportunity. This is one of those. If we make new highs, I'm out of here. But I'll put it on before the close.
Whenever I look over here and you're on the intraday chart, I'm like, am I seeing something completely different? Right. Yeah, it always throws me off. Andrew, you like this as a side of mac and cheese? What? Oh, chicken dinner is what we're talking about? I have a Vermont teddy bear. I had a Build-A-Bear when I was a kid. You have a Build-A-Bear?
I did not. I did have a favorite lion bear. It was a lion, but it was my favorite.
It's fire.
Remember?
I remember as a kid, when I built a Build-A-Bear, I like the clothes that you're supposed to put on the bear. They're all like not soft, like they're like cotton material or whatever. And so I was like, I want this bear to be soft, so I just didn't put any clothes in my Build-A-Bear. It was like the most boring patron that Build-A-Bear could possibly have. I had a great time. It was a blast. I have memories of going with my mom, and it was a fun time. But I was like, yeah, I'll just give it to me naked, man. I don't care.
So my line didn't have any clothes on it either. But I mean, to be fair, I feel like as a kid, I would have been a little annoyed with the shirt, fixing the collar on it. Yeah. Like now when I think back to being like 5 or 6 years old, I don't know if I want to be fixing its socks and all that. Just give me the bear.
No, yeah, exactly. Yeah, I was like, just give me the soft bear, man. I don't need these scraggly clothes in my bear. I just want a soft bear.
Right.
Gold goes lower.
Gold has been an absolute beast. We talk about it every time we're on here. I've been waiting to get involved in gold. It kind of feels like the game already started and I don't know when to jump in, but this gold market been ripping. It's a little concerning considering assets and equities are at all-time highs. We got metals at all-time highs, crypto all-time highs, housing market all-time highs. Okay. I don't know how long we're going to be able to sustain all of this. I mean, metals and equities at all-time highs just a little profound to me. But which is going to be the first one to dip? I don't know. Either we're going to see crypto, maybe. It's going to be the assets. It's going to be the metals. Silver has not been shy either.
What's going on, Lonsofos? Good to see you. Did we looked at Marvel?
Yeah, we did.
Sorry, correction.
Take a peek at it again, though.
Not to be confused with the company responsible for the superheroes. Different entities. If you want exposure to the company that does the superheroes, you got to buy Disney. Only direct way to do it. Spider-Man is the SpaceX of stocks when you think about it.
Or are you taking Spider-Man back?
I guess SpaceX is the SpaceX of stocks. I don't know, man. What?
You got a preferred character, Marvel character?
Oh yeah, Spider-Man.
Oh, Spider-Man.
Yeah. It's been Spider-Man. I'm a big fan of the OG, like Amazing Spider-Mans with Tobey Maguire. Yeah. I thought Andrew Garfield did a great job too.
Amazing job.
Kind of got ran out of there. Yeah. Tom Holland, I don't know, funny. Like objectively, maybe my least favorite Spider-Man, but I think that's just a nostalgia bias getting in the way. I have no problems with Tom Holland
at all. I would have to piggyback off that same opinion. It's the same thing. I think it's Tom Holland, great guy, great actor, great everything, but I don't know, it doesn't hit the same like the old Spider-Mans. It has to be the nostalgia, maybe.
Yeah, well, it's just they lean more into like a humorous kind of lighter feel with him, as opposed to like the past ones. It felt like this was like a real hardened hero, and I don't know. There's pros and cons to each. I think he's funny. I think he as Spider-Man is funny. Yeah, it's just a little
different angle.
Yeah, something different. But he bagged Zendaya, my childhood crush. So respect to him for that.
Hey, man. With that being said, no, Marvel crushing it on the day.
We got Boston Market in the chat. What is this? Dan is Boston Market? You've been specifically requested to shout out Boston Market. If you could do that, I don't know.
Boston Market, Earl. We've got Boston Market in the chat.
You guys fighting over Big Bear has me rolling.
Boston Market.
Labubu has more value than BBAI, he said.
Labubu, that was a bubble.
Yeah, I was just on my high horse yesterday about wanting to short Popmart. I never managed to get short. I meant to go bug the trade desk, but I didn't.
Hero movies these days are trash. It's been a while since I've seen one, but
yeah, it's hard to borrow.
What were you touching on again there?
Yeah, the superhero movies have really fallen off a cliff.
They have. I mean, I feel like movies don't hit the same in general.
Yeah, I was looking into PopMart to see if it wasn't closing only anymore.
January 27th calls last month. Wow.
Marvel did January 27 calls last month.
Again, with Marvel, it doesn't seem like there's too much meat on the bones right now. Just looking at the options chain, and we got dividends October 10th. I mean, just not much meat on the bones, really.
Dude, Boston Market, I miss it. None around me anymore.
What's the Boston Market?
Boston Market, it's like a. Correct me if I'm wrong. I've never been to a Boston Market either, but I think it's like a deli, right? Am I off base there? I apologize. I dearly do not want to offend the Boston Market fans in the chat with my lack of knowledge about Boston Market. But that's my understanding. Or do they make? Yeah. I think it's like a deli. I feel like they advertise with the Reds. I feel like I've seen Boston Market advertisements at Reds games. Aquaman movie. Oh my goodness. Okay, what else is catching my eye here? I'll tell you a trade that's kind of working out for me.
What's that?
Is bonds, actually, TLT.
There's no way you're going to sit here right now in front of me and say bonds after the conversation we just had.
I'm going to get into that conversation.
Okay.
I'm drawing segues, but I bought some bonds down at I bought some TLT, I should say, down at like 84. Just
nice.
Long dated. I got just one leap, 85 leap, January 16th expiration cycle. It is on the saying that Tom says all the time, which is anytime bonds drop, they're a buy. And so I was bored and looking for things to buy one day. And I said, let me check out bonds. Look at that, they dropped.
You just heard Tom in your head.
Yeah, I did. Anytime bonds drop, they're a buy. And I looked and I said, oh, this is 1 year low on bonds. Let me give me some bonds. So yeah, I am involved with TLT. That said, bonds are boring. I will conclude my conversation there. The conversation Errol was alluding to is that Webull added the ability to buy bonds.
Hey, no shade.
Shade. Like maximum shade. Who the hell cares about bonds? Is anybody buying bonds anymore? Isn't Webull supposed to be an app for young people? Have you ever met one person in your life our age who owns a bond in anything? Me? No, I got options on TLT, man. That ain't no bond.
All right, man. You got some exposure to the bonds. That's all I got. All right. That's all I seen. That's all I heard. No, but 100%.
TLT as a trading vehicle is very different from buying a 3% yield 2-year bond.
100%. We're not waking up, cracking open, or heating up some coffee, looking at the newspaper, seeing where bonds are at right now.
Webull's next announcement, we got CDs now.
I've never heard anybody under the age of 25, 30 ever speak about bonds.
I think they're a good vehicle. I did know a grad student at A&M who had bonds, but his strategy was that he would use bonds as his savings account, essentially. It was like a high yield savings. Okay. And so he would do 6-month bonds and just be rolling them over, and then he had them expiring in like every other month.
Who put him onto that? His parents?
No, it was actually Alex Hormozy. You know Alex Hormozy?
Really?
Yeah. That's interesting. He said that it was his strategy. You heard about it in a podcast. But yeah, he would do every 6 months, and then they would expire every 2 months. And if he needed the cash, he would just take it and use it. And if not, he would just put it right back in.
I think I might have seen that clip with Alex Hormozy.
Yeah.
I think I came across it. I was like, oh, Alex speaking about the market.
Yeah. So that's an interesting philosophy to me. It seems like just a more active way to get a high yield savings account, but.
Why y'all fading the 40s lifestyle? You know, we just got done managing the bonds.
Most people our age have never heard of bonds.
I'm not saying bonds aren't good to learn from. Like, I think going on YouTube and watching an amazing 10, 15 minute educational video learning about interest rates, bonds, whatever it is, amazing. But in terms of like a investing or trading sense, bonds is typically the topic of conversation, or the preferred topic.
Yeah, you need to know about bonds. And I will say as well, if you get creative with bonds, like, foreign bonds or any kind of like maybe a super high yield corporate bond, like there are occasionally opportunities I've seen that look moderately attractive, but I always just come back to the fact that, like, is this going to outpace the S&P 500 by that much? And especially in this market environment, you're gonna give people the ability to buy bonds against this market. Like,
I just think there's way too many different things for young people to speculate on. I think that probably has to do with the change of topics over the last 5, 10, 15, 20 years in terms of what assets we're looking at. I think there was very few things you could speculate on maybe 10, 20 years ago.
Yes,
now you have
absolutely.
a plethora of things
you can speculate. Now I can just go, I can YOLO my entire port into some calls if I want.
Exactly.
That's true. This type of speculation was not accessible for a long time. And those options have been around, but it was just much more difficult to trade them.
100%. Those speculative trades is just our
Tom Sosnoff came along and fixed all that.
I know. Let's go. It's always funny to talk about, too, like even with Thinkorswim, like, bro, I had no idea. And it's like one of the first things you might learn on.
Some economic researchers say Labubus may be a recession indicator. Does that sound ridiculous or not? I actually don't think so. I forget what the exact term is, but like I know that cheaper luxury goods tend to perform better in recession, actually, is the thing. Like I know Victoria's Secret actually tends to do higher sales during times of recession because when people can no longer afford large luxuries, they just move down to small luxuries.
Okay.
So if you could toss Labubus into that bucket, then yes, I think that there's an argument to be made that they could be a recession indicator.
Heard about the Boo-Boos only here at Tasty? Huh. I see them almost everywhere.
These stupid toys. I'm marketing for these stupid toys. Nobody buy a Labubu because you heard about them from me. If you heard about it organically and want to buy one, that's fine, but I will not be the reason that more Labubus get sold.
Honestly, outside of the Labubus, what I'm fascinated about whenever I see those things pick up, I'm like, how? What is the psychology going on right now? What is this herd mentality? And then it's just getting more and more popular. And then we're talking about it right now live on the show. And I'm just like, how does that start?
Yeah, and
Who started that?
I know. And it's like, think about all the 100,000 collectibles that flop. And somehow these things.
What is the intrigue? What's the interest of that?
I mean, it's the exclusivity. I mean, and Pop Mart's entire brand is they're big on the blind boxes, and I think that's like a huge part of it is like the dopamine hit of getting the blind box. It's like opening packs on 2K.
Wait. When you open Labubus, you don't know which one you're getting? I didn't know that. That's a massive element of the marketing.
Absolutely. Yeah, they post like when you buy a box, then it'll have like the 10 that you could get on the side of it, and it has their percentage chances.
I did not know that.
Yeah,
bro. That makes so much more sense.
Yeah.
Oh my gosh, that makes so much sense.
Yeah, it's blind, so everybody is just
such an
pulling
intrigue.
the boo-boos to try to get the rare one. Yeah.
I mean, it's the same thing for any collector's items. People get scavenger. What is it called? Like scavenger hunt type things from even thrifts. Like sometimes we'll buy this big bag of jewelry and we'll like go in it just to see.
Or like buying the storage containers. Like you can buy old
that's
storage
always
units that are abandoned.
Yeah. Sparking your curiosity. That human element. That's why I was like, what human trait is scratching that itch for people to want to? It's that curiosity.
Yeah, exactly. And then people want to when they finally get a rare one and they want to like flex it. So that's why they go on the bags or the backpacks.
You were on that. I was on Bakugan back in the day.
Yeah, Bakugan.
That was
Beyblade.
I missed the Beyblade wave.
Take your time.
But I was in love with them. I loved that stuff. But the Bakugans, you saw with 3 balls in my front pocket in like 4th grade in my pocket, trading those things all day.
I have a vivid memory in 3rd grade. We had Beyblades at school and we'd use them at recess. Like you had the arena. But one time, this kid in my class that was particularly reckless, he like did a full shuffle step and then just launched a Beyblade down the hallway of our school. And it was so comical. He threw it hard and it went skipping and it's banging into lockers on both sides and making all this noise. And then at the end, the coup de grace, it hit a glass door and shattered it at the end of the hallway.
No way.
And we all just sat there in stunned silence for like 10 seconds.
Bro.
It was so funny. Yeah, so that's my core
that
Beyblade
shuffle
memory.
skip hop thing,
yeah,
what I'm talking about?
Yeah, it was like a full crow hop, and then he just launched that thing, and it went like 30 yards.
I just imagine like the crow hop from like a pitcher, baseball, something like that. But
it's like an outfielder coming up to throw to home. Yeah, exactly. But yeah, that was funny. Beyblades, they're destructive. I mean, they were heavy. They were like a heavy little.
Oh yeah,
thing.
you got the good ones. You guys didn't have the knockoff.
No, yeah, we had the full metal stuff. I guarantee there's so much crappier now. But those Beyblades we had.
Oh, for sure. Even the Bakugan. I came across Bakugan in today's age, not even close to the same quality. Toys aren't made at.
I think it's a 1 in 9 chance of getting something.
Electric Heelys. Okay, I missed that one.
Electric Heelys.
Mine were manual. We had manual.
Who threw that out?
Big deal.
Big deal. Electric Heelys? Did they do that? I thought I was super cool because I had the Heelys. I had the double wheel. I had 2 wheels. Like there was 2 wheels.
I remember that.
Yeah,
I remember seeing those.
That was super cool. Heelys. I had some Heelys.
The first time I got my Heelys, got them at the mall somewhere. I was in 2nd grade. I got caught in the bathroom in the middle of the night. That night, my dad comes up and catches me at like 2:30 in the morning, rolling around in my Heelys in like a 4x4 bathroom.
Like tile floor,
circle,
loud as hell.
Light on, almost 3 a.m. I was so excited to get those Heelys. And he was like, son, go to bed.
Go to bed. It's like he's happy he gave you such a good gift, but he's just
it was like a Friday night or Saturday, middle of the night. He just probably saw the light peeking through the bottom of the door.
Yeah.
And just hear
going around.
Anyways,
oh man,
I miss the Heelys.
That's funny. You can get in trouble for Heelys in school. My school, like as soon as those started to become popular, we made it clear in no uncertain terms that we were not to wear those Heelys in school.
Do you remember when those started to get popular?
I do. Yeah.
What grade were you in?
Like first.
Okay.
Yeah.
Okay.
I think that's like a 07, 08 type of.
Yes.
Yeah.
Exactly right around there.
Yeah.
I was just curious if those regulations for Heelys in school systems came around the same time.
Yeah. No, yeah, that was a time. But I loved my Heelys. I always thought it was so funny, the gimmick, because the gimmick was like, oh, you can take the wheels out and use them as regular shoes. Nobody ever did that. Nobody ever did that.
Nobody did that.
Always putting that plug back in their Heelys. You kidding me? BDD, a new Mexican restaurant near me. Oh, Big Deal Donuts. I was like, you got a ticker for the Mexican restaurant near you? It's publicly traded. SMR and Oklo on your watch list. Have you been feeling any type of way about small modular reactors? Rolls-Royce is also invested in development. I didn't know about the Rolls-Royce thing. I'm very high on small modular reactors in broad strokes. SMR in particular is one that I like. I think that nuclear is about to make the resurgence. I mean, obviously we're taking the steps to get there, but it feels like we're finally past all this fear, and people are beginning to embrace nuclear a little bit more. So
yeah,
I
don't
really
think
high on nuclear in all forms.
Yeah. I mean, I don't think we have a choice.
Yeah, big honestly, on GEV as well. That's been having a great year.
Yeah, I don't think we have a choice, especially after World War II. Honestly, everybody and their mom is plotting on us. Honestly, after World War II, I watched a historical video again not too long ago on that on the bombs, and I was just looking at the historical context of those things again. And bro, uranium materials and nuclear weapons is no joke.
Yeah. So. No, yeah, it is. It is the future, and yeah, I think it's adapt or die. I think AI and nuclear are the adapt or die sectors right now. I'm so old we used our feet under the car, Flintstones level. Oh, that's good. Can't focus, that mustache is killer. Thank you, Xander. I appreciate it. A Xander. A Xander? I don't know. One of those is right. I'm confident that one of those three things I just said was correct. Oklo broke ground on a new reactor site. That's interesting. Yeah, Oklo. I mean, that's been having quite the rally. I am not high. don't throw these accusations at me.
Those positions are.
What else we got? Mustache is like a homicide investigator in the early 80s. Yes, I get Magnum PI a lot. That's a compliment.
What was that ticker we were looking at? That was uranium. Was it NLR? What were we looking at?
NLR.
Was it NLR?
Yeah, that was that uranium.
I think it was NLR loan. One of the ones we were just looking at.
What are some of the nuclear names you're looking at? Yeah, I mean, GE Vernova, GEV is kind of my favorite of the bunch. That's been having a great run. Shout out to Julia for putting me on that like a year and a half ago. I would never have heard of it otherwise. And then, yeah, I think SMR is just kind of the rest of the bulk of my exposure. I don't try to get too particular with the nuclear names because, I mean, I'm just industry level high on nuclear. So, yeah, SMR, any ETFs you can use to get nuclear exposure are good. Has anybody jumped on naming an ETF nuke yet? No. Somebody get on that. Can we, CME, nope. Can we make that happen? Nope. We need to make the nuke ETF. Let's just do it, guys. Lone Sophos, Emmett, Dan, Donna, we in? We forming the nuclear ETF with the ticker nuke? Because it's right there. It's
everybody watch these individuals right here. Everybody that was just listed off. Put them on a list. Watch them. They're building.
All right. Well, I know we're kind of at our time here. You got any closing remarks, big people?
No, all good.
All right. You want to take us out?
Yeah, that's gonna do it. We'll be back to see how some of these positions pan out. What are you most excited for in the portfolio right now?
That's a good question. UNH is a cop-out answer.
Okay.
So
it kind of is, but it's valid.
I'll say Amazon. I'm in love with this dip that I got on Amazon yesterday.
Okay.
I'm liking this Amazon position.
I'm gonna go UNH. Made it easy on me. That's gonna do it for today's segment. Thanks for taking the time to hang out with us, everybody. We appreciate your time. Be sure to stay tuned for more segments coming on next right now. We'll catch you guys next time. Peace.
In road trips, my family, it was like whoever could get the captain seat was it.
That's great. I'm having a great time.
Me too. But, I mean, stay a while. Take your jacket off.
No. I mean, I'll stay, but the jacket's not
Come
going
on,
off.
take your jacket off.
Nope.
Come on,
No.
take it out.
I'm sorry. I didn't mean to.
No, I'm sorry.
You hopped on this cowboy's horse, so I guess you got to hear his tale. In '87, I took it off. There was the market crash. In '92, NBC canceled Blossom. A couple of years ago, I lost it for 2 days, and the Lakers won the NBA Finals. Bottom line is when this thing comes off, bad things happen.
You've got to take it off sometimes. I mean,
Never do.
how do you shower?
The jacket's kind of gotten used to it. In fact, every few days it needs it.
No matter what, you keep it on.
I can take my shirt off if you want, but I'm not taking the jacket off.
I just don't know if that's something that I could deal with.
It'll be like a teal tornado, just endlessly washing up on your shore.
I mean,
This is moving so fast, and I like it.
Yeah.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Welcome in Tasty CEO Tom Sosnoff, also founded Thinkorswim. Some call him the godfather of retail options trading. Tom, it's good to have you on. How would you be reacting as a startup founder to this news?
I'd be really pissed.
Yeah. As you should be, by the way. I'm glad you said it because I can't.
And this is how we think as traders. You're much better off, instead of trying to follow the trend or follow the fundamentals, you're much better off playing the role of a contrarian.
And what I really want to do today is kind of break it out of that box and make it what it really should be, which is about understanding and thinking about probabilistic, predictable outcomes, about quantitative strategies. True financial literacy is about taking risk.
There's a very thin line between opportunity and risk, but where there's the most noise, there's the most opportunity.
The second you believe that somebody knows something and it's not you, then you're dead.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
You hear it all the time. Spoos up or spoos down. What exactly does that mean? Spoos is a slang term for the S&P 500, specifically the S&P 500 futures contract /ES. It's the world's most liquid asset. In the S&P 500, billions and billions of dollars trade hands each day. The S&P 500 represents the top US stocks, all in one basket, traded through one contract. The S&P 500's movement day to day gives you a good overview of the market as a whole and what it's doing.
The beauty of Thinkorswim was that we were different. From the name to the front end technology was clearly what we wanted as traders. Second time around, I think we did a better job. Yes, we are known for our ability to support complex derivatives traders, but we also have the tools for somebody who's brand new who wants to come in on the first floor and work their way up to the top of the building.
There's a beast in the financial world, and it's not the bull. If that's you, join us on Tasty Trade. Genius loves company.
Hello, everybody. We are back. It is Wednesday afternoon. It's time for Truth or Skepticism. I'm Tom Sosnoff, and I'm here with Dylan Radigan today. Mr. Radigan, how art thou?
Very good. Nice to be seeing you. It's yet another Wednesday. It's like a Wednesday after Wednesday around here, but I'm doing quite well, actually. Nice to be seeing you. What's on your mind this particular day?
There's actually a lot of really interesting content out there to talk about. I don't know how much of a debate there is to it, but I mean, the elephant in the room is the whole free speech thing.
Sure.
You know, are we bulldozing free speech, or are we, you know, I don't know what else you could say. But I think that the way I wanted to start off is I think that there is less political divisiveness and there is more universal bipartisan support for opposing the ridiculous H-1B fees that Trump and Lutnick proposed. I'm not sure whose brilliant idea it was. I think they're both idiots. But Lutnick seemed to take incredible pleasure, like announcing it. I think in the back of Trump's mind, he knew it was dumb, but he's such a ethnocentric racist that he doesn't really, you know, that it doesn't bother him that much. But I think that, you know, when the Kevin O'Learys of the world, who I also cannot stand, but when the Kevin O'Learys of the world come out and say it's probably the dumbest piece of legislation that they proposed to date because it will kill innovation, it will hurt startups, it will hurt, you know, creativity, it will be, you know, a brutal brain drain, it will help China, it will help India, it will help all other places around the world, it will kill our grad school system. I feel like that is probably the most important topic, because at some point in the future, you know, I mean, free speech will win out. Democracy will prevail. Free speech will win out. I'm not too concerned about that. I am concerned that for the next 3 years, we are going to have a very hard time hiring the best available candidate. And I think that that is a huge mistake. We're going to have a hard time diversifying our talent, which is really important to us. It may not be important to Trump, who surrounds himself with, you know, young, good-looking white people, but it's important to me that that Tasty and other businesses that we own are diversified, that we have men, women, you know, lots of different races, lots of different
tall people, short people,
short people, straight people, gay people, everything. You know, I want the whole mix. And it's really important to me. And I think it should be important to every single company. And I worry now that we are going to have difficulty hiring, you know, the smartest person, the best person. I mean, from my own experience, you know, I built Thinkorswim with developers from all over the world, including the US, but a lot of developers from Eastern Europe, a lot of developers from other places. I'm not going to mention everywhere, but clearly, you know, we built it with more non-US developers than US developers. At Tasty, we used more US developers, but as far as our talent goes, I mean, you know, we've been hiring kids that are, you know, we've been hiring kids that are that are here on student visas and H-1B visas that are, you know, that are going to Notre Dame, that are going to Carnegie Mellon, that are going to, you know, USC, Berkeley. I mean, the best schools in America, University of Chicago, Northwestern, you know, like, it's ridiculous that we have to start worrying about, hey, if we hire this kid, are we going to be able to keep this kid? Because we're going to train them. We're going to put a lot of money into them. We're going to invest a ton of money. And, you know, how do I keep this kid here? You know, how do we afford to keep this kid here? How does this kid even want to stay here? How do they go home to visit their family? They can't get back in. You know, it's so
Can I ask you a couple questions?
Sure.
Do you find it interesting that the average, and I'm generalizing here, but that the average developer's salary is somewhere, let's say, between 150 and 200 for like an entry level or mid-level developer?
Okay.
For American developer.
Yeah.
And the average salary for an H-1B import is like $50,000 to $75,000.
What movie are you watching?
And is it not even more interesting?
That's not true. By the way, let's be very clear. That is a patently false assumption end statement. There's no truth to that. Our
No, you've said a lot of things, with all due respect. You've said a lot of things. You've made a lot of assumptions.
Okay.
6 minutes in, I'm going to say a couple of things.
I'm just telling you, though, that a kid that's here on an H-1B visa that's a developer for us is getting the exact same salary as a kid that went to.
That may be true at Tasty, but that's not true at every institution.
In the U.S., it is true. In other places around the world, it might not be true. But if you're a kid going to work for Meta, or you're going to work for Amazon or whatever,
you don't think that that Amazon or these other or like the big hotel chains, it's not just developers, don't exploit the H-1B to pay less money to have a foreigner come in and work, and in the process keep salaries lower, keep costs lower, and that taxing the H-1B is a good idea in order to level the cost with your average American worker.
Not even remotely the case at any firm I've ever even talked to, know of, not even remote. Okay. The difference that you're not factoring in is that the reason you're hiring that kid in the first place is because they're smarter than the kids that you can find here. And that's why. So you're
saying Americans are stupid.
I'm not. I'm saying
you're saying foreigners are smarter.
I'm saying that you should have the option to hire the best available person.
But if you're going to give that job to a non-American, shouldn't that be taxed? Shouldn't there be a penalty for your decision not to hire a young, ambitious, smart American person?
Not in a true capitalist, not in a free market. Of course not. That is absolutely, again.
I mean, isn't that the entire basis of Trump's presidency? Is the giant sucking sound, going back to Ross Perot, of the labor arbitrage in China, the labor arbitrage.
This is not a labor arbitrage for China.
Arbitrage.
This is not labor arbitrage. Labor arbitrage is when you say, you know what? I'm going to hire a developer in Slovenia. I'm going to hire a developer in Russia. I'm going to hire developers in India, which that's different. If you're going to hire a contracted developer in Eastern Europe, specifically the firms that we use, the price is the exact same as the US. But if you're going to go to places like, just as an example,
Bangladesh.
No. In Eastern Europe, if you're going to
Southern Italy, they do it in Calabria. Even right, they don't have to go that far.
Bulgaria. If you're going to go to like Bulgaria, Slovenia, and you're going to go to like Georgia, the developers are about 30% less.
Poland.
In India, they're up to 40% less, but you get 40% less value. In most of those cases, you are not getting the same value. So it's not.
But you're saying that the H-1B does not come at a salary discount to the U.S. passport holder.
Absolutely not.
As a cost.
Absolutely not.
I'm saying that, all jokes aside.
I understand. I'm saying absolutely not.
My perception was very much that the H-1B is cheaper, is a way to reduce the cost of, if I'm going to do 100 developers.
No. I'm sorry.
It's cheaper to do H-1Bs than it is to do Americans.
Not even close. And the reason that we do H-1Bs is because we think that they have more talent, and we think that they are a better fit, intellectually. That's why people do it. The whole reason that America leads the rest of the world, there's a reason why this country is so far ahead of everybody else when it comes to innovation, creativity, technology that's driven by intellectual property, because we do a brain drain of the smartest kids from all over the world. They study here and then they work here. That's the beauty of the system. We are pushing these kids to back to India, back to China, because they can't come in to go to grad school. There's no reason for them to stay here after an internship or after school to apply for jobs, because there's no pathway for them. It has nothing to do. We don't save money. In fact, in most cases, we are going to pay a kid that comes over that we hire on an H-1B, like with an MBA from Notre Dame, as an example, the exact same that we are going to hire a kid that comes from USC, exactly the same, and they're both great programs.
There's no economic motivation.
No, there's actually a loss. It costs us more money because we do also take.
You got to pay the immigration lawyers and all the gibbery juice.
We have some immigration. We always have immigration lawyers on retainer, and that costs us extra money. And so it actually isn't cheaper. If anything, it's a little more expensive, but we want the talent. That's what it's all about. It's just about the talent. The idea.
Because my perception of the Trump-Lutnick thing was that this was a penalty not based on racism, but this was a penalty that this was closing a cost gap in a labor arbitrage. And you're saying I'm wrong about that.
I'm saying you are 100% wrong. And if you read a lot of the stuff from every one of these tech giants, from Jensen Huang down to Zuckerberg, down to everybody else, even like I said, Kevin O'Leary and everybody else, they're all saying the same thing. This is not about that. This has nothing to do with getting people cheaper, because they don't get people cheaper. This is strictly about isolationism. This is about racism. This is about just pure stupidity. Like, you couldn't come up.
You're saying this is just, I don't want foreigners. I want to make it more difficult for foreigners, straight up, old school.
This is going back, to a really dark time in history when you just want, a certain type of person with a certain skin color looking all the same, and it doesn't matter where they come from. It doesn't matter what school they went to. You could go to, I don't want to
Albany.
You can go to University of Albany. You go to SUNY Albany and get your master's degree, and you're going to get the same thing as a kid that's from that comes over from some African country that went to Harvard. Okay. That's the whole thing.
And so you really think that there's no motivation here that has to do with taxing the labor arbitrage, because you're saying it doesn't exist.
It does not exist. And let me tell you something too, because I probably,
I'm going to be honest, I saw this, I was like, it's probably not a bad idea.
I've probably done, on a percentage basis, as much contracting work, because when we built Thinkorswim 25 years ago, US developers were hard to find. So we contracted a lot, and we even tried to buy, firms outside the US. We weren't successful at buying them, but we tried. So I've had a lot of experience, in the contracting space. And it's not the contracting space isn't even a savings. It's like you think it is, because you pay less on a per hour basis, but you also have to deal with a lot of issues that are costly to either fix, that are costly to oversee. It's just that you can, they're like innings eaters. So they more eat time. They pick up, they do a lot of the work, but the reality is you're not saving money on it. Like, nobody's building a platform for 30% less because they're using contract workers or H-1B. That's not the case at all. And you can talk to any CEO, any tech company in America. I feel like I would bet my life on that. There is no savings.
I mean, then I misperceived it, because I literally saw that headline and I was like, okay, I was like, I bet you the delta between an H-1B and an American staffer is $100,000. My hope, maybe I was just, feeling optimistic, was that this might have been a rational action to level the price. But I'm going to take you at your word. You have vastly more experience managing developers and hiring H-1Bs than I do. I just find, and I also just find it's hard for me to comprehend that you would make a policy purely as explicit anti-foreigner. Like, it's so effing crazy to me.
But why?
Like, I still hold on to the desire to believe that there's something rational somewhere in the apparatus.
We're picking up people we have mass people running around this country, picking people off the streets, breaking up families, and doing everything to just, to hardworking people that pay their taxes. I mean, what the hell? Okay, it's effed up. All right, let's say it like it is. It's messed up. And this is not the America that all of us grew. This is not the free market that all of us grew up in. Okay, that all of us believe in. It troubles me that there's not more entrepreneurs, there's not more tech entrepreneurs, and there's not more wealthy people
that are speaking up. It troubles me because it bothers me. Like I said, I can't stand Kevin O'Leary for many reasons, but at least he stepped up and said something this time, and other people need to do the same thing. This is going to hurt us competitively. So I sit on the board of a tech school in Chicago, one of the best engineering schools in Chicago. And their enrollment this year and this next quarter is down by 30%. Not applicants, which is down by like 80%, but their enrollment is down by 30%. They can't fill the seats because before 60 to 70% of the people were not from this country just to go to grad school. This has nothing to do with H-1B visa. These are just student visas because lots of kids cannot get visas to come to the US to study. And they worry if they come here, they're going to be sent home and they're not gonna be able to finish their courses. So the grad schools are dying. The MBA programs, even undergraduate schools, it's ridiculous. I mean, look, you saw how this administration came down on Harvard with respect to foreign students. And on the grad schools, it doesn't matter what the school is, every school. You could take the best grad school in California or the worst grad school in California. You could take the best grad school in Chicago or the worst grad school in Chicago. They're all hurting. And these kids, they pay full boat. They, because they come from wealthy families that want to send their kids here to learn from the best schools. And it's just nobody coming. Nobody. It's ridiculous.
So the thought that was occurring to me, because when you're talking about Leary, because for me, the tipping point in the Kimmel thing, or at least my perception of the tipping point in the Kimmel thing, was when Ted Cruz came out, whenever it was, 4 or 5 days ago.
Yeah.
And basically was like, basically said, I hate Jimmy Kimmel. I hate everything he stands for. I hate everything he says. But I think taking him off the air and threatening the FCC license is absolutely unacceptable. They basically came out in full sort of indictment of the use of the FCC pressure to pull him off.
Of course. I mean, there is no other. I'm
making it. So like whether it's Kevin O'Leary, who's sort of someone who's not easy. You're not going to agree with 98% of what the guy says.
Sure.
But on H-1Bs, he's with you. Or Ted Cruz, who's again not going to be your most agreeable fellow in the mix here. But on using the threat of taking away companies' FCC licenses if they don't remove undesired broadcasters in the momentary political context. I guess what I'm getting at is I do wonder if we're getting to a point where Trump is going to be increasingly isolated to the point where the right wing is, whether it's on the things like the immigration issue or the H-1B issue or on First Amendment issues, this is the first time that I've seen the right wing break ranks with him publicly, I guess is what I'm getting at. Wow. I mean, he's only been at it for 10 months right now, but this past few weeks is the first moment where I feel like I've seen at least public rhetoric from the right that is saying, what the hell is going on here?
Well, you can't have your cake and eat it too. You can't sit there and say, you know what, the Second Amendment protects my rights to own a gun and kill you, or whatever you want to say. You can't sit there and scream about how important it is to protect the Second Amendment and not at least respect the fact that the First Amendment counts too. And, the hypocrisy is coming back to haunt them. And the hypocrisy is how they pushed it past the level of reasonableness. And this is why they're going to lose, virtually all their majorities in upcoming elections. It's not, America we don't stand for taking away somebody's right to say something.
I mean, I could mean that if there's a red line. I mean, that's the biggest red line that we have as a country. There's no question. But that's what I'm saying is the tipping point for Trump, where all of a sudden that he finally has provoked the right wing to begin to separate from him.
Not everybody agrees with everything Dylan Ratigan has to say, but everybody at least respects the fact that you get to do it. You've earned that right. Definitely not everybody agrees with what I have to say, for sure. I understand that. There's people writing me right now saying, you're an idiot, blah, blah, blah. I get that. But I have every right to say it. Whether you agree with it or not, I don't care. I mean, that's what I think. So it is what it is. And we are open. It's funny to me how everybody who's writing, hey, you shouldn't say this, and that, but they were fine with Charlie Kirk spreading all kinds of, ridiculous conspiracy theories and horrible lies and all that kind of stuff. They were all fine with that, but they're not fine with anybody else saying it. It's ridiculous. That part of the discourse, that part of the free speech, when one of your guys says something, no matter how ridiculous it is, I don't care. He has every right to say it. I might not agree with it. I might think he's crazy, stupid, whatever, but I will never take away his right to say that. Okay, because that's what it's all about. And the same thing applies for us, for the people on the other side. You know what? That's what makes this stuff so interesting. That's what makes.
Don't you think I found it ironic because I did think that the left-wing cancel culture was out of hand a few years ago, and I found it comical that all of a sudden there's this conservative cancel culture has become the new. I just feel like both political extremes reside in a world of hypocrisy.
Okay, that's fair. But that's fair. Nobody would argue that.
When it's convenient, it's like,
Nobody would argue that. Both sides, they swim in a pool of hypocrisy. I will grant you that. But
do you think Trump right now is increasingly isolating himself? I mean, so we're going to agree on the free speech thing.
Sure.
But the fact that you have, some of the people on the right that you've mentioned, or like I talked about Ted Cruz and others, I've not seen highly conspicuous, highly prominent right-wing leadership out in public condemning the decisions of the president of the United States up to the tariffs. They're nothing, nowhere. The crazy immigration stuff, nothing, nowhere.
He's done a good job bullying. And listen, the people that run the biggest tech monopolies or mega monopolies in this country haven't said anything either. They've kowtowed to him because he has done things like, essentially he has made their path for capital appreciation that much easier. And so, in Trump world, you take the good with the bad, and you just kind of you swallow it until at some point you get conscious. At some point, you're like, you wake up and you're like, wow, I have a conscience now. You regret it for the rest of your life, but that's what it is.
But are we at a moment where Trump is this an indication that Trump is losing his stranglehold?
Yeah, it's a little bit, but he's also, beginning to display lots of signs of dementia, and he's losing more than his stranglehold. He's losing his mind a little bit at a time, and it's pretty obvious. And there's another thing with Trump that's so interesting is a lot of what he does is really just a distraction. A lot of what he does is he says outrageous things, and because he knows that keeps him, front and center. Like, he doesn't have to come out and say Tylenol is bad for you. Like, just think how ridiculous that is. The president of the United States should not be saying that. But the president of the United States loves the PR. Good or bad, doesn't matter to him. Just puts it out there. So
he has top headline every day.
The president of the United States does not have to go in front of the UN and make probably the dumbest speech of all time and piss everybody in the world off. But he does it. I don't know if it's calculated, because I don't think he's smart enough to be calculated, but he does it because it continues to put him on the front page of everything. And that's all that matters. And to his...
I almost think he does it almost instinctively, like a wild hyena.
And it's worked. And the reality is that it's worked for him. He has pulled it off. And so he continues to do it because that's how he maintains his stranglehold. And so far, so good. Now, what happens in these situations. They always reverse. Always. There is no situation.
You're just talking about the political culture? Is that what you mean when you say they always reverse?
The political culture, the business culture, whatever it is. everybody tops out, everybody bottoms out. And it's that cyclicality that is unavoidable. And I think, who knows when, but that's coming.
Because for me, I feel like I'm going to answer my own question. I think this is a watershed moment. I think this is the first time. I mean, watershed may be too strong a word.
Well, what's the watershed moment? The free speech?
For the first time, you have powerful Republicans in direct public disagreement with the president on, like, he's been running out dumb fuck policies, excuse my language, for 10 months. The obvious absurdity with the tariffs and the destruction of the U.S. dollar. The obvious racism and madness with the masked men running around chasing people, or setting in the federal police, the federal forces, National Guard, whatever, as a police force to political targets. It's not even like he's not even looking at the actual high crime. I mean, there's just one idiotic policy after the next. And there's been absolutely no resistance in public anyway, and no apparent resistance in private. And my hope, maybe I'm optimistic right now, is that the Jimmy Kimmel thing, I don't know about the H-1B, but the Jimmy Kimmel thing was the first thing where the Republicans were in opposition to the president and the sort of conservative, hysteria machine that wanted to use their control of the FCC to control speech. And so I take that as a moment of, and also it's October's almost upon us here. We're a day or a few days out from October, I guess next week, but whatever. So you're gonna, like, this time next year, it's going to be an election, or a year from another election, and the next election is going to be an annihilation of the Republican Party.
I think you said something that's interesting. The thing with tariffs is, whether you agree with them or hate them, the reason some people haven't said anything is because you want to give them a chance to succeed or fail. I mean, obviously, the big lie is that somebody else pays the tariffs. It's just American consumers that pay the tariffs. There's nothing else to it. It's not, Trump always walks around saying, the tariffs made us $1 trillion. That's American consumers that paid $1 trillion. You ripped off consumers for $1 trillion. Okay, congratulations. But for some reason, he thinks that that's positive. I'm not sure. But you have to give it some time to at least play out. I guess that's the logic. With free speech, you don't have to give free speech time to play out. There's no discussion here. Like, this is not something we need to see how it plays out. Free speech is free speech. I mean, you can't debate it. Either you live in a place where you have free speech or you don't.
Right. Either the government controls what people are allowed to say, like they do in China and Russia, or they don't. But the point is, Trump, for the first time, went for the Chinese or the Russian framing in terms of control of information. And it was the first time that I've seen Republican resistance to doing that in public.
Well, good.
Which I'm hopeful is the beginning of, I don't believe everybody in the Republican Party is a bunch of lunatic fruitcake nutbirds. I believe they've been intimidated into silence, and they're terrified, and they're pussies, excuse my language. But I think that, if it would be, the country's gonna be in much better shape to have rational Republican resistance to the obvious insanity that comes from the White House. That's all. And my hope is that the Jimmy Kimmel thing was or is a crack in the door to allow that to happen.
Okay. As much as I don't like Ted Cruz at all on any level, what he did was hedge his political career. And that's, and I think you're going to see more and more people do that, but he hedged his career because if Trump goes down in flames over this First Amendment thing, which I don't think he will, but I think it's all just a cover to hide, to distract off the Epstein files. But whatever, if he goes down in flames over this, Cruz gets to come out smelling like a rose because he gets to say, hey, you know what? I was the only person that stood up and said, it's all bullshit. If you're the first person that stands up, you own that space, which is a very powerful political, that's political currency. and it's really strong. So that's the smart thing. You know, I mean, that's what we try to do here on Tasty, is be the first to say lots of different stuff. And we, you know, I mean, obviously we say what we believe in, but it's also something that we know it carries, it's very valuable down the line.
And my hope is that we're going to get more of that. I guess that's what I'm getting at. Especially if you're telling me that because my perception of the H-1B was that it was an economic arbitrage issue, which you're saying it's absolutely not. You're saying it's just straight up old school racism.
I mean, there are people going back, you know, 40, 50 years, 30 years maybe, that think that, okay, they used to bring in H-1B people. They were cheaper, you know, for data entry and stuff like that. But when you're talking about like core programmers, okay, there was a period of time where in the US, you couldn't, you know, our STEM programs were so far behind. You couldn't even find, like, I don't care how hard you looked, you couldn't find a team of Java developers. You couldn't find really strong Oracle database teams in the US. They just didn't exist. You know, and they weren't available. It wasn't like, oh my God, they weren't there. You know, the system finally caught up with it after blowing up the engineering space after years, but the talent wasn't there. And there was so much more talent outside the US at really good technical schools that it wasn't even close. So I don't, you know, and I think that people,
because the other side of this is basically what you're saying, and and everybody you're citing is saying, is that this just adds a massive amount of friction and resistance to the rate of innovation in the United States. It's basically it's a total self-own. It's like scoring on your own goal. You are the global magnet for talent. You're the global magnet for education. You're the global magnet for capital. Blah, 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 blah. And you're making policies to try to stop that at all costs.
You're making Canada, you know, 20% better. You're making Mexico 20% better. You are boosting these nations, their intellectual know-how, their intellectual property, their ability to raise capital. You know, private equity firms in the US are sitting on whatever, you know, $1 trillion. Who knows how much money they have right now? And they have to deploy that money. For the first time, they are looking at lots of businesses outside the US because a US brain drain is the scariest thing in the world to them. And losing that pipeline of really smart people, you know, it's not that hard to see. Go look at some of the people that run the biggest tech companies. You know, Microsoft, Google, those are not Joe Smith. Okay. You know, these are every single name is somebody that came here, you know, and that what really pisses me off is like, people are like, well, you know, like, I mean, how did Elon Musk get here? I mean, he did get here illegally, but he bought his way in eventually. But, you know, he's another candidate. He has no right to talk. That's how he got here. I mean, it's just one after another after another. It's just unbelievable.
I mean, and that's why I guess it's my naivete. I just find it impossible to believe that a policy that is so destructive to the innovation, the momentum and the culture of innovation would be made for purely racist or anti.
Oh my God. I mean, look who you're dealing with. If this was a fair system, what you would say is, hey, you know what? If you want to hire somebody and they're the best available person and they're going to make this company and this country better and more competitive, paying $100,000 is absolutely ridiculous. You want to charge $100,000 for something? Go charge $100,000 to topless models from Slovenia that want to come to the US. Okay, go charge $100,000 or $200,000 for that. All right, rather than sneaking people through on the Genius Act. That's going to piss a few people off, but I don't give a fuck. But you know what? Let's do that. Let's charge every Eastern European model that wants to come to the US, okay, to marry a rich American guy, $200,000, okay, and forget about charging some kid that's got his PhD from some the best technical school in St. Petersburg, Russia, or in Mumbai, and let's get them to come over here and build the coolest AI tech you've ever seen.
So if the Trump policies are as bad as I say they are, or you say they are, for innovation, I'm going to ask and answer my own question here, but why is the stock market doing so well? And you're going to tell me it's because the dollar's in decline. You're saying basically, like, because if I'm on the other side and say, listen, okay, Radigan and Sosnoff, you guys think all these Trump policies are so bad for America, so bad for innovation, enrollment is down.
Well, I mean, this is something brand new. It's not, hasn't.
No, I know, but with the tariff,
yeah.
why is the stock market doing so well if the Trump policies are so bad?
Sure, and that's totally fair. And the answer is, I think you just mentioned it, is well, the U.S. dollar's gotten destroyed. So basically, the stock market, it's up, what, 2 or 3% on the year if you subtract the dollar decline off the stock market rally. It's a tiny little move. And I think that's a very fair way to look at it. And also, you've got the rest of the world up by significantly more. I mean, one thing people stop talking about is the global markets. China, every market in the world is up significantly more than we are, because they recognize, listen, there's a lot of money out there, and there's markets should go up over time, but other market is up way more than us now, because they recognize we're losing our leadership.
And so your argument would be, or my argument, because people ask me this question, they say, oh, Radigan, you have all these criticisms of these Trump policies and this and this and this. Why is the stock market where it is? And my answer is always, imagine where the stock market would be if it wasn't for all these policies.
That is the correct answer. But the other thing is, you got to remember, stock market is a very cyclical machine that, there's only so much that a U.S. president can do to affect the stock market. The argument, I can make the same argument when Biden was president. We made new highs every single year. The stock market did way better under Joe Biden for 4 years than it did under Trump's first administration. So explain that. The stock market did way better.
The U.S. dollar was robust, and on a dollar-adjusted basis, it's way better.
The stock market crashed under Bush Jr. and exploded under Obama. Crashed or didn't do anything under Trump, and then exploded under Biden. So the stock market is like, people go around saying, oh, look at the stock market's record highs. Well, okay. So was it for Biden the entire time? You guys weren't, talking about that. So I don't think
that's the hypocrisy that we swim in.
Of course. That's why I don't ever bring that up, because that's not that important to me. And I also think the stock market, the concentration of, the top 7 stocks, which have made 30% of the indexes now, and the moves that they've had is just, it's ginormous. I'm not saying that that's not okay. I'm just saying that, you can put a lot of context around the stock market move.
And I'm just going to circle back to my point, which is, for all the horrible, horrible things and all the screwed up stuff, I feel like the fact that the Trump administration was forced to back down on using the FCC to control free speech, that the Trump administration was defeated in their effort to control speech as signs of life in the American democracy.
You can think that. I think that a lot of it had to do with, Disney recognized that this wasn't, Disney recognized internally, I'm sure their board went absolutely ballistic, and they recognized that this is costing us a lot of money. This is bad press. A lot of people are canceling their subscriptions, and this is not good for our business at all. And, there's other things we can do in the future, but that's the optics of that were so bad for Disney. They were so good for Jimmy Kimmel. They were so bad for Disney. And I think the optics is what, I'm not sure Disney.
You're not so sure that it was a moral victory for the First Amendment, as much as it was the commercial influences.
Yeah, I don't think Bob Iger had a come to Jesus moment. All of a sudden he woke up and, and he thought, oh, this was, I think that the pressure, was, that was nasty.
Do you feel like, not that this is a kind of a small thing, but Bob Iger was one of the most celebrated CEOs in the world in his first tenure at Disney, 15 years ago or whatever.
Yeah.
And I feel like, and then he left and had it was a disaster. Which was reflected on him, a bad succession plan, all the things.
Yeah.
And since he's been back, I just feel like it's one of those things where, be careful what you wish for, because he was a platinum plated icon of CEO-dom when he retired the first time, and I feel like he's really besmirched himself the last 4 or 5 years in this.
The challenge is when he came back, the stock traded just over 100, and now the stock's 113. It's been years. So, the Iger movement in Disney has not, it's underperformed the market at so many different levels. It would be hard to call it a success, but he stopped the bleeding. Let's put it that way. But again, listen, CEOs make mistakes. I get that. And I do think that it's good that Disney, they recognized it and they reversed it, which is more than I can say for CBS, with Stephen Colbert or again, the optics of that. But, that's a different situation now because it's way different when you're owned by Disney or you're owned by Larry Ellison privately. He didn't give a crap. That's a whole different world.
Speaking of Larry Ellison and privately owned, do you feel like the TikTok deal is going to have any consequence?
That's a really interesting question. I didn't think we were going to go there, but I will tell you, I hope not. What you're saying is, do you think that TikTok is going to become a conservative social media network?
Or just a weaker product?
I mean, because of Larry Ellison.
Less sizzle, less TikTok-y.
Well, everybody that owns it, except for the Chinese, whatever percent they maintained, I don't exactly know how the breakdown is.
Right-wingers.
They're all right-wingers. Jeff Yaz at Susquehanna is a hardcore right-winger. And he owns whatever. He was probably the biggest shareholder at one point. I don't know what he owns today. And then, who else owns it? BlackRock, or not BlackRock, Blackstone. And
then Larry
Ellison. And I forgot there's another conservative up there. I can't remember who it is though. I don't know. I don't think those guys will have much say, honestly. They'll be able to choose, the CEO and the board, but I don't think they'll have much say on the algorithms. TikTok algorithms are absolutely brilliant. TikTok is the best social media platform, hands down, over any other platform by so far. It's not even close. Like, TikTok blows away every other platform out there. I think they are not going to mess with it. I would be really surprised. And I think it's so much head and shoulders better than anything else that I don't think they'll mess with it.
I agree with you. I think really it's just politics at the end of the day. The optics of being Chinese owned were less appealing, and the optics of throwing the Chinese out is good political points to score, I guess I would say. Like it's an easy political victory.
All right. Yeah, sure.
But I'm a little bit discouraged that you don't think that the Kimmel thing was a victory for the First Amendment.
I didn't say that. I do think.
Well, obviously it was a victory, but that you don't feel that the First Amendment is that well protected at this point. That the First Amendment is still in your mind very much at risk in the current regime.
Don't you feel that? Is there a single person in America that doesn't feel that right now? If you don't feel that, you are not alive. If you don't think that in your entire lifetime, Dylan Ratigan, or my entire lifetime, if you don't think that this is the biggest test of the First Amendment in the entire time I've been on this earth, I can't even. There's nothing even close to this.
Yeah, no, I couldn't agree more, and I hope that everybody that has the power to do so will rise to the occasion. I hope it doesn't just come down to the economics of the Disney boardroom.
He's Dylan Ratigan. I'm Tom Sosnoff. That was a fun one. We're going to get some feedback. Dylan, thanks so much. We'll see you next week.
In overtime.
Yep. Thanks.
Bye.
Dear Karen, thank you so much for the relationship advice. Of course, since you met your husband in high school, I should obviously just go back to high school. Can't wait to win the Nobel Prize for my development of a time machine. Signed, Regina.
Sometimes it feels good to get smart. Get even smarter with live trading insights.
and some life taunting.
You're mistaking me for someone who cares.
From the smart mouths at Tasty Live.
I did not like the close yesterday in the NASDAQ or the S&Ps for the good kids. I hung in there all day until right at the close.
I am not an animal. I know that. Don't say I'm...
We're live, dude.
Is this good for the good kids?
But generally speaking, when we're talking about risk-free returns, they're 1 or 2% around the globe right now.
The U.S. government has filed. Do you not care about what I'm doing over here?
I care.
Ignoring
okay.
the person speaking to you. That's at 7:53 on Friday, and I don't want to say it, but I got bingo! Sazla bingo! I won, John. Can you come in and validate this, please? I would like to have. I have the times and the references.
Yay!
Good for the good guys.
Woo! We got a winner.
Pounds
winner,
and claps
chicken
on his
dinner.
desk. You get the free square of the bat in the middle. Accordion hand gesture. You take it right here, John, and then ignores person speaking to him.
All right, who do we need to fire for this?
Got the need for speed? No problem! At Tasty Trade, you can turn smart ideas into real trades with just a few clicks. Wow, that's fast. Tasty Trade, make your move.
Global markets never sleep. Explore them with Forex on Tasty Trade. Get in on 80+ Forex pairs, 24 hours a day, 5 days a week. FX marks the spot. Trade it on Tasty Trade.
What is going on, everybody, and welcome back to today's assignment. Dr. Jim had told me he found the cure to, what was the cure to again?
It's the Fountain of Youth. Brian Johnson's research led to me discovering the way to reverse aging. So I will be dropping this tomorrow on today's assignment. You guys better tune in. It's a big event.
They're like, oh, here they go again. 45 minutes later, we're back. Today we're going to talk a little bit about new trades, the new market environment. We got the new rate cut, and really just give a little bit of an update within this 30-minute window. So we got one slide prepared today, just talk a little bit about the assets, the metals, and then we're going to do something a little bit different, something we haven't really done as often. And we're going to be hopping into some of these charts. We took some futures trades this week. We're going to break some of those down. We have a couple green trades and we have about 4 or 5 red trades, but I'm going to show you how we took those trades, where we took those trades, and how we managed them, thinking about the point system when it comes down to trading some of these futures. It helps keep the risk in check a little bit for the day. So we'll dive into that. Anything new from the last 45 minutes, though, brother?
No, nothing new. My short on RGTI that we put on 45 minutes ago is doing all right.
Let's go.
So that's pretty much.
What was that again? Was that
thing that's changed in my world?
In the money put, or what was that?
No, that was that 2x1 that I did. The 2x1 to the downside. So yeah, looking okay right there. I can't complain. And after I shaved 25 years off my life, I'm feeling pretty good about things.
No, I know. Not much has really moved in the market since we were on last about an hour ago.
What did we do to deserve to get you twice? I hope that's a compliment. I hope that.
I don't know how to take that.
Yeah, I was gonna say. Yeah. I hope that that's complimentary there.
They said again.
Again? Oh, these two.
No, we can go ahead and jump into the first slide here. But new trades, new market environment, and let's get into the first one.
The only one.
What's that?
It's the only one.
We got one more.
Well, yeah, the first one. Yeah.
There we go.
Yeah, man, it's you. What the heck?
I clicked.
This guy's acting like he doesn't have control over his own slides.
I clicked the keyboard to my left. First cut of many. I don't know. Jerome Powell was speaking of a potential 2 more cuts heading into the end of the year. So maybe this is a first of many more cuts into the end of the year, and then maybe into the beginning of the year, depending on how these pan out into the Q4, which I can't even believe we're in October, November, December. We're headed into Q4. How did these first 3 quarters flew by? How did they feel for you?
Yeah, I guess 75%. Time just speeds up. It has been very fast. I mean, I feel like we were just doing Yeah, I mean, I feel like NVIDIA Q2 earnings were like yesterday.
Yeah, no,
and somehow we are already almost into Q4, almost to the end of the year. We got the fall weather is holding out, though.
It is holding out. I was speaking with somebody in the elevator this morning. I was like, I'm surprised it's still warm. They're like, yeah, we got a good 3 to 5 weeks left. I was like, is that so? I was like, I don't remember Chicago being this humid either over the last few months. We're not going to get off. Pivot too far off track here, this segment. But the one thing I wanted to make to that point in terms of weather and being over here, these thoughts, man. But there's been a lot of spiders lately in a lot of the high rises. I don't know if you recognize there's a ton of spiders lately out here in Chicago. So I went on TikTok. Somebody recorded theirs and it went viral. I read the comments. They said it's been a little bit more humid this year in Chicago than it typically is, and they like that. And then obviously they're a little bit more prone to high rises, I guess, because they can catch their food a little bit easier. And I was like, are they crawling up these buildings?
I know
you know what I learned?
They get blown up is the deal. Yeah.
What's the deal with that?
Yeah, I think that's interesting. Yeah, it's like the wind comes off the lake. Like if you go to the top of the Hancock building and like you're on that viewing deck,
I'm very close to the lake.
It's
That's
just
the thing.
crazy spiders, like all up on top.
Say that again. I'm sorry. You said next to the what?
If you go on to the top of the Hancock building, like there's like a viewing deck up there. It's just like all the windows are just crazy spiders and spider webs, like big spiders.
Okay, I mean, they're like this size.
I don't fool with no spiders. I'll put that out there too. Like bugs don't bother me at large, but spiders, I don't do spiders.
Also, it depends the size of the spiders.
No problem.
And we're way outnumbered, by the way. So a million spiders in one man, I don't know. But anyways,
throwing it back in.
We've entered into a new phase with the Fed's first rate cut. We got equities at all-time highs. We have metals at all-time highs. We have gold at all-time highs, so gold specifically and silver specifically. So we're going to keep an eye on those markets. We don't really, or I don't want to project. I don't trade too much gold. I was going to say we don't trade too much gold.
We don't trade too much
gold. So we're going to be taking a look at that market a little bit more often together and just familiarize ourselves a little bit more with that. So excited about that. Anything else to add on to this slide before we hop into the charts?
Yeah, I mean, I think the point is right here on the slide, but I think it's interesting that we have risk assets moving up, or risk hedging assets, what's generally believed to be risk hedging assets, moving up alongside the rest of the market. That's typically the opposite of what you expect, but we're getting the gold boom anyway.
Yeah.
Question for you in chat: do you think inflation will continue roaring back? Stagflation? Are the rate cuts appropriate?
I don't know. Would I be surprised if inflation came roaring back? No, I wouldn't be surprised.
I don't think this one's enough to do it, the one that we just got.
No, most definitely
moving
not.
forward, as we're talking about potentially 2 more for the rest of the year, I do think it becomes a very real possibility.
100%.
But there are bigger and brighter people that are working on that dual mandate to try to make sure that doesn't happen.
That's completely valid, but the thing is, we do talk about bigger and brighter, but the thing is, there has been some...
You think Powell's an idiot? That's what you're saying right now?
Maybe. No, I don't think so. But I do think that I understand these guys, they have degrees, politicians and all this, but I do think we can clearly look back and recognize the best decisions weren't always made. And these are like our most quote unquote intelligent people you would think we would put in those type of positions. But I wouldn't be surprised if inflation comes roaring back, but I don't know. Maybe we get a surprise 50 cut, so 75. I'm curious about what the surprise is going to be in the next 3 months.
Yeah.
I'm excited though.
Yeah, we've shifted all the way around now to where I think no cut at any time would also be a surprise.
Yeah, right.
So yeah, it'll be interesting to see what they have in store.
Yeah. Well, we can jump over here to these, or to the charts here now. But I know it looks a little different here, right? We got the charts pulled up. We got the Tasty Trade broker connected right to the charts.
Blue and black.
We got the white background, blue and black charts. Thanks for the reminder that they're blue. I'm colorblind. But no, we're rocking it a little bit different here. But we're gonna talk a little bit about these trades. Big Deal is always missing out on some of these trades I think he might have been a part of. But I want to talk a little bit about, trading these futures contracts. I know somebody said in the chat earlier today, he said, is it a good idea to only be trading futures? Is it a good idea to only be trading these products? And it's like, I think there's definitely a benefit in being product indifferent and being able to recognize other opportunities in different markets and being able to take advantage of those whenever you want to take advantage of those. Also, it might give you more confidence, insight, whatever it is, understanding other markets relative to your own market. So just wanted to talk about some of the trades that we had put on with these very directional futures and how we manage our risk with a product like this, because we know you don't have to worry about time decay, but theoretically, if the market keeps ripping to the upside and I'm shorting a futures contract, that can theoretically keep moving up. So it's like, how do we manage ourselves and our positions when the market moves against us? So I want to touch on that a little bit today.
Yeah, absolutely. And I think you make a great point about being product indifferent. I think that's the best way to possibly put it, is the best way that you could be. I think that being well-rounded is great in all facets facets of life. But I think that learning how to trade other markets and I think that it starts to bring connections. You might find an angle that you like in the stock market and decide, oh, this would be better to attack through futures. Macroeconomic things might be going on, and you may be able to attack that through Forex. There's all types of different angles that you can take, and I think that the best way to be, and I say this as someone who trades futures very little, and you guys have heard how little I know about Forex, but I think that the best way that you can be is well-rounded like that and be able to bounce back and forth between products. So, yeah, I'm with you.
Yeah, I remember I put on my first pairs trade. Tom was like, yeah, hit that button. Put that, but I'm like, bro, I don't know what I'm doing right here. I'm live on the show. You want me to? All right. It was just kind of getting thrown into the deep end. So 100%. Best teacher is experience. And I don't think I would have ever traded a pairs trade. Probably would have never said that if I wasn't guided.
Yeah, absolutely.
And strategies and products.
And a funny analogy that I would draw here, but it is very accurate and translates, is that like it's like if you want to think about it in sports context, if you think the Bills are going to win, that might be a good bet. But as you dig deeper, you might realize that Josh Allen over passing yards is an even better bet at the exact same price. And so there are ways that you can use your overall sentiment to find the best market to attack it in. So anyway, yeah,
100%.
let's talk management.
Let's talk about it. Let's talk about management.
Position here.
Starting yesterday, I got long right out of the gate. And I decided to cut that position. If anybody wants to follow along all these trades, every single one of these trades is going to be posted on the active trader follow page on the Tasty Trade platform. If you want to check out the exact price points and where the stop loss is getting hit and things of that sort. But we got long here in the morning. My initial bias was long out of the gates. What I think is going to be really cool is to touch on some of these ranges here, because we pull that from data and statistics by using something called the volume profile. That is just a distribution of volume. And because it's a bell curve, it has like the one standard deviation, which is the middle of the bell, and then we got the two standard deviations, which is the outer side of the bells, and that gives us a great idea with where most of this trading activity is taking place and where most of the interest is relative to the trading activity. And the distribution of volume, which is the volume profile, it really just gives us a good idea because it's volume over price. So we get to kind of see on the side where most of the trading activity is occurring at whatever price levels. And that's just to give a little bit more context as to what we were looking at in the first place. But we noticed that this market was very active here. After we traded to the all-time highs, we pretty much traded in a range until this morning. So we had a lot of let's just say activity at that level. So there's a lot of market interest. We understand that important decisions are going to be made right here. So it's not more of a case of I'm thinking like, okay, I'm going to be right on this trade. We're going to send it right back to the all-time highs. It's more so just a sense of the market is going to make a very big directional decision here. And let me see if I can position myself accordingly relative to my risk to be able to catch some of that move. So that's all the thought process there was. We didn't know the market was going to sell off clearly, because if I knew the market was going to sell off, I wouldn't have gotten long in the morning. But after a couple minutes, I got stopped out. I usually put in the stops at the lows, or usually an area that invalidates my entire thesis. So I stop out of the position, but this is still the same price range where we still have more room to the downside. We can get into all the weeds another time, but just really trying to frame a little bit of the context and the whole reason for switching the bias like that. Because I think sometimes you can be careful for getting long and then, let me get short. Let me get long. Let me get short, and get chopped up in that directional movement in the market. So the bias was long, was looking to get long, stopped out, flipped my bias short. I think we were talking in the morning with Big Deal here. We were talking about how if the market comes and reclaims these prices, I believe I had my stop loss in somewhere around these levels, and I think I was maybe a tick or two away from the stop loss being hit, because you can see later on in the day we rallied up back towards that high where I was looking to get short, and I had my stop loss in at that level. And I remember just thinking in my head, like, I'm fine if that stops me out. I'm just explaining the thought process here, because sometimes it can be really difficult sitting in some of these trades. But the way I was able to just sit in a trade like this was just because I accepted the risk on the trade. I'm like, okay, I got about 10 points of risk. If I have one contract on, that's $20 worth of risk. Now I can go over, we can prepare for the shows, crank some data, do whatever, because now you don't have to worry about that. Your trade is being managed. You don't want to have to sit there for 2 or 3 hours of the day to see how this market is going to pan out. But anyways, we ended up selling off later on in the day. I think what news came out that we touched on it. We were on air. We managed this one yesterday.
It was Powell said stocks are highly valued.
Yeah, so I think Powell said stocks are highly valued, and that helped kind of get the market out of a funk, and then we finally broke out to the downside. So we came back on Wednesday. We managed this one together. We ended up getting out of the trade, and I remember I was kind of like, oh, I wish I still had more contracts on for more of the downside move. But at the same time, do I want to sit in this market if we get a potential bounce? Because it's going to take back a lot of that reward. What's the size of my contracts? How many contracts do I have on? So in hindsight, it's like, yeah, kind of glad we made the decision to take it off. But at the same time, it's like, if we do head lower, am I going to be okay with that internally and emotionally? After that sell-off yesterday, we covered. Emotionally, after we got off air, right, guys? We were on air and I covered the position. You guys didn't see this, but this is why I think this is fun and this is great. I took another short, like right after we got off of air, because remember I was itching. I was like, I can't believe I don't have another contract on to be able to catch the potential extended move to the downside. I got short, and literally after a couple minutes, I was like, Errol, it's not a good trade. This was a trade that would have upset me if it came back and stopped me out. So I kind of juggled with myself in that moment, like, am I going to be okay if this position stops me out? Like, no, I'm going to be very salty, and I don't want that to seep into the next trades moving forward. If it's a trade I'm willing to take risk on, and I'll happily get stopped out. So just a couple minutes after entering that trade, I just immediately got out and called it a scratch. And I was like, I'm going to hold myself accountable. I'm going to be patient, and I'm going to wait for what I told myself I was going to be waiting for. If the market would have sold off from there, great. But the fact that that wasn't my game plan made it not okay. It's okay to be wrong. It's okay to get stopped out. But if that wasn't a part of the plan, then it's like, you're not being very disciplined right now. So I kind of had to catch myself right there.
Yeah, and I also think it's important, and I would be interested to hear your thought process and how you do it. And it's sometimes hard to determine. I guess what I'm trying to say is getting stopped out, exiting is not the same as repositioning. It doesn't mean that you're about to reposition, but it can be really hard to draw those lines between when you get stopped out and when you should maybe abandon your original conviction and go the other way, which is what you did at the beginning of the day yesterday. What's your thought process on that? How do you choose to attack whether you're just getting stopped out or if you're going to do a full reposition to something new?
So that's a really good question. I like to find levels in the market. I call them the IP, the invalidation point.
Okay.
Now, let's say our invalidation point is, sitting over here, which I'll show my invalidation point, right? My invalidation point was in this region. Let's say 24,971. Let's say before I get into the position, I know I'm risking 20 points. 20 points is going to be my invalidation point. I'm sorry. Let me rewind real quick. Let's just use something visual. And I forget I have the drawing tools right here, so we can make it a little bit easier.
Oh, yeah, man. Dude, give us some doodles.
Oh, bad. I forgot I got the doodles, the drawing tools. Where'd my doodle? Oh, let me see. Where my other tool at? Boom, boom, boom. If I can grab this.
Not actually. Is it?
Where did my?
We're clearly very proficient in trading views, as you guys can see here. Is it two above that one? Is it the one below the magnet? There we go. Yeah.
So let me take that off. Got this popping up over here.
Oh, this is sweet.
We'll scratch it and we'll come back to it.
Sometime we will figure out how to draw on this, and when we do, it's over. We're going to have the most educational stuff you've ever seen in your life.
But to your question, I have an invalidation point, and it was when do you know when to just switch the bias? So pretty much when do you know when to stop fighting the move in the market? Because I've been in trades where I get long, I get stopped out. I get long again, I get stopped out. I get long, I get stopped out. I'm like, okay, when do I stop letting the market just whoop me right there? But it's really just finding the invalidation point. I think it's finding what you're trading and why you're trading it, but just having the invalidation point. Like this is. So I can explain the invalidation point in terms of the logic we explained with the bell curve.
Sure.
If we had a volume profile right now, and I wish this trading tool wasn't acting funny right now, but if we had a volume profile right now, this rectangle right here is the value area. That's where those levels actually came from.
Dan, watching us operate charts may be like people watching you sing at karaoke, but the difference is that you are not supposed to be a professional singer.
How many traders does it take to get the drawing tool? But So this range right here, this is where most of the trading activity occurred. We can't see it right now. I'm not going to bring up the volume profile now, but it is a bell curve. That range is where most of the trading activity occurred. And think about it like a high volume node, right? Most of the volume coming out the side at a specific price level. We got more volume coming in at a specific region, just like a bell curve. Most of the activities in the middle of a bell curve. So because of that, there's a lot of orders in that region. And what typically creates a range-bound market is the amount of orders within that region, because it's a thick market. So it's more likely to be slower and more range-bound because it's a thicker market. Same exact reason why ES moves slower than NASDAQ, because ES is a lot thicker market. So it's going to move a little bit slower. It's going to tend to be more of a choppy market. Now, it's called the value area low because it's the bottom end of the first standard deviation for the trading activity. This line right here, I was looking to buy if buyers were present here. I was looking to buy, so I was looking to get long. And if we sell off and we don't support that level, it lets me know, okay, if price is going beneath that level, the trading data doesn't support that there was market interest at these levels, so there's a potential for the market to sell off. It doesn't have to, because we don't know if banks, institutions, big money, or hedge, whoever it is going to step in and start placing some passive buy orders, and then they're going to support the market, and then it's going to rip from there. We just don't know what they're going to do. But from a trading activity standpoint on the volume profile, it did show a lack of market interest at that level. And I also believe, as to why it kind of acted as a level of significance there. So that was a little bit of word jumbo. Whenever we have some more of the tools to be able to explain this a little bit better, we'll do that. But again, it really came down to not being married to the stock and just being okay with stopping out and kind of just seeing what happens. Because in hindsight, it looks like a great trade, but in the moment, I had no idea it was going to be a good trade. If anything, I thought I was going to get stopped out.
So you would say that you prioritize volume over price action as it pertains to trading in this context?
Yeah, I would say so. I would say that the price action and the technicals are extremely helpful for managing your risk. But in terms of, we got a double top here, we saw this, we got a double top, so I flipped.
Yeah, but I mean in a stop loss context, you're never saying like, at this, you are obviously saying at this price level, I'm going to get stopped out, but it's because of volume. It's not because of that price level inherently, most of the time.
Exactly. Because I think price can be very manipulative.
Sure.
I think price can do things that the market didn't tend to do or wasn't a real move or whatever the case is. Typically, it's like, does volume support this move? And if it doesn't, if it keeps ripping, cool, I don't even want to touch it. But if volume does support this move, that's going to be more significant information for me to manage my trade, whether it's taking profit off, whether it's getting out sooner, maybe, or maybe it's just a decision and not taking the trade altogether.
Yeah, I mean, I think that's a very interesting dip into efficient markets and efficient market theory, because you're essentially saying the volume profile says that the majority of people believe this should be the price. So when we get too far away from what the efficient market believes should be the price, that's not somewhere we should be.
Which is called what? Fair value.
Yes.
Which the value area comes from literally a standard deviation. And it's funny, in markets, which all markets are in auction, which you kind of just alluded to, is just the level where buyers and sellers agree on price. And that's why we get that range-bound type behavior. And it makes sense. One side of the market's not being more aggressive than the other. Buyers and sellers are bidding and selling for that specific price range. Everybody is happy right now. But yeah, what you alluded to was exactly the point.
Of course. Yeah. Well, yeah, that's interesting stuff.
Oh yeah.
90s flashbacks earlier were a lot of fun. Get some nostalgia.
Yo, we were talking about how we had a good time with that too after we had gotten off the first segment.
Gus needs a big chain and a gold tooth. I could maybe get behind the big chain, but I'm not going for the gold tooth.
You know what's funny?
Get some grills I could pop in and out maybe.
That'd be fire. You get some, I'll get some. you know
My main goal is to blow up and act like I don't know nobody.
Cut off the day one. No, I'm looking at the live show at the same time. I don't know, you give me a kind of a vibe too. I don't know what you communicate. Like, you got a nice flow, got the stash. I'm just looking at it from that angle. And it's like, I don't know what it is, but like you remind me of, I don't know. I don't know. But
I mean, I think I look like, which kind of what I am is just a like baseball player that does not play baseball right now. That's sort of been the vibe. I think that's always been feeding in.
Dan said chill out.
Tooth is a little much.
Yeah, he said chill. It
was his idea. He suggested it. Lawrence Fishburne in Kings of New York level. Okay, you got me Googling now. Lawrence Fishburne,
Kings of New York level. Dan, where are you from?
Yeah, that's a good question.
Where are you from, Dan?
Oh, the chain. You're talking about the chain. I was like, I don't look like remotely like either of these people, but the chain, I'm seeing it. I know who Lawrence Fishburne is. Let me make that clear. That's not a surprise. I didn't realize we were still talking chain. I thought this might be a hair or mustache analogy. Giving me Tom Selleck because of some 1970s Bray band. Yeah, you guys are piecing together the Halloween costume here for me. I have so much ammo for
what is
what
your
I want to do for Halloween
this year? We touched on that. You don't have.
I don't have any concrete plans. Okay. Do we? You don't know. I don't know why I'm about to ask you. Do we wear costumes here? I don't know what we do.
I'm down though.
Yeah, we can do it.
I don't know what the move is. What day does Halloween land on this year? I forget. We talked about it.
What the hell kind of question is that? It's October 31st. Oh, you mean day of the week?
Yeah, day of the week.
Oh, okay. I was like, it's
what the hell kind of question is that, Gus?
It's not Thanksgiving. It doesn't move with the years. It's a Friday.
Okay. Oh, it's gonna be a vibe then. It'll be a vibe.
I'm reasonabely certain.
Spooky market.
Yes, it's a Friday.
Spooky markets. It's been spooky markets the last couple days. But
is it perhaps a witching day?
Yo, that would have been good. What if triple witching was on Friday the 13th? No, after we took that trade, we took one more. We were being a little bit disciplined and cut it. So as you can see, I'm a huge proponent of cutting losses quickly, especially when it comes to trading directionally. There's no time that we can bank on. So if we're wrong, we can really be wrong. Just like the long in the morning, we would have been holding this long to the downside at these prices, which would suck. Huge proponent of cutting losses.
The horse's name was Friday.
I was waiting to see what was being said. I was waiting to see what was being said because it literally looked like I looked at you. I felt the energy. I'm like, let me read this.
I was sitting on that forever.
I felt it. I literally felt it.
Oh, man. Chi-Town folks. No, to answer your question, Errol, we live in Chicago now. Errol is originally from Tampa, and I am originally from Houston, Texas, more recently College Station, Texas. Gigamags. Yeah, Nick did go as Tom last year. He actually still has the Tom,
I remember that.
He's got the Tom wig on his desk still, like now. I gotta stop doing motions with my left hand and putting it in your camera, man. I gotta be a right hand motion kind of guy. Anyway, do you have any new positions since we were last on?
No. With that being said, we took a couple trades today. If you look on the follow trade page, we managed them really well. There's a couple trades. We had about I think one of these trades was like a 2-point stop. The other one was about a 5-point stop. I think this one is a 5.2 point. Look, I get it. These were both short positions. I know having a tight stop made me miss this entire run, but I'll take the latter. I'm going to take managing my risk all day.
I will give you one more question here before we go off, is using stop losses this frequently, how do you don't ever do stop losses to the upside. You're always choosing your exits. My question here is, if you are using stop losses to get out in profitable trades, how do you balance between tiny loser, and then making sure that the profit is big enough to cover up all of those?
Oh, that's a really good example. That's a really good trade. That's a really good example that I think we'll have to bring up with the trade.
Sure.
To really articulate through that.
Sure.
But I know exactly what you're talking about.
We'll do it tomorrow at noon.
Be amazing. For the whole hour. Come back for some 90s flashbacks. So, no.
We're doing trade theses and 90s flashbacks.
We didn't get to get through every single trade, but if you want to see how these trades are being managed, it'll be on the follow trader page. Gus and I have been putting on more trades this week. Make sure you guys check us out. Let us know your thoughts on management on some of those positions. We'll see what some of these Chinese companies do. I think I put on Baidu literally yesterday. Hopefully that fizzles out, that good news. But anything else you want to add before we hop out of here today?
Yeah, nothing new. I suppose for your sake, I hope we impose some 500% tariffs on China or something. we gotta drive that thing down.
We need to get that.
We need something equally parabolic to happen to the downside.
Yeah. No, again, as always, thanks for taking the time to hang out with us today. We will be back tomorrow at 12 o'clock at noon, and we'll catch you guys next time. Peace.
Dear Karen, thank you so much for the relationship advice. Of course, since you met your husband in high school, I should obviously just go back to high school. Can't wait to win the Nobel Prize for my development of a time machine. Signed, Regina.
Sometimes it feels good to get smart. Get even smarter with live trading insights and some live taunting.
You're mistaking me for someone who cares.
From the smart mouths at tastylive.
I did not like the close yesterday in the NASDAQ or the S&Ps for the good kids. I hung in there all day until right at the close.
I am not an Don't I know that? Don't say
We're live, dude.
Is this good for the good kids?
But generally speaking, when we're talking about risk-free returns, they're 1 or 2% around the globe right now.
The U.S. government has filed. Do you not care about what I'm doing over here?
I care.
Ignoring
okay.
the person speaking to you. That's at 7:53 on Friday, and I don't want to say it, but I got bingo! Sazlo bingo! I won, John. Can you come in and validate this, please? I would like to have. I have the times and the references.
Yay!
Good for the good guys.
Woo! We got a winner.
Pounds and claps
chicken
on his
dinner.
desk. You get the free square of the bat in the middle. Accordion hand gesture. You take it right here, John, and then ignores person speaking to him.
All right, who do we need to fire for this?
Got the need for speed? No problem! At Tasty Trade, you can turn smart ideas into real trades with just a few clicks. Wow, that's fast. Tasty Trade, make your move.
Hello, Tim Knight here, and it is time for the wonderful world of charting. We've got some red for a change, which is cool. I was a little nervous yesterday morning when I made the big switch on precious metals. Standard disclaimer, long-term, bullish, absolutely. I might just have to bring my puppy dog in here. He's going to be scratching my door. I might disappear for a second. We'll see if he keeps at it. Anywho, yeah, got out of Palladium yesterday 100% and shorted the miners. I wrote a post about it before the open yesterday, talked about it with you yesterday, and it worked out. We're going to look at those charts in a second. Excuse me for 7 seconds. I'll be right back. Don't you worry. I never break a promise. Whoosh. Do quicks for no man. Anyway. Let's continue on with the charts. Here we go. We start with the spiders. My goodness, 2 red bars in a row. This doesn't seem legal. Surely our friends in DC will have to do something about that. But we were at lifetime highs yesterday on an intraday basis, but we didn't end the day as a red bar, and we're red again today. Keep it up. Another 100 red bars in a row, and we'll call it even. How's that? The diamonds are also down a bit. Red day yesterday, red day today. There's no particular news. It's almost more like a lack of news because, you know, we're weeks away from earnings season. There's no meaningful economic data going on right now. The only news that happens day to day is somebody among the quintet of AI giants writes each other a $100 billion check, or more likely a $100 billion deal, and people get all excited about that. And as I said yesterday, it's starting to dawn on people that there's no revenue here, there's no profits here. This is just self-dealing. But instead of one company dealing with itself, it's sort of like a handful of companies dealing with each other. Oracle, OpenAI, NVIDIA, Oracle, OpenAI, NVIDIA, and so on. And after a while, people are like, BFD. So anyway, the efficacy is diminished. Don't trade BFD, by the way. It wasn't an idea. Here's the cubes, also down, and SMH, because there's no aforementioned swap today, is down a little bit. I've gotten, as I said, more aggressive on the short side. I got 25 positions on the short side now. Everyone profitable, which feels good since we were at lifetime highs hours ago. And of course, I'm hoping that I can stick with them for a while at good prices. So yeah, I went full bear yesterday. My dabbling in the bull side with Palladium, for now, is done. Emerging markets are a little bit squishy. Haven't done much for the past 6 trading sessions, as you can see. We're just ambling around in a quite narrow range. In particular, China has had some dynamism lately. Alibaba, symbol BABA, has been a particular boon to the Chinese market, but there's only so many times Baba can pop. Baba was an AI lift today because of its own. Actually, I correct myself. Yeah, NVIDIA did do its thing. NVIDIA and Alibaba had an announcement. So we're in the press release economy now. Press releases will keep us afloat at these risible valuations. Now, let's talk about precious metals a little bit, which is a bit of an obsession of mine. Here's palladium. We've talked about it many, many times. The last time I pulled this stunt of getting out completely was here on this day. And I worried about it then too. And luckily, that was the right move because it went down, 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 down. And I got back in again, but I got out again yesterday, right there, as we discussed. And we've got a nice big fat bearish engulfing pattern today. So for the second time in just a couple of weeks, it seems that I've managed to get out while the getting was good. So that's nice. But across the board, precious metals are kind of feeling the hypoxia of their lofty altitudes. Silver is down about 0.75%. And these could fall a ways. A number of weeks would be nice. It's happened in the past because we've had drops all along the way, kind of a stair-step style. And it seemed unrelenting as of yesterday, which made it all the crazier that yesterday I flipped on them. But it worked out. In particular, gold, GLD, the front month of gold is down $64 plus. That's pretty good. So we have done away with all of yesterday's gains and all of Tuesday's gains. What is today? It's Wednesday, I guess. Okay, Monday and Tuesday. So yeah, we've undone the gains for the week in the past few hours. And if it gets really hammered, I'll say it for the 19th day in a row, if we get down to here, that would be, I think, an extremely exciting purchase opportunity, which paradoxically is about when people will be so disgusted with gold they don't even go near it. So I'm hanging on. I'm hanging on to my dust. I'm hanging on to my GDX short. Speaking of GDX, here it is. We were at lifetime highs yesterday. That's when I shorted it. We have crossed below this gap. So we will say sayonara, boink, to that gap right there. So we've sealed that up. How long will I hold on to it? Gosh, I don't know. It's been an awfully quick ascent. The drops in recent months haven't been that substantial. The last decent drop we had was around about here. That's about the length of time I would love to see. A few weeks of weakness and people sort of get fed up with it. So as tempting as it is to take quick profits, I'm not going to do it. Even our old favorite, which we've mentioned countless times here, DRD, even DRD is finally selling off. We had not a lifetime high, we had a multi-year high, multi-decade high yesterday, but we had a shooting star pattern on that. And we got a big fat red candle, the first one in months. And so that's progress too on the bear side for precious metals. And one last direct gold thing. Here's GC itself. This is the long-term continuous contract of the gold futures going back to the start of the millennium. You can see the principal base in green and then the superset of that in blue. And we've had this incredible run. And in terms of the equivalent level to drop to around $34.75, about $300 less, that would be sweet. That sort of level, yeah. Relatedly, although not precious, Freeport McMoran is getting zapped. It's off about 16%. It is a sloppy chart, so I don't tend to trade it. I don't know why it's so dynamic, I guess is the nicest way to put it. It's a crazy one. But yeah, this took a big hit. And in turn, a little bit of that flowed over to XME, but of course it's also affected by the precious metals drop. So XME was at a lifetime high yesterday, and it's sinking away just like all the mining stocks today. So just to kind of macro review, long-term and even medium-term, still bullish on any kind of precious metal, particularly oil from palladium. Short-term, a week, 2 weeks, maybe 3, bearish and bearishly position on those. I got dust yesterday at the lowest price in its history because it's a leveraged instrument. So that's not saying much. Leveraged instruments tend to get ground down into a hamburger. So I got it on the cheap yesterday. I'm holding on to that. So long dust, short GDX, no other precious positions. I'd mentioned the 25 shorts that I've got, and I might add 1 or 2 more before the session's over. But let's look at a few of those. I've plucked out a few favorites. Here is one that I hadn't bothered with for a while because it's kind of thinly traded. Talked about yesterday, the symbol CC. And this is the mega top on this one. This top is half a decade big, and we are breaking down nicely from that. So far, so good on CC. Delta. I'd never traded this before. Airlines aren't a great business. In this world of PEs of 500, 800, 1,000, infinity, airlines have PEs of like 4 and 5. They're old, super not profitable businesses. So DAL is no different. So it's not like, short them because their PE's 1,000. It's just the chart. And so in this case, shorted it and a stop right there. So that's looking good. Hilton, also travel related. This one finally breaking down. This has been finally kicking into gear. We broke this trend line. We're slipping, and this is a very long trend line. So if for whatever reason the economy gets shaky, some other pandemic hits, who knows? This could move a lot lower. But again, it's just the chart. I'm not anticipating any of those things. Here's IBM. I decided to go ahead and pull the trigger on this one yesterday. This had been way up here, this price gap. I didn't think it was going to get that far. Maybe it will. Maybe I'm wrong. But as it is now, I'm short this, and the stop is just above today's high. So that's looking good too. Netflix, shorted this one yesterday in FLX. And here's the stop on that one. These stops are all tend to be recent highs, maybe yesterday, maybe today, maybe the past week, something like that. Oracle continues to sink as it did yesterday. And what we really want to see would be a failure of this zone right here, break below that range, because this huge gap here was, of course, the big rally, that historic rally, the biggest since 1992, following the earnings report. Skyworks, SWKS, you can see here, this is a gap trade. Here's the gap right here. There's the gap right there. You see that huge drop. It climbed and climbed and climbed, finally got back up close to it yesterday. That's when I shorted it. And we sunk yesterday. We're down a little bit more today. But long term, I like the looks of that, hopefully for a few weeks. So that's just kind of some little Whitman sampler, some short ideas. I am one, I correct myself. I said I'm not long anything. I got long again on this just because I had a bunch of money that wasn't doing anything. So I wanted to go for something conservative that threw off a little interest and was a good looking chart. And so we're back to IEF. This is the 7 to 10 year Treasury bond ETF, and a very tight stop on this right there, 96.31. Because it sank for a while here. But so this is a conservative trade just because I don't have anything else to do with the money. So yeah, I am long that. But just to wrap things up, XAU, even though it's specific to the gold sector, I think is a nice illustration of how wacky the market is, how overbought it is. You can see how dramatically above its channel it is. And so I think that's got a ways to burn off. And that is a beautiful looking shooting star pattern right there. And finally, and I've got to tell you, in the medium term, every single chart looks like this. This happens to be the S&P 500, but everything has the exact same trend line. And everything is dependent upon that trend line not getting broken. None of them have broken yet. But if they do, you could see some selling accelerate. So that's it. And I will see you tomorrow. Thanks for coming by.
Dear Cheapo Airlines, thank you so much for sending my luggage on a magical side quest instead of my planned destination. I am glad that I had the sustenance of the single pretzel I was served on board while I was waiting for my bag to arrive. Looking forward to your reply, because surely the response can't be as delayed as long as my flight was. Warm regards, Bettina.
Sometimes it feels good to get smart. Get even smarter with live trading insights and some live taunting.
Every day I do God's work here.
From the smart mouths at tastylive.
If you missed the live show, here's our cherry on top weekly recap.
You know, like when I answer the confirm and send that's
By the way,
in the question.
what are you eating?
Him? Peanuts.
Yeah.
Pistachios.
I ate a pistachio. You're eating and you're just kind of like chewing while he's talking. Like,
No,
I have nothing.
always. It's
not eating. Do you have some? Do you have some control over there?
None, no.
None.
And there's
Just-
shells everywhere.
Oh my God, this is so good. I hope you can see this guy. I pray that you can, but I don't think you're going to be able to.
I pray that you can.
I pray that you can. I can't say who, but one of our insiders sent me this. This is Tom. I'm eating peanuts on air, and I don't care face. Here you go.
That's not on air. That's a commercial.
What do you mean? How did they get it? It's not on
They just
air.
made that up. See? Yeah, that's what we didn't want to see. I'm surprised you like. I don't like. Yeah,
I don't like the way you chew your nuts. Okay, I'm gonna tell you that right now.
Diversify your portfolio with stocks, options, futures, crypto, and more. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Tasty Trade. Download today.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
There's a beast in the financial world, and it's not the bull. If that's you, join us on Tasty Trade. Genius loves company.
Ring the alarm, hey, ring the alarm, boys. Turn up the charm. Listen up, y'all. Get out the damn stall. It's the last call. Hey, the last call. The last call. The last call.
Tomas, we are back, my friend. And you know what that means? Time for a little bit more Tasty Live. That's right, with the last call. Even the S&Ps, 1 million cars have traded today. Fairly robust volume for a day that was pretty much inside the expected move for the day, down 23 handles. NASDAQ down 96, Russell down 20, and the Dow down 170. All four indices are lower. Sell Rosh Hashanah in full force, Sadnov. Volatility in by 15 cents. I thought when we caught a bid earlier today that we'd actually sustain it for a little bit, but we have not. Volatility in by 10 cents. We'll see what this last half hour holds. Bonds down 9. I know you nibbled a little bit. Well, you've traded them from both sides today. You sold some out when they were higher, bought some back when they were lower.
Yeah, it's not the bonds that are weird today because they've been trading in the same range now for a week. They've been between 16.05 and 16.25. But it's the notes that were really heavy today. They were down 1/4 point. They were down almost as much as the bonds.
Yeah.
That was kind of weird.
They should be down half as much, right? Because they're half the size.
Right. And I'm long notes. That's why I bring it up. So that wasn't a good day on the notes, but they were really weak, the 10-year notes. And all the short-term paper today, the interest rates went up on all the short-term paper, more than the long-term paper, which I don't read that deep into it. I mean, you could probably draw a little correlation to the dollar was really strong today. Crude oil was strong, that kind of stuff. But maybe, and also the one thing we were right on was yesterday afternoon selling gold, and today it got killed.
Yes, yeah. Finally, GDX is lower. It was lower by $1.60 a moment ago. I don't know what it's doing right now.
No, they hit it.
Yeah, $1.86. Nice $2 move there. I got half my money back, so if I need.
I did too. I got a little over half because I sold some naked calls yesterday, so I got about 3/4 of my money back in there in one day.
Yeah,
I hate that though. I hate when you bust your butt. Like you squeeze you, they painfully torture you every day for like.
Why? I'm a good person.
Exactly. I'm a good person. I didn't do anything wrong. They squeeze you. Then all of a sudden they give you back like almost all of it in one day. And you're like, oh, I should have just waited.
Right. Gold down $60, 59 and change.
Yeah. I mean, gold opened down 10 this morning and now it's down 60. So yeah, that was a pretty nasty move in gold today. And yeah, that's all. I just didn't like the tape action in gold yesterday. That's why I got shorted. And GDX was actually a better short almost than gold.
Yes, GDX was.
And we talked
GDX
about that.
Been up twice as much as gold too. As our research showed you, Sad, though, another thing our research showed you, if not for our research, you'd probably be down money today. Now you're up money. Apple, that's right, down $3. Research told you how to sell that. You finally were able to pull the trigger on that. So good job out of you.
Yeah, when we did that piece
that
the other
means
day,
more ribs for them next week.
Well, when we did the piece the other day on Apple, and it said, something to the effect of when it moves more than 2 or 3 standard deviations, and it moved like 7 standard deviations. So I had to get shorted. It actually worked. It was down 2 yesterday, 3 today. I'm still shorted. So we'll see. I covered a little bit of stock today, but I'm still short stock and calls.
Nice.
Yeah, there was a across the board, again, another kind of mixed day. Reddit up, Meta up, Coinbase up, Tesla up, Microsoft kind of unchanged up, Baidu, UNH, Costco, Marvell up a lot. I mean, there was some stocks that were up today.
Yeah, Marvell up $6. That's a big, almost 8% move for sure.
Yeah, but then there's a whole slew of stocks that were lower. And, so again.
Did you see FCX, by the way?
No.
FCX had some mining issues. The stock is down $7, some sort of accident. Stock's down $7. It's a big 15% move. I was looking at maybe putting on a little bit of a Jade Lizard on there. Can I explain to you what my trade is? It does have earnings.
Let me pull it up. FCX.
FCX. I'm going to look at November.
I have not looked at this stock in forever.
Well,
what they do?
I can give you what they did if you give me just a quick second, if it really matters to you. I mean,
it doesn't matter.
I listen to you and Dylan. I mean, you don't seem like that much of a humanitarian.
I'm a total humanitarian.
They had an accident in an Indonesian mine. Does it make it better for you now?
No. Expected move in November is $5. If you go $5 away.
Oh, but wait. I was thinking about doing the 37 put. 41.43 call spread. You can do it for just under $3. 37 put. There we go. That's 285. It was 280. It was 285 a minute ago. 265 now.
How much was the stock down before?
About 780 or so. It's got a little bit of delta to it. I mean, it's got 29 deltas to it.
What about a put ratio spread here?
You could. I know I go to the ratio spread a lot for you. I mean, what are you gonna look at? Like the 37, 35? 1/2 for 60 cents.
36, 34.
36. You really got to be difficult, right? I mean, this one's way better than the one I gave you.
Yeah, I said like, how about?
I thought you were all right, Spider.
I don't know. The fills in here are never great. Nothing done yet.
You can do a stupid in here too, like a 36.40 call spread, and then sell the 35 put if you wanted to too. I mean, or get a little bit tighter in the 36 put. You could do that. Gives you.
They don't fill you in here, man.
Down at 36. Stock's already down $7. All depends on how you want to play it.
No, somebody reached. All right. Got filled 44 cents credit.
Yeah. This is what I bring to you, so I don't know if I bring gifts.
You actually brought a trade. It's shocking, but yeah, I'll take it. All right, what else you got?
That's it. CarMax, you want to help donate to the Vinny Batista CarMax fund in January? Don't think about it all at once. You got time.
Yeah, no, I'm going to pass on the Vinny Batista charity event, a charity golf outing.
Okay, all right.
But I do think I think what I would make Vinny Batista do is do like a car wash with his friends. Then I would go.
Yeah, I don't see that happening too much. January is going to be very cold for them to be doing a car wash. Very cold. I don't think he has it in him. All
right, what else do we got here? SPOOs have kind of been sitting in this down 25 range, for like the last, 2 hours?
Yeah, for hours is what I was going to say. Yes.
I was going to say the last 2 hours, like, what the hell happened? They were kind of busy today. We were down a little bit, and all of a sudden
you had over 1 million traded today.
No, I know, but most of the morning when we were doing the show, they were like unchanged, down, down a dollar. They actually looked kind of strong, down $1, up $1, and then all of a sudden they dropped them 40.
Yep.
They basically, body punched them, and I thought maybe they get something going, and yet,
no, the Kembait again. If this is the down move for Rosh Hashanah, this is the worst 2 down moves I've seen in a long time. You don't even have expanding vol today.
Well, according to my son, the rabbi,
yes,
this is just the tip of the iceberg.
Oh, really? He's looking for a little bit of downward action?
No, he asked me, he likes selling puts. That's his style.
Okay. Well, I mean, you want to
he's a typical.
You wonder why he likes selling puts?
Because it works.
In his lifetime, that has worked. It's worked very well. Yes.
He said that exact thing to me. He goes, Dad, why does anybody trade?
Why do you complicate everything, Dad? Is what he's trying to say.
No, he said, why does anybody who trade options do anything other than sell puts? He's never seen a down move.
Sure. Well, I mean, if you have a nail, everything looks like a hammer. I mean, or if you have a hammer, everything looks like a nail. I mean, it's just
I've never heard that expression before. I've heard, do you want to be the hammer or the nail?
Speaking of hammering nails, Sosnoff, what are you doing this weekend?
I'm shopping for cherry pies.
Is that what you're doing?
Yeah.
Is that a metaphor now? You're my cherry pie. A white man's overbite.
All right. No, that doesn't. Yeah, you're not.
All right, we get down 25. Are we going to be higher or lower in the next 15 minutes?
The way they closed them yesterday was to bounce them a little bit. So I say they sell them off on the close. They're down 30.
Going to be higher.
I don't think so. And I think the key to tomorrow will be if they open them higher tomorrow, they are going to go lower. If they open them lower, then they might bounce them a little bit tomorrow.
Oh, you're playing a little bit of a contrarian role. We need a down move.
Yeah, they traded them up all night last night, and then they've been down all day.
They did. They were up around 8.
I think you see the opposite, but I think they'll still close them. I think they'll mark them down a few points tonight. Try to get them a little oversold, maybe down 30, 32, 33. That's what I see. I don't see much else. I mean, I was pretty quiet today. Let's see, like 35 trades. That's it. That's kind of quiet.
You were quiet today. You got a $28 expected move for all of tomorrow, a little bit higher than we've had in the past by a skosh.
And why? Is there a number tomorrow or something?
Not that I know of. Nothing.
Because 28 seems a little high for this market. But
Yeah, no. There's you got jobless claims. I forgot.
There you go.
Yep.
Yeah, the one thing I would say as a bear, the one thing I like today is that the weakness is a little more broad-based. It's all the indices for the first time in a while. But again, we'll see. We'll see. I like the fact that the things that were supposed to go the direction that we wanted to go, they went that way today.
Yeah, we had a little bit of we had a little bit of relief. Yes.
Yeah, that's all. Now taking a look at the rest of the week here, I think you got to keep some short deltas on.
Well, I mean, it's worked the last 2 days. I mean,
yeah, it's worked. Right. I think you got to keep them on to see what happens until something changes. You got to keep them on.
Bitcoin put a little bit of a bid today. It stayed bid all day long.
Which one?
What the market did.
Which one?
Bitcoin stayed bid all day long.
It did. And there were some stocks. I actually got a little short Riot today.
Where'd you find that puppy?
Somebody wrote me an email and said, "Hey, have you looked at Riot?" And I was like, "No, I haven't looked at Riot in a long time." That stock was up way more than it should have been on a percentage basis. So
it traded all the way up to $20. When did they write your email? Hopefully they wrote it to you in a good time.
I don't remember. Let's see. Riot. Well, whatever we did, it worked a little bit.
You sold the 25 calls is what you did.
Yeah.
Yeah, you sold them at $1.60. They're $1.04. Close them. What are you waiting for?
Up 40% in a day.
A guy like you doesn't make 40% in the year. I mean, on a trade, for crying out loud. Anyone you picked, whoever sent you that email, you should give him a kiss.
Well, it obviously wasn't one of your fans. I covered him. Nice trade.
Filled at 104. Good job out of you.
Nice trade. See?
Nice trade. Great platform. Gave you a little price improvement. Beautiful.
Good things happen to good people.
Money goes to money. It would be the other side of that coin. Yes. Yes, 100%.
All right, let's see what else we got going on here. As I kind of let's scroll through. It's 247.
Your bonds are weak. You said some things are going on.
Yeah, they look like crap, but the notes look worse.
Yeah.
I think you got to stay long bonds here no matter what. And that's what I'm doing.
And oil never backed off today either.
Oil upticked all day long, never backed off once.
Yeah. Yeah.
Like a parrot. Most of the stocks that were up today stayed up and they just didn't back off. One of the stocks that I was looking to get short was actually Robinhood, just because based on price. Have you looked at a chart of this stock?
Yeah, it hasn't had a downtick since 32.
No, but it kind of had a little bit of a turnaround today.
A turnaround? It's up 74 cents.
I know. Well, it was up higher, wasn't
it? Yeah. You're right, boss. It was $130. It's $127 right now. You are correct. It got as low as 125.
I'm gonna sell a couple of calls in there.
You have a position that OKLO. Did you do anything in there?
No.
Oh, good. It's down $11. That's an 8% move in there.
I don't really trade that stock. I wasn't crazy about the. I really wasn't crazy about the liquidity in the markets today. I had a lot of issues, especially this morning when we were trading. What's your assumption? I didn't think the option market makers were as aggressive as they've been recently. And I don't understand why, but maybe it's just a lot of the stocks we were trading were the ones with, they're in play. And I just don't know. some of those stocks have really wide markets. I'm kind of wondering why people trade that much of them.
What's the story in Marvell up almost $6? I mean, it's only an $80 stock. It's almost an 8% move.
I don't know.
Marvell.
It's a story in Open. I mean, that's a dumbass stock that goes to 10 and back to 6. I mean, just travels all over.
Up $1.15 to eight and change. Yeah, I mentioned
but the thing with that stock is it's got decent implied volatility rank. We traded that one stock today, beginning with a B. What was it?
BMNR or something like that?
No. No.
You did.
I know we have a position on there, but it was something different. It was that energy stock. Nikki trades it. What the hell was it? I can't find it.
Trades it.
Yeah, it had 117 volatility. Remember?
I do. I'm looking for your stock right now. What you did? RKLB?
No, that's Rocket Labs.
You're out 20 cents on that trade.
Was it RGTI?
It is RGTI. You did a 1x2 in there.
No, that only has a 40 IV rank. Something had 117.
Yeah, it has 158% monthly implied volatility. That's the one.
I was looking for the one that had the 117 IVR.
Nobody had 117 IVR. No.
117 IVR. Yeah, BE. That's it.
Bloom. Oh, yeah, BE for sure.
Yeah, Bloom Energy. I don't know what the deal is there, but that one.
Nikki's calling us butchers right now.
Well, we're not butchering that much because we sold a strangle in Bloom Energy today for $625, and it's $564 right now.
BE, you are correct. You sold the 47,115. It's 570 something mid price. Yes.
Well, we sold it at $625.
You are correct. 50 cents. Good job.
Yeah, that's what I was thinking. It was the IV rank in that was 117 this morning, and it's 199 or 100 right now.
Yeah, 100 I got. Yep. Mm-hmm.
Yep, that was one I was thinking.
The S&P down 21 as foretold, so I don't know if I'll consider myself done.
I don't think so, but nice try. Let's see, what else do we got here? I'm just looking to see what's on my screen. On my screen. All right, back. Give me another trade to do.
Marvell was a buyback announced, $5 billion. Thank you, Mr. McDonald.
There you go.
That's our boys out in London. They're helping us out, Sadnoff, watching at this hour of the day. See that?
I like it. They should be watching. It's only, it's like 10 o'clock at night. This is your evening entertainment.
Yeah. My Taiwanese sources just told me that FINRA has approved amendments that would replace the longstanding $25,000 minimum equity rule for patent day trading. I don't know if they've improved them too or gotten rid of it completely, but that's just the headline that I have.
I think it's going to 2,000.
You're going down to 2,000? Makes sense. Good for them. Good for you. Good for everyone.
It's an industry change that is 25 years too late. We've been fighting it for 20 years. Mm-hmm. Scott's been fighting it. JJ's been fighting it. I think JJ's been to Washington 10 times on this. Scott's been fighting this. It's about time. It's literally 20 years too late. We started fighting this in 2006 or 2007.
Yeah.
And, getting every other firm on board was almost impossible, but this is going to really help small traders. It's great. No more that stupid ass pattern day trading was the dumbest rule. I mean, can you think of a dumber rule in finance?
Not only did it not work, but it hurt people from closing out risk.
Of course, you couldn't take your profits.
Right.
And it was so ridiculous because it turned so many people off from this industry.
Mm-hmm.
It's the dumbest rule ever. Yeah. And they can't get rid of it fast enough.
Very nice. Very nice. I want to thank my friend. Uncle B. Thank you for telling me that.
I have been apologizing for that rule I must have written 500 emails over the last 25 years, just trying to explain how stupid that rule was.
Yeah. And how it's not a brokerage firm rule. Everybody always thinks it's like the brokerage firm doing it. Yeah.
Ridiculous. Absolutely redunculous. Needs to go away tomorrow. I don't know what their timing is, but go away and never come back ever.
Totally agree.
All right, let's see what we got here. Let's go to the boys. We got them on.
Beautiful. Let's do it. The overtime crew. Who we got?
We got Dylan and we got Ilya.
Gentlemen. Beautiful.
Here's Dylan.
You
Here's
rang?
Dylan?
Hello, boys.
Good
The
afternoon
entrance
to you.
was excellent.
What's
The
that, Ilya?
walk-in, the walk-in, that was excellent.
Oh, Dylan.
Oh, yeah. Dylan walking in like a boss right now.
Oh, yeah.
Love it.
Beautiful.
That's my new thing.
I love
Yeah,
it.
Dylan, every time you come on, Dylan, you should walk in.
It's a walk on.
Yeah, yeah. You shouldn't do this thing. You shouldn't be already sitting there. You should walk in.
The Travolta swagger. Just
Yeah.
There it is.
We can play music.
Staying alive.
We could play music for you too. We could have your
Our audience is a little younger than you used to. Can you explain to them who Travolta is?
Listen, we've been up against this issue all day. I took my nephew out to dinner yesterday and was all excited because we have this there's an artist that we're working with who's friends with Lenny Kravitz, and I was like, oh, we might be able to get Lenny Kravitz to do these things with the thing for the thing, and he looked at me, he's like, who's Lenny Kravitz?
That's so sad. That's so sad.
And
you got to go
I'll tell
Zoe
you who Lenny
Kravitz, then
is.
he'll
I won't
know.
repeat what he said exactly, but he said Lenny Kravitz is a man who's more popular with the ladies than you are. That's all you need to know. Okay, bud.
That's what I said. You can look up Lenny Kravitz. He's done pretty well for himself.
Yeah.
So anyway, what's going on over there? We got a lot of navy blue going on. Is that navy blue you got, Tom?
Yes.
Yeah.
Yes, I am. I am navy blue.
Same
Yeah.
for me. And
Navy blue's the new black, Dylan. You know that already.
Is that what it is?
Fashion industry, you know that.
So, boys, we have our
obviously
first.
does not know that.
We have our first 2 down days in a row. It's almost like, stop the presses. They're going to write a story. When's this market going to recover?
I mean, as foretold by one Dylan Radigan, who got aggressively short going into this week.
Yeah, called it.
Or as foretold by you covering your shorts, Ilya.
That as well. Although fair warning, I nibbled back on SPY put verticals this morning, so I'm a little bit short again. A little bit.
Down moves over.
Oh,
that's it.
Ilya, you're killing all the shorts out there. I'm short. Don't be getting short. Yeah.
In fairness, I did cover my my gold long position, so it should rip any moment now.
Nah, I think gold's a little.
No, gold's done. We got short gold yesterday afternoon. It was good timing and never took any heat on it. But yeah, Tony, don't mess with the Torah. Like this is.
I'm not messing with anything. I try to hide behind this one blade of grass in the Sahara Desert. I like to hide behind it. I don't want to mess with nobody.
Okay.
I don't need that kind of aggravation.
Short gold, short NASDAQ, long dollar. Enjoy yourself.
Long dollar is looking pretty good as well. It's a little early days yet, but it's starting to show some signs of life here. I'm not mad at it.
Yeah, I mean, it made back what it was down yesterday. They basically just needs a little fall through here. I thought the dollar was kind of oversold. We'll see. Saved itself a little bit.
I like the bounce in the bonds is encouraging as well. It's a little bit early. It's a little bit early yet, but over the past 2 days at the long end, ZB has kind of started to attempt to bottom here, which I thought, we talked on first call and said the only 2 things cheap were the dollar and the bonds. And both of them are attempting to do something.
Yeah, but they're it hasn't gone anywhere all week. They've been trading 116, wrapped around the mid price of 116.10, 116.11 all week. I think the scarier thing is that the notes got actually weaker. This is a new low in the notes for the week, which doesn't bode that well. Bonds are heavy. I don't know who's selling them here, but they're heavy.
Yeah, bonds and notes are on your mind, Sad. Now, if you mention them,
they're just heavy. With all the rate cut chatter and everything else, they're still heavy.
Mm-hmm. Yeah, I think the markets came out of the Fed thinking that was less dovish than they wanted, and at least at the long end, we're basically holding Monday's low. So whatever follow through there was on Monday from last week's shenanigans, at least that's holding. But Tom, to your point, the notes are much heavier and sort of lines up with what I've been thinking, which is I think that there's a twist of the yield curve here where we're not going to get as many cuts near term, and so they'll push them out into deeper maturities. And so maybe we'll get a little bit better support at the long end than at the front.
Mm-hmm. I'm long them both. So I'm not picking my favorite child here.
You got to like short gold. Can we just come back to the short gold?
I like short gold, Dylan. I agree with you.
Thank you. I mean,
I'm looking at it. I'm looking at that real closely here. I'm still long silver, but a little bit more confirmation on gold, maybe under 3,700 or so, and I'll be on the short side.
I was saying I speak with the authority of a man that bought Bitcoin at 30 grand and sold it at 17 grand. So, you know.
If you can't trust that, what can you trust?
Who are you going to listen to?
Dylan, on that note, on that humorous note, we'll take a quick.
That's a true story. That's a factual.
Hey! Someday I'll tell you a story about a guy who bought 10 seats under 200,000. They went to 20 million a piece, and he sold them for a scratch. We're gonna take a quick 90-second break and come back. We got more Tasty Live after this with the Overtime Crew. Peace.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Traders, start your platform. Tom Sosnoff and Tony Batista are hitting the road for their first ever live trading event, At Work by 11. It's unprecedented, unpredictable, and unlike any other financial event. Watch these masters make real trades in real time. Doors open at 8, the action starts at 9, and we'll have you back at work by 11. Sign up today at tastylive.com/events.
Well, he's more public in his mentality.
I'm a believer. I believe that the world is good.
And I know that the world is not good. That questioning yourself and questioning yourself in dialogue with someone you respect is both pleasant and sometimes extremely insightful and useful sometimes.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
Your crypto needs a wallet. And crypto is better when it's tasty. You can now do more with your digital currencies with the Tasty Crypto app. We're proud to offer a self-custody wallet for Bitcoin, Ethereum, and Polygon. Transfer your digital tokens directly in-app and access thousands of tokens available only on-chain. Your wallet is your key to decentralized finance. Download the Tasty Crypto app and get started today.
The future of trading is here. Join Mike and his whiteboard, plus the Tasty 2 live crew for 90 minutes of probabilities, punchy portfolio mechanics, and trade tactics. It's totally free and unreasonably fun. Come early to enjoy a drink with the crew and stay for a Q&A after the show. Space is limited, so register today at tastylive.com/events.
Come on, you know it, can you feel it? We got some things to talk about. Pre-market, it's early, but not too early. Come on, wake up now. Pour that coffee down your throat hole. It's hot. Now you got a hole in your throat. Oh no, just call your boss. Take the crust from out your eyes. So tasty, not a coffee.
What's up, everybody?
The future of trading is here. Join Mike and his whiteboard, plus the Tasty 2 live crew for 90 minutes of probabilities, punchy portfolio mechanics, and trade tactics. It's totally free and unreasonably fun. Come early to enjoy a drink with the crew and stay for a Q&A after the show. Space is limited, so register today at tastylive.com/events.
Come on, you know it, can you feel it? We got some things to talk about. Pre-market, it's early, but not too early. Come on, wake up now. Pour that coffee down your throat hole. It's hot. Now you got.
What's up, everybody? Check out my new series, Life Cycle of a Trade, where I show you my real-time trades with insights into strategy selection, adjustment mechanics, all the way to the closing order for all of the Tasty Live core strategies.
If you missed the live show, here's our cherry on top weekly recap.
You became Chicago's most eligible bachelor. What year was that? That was the debate we were having earlier while you weren't on the show to defend yourself.
1988.
88? So Vanetta was right. Late 80s, early 90s.
You mean when I was on the Oprah show?
Yeah.
Yeah. Well, 88. I had flowing locks like Tom.
Oprah just made it.
Oh, here it comes.
I mean,
she felt bad. She felt badly for him. You know, you couldn't get a date.
You get a car, you get a car, you get a Scott Sheridan, you get a Scott Sheridan.
I want the car.
That's right.
Delta, Vega, Gamma, Theta. It's all Greek to you. Well, guess what? Millions of people speak Greek, so you've got no excuse. Here's your alphabet. Theta is time decay. Time itself has value in the options world, and that value slips away the closer you get to expiration. Theta is how fast that happens. Tick-tock, time value drops. Delta is difference. How much does a $1 move in the underlying affect the price of the option? Long options have a positive delta because their value moves with the stock, and short options have a negative delta because their value moves opposite the stock. Gamma is get up and go. It's how fast delta changes. Gamma increases when the options start trading much more like the stock, like the closer to the at the money and the last few days till expiration. Vega is not a Greek letter, but it does start with a V, and so does volatility. Vega measures how much the options price is affected by the changes in volatility. Now you know your alpha, beta, gammas. Well, gamma anyway. Pretty simple.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to Tasty Trade. So spread the word and earn rewards. Terms and conditions apply.
If you have any questions, feel free to toss them in the chat.
When you've got a futures contract that's in contango, what does that mean?
Futures, unlike stocks, have multiple prices appropriated to them. That's known as the forward curve. So when a futures forward curve is in contango, that means that the front month is trading cheaper than the corresponding futures back month. So you'd see that forward curve most likely looking like this in terms of prices.
And backwardation, what does that mean for futures contracts?
Backwardation is the opposite of contango. So where contango front month futures contracts are trading cheaper than the back months, backwardation is the opposite. So those front month futures contracts are trading richer than the corresponding back month contracts.
If you missed the live show, here's our cherry on top weekly recap. I'm sitting at my desk, so I wear my AirPods in most of the time. And I guess he was bellowing at me, and I didn't hear him.
I wouldn't call it bellowing.
Gus said that you were bellowing at me. So I'm sitting at my desk. I get a text message from Tom, and all it says is, "Where is this chair from?" So he was yelling my name across the office. I didn't hear him. He sends me a text message, and I write back, "Bitch, this ain't Chat GPT." And so Bat, I proceed to use technology to find it for him. And so then he complains to me about what the price is. As if I had set the price, and he was like, "Well, how much did I pay for it originally?" As if I would know.
But a helicopter, not my thing. I'll take another means of transportation.
Okay, all right. I mean, I don't want to take a helicopter too, but an electric helicopter with...
That's better?
I think so. I like the 4 little things as a
4 things.
One big...
The 4 little things. Oh my God, you're so cute, Sosnoff. I'm serious.
Wait, did you get the twirl?
We're going to the opening night now?
We are, 50-yard line.
Oh, you guys are going to another party together. Oh, am I just driving you?
I'm working at it.
You guys are special, indeed. You guys are really special.
It's so annoying.
Oof.
You guys are going to hold hands tomorrow before we start the show.
We're going to take a quick 90-second break and come back. We got more Tasty Live after
We're already
this break.
out.
No, you're not.
Oh, we're not?
God, you're really good at this. You're really good at this.
Get the full scoop by checking out the archives at tastylive.com.
And we are back. Overtime was on a little bit of a programming break, but it returns now with full force. I'm Ilya Spivak in San Francisco. That's Dylan Radigan in Milan. Mr. Mike Butler in Chicago. Gentlemen, it's a second day of sell-off in stock markets. Woo-ha. How's your day going?
It's going great. It's going great. Yeah, the market's been really kind of in a narrow range the last couple of days. So I've been trading other things like lean hogs for one. But yeah, it's it feels like now we are waiting for PCE numbers because there's still plenty of.
Hold on. What is it about the? I mean, is there something about the lean hog that is particularly appealing as compared to the more,
the fattier hog?
Fattier hog.
Yes, actually. So, Mr. Westwater, we have him on the show every Tuesday on Options Trading Concepts Live, and he presents us with a futures trade idea or some kind of analysis of futures products. So, lean hogs, ultimately it's somewhat predictable from a seasonality perspective, and prices are sky high in /LE here. And into the rally on Tuesday, we were like, this feels like a good short setup because of the potential seasonality and the difference between the long and short positioning. So we ended up getting it basically perfect with the 2-day sell-off here, but went with a longer-term diagonal spread, which is what we've talked about on the show here a couple times. But yeah, just getting out of the equity world where everything's just a vertical line straight up. I guess lean hogs is too, if you look at it from July till now.
Do they make markets in fatty hogs?
I don't know.
I think lean hogs are the futures market benchmark, and I don't think I'd be remiss to say there's probably not a sell Rosh Hashanah by Yom Kippur dynamic in this market.
One would think.
One would think.
But I mean, no one. I don't. Do you think there's a person out there that thinks this sell-off for 2 days means diddly squat?
I mean, I think if you look at at least the stock market here, you get the sense that, okay, it's a little bit lower, but it doesn't look like you've crossed any Rubicons here today. It doesn't look like you've broken down kind of the structural bounds of what's going on. I think if you were to look at, let's say, the S&P, and full disclosure, I nibbled a little bit on the short side here, just in SPY, not anywhere else. But the line in the sand for the S&P, let's say the December ES contract or so, seems to be something like 66.85, 66.90, something like that. And there's a kind of horizontal inflection thing there, and we seem to have landed right on it. It's even clearer in the NASDAQ, where if you just put a horizontal line at the mid-September swing high, the September 16th high, that tells you basically where the last swing before the last rip ran out and kind of had a little pullback. We landed right on it today and stopped. So it seems like we're looking at a situation where maybe there's not a story here about a sell-off. There's a story about the market pausing, and then we'll see.
Yeah, it feels like when you look at SPX implied volatility for the next couple days, there's still 40 points projected for through Friday. And I would imagine that this number holds because tomorrow is a very low 26 points on either side. But we have PCE data and we have a higher implied volatility reading here, which tells me that maybe we see a similar day tomorrow unless something crazy happens. And then Friday is where we're projecting at least a little bit more movement with PCE coming out pre-market.
It's interesting that the markets are getting all kinds of antsy, or at least looking at the implied vol. At least they're seeming to perceive something around the PCE number, because on one hand, the PCE number is relatively straightforward to forecast. Markets don't tend to get it wrong, because once the PPI and the CPI numbers are out, you can take the internals of those and kind of reconstruct a PCE index and know what it's going to be. So the forecasts are fairly good ahead of time. There's not really a major surprise risk. On the other hand, it has, nevertheless, despite all of that, slightly beaten relative to forecasts the past several times. And so you kind of wonder whether the event is the data or the event is the passing of the data, so that the markets can do what they want once they're on the other side of event risk.
Yeah, it's a fair point. I think the elevation in the VIX, I mean, it's not anything to write home about, but at least we're not setting new lows in the VIX for the near term. We've popped up a little bit, which projects exactly what you're saying. Maybe we're waiting and seeing, pricing in some volatility, and if we come out on the other side on Friday here, maybe it's a complete reversal in quite instantaneously. Because a 16 VIX, I'm still not, like, that means nothing to me. 16 VIX with a steep contango in the vol futures, when you look at the difference between the V, X, and Z contracts, how they're climbing higher in price significantly, tells me that it's up and to the right. Day to day, who knows, but up and to the right over a long period of time until something shifts here.
Yeah, I mean, what that something is kind of a curious thought exercise, because when I'm looking at these markets here, I mean, gold's a little bit lower, bonds are attempting to bottom, dollar's a little bit stronger. It's kind of a hodgepodge. There's not really a through line in a macro narrative where you can look and go, oh, well, they're concerned about blah, blah, or that, or this. Dylan, what do you make of this sell-off? Is there any rhyme or reason to any of this?
I take it as, I take it as validation very mildly with very little conviction, but as validation of my sort of comments from last week, where so it was sort of a sell on the Fed meeting, if that's a thing. And I think that's kind of that is obviously what's playing out here. Is it just sort of an exhaustion from all the things that have happened, meaning all the straight up action that's been going on. But I'm also, I have very little conviction, even though I know I was yammering on. I like my short gold and I like my long dollar. But short NASDAQ feels squirrely to me, at least in terms of my confidence in it at this point, or at any point, really. Just because of the momentum of those other names is so bananas that it kind of really hangs on, makes you pay attention, I don't know how much this, I think this, look at these charts, look at that chart. All these charts, it's ridiculous. And so I think that, I'm almost more interested in because you're always talking, Ilya, how you're waiting for an indication. Is this an indication to you that things are about to go south? The fact, like when you talk about sort of waiting for an indication, is this that?
It feels like it's interesting to nibble on the short side a little, because, and I did that this morning. I got a little bit short S&P through a SPY put vertical. Vol is still very cheap. You can still get excellent risk reward. I think I ended up with a little bit better than 2-to-1 on it. And I think it makes sense to nibble a little, but not to kind of get over your skis, because it is noteworthy that things are kind of getting a little chopped up here, and you're starting to get into undoing some of the internal kind of swing bottoms in the indexes, especially S&P. Russell was also fairly soft, although I haven't touched that one yet, because I think you get to a place when the rubber band is stretched this far, it's a shallow stair step up and a cordless elevator down if the thing really sells off, because it's going to start to really snowball on itself. There's tons and tons of exposure that there is to unwind. And so do I have all the perfect confirmation here to say, oh yeah, this is totally a top? No. But will I nibble a little bit on the short side? Yeah, just so I'm not left behind if this is in fact the real deal. But NASDAQ is going to wait. I think Russell is going to wait. They need to show, I think, a little bit more, especially NASDAQ, to get any kind of bared up there, because Lord knows we've had plenty of false starts this year.
But the gold short is awfully appealing. And do you have an opinion on that?
I took my gold long off this morning. I had a nice run. I held it for almost 60 days, and I was coming up on DTE within, I think, less than 20 days. And so I thought, you know what, it's kind of soggy. I've got expiration coming up. Let me just take this off. This was a great run. And I was short puts in there and long that way. So I got to extract some premium as well. So it worked out great. I'm still on the long side of silver because I'm there more recently and via calls, and it didn't really break down today. So I'm sitting there. I'm very interested in the short side of gold. I haven't put it on yet. It seems like the line in the sand is maybe the September 17th high. So somewhere around like 3,700-ish. And if you can get a consistent close under that, okay, then yeah, I would be interested in getting short down into like 3,500, 3,450, something like that. But I want to see it.
Yeah, it's been just an absolute moonshot in a product that does not have that much implied volatility. Like when you weigh this move from, let's just call, the last 30 days, basically, we've gone from 3,350 to 3,750. It's a 400-point move in 30 days. Where is the next 400-point move projected in gold futures based on current implied volatility? The furthest out I can go, 153 days. So this has been an absolute blowout to the upside, and it has well exceeded implied volatility with realized volatility. So when that happens, I think, yeah, if you're going to be directional or take a stand, I think from a psychological standpoint, but also a hot odds standpoint, or, you know, could this reverse type thing, I do like it. I agree with it. I had a call broke wing butterfly on the upside in gold futures. That's going to be a bad loser, but I did throw on a new put diagonal spread to kind of reflect this idea. So I bought the 345 put in December, and I sold the 335 put against it. So you kind of have this risk one to make one, $500 max profit to the downside if we get a near-term move in GLD. But I liked using GLD here just because it's an easier way to get smaller in size and have a position that grows teeth if it does move to the downside. So
I've been doing the same thing in both stocks and in gold and in silver. So using the ETFs to keep it a little bit smaller and to make sure the fills are there, because I mean, obviously, if you go to the full futures contracts, GC, SI, I mean, you'll get the fills, but those things are huge, and you need the capital. So rather than go to MGC and put up huge amounts of margin to trade the futures outright, using verticals in GLD, in SLV, in SPY, in the Qs, that's been a little bit more attractive. It's an interesting setup here, because it seems like stocks are down with gold today. Like if you look at the intraday charts, they look almost identically the same. And then the dollar is up as a kind of inverse, yet I don't think you really get a strong parallel lead from yields. And so you kind of wonder what this is and whether the market is just kind of jostling in the wake of the Fed or whether it's actually doing something.
Yeah. And that's what I think when we come back to this point in time, 3 months from now, 4 months from now, at the end of the year, if there is a big sell-off, I think we have to tie it, at least to a degree, to this. But what else is moving? Like, that's what I'm missing. Like this to me, this flight to gold to such a degree, not paired with anything else. Like if we were to see Bitcoin at like 130K with gold moving this way, that's more of like okay, the money is moving away from anything tied to the US dollar, and equities may see a sell-off. Like that's the positioning that I would see. But I'm just seeing the gold. Like we're getting a move today in Bitcoin, but all things considered, it's not a big move. Like gold is clearly the big mover over the past couple of weeks. But I'm trying to tie it to something, and I'm having a hard time doing that. Because like you said, like everything else is kind of just fluttering around, at least right now.
Yeah. And the gold move really started before the move in the bonds and before the move in the dollar. So you look at it and you go, well, is this gold rally about a dovish Fed, when everything was already priced in by the time it went? Probably not. It is, I think, interesting. So last week we got that summary of economic projections from the Fed, and I definitely did not have on my bingo card that they would cut rates and then upgrade growth expectations, upgrade inflation expectations, downgrade the unemployment rate forecast. Because they're cutting, so you'd think they'd go the other way. But it's almost as if they're saying, yeah, we're going to run the economy hot. And you go, okay, well, if you're going to run the economy hot, okay, I can see why gold would like that. But one would think, okay, well, then also Bitcoin, but Bitcoin hasn't rallied. You'd think also a dollar sell-off. No. And so you get a kind of disconnect. I'm almost more convinced in the stock sell-off because nothing makes any sense. Because it starts to feel like, well, what's like maximum rug pull for everybody? It won't be a news release. It won't be a narrative. It'll just be, okay, that's enough. Let's close some exposure. And then things that have been up come down and things that have been down come up.
Yeah. And for me, it's like these solidified probabilities of the rate cuts that we are to expect in October and December, at least the way the market is right now, 92% chance we get another 25 basis points cut in October.
Yeah.
And then a 75% chance we get yet another after that. And this is like as solid as I've seen it from a probability standpoint this far out in probably this whole year.
Yeah.
At least for the October one.
Yeah. And what's really interesting is that even a week before the Fed, you had markets saying, not quite this much certainty, obviously, but 70-odd% chance that October is a go, which is way better than even. 60-odd% chance that December is a go. So when the Fed comes out last week and they go, yeah, we got 3 cuts for you this year, of which September is one, and then there's 2 more meetings, do the math. And you go, okay, well, but have they told the markets anything that the markets didn't know? I mean, to some extent, granularly, but the markets were well into this is the likely way forward, even a week ahead. And so did they surprise anyone? Not really. And then they still only have 1 cut for next year, and the markets have closer to 60 basis points for next year. As of today, it's 63. So there's still this huge disconnect for next year. And either the market is right or the Fed is right. And if you looked at, as far as the data we got this week, the only one of substance was the PMI numbers out of the U.S., and they were down for a 3rd consecutive month. So maybe the economy is cooling.
And where does that bring us, Dylan? Are we to just continue putting our bull hats on and just closing our eyes and letting the accounts flourish to the upside, or does anything spook you?
No, it really doesn't.
No.
I've tried to get I'm trying to get myself spooked because there's all these sorts of spooky things out there. But I don't see how you can really, I can see how you can, listen, as you guys heard, or you certainly heard, Amelia, last week after the Fed meeting, I was sort of hammering on this sort of short gold, short NASDAQ, long dollar, just on exhaustion and sort of resolution from the Fed meeting and the run up before the Fed meeting. But it's hard to hang on to that position with any conviction when you consider, everything that's gone on here. I suppose the the one argument against the sort of Teflon or bulletproof nature of the rally in the market really goes to you could argue, well, the stock market because the dollar has been so face slammed this year, that on a currency adjusted basis, that the stock market's really only up a couple percent. And you could make an argument that if the dollar is actually going to get stronger, that is a reason to be bearish. But I mean, is there a real risk that this next round of economic data is going to meaningfully change expectations for timing or number of rate cuts, Ilya?
I don't think so. I mean, I think the really big question isn't even about this year at this point. I think the question is about next year and whether the markets and the Fed can kind of find common ground. But as far as this year, I mean, really, the Fed just gave their sign off on what the markets already had. So is there really anything else here that we don't know? Doesn't seem like it.
Yeah. So that's why to your point, Michael, or to your question, I'm not I like my little short gold, long dollar routine on the margins, but at the end of the day, if there's a bigger sell-off, I'd buy that. You got to buy it. Who are we kidding?
Yeah, no, I agree. And every time we see a sell-off, as rare as it is these days, I think it's super important to just look at the VIX and more specifically the vol futures. So you can put this together. It takes like 5 minutes to make a watch list and just type in the codes for each month and then just sort it from nearest expiring to latest expiring. But just keeping an eye on this, because if there's two things that I've realized are essentially true with trading, it's that if you're going to be at all-time highs and set new all-time highs, the VIX is likely going to be in the teens, and you're going to see a contango like this where you have 2 points between the next contract or the current contract and the next one, and then another point after that. That tells you that the market doesn't have very much fear at all. When the opposite is true, like if we were to get a 100-point sell-off tomorrow and then another one on Friday, and you saw this flatten out where all of these numbers are in the 20s, and maybe the near-term ones are above the later ones. Like if this pops to 22 and this one jumps to 21, now we're in a different story. Now we actually have some near-term fear priced into the market, and that's what we always have seen when you zoom out and you look at the E-minis and these big sell-offs. Like in this period of time when we had the tariff stuff, we were in backwardation, and that's what I'm referring to, where the near-term contracts are a higher price than the next one. Same thing with the Japanese yen unwind. That lasted like 30 seconds, but we still got that volatility reaction in the market. So I think if there's one thing to keep an eye on, and to your point, Dylan, like if we see a big move and it's not paired with a vol spike, or at least a vol spike that seems to matter, then I am more confident in buying that than if we see a big move or a couple days of a big move and there is a big change in volatility structure. That's where I might be more cautious.
And and what's that even going to be? What's the hypothetical scenario that really kicks this market on its ass?
Well, I think maybe the most interesting thing as far as sort of market ass kicking is when it happens for no apparent reason. I mean,
exactly.
I think that's really where I actually start to get the most bearish. Because if it happens for no reason, if there's not anything where you can very clearly go, oh, we'll just resolve this and then everything is fine. If there isn't a thing to resolve, it's just, you know what? Risk appetite is exhausted. And we need to reset valuations because things have gotten out of whack. I mean, I remember to this day, my best year in the markets was 2008. And everything broke down in July. Did anything happen in July? Not particularly. It's just you reached critical mass. there was just no more buyers. And the whole thing just caved.
Yeah, it feels like, I mean, it's been a crazy run up from the bottom in April. But Nick was texting his friend. He was told his friend to consider something to look at. He did. He bought it, and then he's like, "Oh, nice run up in that stock." And his friend responded, "I don't even look at my phone unless it's a 15% daily move to the upside in the stock." It's like, that's where we're at.
Yeah,
just straight up bars. But it can't go on forever. Or can
That's
it?
the thing. Well, I mean, eventually you do reach a point where valuations have gotten to a place, and this is not a quantitative measure. This is a qualitative, almost psychological state of being where people go, okay, I can look at the chart and see a lot of tail behind the chart, and we're in record highs, and it just feels expensive. I'm not going to chase this here. And then at the same time, it's like, well, do you have a great story? Do you have a great narrative? Is anybody not long yet? And of the people that aren't long, is there anybody that's looking at it and saying there's value, as opposed to, oh, look at this line, it's expensive? And so you just run out of buyers at the margin. And then the moment you get the first down tick, all of those that are already long go, oh no, this is what I've been waiting for this whole time. Time to cover. I mean, I think you kind of see that in futures positioning. If you look at the latest for the COT report, the Commitment of Traders report, and obviously it's quite a bit lagged, but nevertheless, as of Friday, we got numbers that reflected positioning up to the prior Tuesday. And what we see is that speculative net shorts in the S&P are at their highest since basically mid-March of 2024. Now, does that mean anything? Well, if nothing else, it suggests that people have been hedging, because short exposure has been growing since the bottom in April for S&P. So it feels like people are massively long the underlying stocks and then just attempting to lay off more and more risk in S&P futures because they see that as something that has to happen. They're not sort of piling the money into the risk on side willy-nilly and going, oh, well, this thing is just going to spin forever. They keep adding to net short on the index futures to cover. So at some point, one would think you get to a place where you just run out of buyers and the thing topples over. But where that is, and is there any indication of it here? Who knows?
Let's say it does happen. What level are you looking at? Like in the E-minis, for example, we're at 6,700.
Mm-hmm.
What if you're short? Where are you looking for this thing to go? 6,400? Below 64?
I think the next kind of line in the sand. If we're at the kind of initial line in the sand, let's call it like 66, 80, 90 on the December contract, ESZ for this year. The next line in the sand is maybe something like 65, 60, 65, 50. So basically that range that you carved out, let's call it the swing highs from mid-August and then into the second half of August. And then if you crack that, then maybe you're back down to like 6,300. And that base, that's the base from mid-July. And then where we caught that NFP report on August 1st, that low, that's snagged right there. So that's maybe Those are your kind of lines in the sand.
Fair.
Something like that.
Yeah, I think it's.
But like, would I be an automatic buyer at any of those levels? No. If we're selling in that direction, I'm selling until it won't sell anymore.
Yeah, it's fair. But where do the buyers step in? I think it has more to do with the individual names that have a big contribution to this rally. Like, you see these kind of products. Like, if Apple goes sub 200, there's going to be buyers. If Nvidia goes sub 100 again, there's going to be buyers. So, like, that's a crazy move. It would be a crazy move. But yeah. I think there's psychological levels that people have in their mind that they'd be willing and able to get in there and try and stop it. But the VIX is still at 16. And what a nice narrative. E-minis end of the year implied volatility plus minus 370 points based on this current low implied volatility. That brings us to a shiny round number of 7,000. I can see it.
Yeah, maybe. Maybe. It's interesting because if there were a story here to say, well, we're down over the past 2 days for this and this reason, then you could kind of benchmark it and go, well, they didn't like this. So that's going to tune my lens to say, okay, well, the next thing or the next kind of piece of news that we're going to get is going to be X. And on looking at the price action and on tuning the lens, then you can kind of do some scenario analysis and go, okay, if this, then that, if this, then that, across markets. You don't have that here. It just feels like things that have been going up for a while have stopped. And you struggle to find anything that's been going down for a while other than the dollar.
Yeah.
Maybe we're just revisiting a need for cash.
Yeah. I think we still have this issue of the velocity to the downside can be very real because there's such a concentration in these names in the E-minis. And if you look at ETFs, like, it's hard to find a very balanced ETF these days. There's a handful, but if you see these single name equities that seem to rule the world kind of fall out of bed, that could create the selling pressure that we're talking about, which adds to the downside move, et cetera, et cetera, et cetera. It's just, like you said, a snowball effect. I think that's very real, and we've seen it a couple of times already this year, but the opposite is true too. So I think it's got to be a scenario where if it happens, you got to be quick to act, still trading small and making sure your risk is okay where you want it, but it could be a 1 or 2 week thing, if it does happen.
Yeah. Yeah. Dylan, if there is a sell-off here, are you looking for buying indexes or are there individual names on your shopping list?
I think that you want the Mag 7. It's the things that, like, if there's a real sell-off and you can get into some Google or some Microsoft or some Amazon or some Tesla, do it. I don't know how else to say it, but it's like, that's where the action is. It's if you're going to get a real honest to God sell-off, those are the names. I just don't see a world where the supernova or that level of momentum and that level of heat coming out of those names is going to go anywhere. And so if they get cheaper for some weird reason, I just don't know how much they're really, I feel like, I don't know how much they're going to sell off. I just feel like it's a tough racket for those guys to get. It's like, what's going to cause I guess it, like you said, the biggest risk, I think, is the one that you nailed, Ilya, which is they sell off for no reason.
Yeah.
Because the sell off for a reason doesn't exist. And so the only question is the sell off for no reason.
Yeah, I mean it's kind of interesting. Like if we haven't sold off for all the reasons that we've already seen, like it's not like there's a shortage of reasons. There's no shortage of reasons, but we have so thoroughly ignored all reasons.
Exactly.
Good reasons, bad reasons, reasons. I mean, our motto here has been stop thinking, learn to love the bomb.
And so
that's what it is.
That seems like the only reason it will go down is for no reason.
Right.
If it's going up for no reason, if the reason it goes up is because it dismisses anything that you might think about that would cause it to not go up, then it might go down for no apparent reason.
And
because it doesn't go down for reasons. Because I could list 1,000 reasons.
Yeah.
And they're all irrelevant.
And to your point, Dylan, I think I saw an interview with the great Zuck, and he was talking about how he doesn't care how much the spend takes to get ahead in the AI space. He said, like, if we overspend by 100 billion, it doesn't matter because that's how big the opportunity is, which speaks to your point of the Mag 7 stocks that are heavily involved in AI, heavily involved in, and the chip stocks too, heavily involved in that sort of world. Like we've seen the reaction in the market to the initial push for the AI wave, but if Zuck is still saying, I don't care how much I have to spend to get ahead, that's how big the opportunity is. Like where does this thing really go? And maybe it's somewhere we can't even envision right now. But I think that was a really strong kind of tidbit of an interview where I was like, wow, if this is happening, this could be just the beginning.
I mean, obviously it's just the beginning, but like I said, I don't mean it like in a dismissive way, but it's like the only risk is just a blow off chaos. Yeah. But I don't see the risk. I'll be honest. Like I can see where gold's going to come down. I can see where the dollar is going to get stronger. I could see where the Russell could sell off. I think these AI names are as bulletproof as anything. I mean, if you're going back to Xerox in the 1960s, man, like this is money in the bank, baby.
Well, so you kind of wonder in the context of what Zuck said, like did the and I'm not suggesting that Meta is equally a proven quantity than Pets.com. Obviously, Meta has proven itself many times over. But how confident do you think Pets.com was in basically saying this internet thing is the greatest thing? We're going to spend $1 gazillion on an ad during the Super Bowl.
Not Nvidia and Microsoft.
Right. But the hype around
the potential, the revolution, hype is
that period's revolution.
Yeah.
The sort of build out of networks, the internet is going to be everything for everyone all of the time. And obviously they weren't wrong. It just took longer and there was an intermission.
Mm-hmm. No, I mean, listen.
And it always takes longer, and there's always an intermission
on your part. Sorry.
No, I think we're in agreement. It always takes longer, and there's always an intermission. But finding where, it's tricky. It's sort of why I nibbled on the short side today, because for all I know, this could be it, and it's going to run down hard or not. Who knows?
Yeah,
but if the risk reward is good and the puts are cheap and the vol is low,
Yeah, Tesla's the only one that's really not like rolling over in this Mag 7 space here, at least in the last couple days. But yeah, I think I agree with Dylan. I think if we see a sell-off The only thing that I would be concerned about if there is a sell-off is if the volatility curve changes in a dramatic way. If it doesn't, I think it is it's something that I will be placing bullish trades into the end of the year, especially with the way that the market is laid out now, where there's not many surprises priced into the next 2 rate cuts, which removes market volatility. And we've seen these earnings from these companies, and they are blowing out everything. So, and we'll have another one before the end of the year, probably in November for all these products. So it's a tough sell for a sell-off, I think.
It certainly seems like it. Mike, are you nibbling on the dollar here at all while everything else is kind of finding its way?
Yeah, so we have Glenn on from TastyFX every Wednesday, and we place currency pairs. So we were buying the dollar, we were placing long dollar positions in that platform. But yeah, I think long dollar, as far as it's gone, when you look at weighing any of these products against the dollar, I think it makes sense to nibble on some long dollar, especially in the TastyFX realm, where you can have a continuous rolling contract. You don't have to really do anything with it. You can just plant your flag in the sand.
You can just let it roll. Yeah, it rolls daily.
Yeah, it's beautiful. But yeah, I think
and your long yield. So you're getting one of the beautiful things of being long dollars here. And obviously, it's baked into the futures. It's not like overnight financing costs go away in futures. They're just endogenized into the price. They're baked into the contract. But your long yield against most of these other currencies. So interest rates are still, even after these cuts, higher in the U.S. than they are in Japan and Europe. And so you're getting paid to hold long dollar exposure. It's actually a yield-bearing idea.
Yep. Yeah, it is nice when you are directionally leaning a specific way where the swap bid is a positive number for you, which is what we're talking about here. So in the TastyFX platform, regardless of what you're looking at, you can see the swap bids here and swap ask. So a positive number means if you are long this product, or I'm sorry, if you're short this product on the bid, you would get paid to be short. So what is being short the euro dollar? You are short the euro, long the dollar. So if you're short this pair, you're short the front currency, long the back currency. And if you did that in Euro USD, you would be getting paid a small amount, but you'd be getting paid to hold that position if that is your assumption anyways. So I've actually been doing that. Like I've been trying to find the pairs that speak to me where I want to be long or short while also getting paid to hold that position. It's like 50 cents or $1 a day. But if you hold the position for a month, that's $30 on a position that's like tiny. So
no, the carry trade that people talk about, that's exactly what this is. And I mean, in fairness, they do call it picking up pennies in front of a steamroller, but the steamroller in the dollar has probably already passed. I mean, we had the worst 6 months basically in the modern era for the dollar at the start of this year. I mean, essentially since Nixon took the dollar off the gold standard. So one might think now you're picking up pennies after the steamroller has already rolled.
Yeah.
So, hey-o.
And honestly, like the really nice thing about this is that when these markets are like this, where it's just a grind, it's like paint drying, you can find really cool opportunities in here. Popular USD, non-USD, other non-USD, Scandinavian, emerging USD. Like literally there's 100 pairs in here that you can dive into if you want to.
Yeah. And I mean, obviously, be mindful of liquidity with this as you are with anything else. I mean, when you get into the EM currencies, the spreads are going to be wider, the liquidity is going to be choppier, but compare that to Bitcoin versus S&P. I mean, Bitcoin is going to be risk appetite, but jumpy and with wider spreads, as opposed to the S&P. The euro is going to have narrow spreads and good liquidity, and some of these emerging market currencies are not. So approach accordingly.
Indeed.
With that, I think overtime is out of time. Any parting thoughts here, gentlemen, while we have a minute?
And I'm just going to reiterate, if you do get any selling in those AI names, I would just buy. I wouldn't even, like, if you're going to be short, get short gold, get short the Russell. I wouldn't mess around with the AI names. And if you're lucky enough to get them cheaper, you know, buy them, don't sell them.
Yeah, I mean, yeah. I would echo the same thing. I think the volatility structure is telling us that we shouldn't expect anything crazy. So if we do get a small pullback, and that is also paired with a non-movement or a relative non-movement in volatility futures, then I would be totally in Dylan's camp. I think the only thing that might shift my mind there is if we get a larger sell-off consecutive days and a large shift in the volatility structure, then I think that could be a sign for future bigger moves to the upside and downside, but leaning towards the downside.
Yeah. I mean, I'm not sort of foaming at the jowls bearish here. I have a little bit on just on risk reward grounds, but otherwise I'm long dollars, and that's really my core exposure. And I'm a little bit long the bonds just because they seem to have found some kind of a bottoming on their pullback, and that's really it.
Cool.
All right, gentlemen, thank you very much. That's it for overtime. Don't go anywhere. I'll be right back with Macro Money, where we'll unpick the data that has just passed us by over the past 24 hours. There was some PMIs. Powell spoke. We'll see what that all meant in excruciating detail, and then look ahead. So stay right there. We'll be right back.
When the market moves, traders need to move faster. Tasty Trade Active Trader Tool offers full depth of market visibility, one-click order entry, and instant position management so traders can react in real time. While others charge for professional tools, Tasty Trade provides them for free. Opportunity can move fast. Seize it with Active Trader. Try it now on Tasty Trade.
If you've ever been curious about where to start with crypto, join me, Ryan Grace, for the Tasty Crypto Show. Alongside co-hosts and industry guests, we'll break down what's going on in the market and show you how to take advantage of crypto. No hype, no shills, just crypto know-how. Watch us live, join the chat, and fill your bag each week on the Tasty Crypto Show.
The future of trading is here. Join Mike and his whiteboard, plus the Tasty 2 live crew for 90 minutes of probabilities, punchy portfolio mechanics, and trade tactics. It's totally free and unreasonably fun. Come early to enjoy a drink with the crew and stay for a Q&A after the show. Space is limited, so register today at tastylive.com/events.
When you define risk, you set a limit on how much you could lose if the trade goes bad. If you have a small account, you might not be so interested in selling naked options. You'd use up much more buying power, and the risk is undefined. Defining risk, though, controls how much you can lose if the trade goes sour, and it gives you back some of that sweet, sweet buying power. We can define risk by combining options into certain strategies. The short put vertical spread is the simplest one. Selling this put sets your max profit with the credit, and the long put at the lower strike blocks off the risk where you want it. And if you're more neutral than this, you can throw on a vertical call spread to make it an iron condor. The only downside to defining a risk is that it lowers both your max profit and your probability of profit. That little compromise might mean you rest easier, though, and a good night's sleep is priceless. So see, we can define risk when we use more than one option at a time. Pretty simple.
Tasty Trade is now on TradingView. Trade stocks and futures directly on TradingView charts with Tasty Trade's low commissions. Try it out and leave us a review.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new Tasty Trade and tastylive web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
If you had to swap jobs with somebody else in this office, who would you pick and why?
Oh, if I had to swap jobs, I kind of like the idea. I might go for Tori's job because I really want to be the one responsible for ordering lunch. I would love that responsibility.
Maybe somebody on the other side, on the brokerage side, I'd probably swap jobs. I'd probably swap jobs with Clink. Clink has a lot of cool looking tools that he looks at day to day, a lot of that risk management stuff. It's kind of interesting to me. I'd probably be honest.
Oh, I got to go Scott. I mean, he's here, he's only here a couple months, goes back to, Arizona, plays some golf, Tokyo. I mean, that's a great gig. How do I get that one?
Oh, I think Ryan Sullivan's got a great job, man behind the camera. He does a lot of cool stuff all around the office, from videography to written content, so he's the man.
Ryan, would you want Glenn's job?
Absolutely.
There's a beast in the financial world, and it's not the bull. If that's you, join us on Tasty Trade. Genius loves company.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new Tasty Trade and tastylive web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
Stock markets come down for a second consecutive day. Does that mean anything? That's what we're going to explore here on Macro Money. I'm Ilya Spivak, head of Global Macro here at Tasty Live. And it's been an interesting sort of week in the wake of last week's Fed policy announcement. Markets seemingly trying to find their way, and looking across assets, things kind of sliding in new and interesting directions, seemingly without any kind of rhyme or reason across markets. It's very difficult to thread a macro narrative here with what's going on, but we are certainly going to try. And that's where we'll start things off. We'll just look at how markets were performing today, what we have so far this week, how that lines up with where we were last week, and a little bit on the macro news flow that we've already seen this week, because it has been significant and it has been telling us a story. So, looking at first the S&P and NASDAQ here, of course, just for today, off about 1/3% apiece. And interestingly, yields higher. So there is perhaps some semblance of rhyme and reason here starting to develop. So the longer end of the curve a little bit stronger, 10-year up 1%, 2-year up 0.5%. Crude oil still doing its own thing, not really paying attention to what's going on elsewhere and oscillating in familiar territory. There's about a 54 to 74 range in crude that has held for months and months and months. And now we're kind of looking at prices testing the upper part of that range, but not really going anywhere beyond it. The center line for that range, right around 62, and the internals of that range around 65. So markets have been essentially oscillating between about the low at 60, 80, 61, and up to as high as 65, basically going back to early August. Haven't really gone anywhere, but broader terms, this center line around 62 has been in place at least since early April, and we've kind of oscillated around that with lows in April, of course, as we have for most risky assets, around 54, highs around 73, 50, 74 in late June, and then just oscillating in that space without really finding a clear connection with the broader narrative. Gold, however, with a spirited sell-off today, down 1.25%. Dollar also uniformly stronger across the board, up 0.6% against the euro, almost 9/10 rather, almost a full percentage point, in fact, against the yen. Bitcoin, interestingly, higher, 2.4%, but that's not really telling us a story about sort of overall strength, because, of course, Bitcoin has been down for 3 days into this little bounce and is just kind of retesting a little bit, but doesn't look like it's really putting on a convincing reversal of those earlier losses. And indeed, if we look at how the markets have performed cumulatively so far this week, stocks down, but about 0.4%, a little bit less on the S&P, about 0.5% on NASDAQ, yields up. So that part of the story seems to be holding. Gold still net up on the week, although, of course, much more narrowly so after today's sell-off. Dollar up, although, again, more narrowly than just today. Euro down, yen down. Bitcoin, on the whole, still down for the week. So if we compare here, while gold is down today but up on the week, Bitcoin is up today but down on the week. So a little bit of jostling there. But on the whole, what we seem to see here is perhaps a little bit of a hangover after last week's Fed policy announcement. The Fed, as we've discussed here before, came out less dovish than expected, or at least than the markets wanted. And we can see that in this summary of economic projections. As we've noted before, we have expectations for GDP upgraded across the forecast, expectations for the unemployment rate downgraded, inflation adjusted higher, at least for next year. And when we look at these policy expectations, we can see that now the Fed in September had 3 rate cuts narrowly on the menu, as opposed to 2. The starting line was 4.4. So June's projection was down to 3.9. That's 50 basis points. This projection in September was down to 3.6. That's 3 cuts. That largely already existed as a forecast in the markets. So we were looking at the likelihood that we'd have a October rate cut already very much on the menu when the Fed came out. And of course, now it's very strong indeed at about 91, almost 92%. But even a week ago, going into the Fed, we were looking at 87%. So it's not like there's been a violent shift here. The markets knew that this October cut was probably going to happen. And then in December's meeting forecast, now we're looking at a 75% chance that we're going to get that third cut. A week ago, it was a little bit stronger even at 81%, and that's going into the Fed meeting. So it's not like the markets didn't know. It's not like the markets weren't already priced for 3 cuts this year. They already had those probabilities very firmly established. So the Fed didn't really tell them anything that wasn't already in the market. But if we look at what then happens thereafter, still only 1 rate cut on the menu for next year and the year after. And of course, as we've said, this continues to be a potent disconnect with markets, even though they've started to kind of go the Fed's way here a little bit. Markets still see 63 basis points in rate cuts next year. That's obviously at least 50 and 13 basis points in the direction of a 3rd cut. And if we do the math here and what this ends up looking like, it's a 52% chance that we get that 3rd cut next year. So we're kind of hovering at the dividing line. The likelihood of that 3rd cut next year has come down a little bit, but nevertheless, it's not 1 cut. It's well in excess of that. And so as we look at what's going on here, we can see this year has anchored nicely around 35 basis points, so that's at least 1 cut, and then showing us the likelihood of the 3rd one. And for next year, there's still this disparity. Nevertheless, the markets are starting to claw back some of this easing. We can see we're narrowly down to about 100 basis points, just under, in rate cuts cumulatively, whereas going into the Fed before this 25 basis point adjustment right here, we had 140 basis points on the menu. So take that 140, subtract from it the 25 basis points that we just got, and what you end up with is 115 basis points, whereas the market is now at 98. So there's a little bit more here than just taking away a rate cut that's already occurred. Now we're looking at maybe the markets are starting to embrace this idea that the Fed wants to run the economy hot and address the weakness in the labor market that it perceives that way. And one of the more interesting kind of ways to read this, of course, comes once again from Fed Chair Powell. He spoke just earlier this week. The comments, not exactly anything that you might not have anticipated, having heard what he said at the FOMC announcement itself. But what we see here is interesting in the sense that it really distills the Fed's argument here, saying, look, there's no risk-free path. We're not ignoring that inflation is there and rising, and as of the last CPI numbers hit a 70 or a 7-month high. So the Fed is very clearly acknowledging here that, look, it's not like we're saying that inflation is solved and that's why we're cutting rates. We're saying the risks to the labor market have increased, and so the balance between the trade-off of containing inflation and underpinning the labor market, that balance has shifted. And that's what has prompted this cut. We can see also that on the inflation front, Powell is making the argument that goods price increases largely reflect tariffs as opposed to something more entrenched, and that it's a reasonable base case that this tariff-driven inflation will be short-lived once the one-off price adjustment is basically absorbed into year-on-year calculations and rebased. In the Q&A after this speech, we can see that the Fed wants to focus on a more balanced approach as opposed to just inflation. A couple interesting tidbits here is that we see the Fed saying maybe what's happening in the labor market is part of how businesses are dealing with the tariffs, because of course we see that the tariff pass through, according to the Fed chair, has come later and has been less than expected, and that is something we've talked about here quite a bit, this idea that wholesalers were eating tariff costs on behalf of consumers because they didn't want to destroy demand by raising prices, but that this process has arguably ended at this point. That now we're getting that pass through, and wholesalers' margins have started to expand again, as we saw most recently in the PPI data for September. So as we look at this, then we get to a place where the Fed's argument is, okay, we've had businesses shoulder these tariffs. Maybe they're not hiring because that's where the firepower has gone. The spend has gone toward managing these tariffs, and that's why businesses don't want to be expanding staffing. Nevertheless, the Fed thinks this is going to be a one-off pass through. To some extent, famous last words. We'll see how this goes. But one argument going in the Fed's favor here in kind of focusing on the labor market and considering inflation something that they can not de-emphasize, but balance a little bit less heavily against needing to work to underpin the labor market was the S&P Global PMI report this week. We can see the composite index showing us we still have growth, of course, as ever. PMIs are centered around a 50 line, where 50 is neutral, above 50 is growth, below 50 is contraction. The further you go above 50, the faster the growth. The further you go below 50, the faster the contraction. So you do have growth here, obviously. Here is the 50 line down here, and this was the latest reading. So we're well above 50. The economy is growing. But we can see here that over the course of July, August, and September, the pace of economic activity has slowed. And it's not just on one side or the other, it's both. So here's manufacturing. This is where, of course, tariffs are most acutely felt. We can see that there is a pullback here and a slowdown there, albeit a more modest one than what we see in services, where there is this thing echoing the composite index and a third month of slowdown there. So maybe the economy is, in fact, starting to come down a little bit. This data, of course, was early to speak about the reflation from an economy that was reheating as early as May. So we can see that we got this buoyancy here that we didn't really get in a lot of other measures. This is why this S&P data is so good. It's quite early, usually. We got this for the composite index. Now maybe we're starting to come off a little bit. Maybe this is speaking to the Fed's sort of relatively benign view of where inflation is heading, and perhaps even to some extent endorsing what the markets are suggesting, because one of the more interesting parts of this is that with slowing activity, you've also seen a little bit of a downtick on the price front, but for inputs into services. So you can see here, especially where the tariffs are the most acutely seen on the manufacturing side, costs have edged lower. And you can see that as far as output prices go, they've edged lower for both services and for manufacturing. So if you look at the composite here, we can see overall the price structure is getting less inflationary here. Again, we're still very much in positive territory, so we're well above 50 on the overall index for composite prices, but clearly the pace of inflation has slowed here. So maybe that's helping to endorse what the Fed has done here. Now, where this gets interesting is, of course, when we start looking at the relationship between what's going on with the policy outlook, since this has been the driver of momentum recently, and we see what stocks are doing. Here is this sort of baby pullback this week. That's this right here. But we can see that there's not really a strong level of consistency. So whereas at the beginning of the year, it was clear, sort of here is the near-term range. Here is where we broke that range. You can see here at the same time is where you get the start of a dovish move in policy expectations. Then, of course, in early April, that move finds a bottom. And it makes sense that these policy expectations move at the same time as stocks do, because this ends up being a growth scare. It ends up being a conversation about, oh, well, the rollout of these tariffs is going to hurt growth. Business and consumer confidence are down. And indeed, the PMIs were some of the earlier indicators. And then, of course, we rebounded once sentiment steadied, and it looked like the White House was going to be amenable to market discipline of this variety, where stocks go down and bonds go down and the dollar goes down all at the same time. And so sentiment starts to recover, but notice where the policy outlook actually lands. Stocks ultimately rebound and the growth scare fades as you get this rebound in the policy outlook, but it stops well short of what happens with stocks. Stocks come back basically to where the breakout was right here. That's where the end of the unwind of dovish expectations is in Fed funds futures. From there, things only get more dovish. So even as this year's outlook anchors around sort of a center line of 50 basis points and cuts, sort of right around here, the outlook for next year starts to get more and more dovish. And the rest of this build out in stocks seems to come at the same time as you get the promise of cheap money getting louder and louder and louder. Then you get this move. And at first we can see stocks are happy. Even though we have this larger than just a 25 basis point adjustment and things get a little bit less dovish, stocks still find a way to love this. And we've posited that that's because they're betting that the Fed's going to run the economy hot. But now perhaps things are getting a little bit soggy. So maybe we've reached a level where the money is now getting uncomfortably less cheap. We're going to have to see how this goes, because, of course, this is just a blip on the radar so far. For the dollar, though, this does make a lot more sense. The dollar seems to find a bottom here where it last tested in in early July, and as things get less dovish, so too the dollar seems to be finding impetus for some kind of a low setting. This seems to be working as you might expect. When things get more dovish, the dollar falls. When things stop getting more dovish, the dollar starts to bottom. So fairly straightforward here. Now, as far as exposure goes, I'm still looking for that dollar rebound to continue. So I'm still short the Aussie, short the pound, short the euro, short the Canadian dollar. I've taken off my gold long position, which I held for the better part of 2 months. It seemed to have hit some kind of a roadblock today, and that was coming up on expiration, so why not take some profits? And I'm still long silver because this actually did not have a meaningful move down today. It's a little bit soggier here, we can see, but it hasn't really taken out its digestion range, and so I'm still long the precious metals there. I've started to nibble a little bit on the short side of the S&P through a put vertical on SPY here. Certainly not looking for any kind of Armageddon-like scenario, but after 2 days of selling, it does seem like while the vol is cheap, in the event that this is the real deal, then maybe take a little stab here with better than 2-to-1 risk reward and still a little bit long the bonds, looking for this to bounce a little bit. It started to go in this direction a little bit, and so this is maybe the beginning of something, but we'll have to wait and find out. It's still early days yet. And that is Macro Money for today. As ever, we are here Monday through Thursday, right after Overtime, a show I co-host with Dylan Radigan and Chris Vecchio, looking at the Wall Street close and where things may go therefrom. I am likewise writing for the News and Insights portion of Tasty Live and commenting at Ilya Spivak on former Twitter and on Blue Sky. If you're watching this on YouTube, like and subscribe. Macro Money is back tomorrow. In the meantime, happy trading.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Tasty Trade is now on TradingView. Trade stocks and futures directly on TradingView charts with Tasty Trade's low commissions. Try it out and leave us a review.
Mike, what does it mean to be assigned?
When you are assigned, you are ultimately short an option that's in the money, and the counterparty has the ability to exercise that option. So if you are assigned, it means your option, against your will, ultimately, has turned into 100 shares of long or short stuff.
What does a green scratch mean?
Ooh, a green scratch refers to stubbornness getting the best of you. And when I say you, I mean me. Green scratch refers to rolling a position, defending a position, and instead of just closing it for less than loss that you're seeing, or maybe a $100 loss, $50 loss, a green scratch is when you close it for maybe a 5-cent winner, 10-cent winner, 15-cent winner. Just the ability to see that green number on your screen and get out in a profitable way as opposed to a loss.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that 1-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to Tasty Trade. So spread the word and earn rewards. Terms and conditions apply.
If you missed the live show, here's our cherry on top weekly recap.
You became Chicago's most eligible bachelor. What year was that? That was the debate we were having earlier while you weren't on the show to defend yourself.
1988.
88. So Vanetta was right. Late 80s, early 90s.
You mean when I was on the Oprah show?
Yeah.
Yeah. Well, 88. I had flowing locks like Tom.
Oprah just made it.
Oh, here it comes.
I mean,
she felt bad. She felt badly for him. You know, you couldn't get a date.
You get a car, you get a car, you get a Scott Sheridan, you get a Scott Sheridan.
I want the car.
That's right.
I think I went down the typical path of investing in stocks And I was really frustrated in the sense that it was a buy and hope type strategy. And so I was looking at, different ways to learn about options. And I saw Mike and his whiteboard, and it all made sense. There's another world out there with options. It gives flexibility. It's more capital efficient. And tastylive does it. Again, they teach it in a way that is fun. It's easy to understand, and you're learning from people that have done it for 40 years.
When the market moves, traders need to move faster. tastytrade Active Trader Tool offers full depth of market visibility, one-click order entry, and instant position management so traders can react in real time. While others charge for professional tools, tastytrade provides them for free. Opportunity can move fast. Seize it with Active Trader. Try it now on tastytrade.
When you've got a futures contract that's in contango, what does that mean?
Futures, unlike stocks, have multiple prices appropriated to them. That's known as the forward curve. So when a futures forward curve is in contango, that means that the front month is trading cheaper than the corresponding futures back month. So you'd see that forward curve most likely looking like this in terms of prices.
And backwardation, what does that mean for futures contracts?
Backwardation is the opposite of contango. So where contango front month futures contracts are trading cheaper than the back months, backwardation is the opposite. So those front month futures contracts are trading richer than the corresponding back month contracts.
Beat the opening bell. Get trade ideas and market insights before the open. From the creator, Tom Sosnoff, and our chief market strategist, Tom Preston. Every weekday. Sign up at tastylive.com/newsletters.
All right, we're back. Tasty Crypto Show. I'm Dan Cecilia, and today in studio we got a very special guest, Greg Magadini, professional options trader and head of derivatives at Amber Data. He's a regular on the show, and always great to have you and share the insights. So thanks for joining us in studio. How's it going?
Yeah, thanks so much, Dan. Yeah. I mean, the studio is pretty nice. I can't lie. This is amazing. So happy to be here in Chicago. Fun experience. Happy to talk to you. Got plenty of stuff to talk about. So let's dig into it.
Yeah, for sure. And I appreciate the kind words about the studio. I think it's the coolest part of the entire thing. So most of our guests, when they come in, they're like, "Yeah, studio's sick." So yeah. You're totally right. But we follow your newsletter a lot. Whenever we have you on, we kind of go through and kind of just break down your thoughts. So let's just jump into it from last week. We had this Fed update and like an interesting market reaction because it was the cuts were priced in, but market reacted strangely. So can you just kind of give us an overview of what happened there?
Yeah, so just to contextualize where we are. So last year we cut 50 basis points. Inflation was actually lower last year than it is now when we're cutting. So that's kind of an interesting context, but just to kind of talk through the market reaction. So risk assets really rallied into sort of this FOMC rate decision. And really how the way I interpret that is that the market was pricing in cuts and future cuts. And so the initial reaction when the Fed cut 25 basis points was really around the guidance that we saw in the economic projections of 2 more cuts throughout the end of the year. So we can see the dot plot here on the screen. And so that was initially bullish because not only do you get the cut, but they're kind of hinting that they're going to cut twice more. And then later in Powell's speech, he mentioned that a 50 basis point cut last week was completely off the table. So then that flipped from dovish to hawkish. So risk assets just kind of had one of those big spike days. And then to top it off, Fed Powell essentially said, he has no idea where inflation will be in 3 years. So he's been data dependent, really slow to move this whole time, really wants to see how job numbers come in, how inflation data comes in. So we kind of got more of the same. That's how I interpret it. And so I think a lot of traders had to like adjust their positioning throughout the day, and we got sort of this kind of big spike candle reaction.
Gotcha. Yeah. So if we look at the dot plot here, and then even this Fed watch tool, you got an 80% probability for target rate of 350 to 375 bips. You said that Powell's speech noted 50 basis point cut was completely taken off the table, so struck the markets as hawkish. We sort of had a sell-off in Bitcoin, I guess, or risk assets, sort of a little bit of a sell-off, and then gold reacted, right? So there's been this divergence that we've been following between gold and Bitcoin. Do you think that Fed rate decision kind of made that gold rally, and sort of what do you make of that divergence between gold and Bitcoin?
Yeah, so I think gold is the classic fiat hedge. So I mean, gold is the money of 2,000 years plus, or whatever, 5,000 years, whatever the number is. Gold's tried and true, and we know that central banks buy gold and essentially have gold reserves. We know that the U.S. dollar has been world reserve currency. Everyone owns U.S. treasuries, but if you are in this inflationary environment, do you really want to hold treasury paper? And if you don't want to hold treasury paper, what other paper are you going to hold? I mean, if we look at the rest of the world, most of the Western world actually has lower rates and has inflation as well. So that's a lot less attractive than U.S. paper. So you're kind of stuck buying gold. And, as we know, crypto to some people still seems kind of like, a gambling asset or like an asset that hasn't been untested and unproved. I kind of think the U.S. is leading the way in that narrative shift. So I think probably the first one to buy Bitcoin reserves would be kind of a U.S. country. So I think that's what's happening. Right now, central banks and traditional players are buying gold as a dollar hedge.
Yeah. And I want to talk a little bit about the point you make about the Fed here. You think that you kind of get into this idea that Fed's a bit worried about jobs versus inflation. They're going to monitor both. But you think that the biggest driver of asset prices, particularly gold and Bitcoin, is Fed's independence. So, we have a new chair in 2026. Do you have any comments on that? Like, do you think Fed's independence is in question, and maybe that gives us a rise in risk assets? Or
I think that's the biggest risk for sort of asset inflation.
Okay.
So, the way we see it right now, there's a lot of pressure on Powell to hurry up and cut rates. He's like being cautious, still data dependent. He says, I've tilted towards jobs being my number one concern, but, we still trust him to care about inflation. Well, if inflation starts running hot, we got PCE this Friday, which is the inflation target number. That's what the Fed looks at, core PCE. If that comes in hot for whatever reason, and we know next year that Chairman Powell is going to be replaced, does the market really have the confidence that the Fed is going to be willing to fight inflation like it has been? I think the market's saying no. That's kind of how I'm interpreting this. And so what do you go into in terms of inflation hedging? And so I think that's why we're seeing this kind of gold rally. I think that is the biggest right tail risk.
Gotcha. Okay. And so we'll have to look to Friday to see how that PCA data comes out. Now, just so I have it correct, you think with this the Fed independence in question, maybe what happens in 2026 with the Fed chair, you think it will give a boost to risk assets if we do kind of get this, I guess, Fed independence, basically the Fed is not independent anymore and won't do what needs to do to kind of support the dual mandate? Or you think it will give a rise to Bitcoin assets, risk assets?
I think if there's essentially a stagflationary environment or a runaway inflationary environment, 1970s is what I would look at as the sort of the template. And that was an environment when gold went from $35 to $700 in 10 years. So I think that's sort of the base case scenario I'm looking at. Now, in terms of Fed independence, where am I looking at for sort of that trigger? Long-term treasury debt. Long-term yields, in my mind, are kind of the story to tell. We're seeing this in Japan right now. So Japan 30-year yields are spiking in a fashion that they haven't in decades. And to me, it's like, let's not forget, Japan invented QE. Japan had its own real estate bubble. They were like 20 years ahead of us. So theirs was in 86, ours in 2008. and they're the ones who essentially invented QE and squished down rates to zero, and we're stuck in this deflationary environment and have the highest debt to GDP ratio. So they're sort of the canary in the gold mine of the quote-unquote debt supercycle. That's how I view it in my mental model. So they're the country that I look to the most. And then for the U.S., long-term rates are sort of what I'm monitoring in terms of Fed independence coming into question.
Gotcha. Okay. Interesting. So something we'll have to take a look at and keep in mind. I think, like you said, Japan is kind of the leading indicator there. I think bond yields did bond yields spike? The long end of the bond yields did spike after this cut.
Yeah, exactly. Yeah. They also had one of those like kind of wick hours.
Yeah.
But then now, bonds are cheaper, yields are higher.
Gotcha. Okay. So maybe some signal there that, could something be on the horizon. So let's get into some trades.
Yeah.
Because this is, I think, was the most interesting part of the newsletter was how you would position yourself here. So the trade that we've been covering and you've been saying looks sort of interesting is this 180-day 25 delta risk reversal.
Yes.
Can you get into that a little bit and just, what's your reasoning for that?
Yeah, so there's kind of two things I'm looking at in crypto vol. So the first thing is outright at the money vol for Bitcoin. So this is this first chart I'm looking at right now. 180 days is looking like 41 vol. We've been as high as 120 vol on 180 days. 41 vol is kind of the lowest we've seen in the past 6 years. Now, something I like to keep in mind is that when vol is low, everyone expects it to mean revert. So it usually trades at a premium to realized. So vol can remain lower, as I said, and you can remain solvent, so to speak. So just buying outright vol is never the most interesting thing to me. And that's where the risk reversal comes in. Because with the risk reversal, you're selling a put, a 25 delta put, in order to buy a 25 delta call. So now you're kind of vol neutral. And if things really kind of explode higher, which is sort of that right tail Fed independence trade, well, not only do you own the call that's giving you the delta exposure, but now you're going to be in a situation where vol is exploding higher as you own the right tail. And so that's kind of a double winner on that sense. And then you finance that by selling that put. So a 25 delta put is kind of like, $56 on IBIT, which translates to about $100,000 Bitcoin price. So you're essentially standing on the line and saying, I'm willing to buy $100,000 Bitcoin. In exchange for that, I'm going to get the premium that I'm going to buy the 25 delta call. And so now you kind of have this big break-even window. Worst case scenario, you buy $100,000 Bitcoin. For a lot of people, I think that is an attractive level. And then on the flip side, if things go haywire to the upside, you have that exposure captured. And looking at that risk reversal chart here, we can see this is the first time in quite a few years that we're below the zero line, meaning the put is more expensive than the call. I think there's a few reasons for that, and we can get into that. But it's rarely here, for the exception of sort of the FTX blow-up time frame.
Right. Okay, so let's kick it over to the platform real quick, because I do want to demonstrate kind of how we can construct this trade using IBIT. So I'm looking at IBIT. Obviously, the market's closed. I think we can do an extended hour order, but just do it. We'll do a demo for now. But basically, we're looking at the IBIT ETF. We're going to go out to the March 20th, 2026 expiration, 180 days. And we're going to look to buy the 80 strike, 80 or 85, because the 80 is the 32 delta, 85 is 26. So I guess we could buy the 85.
Yeah, I mean, it comes down. If you want to pony up a couple more bucks for the closer one, it ends up.
It might be better.
It might be better. Yeah.
All right, so let's buy the 80, and then let's go and finance that with the 50 delta, the 54 delta, 54 strike, 24 delta put. So we're going to sell that. And on the platform here, we're looking at, it's about $5,500 to get into that position. We're looking at a 57 debit right now.
Yep. So you can play with those strikes a little bit if you want sort of to get away from the debit. If you're willing to pay the $50, you get, slightly better strike on the call side, slightly lower strike on the put side. you can kind of tweak that. It's not really going to change the nature of the trade.
Right.
And to your point, the fully cash secured is the 5,400 plus the 57.
Right. So, and really what we're looking at here is playing for that upside, playing for that Fed independence trade. So your max profit is, I mean, there's all upside there.
Yep.
And your max loss would be and essentially the credit, the debit you're paying. Is that it? Or the position?
You'll assume the position if we go below that 54.
Yeah.
But if you're willing to buy Bitcoin at 100,000, that's kind of a win as well.
Right. So it's kind of like a synthetic limit order, and
yes,
and that 100,000 strike is pretty attractive, or the 100,000 price is pretty attractive if you're bullish Bitcoin long term. You get it at a discount essentially, and then if it does spike to the upside, it's all profit there, right? So.
Yeah, exactly. And this is, so like the way that we're structuring this trade, we're kind of like talking about it in like a long-term portfolio position. If you were really just truly trading it for vol, typically you would put this trade on with leverage and you wouldn't do cash secure and stuff like that. And what you'd be really looking at is, the spot vol correlation of Bitcoin. If the spot vol correlation of Bitcoin flips back towards a positive spot vol, so meaning when we rally with more volatility than when we sell off, that vol surface structure that we're seeing now would benefit a lot. And so that's historically how it's been. Lately, since IBIT launched options, we've kind of seen a consistent decline in that. And the reason why I think that is we have asset managers who buy equities. They typically sell covered calls, buy the put, which is the opposite of what we're doing.
Right.
As a risk asset hedge. And I think it's kind of the same investor base. We also got to keep in mind that Bitcoin doesn't pay a dividend. So the only way you get yield from it, if you're a long-term investor, sort of traditional investor, is by selling calls against it. So that's causing the call wing to flatten. And then we also have like covered call ETF strategies that are accumulating assets under management. So these are the people on the other side of our trade. And so it's important to kind of understand why is it priced this way, to understand if it's really a good trade or if you're just kind of stepping in front of the train, so to speak.
Right. Okay. Yeah, it's a great point. Something that I think a lot of retail traders, especially myself, because I'm, I would consider myself like a smaller retail trader, don't necessarily understand like why if vol, like why is vol like this? What is going on? What is the market structure for Bitcoin? And to your point, you lay it out great in the newsletter. It's these institutional investors are hedging. Mm-hmm. So they're selling the covered call and buying the put, the opposite of what we're doing here. That Bitcoin's non-yielding, similar to gold. Mm-hmm. So covered calls is a source of income. And then the ETFs, right? The growing AUM of the ETFs is sort of volatility dampening, in your opinion, right?
100%.
Okay.
Yes.
Yeah.
Yes. And those are the flows that we've been seeing. And to come back to gold real quick, because I do think gold is such an interesting parameter.
Yeah. Let's take a look at gold. Yeah.
Yeah. So when we look at the vol surface of gold, gold has a positive risk reversal. So the 25 delta call has a higher vol than a 25 delta put. So that's inverse to what we're seeing in Bitcoin. So that's divergence. Bitcoin is being priced as a risk on asset from the vol surface perspective. Gold is being priced as sort of fiat hedge. But I don't think the whole story is Bitcoin is a risk asset. I do think Bitcoin is still a new kind of fiat hedge. And so I think gold's rally is a good sort of prelude to what we can see in Bitcoin.
Right. Okay. Yeah. And, we're looking at the chart here, GLD, which is the ETF. I mean, look at that candle. It got up to 350. Got up to 350, on the month. And if we take a look at, and I just want to dig into gold a little bit because I do think it's interesting. If we take a look at the options chain, you think that is there a trade here, same kind of risk reversal trade you're saying, or?
Yeah, I don't think it's necessarily a trade I want to put on, but it's a trade to look at in terms of like comparing the pricing to Bitcoin.
Okay. Yeah. So is it the same type of thing, the 25?
25 delta, 180 days out, so same kind of expiration.
Okay.
And what you'll notice is that the call trades at a higher vol than the put. And the way that you want to calculate this is you want to go call implied volatility minus put implied volatility divided by at the money volatility. So you can normalize, because gold has about half the vol as Bitcoin. So you want to normalize how big is the differential in at the money terms.
Gotcha. And kind of the overarching sort of idea here is you're looking at the pricing.
Yes.
Between the two, because you think that they'll trade similar, right? Gold is the fiat hedge that people accept now. Bitcoin will be there. So it's kind of, you think it will catch up, or that's kind of what we're implying, is that it might catch up to be a fiat hedge. So there might, we're looking at the pricing essentially between the two trades. Okay.
Yep, that's what I think. I think, there's a good argument to be made. We were talking about this before the show, highly portable assets have a lot of value in sort of uncertain times.
Right.
And crypto is perfectly portable. I mean, you don't even need a hardware wallet. You can just remember 12 words in your head.
Right.
And go wherever you want.
Right.
I think if there's true sort of fiat panic, we'll see both gold and sort of Bitcoin hockey stick. But let's keep in mind that Bitcoin is 1/10 the market cap of gold, takes less money to move it around. So in my mind, those risk reversals should trade in similar fashion.
Gotcha. Okay. Yeah. I think it's an interesting note. I'm going to definitely, after the show, maybe tomorrow morning when the market opens, take a look at that IBIT one, because I got to admit, I've been following the trades and they've worked out well. I did the MicroStrategy one, selling the call spread, financing some of the ETH upside. I need, we got a couple minutes left. I wanted to get through this risk reversal idea and kind of show everyone what we were looking at here. Anything else in your mind? It could be anything. Is there any trade, anything you're looking at? Doesn't even need to be crypto, just anything. ETH could be Sol. What do you, anything here?
Yeah, I think another theme that probably will keep coming up, as we keep chatting, I think the digital asset treasuries are going to be an interesting theme going forward. I read this book about the 1929 crash a few years back, and for anyone who hasn't read about the 1929 crash, in a 2-second version, people were buying stocks were doing well. People set up holding companies that would issue shares to buy stocks. So then you buy the holding company, kind of like an ETF to own portfolio. Then holding companies started borrowing debt to buy more stocks, and you get leveraged holding companies. And then you got holding companies of holding companies, and then you got leveraged holding companies of holding companies. And if we look at the digital asset treasuries, we're kind of seeing that same type of play. First, you take the cash on your balance sheet and you put it in crypto. It's non-leverage. Then you raise debt to buy crypto. And at some point, we'll have ETFs of holding companies, and then we'll have leveraged ETFs of leveraged holding companies, so on and so forth. I think that's going to be a very interesting sector to pay attention to, especially as holding companies try to catch up and go further down sort of the risk asset tokens.
Yeah.
So it's one thing to own Bitcoin. It's another thing to own Ethereum. Then you start owning some random coin with small float. Then you leverage that random coin with small float, and any sort of pullback cascades. So that'll be an interesting theme to look at. Keep in mind.
I think that's a great point. I've been doing this for our weekly newsletter. I put together a watch list of all the crypto treasury companies I could find, and I'm including like Coinbase and Circle in there, just in Galaxy and even like Backed, and so just basically any type of crypto public company that has crypto on the balance sheet. So one that came up recently, obviously we've done MicroStrategy, covered that a bit. One that came up recently is this Forward Industries, which is the Solana one. So to your point, we're getting farther out in the risk curve here, because as a crypto native, we're looking at Solana and we're like, this is a great chain.
Right.
I'll hold the spot product.
Totally.
I don't need exposure through an ET or a crypto treasury company, but maybe some people want to trade that. So this Forward Industries is one. We obviously had Tom Lee's BitMine, which was the big trend in July with ETH running, and now I've heard we're getting even further out. So there's a couple for some yield-bearing stablecoin one. I think they've talked about Hyperliquid, which is like a perpetual future exchange token. I wrote about it in our newsletter. So we're getting there, to your point. And I think like what people don't necessarily understand is the way that these things can be structured, right? It's like raise money and go buy the spot asset, fine. But eventually they're going to start borrowing because maybe the price goes up or the NAV goes up and they can borrow against it, and kind of becomes this debt bubble essentially, and it'll unwind at some point is kind of the point you're trying to make. So don't get too far out on the risk curve. Basically.
Yeah, and careful with leverage. We saw, huge liquidations this week.
Yeah.
And the market barely moved. So let's keep that in mind.
Yeah, exactly. Yep. So, all right. Well, love having you on. I think it's always great to talk about some of this stuff. We'll keep monitoring all of this. And, anything else around, like, where can people follow you and so maybe subscribe to the newsletter?
Yeah, absolutely. So you can check out our newsletter at amberDataDerivatives.substack.com, and you can check out our free platform where you can look at all the volatility profiles for crypto vol, including perpetuals and futures, the basis, leverage, open interest, liquidations, all that good stuff. pro.amberDataDerivatives.io.
Great. Well, that's all we have for today. I'm Dan with Greg in the studio. We'll see you next time. Peace.